And we're back. It's July 9th. Forex Focus. Paul Capetta's here. What's going on, Paul?
Not much, Frank. How are you, my friend?
I am good, just trying to get caught up. When I started at Tasty Trade, I worked directly for Tom and wrote, me and like a couple other guys wrote research segments and everything else. And the show would start at 7. And we were like supposed to, in a more organized and legitimate version of the company, we would all show up at like maybe 6 or like 6:30 and like prep all of the content, whatever. The important people that did the production stuff and mess with the cameras and everything, they showed up early to make sure that all of that stuff was working properly. And I would show up at like 6:50 on a good day, 6:55, run in there, be like, yeah, this is what the show is about. And then he would be like maybe 20% prepared and then would mostly like stumble through a lot of the stuff. And I feel exactly like that as I'm trying to read all of his research that Glenn put together for today's show. There's so many numbers, and it looks like he's done a solid job of highlighting for us some good takeaways, but it's going to be a bumpy ride. It's been a bumpy week. This is to say. Yeah. How has your week been?
Well, I was off last week, and then this week.
So you're well rested.
No. No, it feels like we've been working for a whole week, and it's only Wednesday.
It's wild that it's
Wednesday
only Wednesday
morning at 6:30. Yeah. No, but I've been good. Enjoying the weather, enjoying the summer. Got a good tan. I don't know if you can relate to that at all.
It's looking pretty good, and I can tan a little bit. Thanks very much. What did you do on your week off?
So I went to a concert up in Madison. Enjoyed the weather. It was hot. It was probably 90 every day. I felt like for like 3 weeks streak.
Yeah.
Played some golf. Did a little kind of spring summer cleaning in my apartment
But this wasn't Summerfest though.
No.
Okay.
We're just Morgan Wallen, Cap Randall.
Gotcha. Was very cool.
Very cool.
Nice.
It was basically like if you ever been to a game up there, it's like a game day attitude. So
I haven't. It's funny. I've got like family who lives in Madison and like a couple of different places around like northern Illinois, Wisconsin area, and obviously Milwaukee's only like an hour drive from here, and then Madison's maybe what, like an extra 20 or 30 minutes from Milwaukee.
From here, it's probably about 2 hours.
2 hours? Okay. I have been there in my hockey playing days. We went to University of Wisconsin for like a tournament or something. So I can remember like walking around the campus as like a 12-year-old and being like, this is really cool. Like they just let like kids kind of live around here and run the town. Yeah. And it's like, yeah.
Yeah, pretty much. Yeah. That's how it goes.
Well, that's great, man. Yeah, it's funny because Summerfest is going on at the same time.
Yeah. I
had not so much of a fun week. And yeah, the family that's in Madison, whatever, is on my mind because we had our aunt died. We had to go to had a wake and funeral, and my one cousin and his girlfriend showed up at the wake, and they were like, "Yeah, you know, this is like Sunday late afternoon, like 3-4 o'clock." It's like, "Yeah, we were at Summerfest last night, like blah blah. It was great, whatever." It's like, "Yeah, we're going again tonight." Whatever, like he's supposed to be like a pallbearer the next day at the funeral. No shows.
Oh, jeez. Okay.
Summerfest must have been going too crazy.
Yeah.
But yeah, it was just funny because he was like already looking pretty rough from the Saturday night festivities, and he's like, "Yeah, we're gonna drive back up there, go to Summerfest, and I'll be back here tomorrow morning." And it's like, that sounds like a tough itinerary. Yeah. I wish you the best of luck. And wasn't able to pull it off, but respect, to my boys up in Wisconsin. Having a ball amid Summerfest. I still have never been. I'm sure it's a good time. It's not like a Lollapalooza type thing. Have you been to Summerfest?
No, I've never been. I think it's like a Lollapalooza.
But it's not. But is it all day? But it's like weeks.
Yeah, it's like weeks, and it's spread out throughout Milwaukee, from my understanding.
Okay. Yeah, I don't know. Anyways, if you've been there or you're going, enjoy it. Let's enjoy some of the Wednesday price action. Some craziness yesterday. I'll show you the British pound. I am the worst person when it comes to navigating the news around some of this stuff. But I mean, this is 2 weeks in a row where they've really slammed this pound more than really anything else. I'm pretty sure we were down around 100 points. You can see the high to low range was more than 100 points. Got up to 136.40 yesterday pre-U.S. session, and then going into the U.S. session all the way down below 135.40. Now splitting the difference just below 136. Anything that you've seen on this pound front to warrant this one? We always talk about this. Obviously, you know, these are going to be some of the most popular markets to look at, given the U.S. dollar being a part of them, and then other major currencies being the other half. And it seems like, you know, if you're trading Forex or you've watched the show, it's really like every week or maybe couple of weeks, a new pair in this section becomes kind of the most volatile one. Mm-hmm. And it feels like the last week or so, it's been this pound. Is there anything that you're seeing? Because, yeah, you can see, or let me go. Yeah, this is back last week. They took this market down from above 137.50 all the way down to 136, bounced it back again to split the difference going into this week. But am I right to say that this is the most volatile one on the board, seemingly the last week or so?
Yeah, and I mean, the real news story is there's some fiscal uncertainty in the UK. I feel like we've been, once a year, we get something different out of the UK with regards to fiscal uncertainty. I mean, if you remember back in 2022, there was that kind of, it was almost, we could call it a flash crash, but it really wasn't a flash crash, where I believe cable traded down to about 104.5.
Super weird move.
It was like an overnight move. It was aggressive, and that was all on, I believe, a government budget plan that had all sorts of tax cuts, and the UK bond market kind of freaked out for a couple of days. It's a similar story now, and there's some kind of fiscal uncertainty again. We'll see what happens there. I mean, it's kind of hard to keep up with the news there. We have enough news going on stateside, so
that's why I try to just not keep up with any of it.
Yeah, that's kind of the story. Some dollar resurgence with the tariffs back on the table.
Absolutely,
so that's a good one. I mean, yeah, this yen one, we're no longer at 145, my friend.
It's crazy how strong the dollar has been in this pair, because I mean, even we just showed you the 15-minute chart of pound, and it's like, oh man, dollar's on a nice run if you're just looking at the last 2 weeks, but we've really only come like 200 points off of the highs, and those highs are highs for the last couple of years for the pound, lows for the US dollar. Now you go over to this dollar-yen pair, and completely different story. One, you're seeing these dollar rallies or these sell-offs in the yen not being reversed by very much, because we continue to see with that euro and that pound, we'll see like 50, 100 point sell-off and then like a 30, 40 point rally. Yep. And they don't really go anywhere from their highs, dollar lows. The dollar here in this yen pair, this hasn't been, in my mind, the most volatile the last week. As you can see here, yesterday's rally in the dollar, though it was, 50 to 75 points here, it was a little bit more calculated, a little bit more spread out, less violent than that 15-minute chart that we just showed you of this pound here. That's a pretty big and fast move. The dollar just continues to retain this strength against the yen to the point where, yeah, I mean, we're moving away from 145 again. We've done this before in the last month or two, where we've gotten down below 145 and then bounced back. You'll remember this 2 or 3 weeks ago, where they got up to 148 and then took this market all the way down below 143 for a second. But if you're navigating pretty much since the April crash in US dollar, Paul, we're getting pretty far away from those dollar lows in this pair. And it is feeling like, to me, and I mean, it's not just because we're trading 146.75 this morning, which is obviously closer to 150 than to 140. It feels like we're a lot closer to 150 than we are to 140 in this pair.
Yeah, I mean, the technician will say that you got to break 148 completely, close the day above 148. That would be kind of your technical breakout signal. It doesn't mean they can't kind of head fake you there. That's always the thing I will exclaim about any sort of technical indicators. If you're looking for that breakout, it doesn't necessarily mean that it has to break out. This one's kind of a pure play interest rate differential. Japan hasn't really, I mean, I think they did one rate hike this year, I believe, and we really haven't gotten much more out of them. The U.S., too slow Powell, is that his nickname now again?
It is funny. I did think about it. Someone there was like a meme or something somewhere, and just for reference, and I'm sure the production guys out there are like, wow, this is great stuff here, Frank. You didn't tell us that you were gonna be doing this, but it looks all right. This is the trajectory of U.S. rates for the last 10 years or so, and if you just let me fuddle through this. I'll show you Japanese interest rates as well. For the last 10 years. And you might say, oh, wow, well, this is a nice move here. They're increasing, and you just showed me, a decreasing interest rate in the U.S. They, got up to 50 basis points and have pretty much stayed there for the last 6 months, and now it seems like have no intention of going any higher. And keep in mind, as we go back to that U.S. chart here, that yes, we're in the last year moving lower, but haven't been able to get lower than 4.5%. So 400 basis points on top of Japan. And then, of course, you see here it's Wednesday, so you're getting the weekend overnight funding. And so for that long dollar short yen, the carry trade is still pretty substantial in there. And it feels like the last couple of weeks, traders have kind of said, well, fear is subsiding in the U.S. for the time being, whether it's Iran, Israel, or trade war stuff. And so let's get back to the carry trade in here. And you've seen that drive this market up close to 147, maybe that 148 that they haven't been able to break out of the last couple of months. But yeah, I mean, you're getting 4.5 points via the indicative swap offer to hold that pair tonight.
Let's look at Aussie dollar.
You want to look at Aussie?
This one's been my favorite. I love when central banks don't cut rates when they're said they're going to.
15-minute chart. What the heck happened yesterday?
So the RBA, so the Royal Bank of Australia, did not cut rates. They held rates steady, but they were projecting a rate cut. So you saw basically real Aussie strength. The actual one of the bigger moves is actually Euro odd. It trades in Aussie dollar. That's why you're going to get a kind of a bigger move onto this one. So yeah, this one, a real aggressive, about over 100-point move on that.
Jeez.
On that announcement. They took some ground back, but really not, not that much. We're pretty much on the lows. They took some ground back in Aussie dollar yesterday.
Yeah.
They kind of reversed that one. So that one was an interesting kind of two-way action trade of the day yesterday, but that one will be interesting to watch with the FOMC minutes later today.
This is a different flavor of what we've been talking about. I'll go back to Aussie USD here. It's been decently volatile, probably right up there with pound. These two being some of the most volatile of the last week or so. But in a different way. This one, it seems like every time they try to rally it above 65, 66 cents, they just slam it back down to where it's been trading. Even to the point, you can look at the last couple of weeks. You see plenty of these rallies trying to get up to 66 cents, and each of them sold off, back to the mid 65 handle. and recently here at the start of this week below 65 amid some of this US dollar bullishness. Now you look at this here yesterday, they're expected to cut by 25 basis points. They don't cut, and you have a rally back up again close to 66 cents. All right, fine, that was a little too much, but still a nice rally here, 65.50, 65.40. And then now you fast forward to today, and even with one of the most seemingly bullish signs for a currency, which is our central bank is supposed to be cutting, but actually we're gonna hold, is a hawkish central bank meeting. They can't build in any ground. It's been really rough for this Aussie and this New Zealand dollar to hold any gains against the US dollar. If I go to the daily chart, you'll see very different than the daily chart on that pound or euro that we've been looking at, not able to get up to highs for the last 6 to 12 months of trading. And here amid these highs for the last couple of months, again, just not able to get above 65, 65.50, definitely not 66 cents, but some huge moves. And yeah, love to see central banks not doing what was forecasted because it's so rare.
Yeah, it is rare. I mean, I think we're 4 or 5 years now in the U.S. since.
I don't know if we've gotten a surprise yet in our trading careers. But that's all good stuff. Let's go over to the slides and take a look at what research we have cooking here today. Back-tested symmetric risk and reward in trending US dollar pairs. Holy smokes. This will be a fun one. I think you have looked at some of this stuff, or did you watch the guys take a look at some of this research yesterday? Right off the bat, what are we looking at? What's the story today?
Glenn's done some great work. Obviously, he's been crunching some numbers. I gave him some pointers on what to tweak, mostly because I was interested in what he would get. But no, we're going to look at kind of they're just kind of like following the trend, which is like a momentum trade, versus a kind of a contrarian, which is probably you and I are a little bit more contrarian when it comes to trading. But yeah, we're going to look at what the data tells us, what to do.
Gotcha.
And then Glenn has built in some parameters as kind of a trading setup for it. Very
cool. Yeah, I'm interested to see what this risk reward means. I have to imagine that he's kind of messed around with some like theoretical take profits and stop losses, which of course you can do in the platform and is a nifty little tool. Year to date, the US dollar is vastly underperforming, but over shorter time frames, all dollar pairs see two-way price action. And yeah, even this USD CAD pair, which has seemingly been just one-way price action since April. You've gotten your bounces from 138 to 139.50, your bounces from 137 to 138, from 136, which has been the low. Now, a couple of times you've seen a bounce back to 137 or 138 here. And each of these bounces, you've seen a few days in a row in that direction. How can we identify moving markets? Do contrarian or momentum strategies work best? We have a study for you here, Paul. The last 5 years plus, going back to 2019, looking at high, low, open, close data for these major pairs with the US dollar, that's euro, pound, yen, Aussie, CAD, Swiss franc, and Kiwi, filtered for 3 consecutive up or down days for each pair as trade entry criteria. Okay, so if you got 3 days in a row to the upside or to the downside, then we entered a trade. Simulated trade performance with symmetric risk-reward targets and a 5-day max holding period. Okay, so essentially looking for a specific percentage target, let's say 1% on each side of my entry. And then if I didn't hit one of those stop loss or take profits, then at 5 days, they just closed the trade. From there, it calculated the win rate, the average P&L, and other performance metrics. Okay, this is a fun little study. There's a lot of data involved, but it's not as scary as I thought as I was trying to prepare for this 5 minutes before the show. Looking here, Paul, at the numbers for 1% profit targets in the momentum direction. So this would essentially be if in any of these pairs from 2019 until now, there were 3 days higher or 3 days lower. If the pair was moving higher for those 3 days, the study here would enter a long position and look for 1% profit or 1% loss. From there, if it was moving 3 days lower, they'd enter a short position and look for 1% profit or loss in the same direction. And what we have here, if I'm going to start by looking at just that win rate column next to the symbols, the momentum trade, Paul, has not consistently been a more than 50-50 type trade. I wouldn't call it high probability from what the win rates are saying.
Yeah, I mean, it does make sense because when you get kind of 3 up days in a row, there is a chance for a reversal. We talk about reversals all the time. So it's not surprising. Dollar yen being the one. I mean, this one, you have the 2022 grind higher, which was seemingly every day it was up 100 points. So
definitely the most trending market of any of these. If you were just to pull all of them up on a daily chart from 2019 until now, you would see that one has trended the most in one direction. Interesting to see that's dollar Swiss franc would be the other one that is trended in one direction over the long term. But over the short term, actually, you haven't seen a continuation of those big moves. And so, expecting 3 days and then another day or a couple of days in the same direction has not paid off when you're expecting 1% profit in here. Now, looking at the same kind of setup, but contrarian, 3 days lower, study gets long, 3 days higher, study gets short. You're seeing higher probabilities. First of all, you got the win rates there, and it seems like from 2019 until now, much more likely for these pairs to reverse. Now, when you're looking at that profit target hit versus loss target hit, it is nice to see that is edged pretty significantly in a number of these, except for that dollar yen pair that we just looked at. On the profit side of things, and the average P&L has been, I mean, it's nothing crazy, but I mean, to have an average when you're only looking for 1%, Paul, on either side, and of course you're going to take a lot of losses from 2019 until now, committing this study, an average P&L of 0.07, 0.09, 0.1, pretty good edge in that if you're on the contrarian side of this study.
Yeah, and you're also waiting kind of 3 days for it to happen. Like 3 days of consecutive moves. We don't get that a ton in Forex. So I'm gonna have probably Glenn do a little 2 day, see what the 2 day is, and see what the 1 day or 1.5 day is. Is there an optimal number of days we have to wait for it to be up or down? That would be interesting. Obviously, you can go way in the weeds on this
But that's the fun part of this, and what the tastylive has really built their reputation on is like, let's take a look at all this data of setting up this option strategy or this future strategy or here Forex strategies, and of course the past results are not indicative of what is going to happen tomorrow or next week or whatever, but it's one of the best indications of like, what can I expect? Not necessarily like, now I know that I can, always short the pound after it's been rallying for 3 days and I'll always win. That's not the case. It's a 54% win rate. And again, this is past performance. But again, like I would rather use this to help identify what I'm expecting if the pound is rallying a bunch and it's like, all right, am I a contrarian? Am I a trend follower? Should I be looking for 1%? Should I be looking for 0.5%? Should I wait another day? You start messing around with these numbers, and then you start to see, historically at least, what has been optimal and how these might act moving forward. Again, we have no clue, but these are pairs that have been traded for decades, Paul, and thankfully we can sift through the historical data and get some semblance of what's going on. Really quick, he just took a look at essentially chopping those profit targets in half, and you saw a little bit of a better win rate here for the momentum traders, and so maybe there is something to, if I'm trading momentum, a smaller expectation, not expecting like, oh, this thing just rallied for 3 days and I'm going to take it for another 1% or 2%, but expecting it to move a little bit more in that momentum trade has panned out a little bit better. You see the win rates, a few of them now north of 50%, a few of the average P&Ls in the positive direction. And if you're expecting smaller profits and losses for that contrarian trade, pretty similar results here. Maybe it just reduces some of the potential risk in that trade, obviously, and the time that you're in that trade is a little bit lesser. But here are your takeaways, Paul, and we're going to get out of here. Symmetric risk-reward strategies are generally close to 50-50. Using 1 week trading periods, mean reversion strategies across all pairs have a slight edge over trend followers. The pound has yielded a slight edge for contrarian traders. The yen has been a little bit more of a momentum trade back since 2019. The 0.5% profit target is much more likely to be hit than 1% over 5 days. Makes sense. And even with tight profit targets, most trades take more than a day here in Forex. Fun little study.
Yeah, a little systematic.
Always
something
good
to think about.
Always good to get some data behind what you might be doing. And with that, we will send it to our good friends Tom, Tony, and Bonetta. Tasty Live coming up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's backtesting. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Woo! Get tasty, free market. Come on, you know it, how you feeling? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hello.
Hola. How is everybody this morning?
Oh my God. As soon as I got to the office this morning, I knew there were going to be problems. So Tom and I normally park on the same level in the parking garage. And so when I go to get out of my car, I have all my stuff, and I see big signs on the door, elevator out of service. I was like, that's not going to be good for Tom.
I looked at it for like 5 minutes.
And he was like, blink, 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 blink.
I'm like, this has to be a mistake.
So we had so much torrential rain here in the city last night. I think like the engine room flooded in this building because they got fans and blowers everywhere. And I think that shorted out the elevators in the garage because the garage is like it's exposed. So why are you looking at me like that?
I mean, you're just guessing. Who knows?
Oh, well, I do know.
Well, the engineers aren't calling her from the building, Sosnoff. I mean, yeah, she's.
I mean, a little bit of rain shouldn't have knocked out the elevators.
So Bat, what he's doing now is he's asking people around the office if they will go get his car for him because he can't walk up the 4 flights of stairs.
Not because I can't, but because I don't want to.
I told him I'd do it for $20, so
I just don't like the whole.
I'll go get your car for $20.
No, it's okay. I need the exercise. I'll do it.
You do need the exercise.
I'll do it.
Okay.
Yeah,
So-
but he's got a lot of things going wrong with him today. He doesn't have his belt.
I don't
for
have his belt.
Pants.
Yeah, my
So
pants
he
are
walks
falling
up
down.
the stairs with that flat white ass that he's got.
Yeah.
You know, it's bound
And
to.
I'm sorry. And then I'm sorry. What ethnicity are you?
I don't know. According to 23andMe, I got some explain. My mom's got some explaining to do.
Okay.
I don't know.
All right.
I'll have to talk to her.
But anyway, I'm not looking forward to that. And I didn't like that sign. I almost turned around and went home.
But if you could have turned around and then driven your car to a lower level without leaving the garage.
I could have.
But you didn't think about it.
No, I don't. I always park on the same floor because
Me too. So I always remember. I
always remember.
Right.
because
I'm a
when we
creature
first-
of habit. Yeah.
When we first moved in this building, Tony and I would take the elevator back, and after we're like, "What floor do we park on?" Every floor looks the same. We're like on the 6th floor. No, we're on the 5th floor. We're on the 7th floor.
They're different colors, girl.
I know. I never even looked.
Okay.
So I don't mess around with it now.
Right. Yeah.
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 I am a creature of. I liked before when we had assigned spots.
Yeah, but I didn't like that because it was still like outdoors. So when it was like pouring rain or snow, you still have to brush your car off and you
Right.
still get rained on. This is a lot nicer because it's in a garage.
Yesterday, we made a bet to see how many people would be parked illegally in our old office.
Oh, how many?
It was like 4.
Oh, that's not bad.
Yeah, 3 or 4. Sosnoff was
Squatters.
very
We call them
disappointed.
squatters.
Sosnoff was very disappointed. We went to the old office to pick up all the stuff that Sosnoff had left there, and all we found was the same box, circa 1994, that he's been carrying around for the last 30 years with paperwork that he just has to shred or burn or get rid of. 30 years.
Where's
worth
the
of
big
paper.
white couch gonna go? Where did that go?
It's there. If you want it, you can have it.
Why? What?
I'm just saying, it's there. If anybody wants
How many square feet do you think I live in?
All I'm saying is
It would make a great cat couch.
all I'm saying is that we have a beautiful couch, and
The couch is nasty.
is it?
It is covered in the hair of Buddy. May he rest in peace. But no, it's covered in dog hair.
And a ladder. Well, dog hair comes off. I mean, you can get
Yeah.
the thing cleaned. It was an expensive couch.
And that couch was used to, a lot of people slept one off on that couch, and that couch has seen things.
Yes, that couch has seen things. That couch has definitely seen things. Yes.
I'm going to just leave it at that.
Yeah, there's some certain things we could probably do with the couch. I got to think about it. But we only 2 days left.
Okay. Uh-oh.
And there was really nothing in that space. There was, I mean,
The thing that you wanted most was the table, and through hilarious hijinks, which I recorded, we got the table over here, and
there's a nice table there still.
It's too big. It's too heavy.
I know.
It is big. It is heavy.
I mean, everything else has been, I couldn't believe how clean the place was. And
yeah.
it's all cleaned out. And Tony and I walked around, and Tony cried a little, but that was it.
That's okay.
Oh, you know what he found? He found a stash of his old T-shirts.
Oh,
I did.
The maroon ones.
Yeah.
Oh, that's fun.
That's correct. That's correct.
Yeah.
The maroon ones. That's
Found
right.
a stash of his old T-shirts.
Staff ones.
And I found a sign that said,
I'm on it.
oh, no, that's something different. I brought that back for us.
Ah.
But we found a Tasty Trade sign that I want to save.
Okay.
And then my fake grass that I've had through 3 businesses.
Okay.
I needed to save that.
Okay.
I bought that like 40 years ago.
I actually have that now in my car.
No, that's mine. You can't have
powers.
that. It's like a $9 piece of fake grass that I've carried around for 40 years.
Like the kind that dogs pee on in the winter?
Yes.
I know,
Small
but
little
it's
one,
just a container of fake grass that it's very personal.
Oh, that's nice. Then if it's personal to you, then you should have it. You should keep
I
it.
kept it for 40 years.
Okay. Bat, are you going to give your shirts to your son? Make him wear them to school?
Of course he is.
I didn't think of that, but I should. That's a good idea. I will do that tomorrow.
That's how you should punish him next time. Make him wear that shirt to work.
I am.
To school.
I'm going to do that. He recently did something that annoyed me, so I'm going to tell him to make up for it. He's going to have to wear that shirt.
I just tell him every time he spends $30 for a Potbelly sub on DoorDash, he's got to wear that shirt.
Next time you have to pay a tariff, he's got to wear the shirt to pay off all the tariffs he's racking up.
I definitely love that idea. I really do. Hey, Sadler, my peeps just reminded me. Too bad you got rid of the Tesla. You could have summoned the Tesla to come down and meet you. You can't do that in your Lucid.
That garage is tight. Like it's.
You could summon your Tesla all you want. I don't know anybody that's ever summoned their car and it actually worked. But
it works. It works. You could have done it, but you got rid of it.
That's okay. I'm very happy with my Lucid.
Hey, this is crazy. Guess what opened yesterday?
I have no idea.
I think I'm going to go check it out. The Chicago Board of Trade Museum. Did you hear about this?
No.
So it's going to be at 141 West Jackson Boulevard. It opened yesterday to showcase the history of the Chicago Board of Trade and the building itself. And they have exhibits, they have teletypes, they have jackets, they have a theater. So I think me and Gus are going to go down there and check it out, film it and check it out.
Quotrons. They have Quotrons.
Quotrons, yeah. What you guys want to come to the board of? They did not consult you?
Not consult me. 141 West Jackson is where we all started.
Yeah.
That's where this whole
it is now a historical site.
141 West Jackson is where I started when I first moved to Chicago. That was where my first office was.
Yeah.
And that's where our clearing firm was. That's where the exchange was, in that Board of Trade building. Mm-hmm. That's where the exchange is today. But it's gone full circle. And but that's where I started, 141 West Jackson.
It's free. So if you're coming to Chicago for the summer to come see us for our live show, it's open Monday through Friday, except for federal holidays. And it's trying to revitalize the Loop and draw attention to the historic financial district. So
yeah, it's I mean, the building itself is iconic.
Yeah. I mean, it literally is Gotham in the Dark Knight movies. Yeah. It's Wayne Tower in those movies. If you ever see.
Yeah, and that's the view they just had on there is where the exchange floor is on the 7th floor. But yeah, super cool. I don't think I'm going to go see that. Every time I go in that building now.
Why wouldn't you go see a museum that's like dedicated to your life's passion?
I know, but every time I go,
anytime I hear that there's a cat museum, I'm locked in.
Because we don't have the adjective crazy in front of our name. We're not,
every
not
time,
a crazy cat lady.
Every time I go into the Board of Trade building, it creeps me out.
Why?
I don't know.
It doesn't make any sense.
I don't know. It's never
because it's not the same. It doesn't. Yeah,
it creeps me out for the last
But what if you're in?
Years.
But it's gonna be cool. I think they did a really good job with some of the exhibits and how they tell us. All right, well, I'm gonna go and I will report back.
You have a party.
Okay.
Please do. I'm interested to see it. I would like to go back.
See, all right, I'll take you, Bat. How about that?
I would like that.
I'll drop you off both. I'll drop both of you off there.
Ooh, that's nice.
Will you wait for us? That's the real key.
Not a chance.
Oh. So what did you get up to last night? Nothing?
Except I want to see if my guy, who was the guy that ran that parking lot there? What was his name?
Oh, he was great. The guy who washed your car in the bottom?
No,
Who are
not
you
down,
talking about?
not downstairs, across the street. I think it's.
Oh, I didn't park across the street. I was a big dog. I parked right in the building. I didn't have to walk across the street in the rain like a jamoke.
Oh, no, I parked in the building too, but before the building had parking, there was, I think it was Clifford or something. Whatever, that guy was great.
Cliff. Yeah, I think
they
so.
would fly those cars down that thing like 60 miles an hour.
You're talking about the ramp. He would fly the cars down
Like
the
Ferris
ramp.
Bueller's Day Off.
Ferris Bueller's Day Off.
Yeah.
They'd fly those
He
cars
knew
down
what
the ramp.
time you would get out, so he would line up all the cars, and he basically was spot on every time.
Yeah.
He knew, like, Saz came first, this guy came next, somebody from the Board of Trade was after that, and all the cars lined up.
Back in the day, these parking lot guys made like 100, 200 grand a year just on tips from traders.
I believe it.
Yeah.
That great work. That part of the economy is missing now.
If your car was first in line.
Yeah.
Out there, so you didn't have to wait.
You mean Jules and his
you
Rolls
paid up?
Royce? Jules and his Rolls Royce?
Did not have a Rolls Royce.
I heard
No,
Jules
that was-
had a Rolls Royce.
No, he did not. Slimmy
Never.
did.
That was
Slimmy
that
did.
was.
Oh, Slimmy had the Rolls.
Slimmy.
For a very
I
short
think-
period of time. But Slimmy had the
Wasn't it an Excalibur?
No, he had the
an
Rolls.
Excalibur.
For a very short period of
Rolls?
time.
Oh.
I didn't know Slimmy had it like that. That's impressive.
It was
Yeah,
very
like
short.
A week.
It was very short lived.
Once his marker was up, he had to.
Oh, and then he had to liquidate?
Then it was very short lived.
Well, it's still impressive.
Oh, Jules always parks down a lot. Jules was a big schmucker back then.
What did Jules drive?
Prelude.
Jules drove.
Like a Benz?
No.
Like I picture Jules like in a big like S-Class Benz.
No, I think he drove a BMW.
No. He was like
a BMW.
Oh, he's like a 5 Series, 7 Series BMW?
He didn't really. Jules never cared about cars. He wasn't big on cars.
Yeah.
Okay.
Yeah.
What did you have then? A Porsche?
I had a
He
Porsche.
had a Sequoia.
I had a Porsche and a Pathfinder.
Oh, what did you have that?
I had a 12-cylinder Jaguar and a Mercedes 2-seater.
Whoa.
I loved my Pathfinder, but I also loved the Porsche.
Okay.
I loved my SL back in the day. That was my car.
See, this is fun. These are good trader stories.
These are not good things. These are depressing right now.
And I had like parking spot number 1.
Okay.
I had
Okay.
like
He didn't have parking spot number 1.
I had parking spot number 1.
You were across the street like a jamoke. Downstairs, the guy would
like
wash
in the
your car.
80s.
He was
just how crazy it
unbelievable.
was. In the 80s, they used to charge $500 a month for parking in the Board of Trade in the 80s.
Okay, well, you guys are traders. You guys are literally
know, but it's
printing
like-
money. Also, the train exists.
It was insane what they used to charge. They used to rip us off.
But that's the market, though, right? Wouldn't you tell me, like, then that's what the market can sustain? So that's the
You
market.
could park across the street.
I proudly hang my hat on never having taken the train home to the suburbs in all my years.
The market across the street was like $60 a month, and that if you're in the building, so you have to walk outside in the winter.
Yeah.
$500.
Wow. So why not park
Know your
across the
audience,
street in the
Saznoff.
summer
Know your
and then
audience.
park?
Know your customer rules.
Then you lose your spot.
Oh, I see. Gotcha. Traders are weird. But that's the
Know your
market.
customer rules, Saznoff. They knew.
Yeah, that's the market. All right. How about you, Bat? What'd you get up to last night?
I saw F1 last night.
How was it? What is your review? What did you like? What was done well? What sucked?
I'll talk to, well, I'll just put it to you this way. Brad Pitt makes the evening after the movie very easy. It was a sure thing.
Nope, leaving that there.
So anybody who's having little problems at home, go see F1.
Thank you, John.
Basically does all the work for you. It was good. It was enjoyable. It was fun. A little cliche-ish, you know, it's not going to win the Academy Award, but it was fun to watch. It was a good movie. It was an enjoyable movie.
Okay, and the action sequences were legit, heart-pounding.
Yeah,
that's all that matters.
Yeah, for sure.
I
Yeah,
want to
it
go
was fun.
see it.
It was a good movie. It was a good summer movie. What summer movies, I think, are supposed to be. It was a good summer movie.
And it's what they call new IP, you know, so it's not just like another sequel, you know, of, you know, something. So I think that I prefer stuff that's new, you know, a new story.
I agree. A little creativity in the world is good. Yes.
Yeah. So when does F2 come out? Get it? No, F2? No, okay.
Well, there is actually an F2, like not the movie, but there is like different layers to F1. So
I know. Are you gonna go see it?
I mean, I don't have it on my short-term.
Oh, Brad Pitt is on her. What's that? Not
Hall
a wish
pass?
list. What's it? Hall pass. There you go. It's on her Hall pass. So they're going
I
to see
speak
it.
boomer. It's fine. I got
By
it.
the way, if you've never seen the movie Hall Pass, that's a great movie.
Okay. We're trying to stay in this century, this decade.
Have you seen the movie Hall Pass?
A long time ago. I don't make it my whole personality though, like you do. Anyway,
It's a funny movie.
Right,
Hey-
right.
It's written by a guy in Chicago. That's why I brought it up.
okay. Well, good for him. We have a good show for you today. A lot of good content on this wonderful Wednesday here at Tasty Live at the top of the 8 o'clock hour. We have an options jive for you. 5 metrics every options trader should control. That sounds like a TikTok hook. I'm going to give you the 5 metrics every options trader should control. Like and subscribe. No, but that's going to be part of our options jive at 8 a.m. It's a tough room today. I'm doing everything that I can. Then we got What's Your Assumption? So reviewers write in with an underlying and a directional bias. Tom and Bat try to do as many trades as possible. Are you looking forward to that? Great. Then 9 o'clock skinny on options math. We got Jacob in the house. Wow. This is a very pronounceable subject for his segment today. It just says Theta deep dive. I understood that.
Wow.
I could pronounce it. It was only 3 words. Is Jacob okay?
Seemed a little off yesterday.
Is this an SOS from him? Okay, so Theta deep dive, diving into Theta. That is going to be with Jacob, our resident geek, at 9 a.m. And then live from the trade desk, we got Big Boy Scotty S at around 9:20. And we got Nikki Bat coming in for Johnny Trades at 9:40 today. If you have a smaller sized account, Nick Batista has a trade idea for you. And that's our run of show today. And then 1 o'clock, Truth or Skepticism, Tom Sosnoff, Dylan Radigan. What are you talking about with Dylan today?
We're talking about the bond market.
The bond market, yes. Little Bondolinis, Tom and Dylan live here, tastylive.com. Also live on our YouTube channel. Make sure you hit that like and subscribe button and that bell notification so you never miss any Tasty Live YouTube content. Hey, in the meantime, in between time though, do you want your daily dose?
Sure.
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's July the 9th. This is the part of the show it's called the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Sure.
Ready for the news.
Mr. Bat, any earnings on the horizon?
Yeah, you got it. Delta Airlines going to be the first one of the season, kicking it off. I mean, I guess we got CAG also, but you're not going to care about that. You're probably not even going to care about Delta Airlines. It's been going absolutely sideways around a 38 Ivy rank.
Delta. Can I help you?
We have a small position in there.
In Delta?
Mm-hmm.
Okay. Are you gonna adjust or do anything?
Nope.
You're just gonna let it ride.
Let it ride.
Okay. Hey, headline for first up is saying traders say tariff volatility won't peak on deadline day. The options market is pricing in a 0.6% move for the S&P 500 higher or lower today. That's under Trump's current executive orders. The pause on his so-called reciprocal tariffs expire today. Of course, that gets kicked now to August 1st. What are you anticipating for today, if anything?
Nothing.
So the headline's right then. So volatility's not going to peak today. Volatility's like not doing anything. Want to poke it with a stick.
Based on yesterday, which had zero volatility,
yes.
I would think today would be more of the same.
Okay, well that's...
Yeah, you got Vol down 25 cents /VX 1946.
Yes, we're not expecting much.
Most Wall Street brokerages reaffirmed their rate cut forecast yesterday after the Fed Reserve kept its policy rate unchanged last month. The U.S. Central Bank held interest rates steady as expected and maintained its projection for 2 cuts this year. What are your expectations for rate cuts currently? And let's talk about bonds.
Well, bonds are actually, they were up last night a little bit. They're down now, 1 tick, but they're not lowering rates with bonds at 113, so they better get bonds higher if they're going to lower rates.
Okay. Are you doing 10-year stuff? Are you doing 30-year? You doing a combo?
Both.
Both? Okay. We will.
Yeah, bonds for the first time in about six sessions, I'm able to say unchanged. Usually I have to say down, but they're not.
Yeah, but they don't look very good.
Do you see
They
that
look a little sick.
Do you see that 2 being the right number for
I have no idea.
rate cut? I'm just asking you
Yeah, I
because
mean,
you've literally been alive longer than anyone I've known.
I don't care. It doesn't matter. Like, we don't sit here and go 1 rate cut, 2 rate cuts. It's just a stupid game. We just, either you're long bonds or you're not.
Okay.
Rate cuts don't mean anything.
You're with us or you're not. Hey, dividend yields for U.S. stocks are nearing record lows, and investors don't seem to care. Should they? For the first time since the year 2000, dividend yields for stocks in the S&P were nearing record lows. Does this matter? And does it signal anything?
I don't think it matters that much. I mean, you know, companies are reluctant. I mean, if you're a shareholder, do you really care about the dividend that much?
I think lots of people care about dividends.
Well, I think people care about share price more than they care about dividends.
Okay.
So if I'm investing in a company, I would much rather have them use the money for something that makes their share price go up rather than use the money to pay back dividends.
How about for you, Bat? What do you think dividends lie in a priority for investors?
I mean, a lot of people try to, like live on dividends later on in their lives. It's a very old way of investing, looking at dividend stocks that haven't paid it, that really aren't concentrated on growth. For me, I think it's an old school way of thinking. I guess it has its place, but it's pretty low on a totem pole.
But even if you don't rely on that so-called, mailbox money of the dividends, the larger picture that the fact that dividend yields are at record lows, is that indicative of a larger trend that should be concerning? Do you see what I'm saying?
The concerning part of that trend is usually when dividend yields get really low, it means the market is overpriced.
Okay.
Because all dividend yields are is just a function of, how much the dividend
the stock price versus the amount paid.
Right.
So same dividend at $20 is going to be completely different. The same stock at $40.
So it's usually, if you're looking for something, it usually is a little bit of a red flag. That it's overpriced.
Okay.
But Tony and I don't focus on dividends at all.
Okay.
I've never looked at buying or selling a stock
based on a dividend.
For an option strategy and see what its dividend is.
Me either.
Overnight news coming out of China, their producer price, their PPI fell 3.6% in June. That's the biggest drop in nearly 2 years as deflation deepens. Economists had forecast a flat reading compared to the year earlier. So it's a little bit concerning. I don't know if you're doing anything that's China focused, but
we're not. And so we don't. Let me just take a look this morning to see what the Chinese stocks are doing. They're down a little bit. We actually don't have a Chinese position on right now.
Okay, a little FXI. You going to get in there?
No.
Okay.
I mean, Baba's down more than a little bit. I mean, Baba's down almost $2.50. I mean, that's significant.
Baba's down, Baidu's down, but
PDD's down. Yeah, sure.
Yeah, I mean, FXI's down 30 cents, 25 cents. No.
You don't see any opportunity at these levels in China?
I mean, China's not overpriced.
Okay.
You want to sell some puts in there, but IB rank's really low.
Okay. News coming out yesterday. President Trump said he would impose a 50% tariff on imported copper, and then copper then immediately shot to prices that it has not seen in 36 years. I just want to talk about the metals because this kind of came out of nowhere yesterday. It's going to make lots of things expensive. Copper is used a lot in cars, especially electric cars like Tesla. I don't know if that's why copper went up, but what are you doing in copper and...
It was untradeable yesterday.
Okay, because it was just too violent of a move?
It was untradeable yesterday, and today.
No, because the option markets just weren't tradable. The futures were tradable. The option markets weren't tradable.
The markets are better this morning.
Okay.
They finally settled down. So yesterday they were like, I want to say they were as much as a few $1,000s wide.
Okay.
Now they're a few pennies wide.
Okay.
So, I mean, not even. Now they're actually tradable.
Okay.
So they went from untradeable yesterday to tradable today.
That's all me, so you're welcome.
We looked at them yesterday, but I mean, again, they're still pretty wide. And
what about FCX?
They're still pretty wide, and actually copper's down 2 1/3% today. I think that probably helps everybody who's had a position.
Yeah.
Bat, anything in FCX?
We looked at FCX to try to get a correlation, and FCX was actually lower when /HG was making its high, so there was no real good correlation there. But FCX is actually up about 75 cents. So you got
that's weird.
Copper down, FCX higher.
Okay.
I would be very careful based on what we saw yesterday. If you
don't have a position in copper, I probably wouldn't put one on. FCX you can trade.
If you don't have a position in copper, I probably wouldn't put one on. Because if you have one on, you'll be able to roll up your puts today.
Okay.
To neutralize some of your risk. But if you don't have a position on, even as rich as a premium is in there, I probably would stay away. The markets are still too wide.
Okay, that's actually really helpful information. Gold ETFs, physically backed gold ETFs, recorded their largest semi-annual inflow since the first half of 2020 from January to June. That's according to data from the World Gold Council. You mentioned yesterday that gold ETFs, that was like your best trade of the first half?
Worse.
Oh, worse. My bad.
But thanks for reminding him.
Worst ETF trade of the first half.
My bad.
I absolutely hate GLD. And here's the crazy thing about GLD.
What's the crazy thing? Break it down.
It's my worst trade, and I didn't have an opinion.
Oh, yeah.
It wasn't like I was short
gold.
gold.
Is down this morning.
Yeah.
Gold ETFs recorded an inflow of $38 billion in the first half of 2025, with their collective holdings rising by 397.1 metric tons of gold. Hachi machi. Yeah, okay. Stay mad. Hey, in other news, mortgage lenders are going to soon have a new way to assess borrowers applying for government-backed loans, and that sent the stock of America's biggest credit score company plunging yesterday. FICO, the Fair Isaac company, plunged yesterday after the credit score ecosystem will allow other ways to assess credit worthiness for government-sponsored Fannie and Freddie Mac mortgages. I know you probably don't trade a lot of FICO, but it was a pretty big move yesterday, down like 9%.
I've never traded FICO.
FICO. Bat?
I haven't traded it either. Is it really, what's the symbol?
It's FICO, FICO. FICO is FICO. It is the Fair Isaac. Yeah.
Yeah, I was surprised because it's a $1,700 stock.
Yeah.
Option markets are untradeable, so it doesn't. I pay it no mind is what I would think.
Lenders can now use a Vantage 4.0 score, so instead of just FICO. So just
$45 billion stock just to tell me what I already know or have some bad credit on my score. That's wild.
Yeah, but your credit score is not just for you; it's for other people about how trustworthy you supposedly are. It's a super. It's a
for
flawed
your divorce
system.
attorney. It's for everybody.
Yeah, it's a flawed system. Hey, but home sellers have gotten tired of cutting prices, so they're just yanking their houses off the market. What could go wrong? Delistings are growing faster than the number of homes for sale. That's according to Realtor.com. That can't be good.
Depends where you are.
No, actually, that would be.
Yeah, I know. Yeah, right. The housing market is not a monolith. And so obviously there are pockets of the country that are
the housing market
better
in the Midwest is very hot right now. The housing market, like in Florida, is.
But in sluggish markets, though, the people are tired of cutting prices, so they're just yanking their houses off the market. Yes.
Like California, the market's really hot again. In the Midwest, it's hot. I heard in New York, it's really hot. And then like in in Texas and Florida, it's kind of
Sure. Like Austin had, huge,
Yeah.
mega boom, and Florida too, places. But just thought it was interesting. Hey, more and more of the drum beats are getting louder surrounding all the hype around stable coins. This time, it's another analyst that says Circle's stock should be worth less than half of what it is now. This comes on the heels of J.P. Morgan saying stable coins should be worth as a class around like half of what they are. Right? I'm surprised that I'm seeing more and more of these headlines. This one was specifically targeted to Circle. What are your thoughts?
I agree. It's overpriced by double. I mean, it's two times as expensive as it should be.
The company
you could sell it $2.50 higher if you like it. Trading 207 right now.
The company went public June 5th at $31 a share. What?
Yeah, it's 207 right now on the bid. Yeah.
That's wild.
Do we whack them in hell?
What are you guys doing in Coinbase or crypto in general this morning?
Coinbase, we are doing absolutely nothing.
Okay.
And crypto, we haven't touched a crypto position in, it's probably been a month that we haven't traded crypto. We're just sitting on it.
Crypto, if you're looking at the Bitcoin, it's trading around let's just call it 210. It's up a little bit, about $1,500 over the last couple of days, $700 today.
Intel stock jumped over 7% yesterday, extending recent gains as the company announced plans to start laying off hundreds of workers in Oregon as part of announced cuts under its restructuring plan. I'm not sure what you're doing in Intel.
We were long it yesterday. We took our profits.
Oh, nice. Winner, chicken dinner.
Yeah, it's really good.
The cuts affect around 529 employees at 4 facilities in Oregon. Bat, what's the IV in Intel?
I try not to talk about Intel because where good traders go to die. But
okay.
Tom may have bought the bottom in there. Intel is $25.78 now.
Hey, way to pick your bottom. This is interesting or dystopian. You pick a lane. It's choose your own adventure. You do what you want to do, everybody. But major tech companies that have created AI products, including Anthropic, Microsoft, and OpenAI, are teaming up with the American Federation of Teachers to provide free AI teacher training. The companies have pledged $23 million over a combined 5 years to the effort, and it's basically just trying to offer teachers continuing education credits, credentials, certifications, workshops, and training sessions to help understand and embrace this new technology. Do you think we're cooked as a society, though, if kids can't, critically think or read or write? They just put everything in AI. I'm worried. Like, I'm legitimately worried by what I'm hearing from my friends who are educators and from even kids online being like, this is how I got through college.
They used to say the same thing when they first introduced a calculator. Do you think that kids are...
But I think that there's a massive difference between the speed and intelligence of what AI can do. And I understand that, yes, having a calculator from when you were given an abacus back in the day was a major leap, but...
I would argue that this will probably accelerate the teaching and learning process and make kids smarter quicker.
That's not the trends in ed. That's not how kids are trending.
Let's just see.
And
I think it's going to make people smarter and going to get you there quicker.
Bat, what do you say? You have a child, so...
Yeah, he knows a lot more than I knew when I was 15, so I'll give him that.
I'm going to just leave that there. Microsoft. What are we doing in Microsoft this morning?
Hey, I was boy leader of Arista at Arcon when I was 15, don't forget.
Microsoft.
Boy leader. Nobody else can say that in this room. That's
Microsoft.
Microsoft 402 on the bid, closed at 396, so it's 397.
No, you're looking at MSTR, sir.
I do this every time.
Every time, MSFT. No, are you okay?
I do it every time.
I can see him typing. Sorry. No, MSFT. Nope.
Yeah, so you shouldn't make fun of people when you don't get it right. $500 up around $4, 3.5.
Because you
Ivy ranked at 21.
Because you fluster me, and I'm flustered, and I can see.
I have that effect on women.
Yeah, that's not. Nope. Hey, this is interesting. Meta has taken a 3% stake in Ray-Ban parent EssilorLuxottica. Of course, you can now get Meta-powered Ray-Ban's AI glasses. So they want to bulk up their wearable technology division. So they're like, why not just buy this company or at least a stake in it? What are you doing in Meta? And what do you think of that move and that sort of alignment?
In Ray-Ban?
Yeah. For wearable tech, so like AI glasses all over the place.
Honestly, I couldn't care less what Meta does, so I don't know what it means.
But would you wear AI glasses though? Like, because you could be giving a speed, like
Never.
you're on the road,
Never.
and then you could see your platform.
Never.
Okay. I tried. What's Meta doing this morning, Bat?
Looks like it's up. I mean, the market's up. Even the S&Ps are up 14, but these flyer stocks from the Nasdaq seem to be up a little bit more. It's up about $1.50, $2. Meta 722 and change.
Boeing delivers the most airplanes since late 2023 after finally being able to ramp up their 737 MAX output. Boeing delivered 60 airplanes in June, the most since December 2023, weeks before a door plug blew out midair. We're not going to talk about that. The manufacturer handed over 150 planes to customers in the second quarter, the best for that period since 2018. Boeing.
We do not have Boeing.
Boeing is trading at around 220-ish on the bid. It's up about $2 also.
How's the IV in there?
11.
Oh, gross.
Yeah.
Yeah. What are you going to do?
Yeah.
SpaceX is looking to raise fresh capital by selling new shares to insiders in a deal that would value the space company at $400 billion, even though the rockets just explode. The company's strategy is to raise money via fundraising round and separately hold a tender offer to allow employees to sell some of their shares. What are your thoughts of SpaceX being worth $400 billion?
Well, they're worth whatever they say they're worth, whatever they can raise money at. I would have zero interest. I wasn't interested at $200 billion, so at $400 billion, I'm definitely not interested.
Sure. Yeah. The company broke the $100 billion mark just in October 2021, and then they've doubled that figure just 3 years later.
No,
and then now, yeah.
No interest.
Okay. Are you guys doing anything in Tesla? Because that's been moving around a lot this week.
We had some money in it this week, but we have no position right now.
Tesla's trading 298 on the bid. It's only up around a dime or so.
This is sort of a hilarious story, but I mean, obviously it's terrifying. But a bad actor posing as U.S. Secretary of State Marco Rubio contacted multiple government officials by using AI to imitate the voice and writing style of Rubio. The reason this worked is because no one knows what Marco Rubio sounds like. No. The impersonation campaign began in June when the bad actor opened a Signal account displaying the name Marco.Rubio at state.gov. The Rubio imposter reportedly contacted at least 5 government officials, including a U.S. governor, a member of Congress, and 3 foreign ministers. But you said people have sent you interviews with like yourself, and like if they have just 30 seconds of your voice, they can it's crazy what they can do. But luckily, nothing super bad happened.
Let's just hope our Secretary of State's not using Signal.
I'm just gonna leave that there. I don't know if you were aware of this, and did you name your son after this? The oldest restaurant in Los Angeles that invented the French dip, Cole's, is closing.
Did not name him after that. Have been there.
How is it?
Not my favorite.
Okay, well, they're closing, so.
It's been
117 years of operation, including Prohibition, 2 world wars, and the rise of Hollywood.
Yeah, I mean, the French dip is kind of, it's kind of the LA version of,
like the Italian beef?
Italian
yeah,
beef.
I get that.
Kind of like that. Not my favorite sandwich at all. You know what? Without the jardiniere, it's just not the same thing.
But it's still, you hate to see anything with that history.
Oh yeah. No,
close.
it's a cool. it looks like it's been there for 117 years.
Okay, well, I just thought I would mention it.
I've never been.
Yeah, there's Kohl's, and then there's another place, like right across the street or right down the street. It's just like it. There's like two of them. They compete.
Oh, okay.
I forgot the name of the other one.
In a hilarious turn of events, numerous emails from the University of North Carolina donors, alumni, and faculty, which were obtained through a public records request, show a stunning lack of support for the Tar Heels' new football coach. Daily Mail published a scathing article yesterday, releasing all of the angry emails, again, from alumni or boosters, faculty, staff. They're like, what a total embarrassment to UNC. I am withdrawing all of my donations and future donations. One faculty member said, there's not enough money to hire the number of professors we need, but paying a 73-year-old guy with no college football experience $10 million is okay.
Well, I would assume that it's mostly boosters that are.
Yeah, much to the criticism of donors, some alumni and faculty, and I get that faculty point. Like if you're a professor and you're like, why is my department budget being cut? When like I'm just saying these were the letters that were in there.
Let's be fair. They didn't have to hire Belichick, but if you want to get Bill Belichick, even though he's 73 years old, I mean, he has won, 6 or 7 Super Bowls.
He's never coached college.
It's football.
Okay, I'm
Bill
just
Belichick
saying.
Couldn't coach a college football team?
I'm just saying, but also,
Hold it.
what is this outfit? What does this serve?
Has North Carolina ever been like, even in consideration of like the top couple of teams?
Sure.
I mean, if you want to get there,
They're a basketball school.
if you want to recruit kids that can get you to a national championship in football, I mean, you're going to get there faster with Belichick than with some other guy.
Well, anyway, what is this outfit?
I don't know.
Anyway, hey, this is great. This is fun. The Sharks were in the office yesterday. It was so nice. Sanjeev's parents were super nice. But this reminded me, because I know Shark has played this course, because I think he's played it with Joe Mama, and that's Bethpage Black.
Yes.
They are hosting the Ryder Cup.
Yes.
And they made a couple of changes. So bots were buying up all the tee times online, and it was a huge thing. And then people were flipping tee times on other websites. So now Bethpage says, hey, you want to book a tee time, you have to put $5 down to try to book a tee to get rid of the bot problem. But starting July 7th until the Ryder Cup, the only tee times are walk-up only. So you got to sleep in your car. You got to show up the day before.
I thought you always had to sleep in your car there.
No, they had online tee times. But the problem with the online tee times is that there were all these bots. So they have, a certain number of walk-up tee times, yes, every day. But it wasn't all of their tee times. Do you see what I'm saying?
Oh, I thought it was if you wanted to play Bethpage Black, you had to sleep in your car.
I know that there's more than one course.
But if you wanted to play one of the other courses, you had to sign up.
And I could be wrong. I could be mistaken. But because they're hosting the Ryder Cup, I'm saying now going forward, no online.
I thought they always had.
Yeah.
You had to sleep in your car. You had to sleep in the car, and then they just gave you, based on what time you got there, you got the ticket.
Yeah, that's a bonkers way to live.
Oh yeah, those guys.
But that's what I said. I think Shark and Joe Mama have done it.
They slept in their car.
Yeah.
You had to get there like around midnight or 2 a.m, and then.
No, they're saying now you have to get there 2:00 in the afternoon. Like that's how big it's gotten. So yes, you used to be able to get there at midnight because then they start handing stuff out at 4 a.m. Now they're saying you got to get there 2 p.m. I'm just saying that's what TikTok says.
It's crazy, and some of these courses.
But you've never played it.
No.
Because you're not going to sleep in your car.
No, and you can't get somebody to sleep in your car for you and all this stuff.
You can't get someone to sleep in your car for you.
But I heard also they have the same problem at St. Andrews.
Sure. But they're saying that this whole system could be adopted at other golf courses where you have to just put money down. Like some restaurants now with your reservation, you have to put $100 down, so you can't flip your reservation to Carbone.
Some of them are non-transferable.
When I went on vacation recently,
yes,
and we were in
Sardinia,
every single restaurant made you pay either $100 or $120 a person before you got there, and like Tony said, it's non-refundable, non-transferable.
Yeah.
Yeah.
Where were you eating? Because
That's what just.
when I go on vacation, I eat at Greg's and Pizza Express. Hey, finally today for my viral video of the day. Such a great video I showed yesterday with the men's rec basketball league playing characters from Toy Story. So then my algorithm recommended me another video. So Tom famously stopped playing basketball when he was 50. This dude is 85. Watch him take it to the house. Tom, there could be life for you. Look at this.
He's 85.
Yeah.
Oh my God, I take him over Saz in a heartbeat.
He's got wheels, man.
That's
Look at the socks. That's 2.
That's impressive.
Someone in the comments just wrote Olden State Warriors. The Indiana Pacemakers. The Philadelphia 96ers. The Grandpa Jazz.
That's good.
I love it. I love it. That's pretty good. That's pretty good.
Oh, man. The San Antonio Bone Spurs. No, I'm sorry. The Houston Rocking Chairs. I'm sorry. I could do this all day.
Yeah, go on forever, ladies and gentlemen.
Earl the Pearl Harbor.
The guy defending him was 90, I'm being told.
Yeah. Wow. But that's good.
so
That
good.
gives you, like, you could.
You don't remember Earl the Pearl?
No, I'm just reading comments. Because it's a funny
Earl the
joke.
Pearl. Good.
Yeah. What year was this?
Awesome.
70s.
Okay. Cool.
Yeah.
Anyway, hey, that's my time. Right on time today. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We're going to talk about confirm and send viewer emails. We'll be back in 90 seconds. Let's taste
By the way, Earl the Pearl, that's a good nickname.
Earl the Pearl Harbor.
Earl the Pearl Monroe.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's up 1775. South enough. We've had about a 30 handle range from 62.60 to about 62.90, and they're just about a tick off of that high right now. NASDAQ up 45. Russell up 4 and the Dow up 160 and change. They're all up around the same. I guess the Dow is the strongest of the group. It was the weakest yesterday. Volatility in by another 30 cents, 1941. You'll see that's a new low new recent low in volatility, down another 1.5%, signaling to me that much to do about nothing right now, Saz. Keep an eye on volatility, see if it percolates at all. Bonds are up 6 ticks. You just bought some under 3. I'm talking about under 3, under 113. They're 113.08. Sadnov, you bought the low, 112.31. How do you feel about that?
I would say I got lucky. I had a resting order in and I got filled. It's the only trade I've made. It's the only trade I've made today, so I haven't done much.
Good job out of you. Bitcoin up around 700 or so, flirting with the 110 handle again. Oil down 11 cents, non-event. Gold down 12, flirting with 3,300, 3,304 right now. Silver down 12 cents. Most of the technology stocks that Fernanda mentioned earlier this morning are higher. I'll leave it right there. I don't have anything else to say except Delta Airlines has earnings. I don't know how crazy you're going to be for Delta. IV rank of 38. Been going sideways recently over the last month or two. Monthly implied volatility is in the 50s. Maybe there's something to do. We'll have to check it out.
You have
an existing position.
I have a small position on there. I have the 46.55 strangle. 46.55. It's delta neutral. Nothing.
Yep.
Let's take a look at. Let's take a look and see what we got going on today.
Let's do it.
It's Wednesday, July 9th. Can't believe we're working our way through July so fast. It's unbelievable. Don't forget.
I know.
Don't forget this Sunday. If you if you're
still up from celebrating Saturday, which is July 12th, my birthday, and you want to do what on Sunday? Go ahead. What's Sunday?
Are you going to live stream your birthday party on Saturday night? Can I watch it? I mean,
You're going to be there. What do you mean, watch it?
Can I watch the? Well, no, I don't like where you're going to dinner. But can I?
You're gonna watch. No, that's Sunday. Going to dinner there.
Oh, then what are you doing Saturday?
We might change it though. Might go to Sophia Steak. You'll like Sophia Steak. Have you ever been?
No, I've heard it's gross. In the suburbs?
Oh my God, you are seriously.
In the suburbs?
I love you like a fat kid loves cake, but if you draw a line in the sand about something, you cannot see the other side.
I'm only saying this because somebody came in the other day, and they were
who?
I'm not gonna somebody that you would trust.
No, say who it is because I want to know his expertise. I want to know if I believe him. I mean, who
Scott.
Who is it?
Scott.
Oh my God. You and I both know Scott. If you were going to ask somebody about a restaurant, Scott would be the last person you would ask because he has no food.
Okay, listen. I'll tell you this much. It's a suburban steak chain. It's,
you know what? You're despicable.
You've become a suburb. You're a suburban. You know what? It's perfect for you. I take it back. You go there. Enjoy.
I'm sorry, oh cool one in the city. Yeah, unbelievable.
You can live stream it. Live stream the event. I'll watch it Saturday night. Live stream.
4.7 on Google. There's not one restaurant in the city that you've gone to that has a higher rating.
Live stream it. That's all I say.
4.7.
But on Sunday, if you want to meet us,
even my peeps say that JJ would beat Scott on a food scale rating.
No, Scott's bad, but
all right. I went too far.
You went too far. All
right. I stand corrected. I was just trying to make my point.
But here's my offer to you. So we're playing golf really early in the morning on Sunday.
I was offered a spot.
Okay, but yeah, we sold that spot.
I'll be still festivities for me. You know, it's
Hey.
You guys are going to play at 7 o'clock in the morning. I got to wake up at 5 o'clock. 5 o'clock, I'm still knee deep. I'm balls to the wall kind of thing.
Hey. After midnight, she's off the clock. All right.
Midnight. I'll be sleeping by midnight.
I'm just saying. After midnight, she clocks out. All right, she's done. She doesn't have to look at you for a long
My
time.
debt has been paid to society.
Yeah, right. She's paid her debts. Okay, your little birthday debt. You know, like, I mean, my God, she's gonna drag that meal.
This again?
I can't believe it's been a year. She's gonna drag that meal till like about 11:15. Okay, she knows at 12 o'clock it's over. Anyway,
so true.
If you want, we're going to be up in your neighborhood. We're going to go to lunch at Carson's.
Oh, okay, yeah, I might do that. Yeah, that sounds like fun.
That you can meet us for lunch, and I'm buying.
Wow, with those alligator arms of yours, how are you going to wear a shirt with a pocket in it so you can reach your money? How are you going to do that?
No, I got a gift card.
Oh, good.
No. If you want to meet us, we're gonna go for Sunday brunch, pork chop brunch. It's really good.
I think I have time. Lucky my schedule happened to be freed up at that time.
Yeah,
for a free lunch.
Right around noon Sunday. Nothing says noon Sunday like a beautiful pork chop.
Sounds good. I might have to bring some of my peeps with me too. Free lunch. This would be good.
We'll save you a spot.
All right, sounds good. Thank you.
Yeah. Anyway, look, we got to do this. Come on, let's go. Confirm and send.
I'm ready. I'm not. You're the one.
Come on,
that's
John.
talking.
Don't fall behind.
Come on, John. Where's Beth?
She had enough of us yesterday. It's Wednesday, July 9th. Let's go.
Let's do it.
All right. This person writes, this email is about copper, but I'm looking at a trade set up selling an 88 delta call and an 88 delta put in HG, which is copper. Copper was crazy yesterday. The markets were super wide. It has $2,200 or $2,300 in extrinsic premium. My break-evens are pretty far while still generating decent premium. If I were to sell the same strikes but out of the money, I would collect similar extrinsic, but the break-evens seem to shrink. With an IVR of 64 and I'm only looking for an IV crush with any strangle, why is the out-of-the-money options, this is the real part of the question, why out-of-the-money options over in-the-money options?
Why? Because you have a higher probability of success, but they're saying that you don't here, which doesn't make sense to me. But the break-even seemed to shrink. How could the break-even shrink?
Yeah. So the answer to this
break-evens
question
are going to be further out of the money if you're, because there's intrinsic value on the.
No. Just, here, really simple. Whether you do the in the money or the out of the money, okay, it's going to be exactly the same thing. There's no difference. But
they're saying it shrinks here.
I know what they're saying, but the reason they're saying that is because the markets were so wide in here yesterday.
Oh, okay.
That it was so inefficient that there is no way you could get an accurate number on the in the money or the out of the money options. And so what you're seeing is something that doesn't really exist. Sometimes when there's no efficiency, and I'm not kidding when I say some of the markets were $500 wide, some of the markets were $5,000 wide. So what you were looking at was a very inefficient marketplace, and it just looked like there was more edge on one side. Whether you do the in the money or the out of the money, and we always recommend doing the out of the money. The reason for that is you're going to get tighter markets on the out of the money than you're going to get on the in the money. That it's the exact same thing. So we always do out of the money. It's not favored. We wouldn't even consider in the money. And there's no exercise risk here. There's no assignment risk. It's just a function of liquidity of the options. Let's go to the next slide. I trade a smaller account. Right now I'm around 10 grand. My Theta number seems to be too small, and I'm wondering what I can do to increase it.
I mean, your Theta number being too small is going to be a subject that is going to be directly correlated to the amount of buying power you have. So, I mean, because you can use more buying power, put on more trades, your Theta number is going to grow. You can put on higher probability of success trades, but use more buying power so your theta number can grow. Now, I mean, if you're looking to increase it, you certainly can, and I think with a $10,000 account, you're not doing many naked options, but you can make your spreads wider, less contracts or the same amount of contracts, probably trading one contract, but make them wider spreads. Instead of doing $5 wide spreads, do $10 or $15 wide spreads.
Tony is correct. Right now in a smaller account, it is challenging to get your theta numbers up because implied volatility is low. And all of us have low theta numbers right now. So it's not just you.
Sure.
But,
and you know what? With volatility lower, you should have lower theta numbers.
Right. It's smart trading. You need to take less risk when there's less opportunity. You need to take more risk when there's more opportunity. But what can you do to increase it? You can widen the strikes, just like Tony said.
Yep.
You're not going to necessarily increase the contract size, especially in this market. Let's go to the next slide. What do you think it would mean if Trump were ultimately able to force Powell to resign? If I understand the Fed correctly, the chair isn't the only person to decide on interest rate policy. That is correct. But do you think politicizing the Fed would matter to the markets?
I'm going to say evidently not, because volatility is low, and I'm not going to give my own personal opinion because, quite frankly, I don't have enough information on the subject to really give you an intelligent answer to it. But the market's telling you war, feast, famine, everything that's going on in the country politically or otherwise, housing or otherwise, there's no real volatility in the market. So
the first time that this is an impossible question for us to answer, of course. The first time that Trump went after Powell, the market, specifically the bond market, did not like it at all. And the stock market didn't like it either. And there was a little bit of a sell-off. That corrected itself when Trump then backed off a little bit and said he's not going to change the chair of the Fed. And then the market kind of came back to normal. Lately, there's been a lot of rhetoric as well, but it hasn't impacted the stock market at all. Has it impacted the bond market? I mean, possibly. It's hard for us to say. Or the dollar. We don't really know. I will say this. The Fed chair is not the only person that makes a decision. There's a whole committee, and there's a lot of people that vote on it. But anytime the Fed is an independent agency, and you don't want to politicize the Fed at all, and let's just say it can't be a good thing, but we'll see what happens. Let's go next slide.
It's fair. I mean,
can't be a good thing.
Yeah.
I've been having a lot of success with zero DTE trades to the point where I'm not even paying attention to the VIX one day anymore. I'm just wondering if that's something you're still watching with your zero DTE trades.
Good on you. I think remember, with 0 day, it's instant gratification, instant pain. There's really not too much after the entry of the trade to worry about with volatility because it's such a fast moving product and subject to such small moves in the overall market. If you're just trading 0 days, I don't think volatility plays a big part in anything except for entry. Maybe when volatility is a little bit lower, you scale down a little bit. Volatility a little bit higher, you scale up on entry. Other than that, you're really looking at price. Price is king.
Yeah, volatility doesn't play a huge role in the zero DTs. The only difference is when volatility is really low and the VIX one day is really low, there's just not a lot of juice. Your success rate's going to be the same, but you're going to take the same amount of risk for the potential to make less money. But you can still have like a huge winning streak in there. If you manage early on the VIX one, even with the VIX one day low. Do we still watch it? Sure. We don't. It doesn't. When it gets under 10, we get a little nervous. But it's not like we don't hold to the VIX one day on the zero DTs like we would with IVR under 30 or IVR under 20 or that kind of stuff.
Sure.
So you're right. It's less important to us than any other indice. It's just good to know.
And VIX one day is 10.5 on the lower end of its range, as you would expect with volatility on the lower end of its range.
Yep. Let's go next slide. There's been a lot of talk recently about the tokenization of stocks. While I understand the advantages it could offer, how would it work in terms of existing float? Would it replace what is already issued? I guess I'm just wondering how it can be done without diluting what is already outstanding. A lot of words in there.
Yeah. I don't.
Let me help you. Let me help a little bit here.
I don't know the answer here.
There has been a lot of talk recently. One firm in UK, Robinhood, said, we're going to tokenize OpenAI and SpaceX, for example. It's they're non-public stocks in a secondary market, and both OpenAI and SpaceX came out and said, well, you can tokenize anything you want, but we're not involved in this. Don't make it seem like we're involved.
Sure.
When you hear talk of tokenization of stocks, this has nothing to do with the companies themselves. Like, these companies are not floating tokens. They're just they're floating listed stock like any other company would. So the tokenization of stocks has to do with outside of the companies. So it would never replace what's already issued, and it won't dilute the stock at all because it has nothing to do with the companies. They're not involved. When somebody trades a tokenized stock, somebody else has to create a basket of those, has to own that stock or create a basket of those stocks, which will essentially, guarantee whatever is being traded as a token. So let's just say that there's an issue of $50 million worth of a token of OpenAI. Then somewhere there's got to be $50 million worth of stock that is guaranteeing those tokens. It's not, the company has nothing to do with that. That's the challenge. That's the challenge. So no, it's not going to change the existing float because the company not even involved. And it's not going to replace what's already issued because the company's not even involved. And it's not going to dilute the stock at all. It's just a way of trading the stock for some people to trade the stock without having to actually, they could just own the token, which is guaranteed by a basket of the stock. Let's go next slide.
Got it.
What is the biggest advantage a retail trader would have over a professional? Let's say in the option world.
Sure. I mean, the biggest advantage is being able to do what you want to do and not having to do what somebody else wants to do, taking the other side of somebody else's trade. I mean, that's the biggest advantage. Now, if you're talking about like status as professional versus just a retail investor like I am, I mean, free quotes is probably the biggest savings for a retail trader. And being a professional trader, you don't get in line any faster or anything else than anybody else. I mean, you're just different tax consequences that I know of.
Yeah, the biggest advantage for retail traders over professionals in the world of options is that you get preference. So you get, if a professional is bidding $1 for something, okay, then a retail customer comes in and bids $1, they jump in front of the line.
Yeah, right.
So they move in front of the professional. So they have what they call customer preference. So if you're waiting for a fill, the consumer, the retail investor, has preference over the professional. That's only in the option world. In the futures world, it's a pure electronic book, and in the stock world, it's a pure electronic book. I mean, that's one of the advantages. Tony gave you the other one, which is you just get to do whatever you want to do, and your expenses are virtually zero, and your fees are lower. Like, the professionals pay a lot more for everything than you do, believe it or not. They have other advantages like leverage and things like that, but you have better technology, you get to do whatever you want to do, and your fees are lower, and you get preference.
Very good, my friend. Let's take a quick 90-second break. Even the S&P's flirting with their highs. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know, like when I answer the confirm and send that's
By the way,
in the question.
what are you eating?
Him? Peanuts.
Yeah.
Pistachios.
I ate a pistachio. You're eating and you're just kind of like chewing while he's talking. Like,
No,
I have nothing.
Always. It's
not eating.
Do you have some control over there?
None, no.
None.
And there's shells everywhere.
Oh my God, this is so good. I hope you can see this guy. I pray that you can, but I don't think you're going to be able to.
I pray that you can.
I pray that you can. I can't say who, but one of our insiders sent me this. This is Tom. I'm eating peanuts on air, and I don't care face. Here you go.
That's not on air. That's in the commercial.
What do you mean? How did they get it? It's not
They
on
just
air.
made that up.
See? Yeah, that's what we didn't want to see.
I'm surprised you like. I don't like. Yeah,
I don't like the way you chew your nuts. Okay, I'm gonna tell you that right now.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive.
It is time for an option jive. Sadnov, even the S&Ps are jiving to the upside, up 19 a quarter. It's a new high for the day. And Sadnov, you got your first winning trade out of the way, which is a good thing. You got that out of the way. We don't have to deal with those winning trades anymore. You scalped a little Bondolinis, about 13 ticks there. Good job out of you.
13 ticks is a nice scalp.
13 ticks is a nice scalp, no doubt about it. 100% agree.
Pre-market, we'll take it all day long. Plus, I need bonds higher anyway, so it's a good thing for the good kids. It's 8:13 in the morning, 8:14 in the morning. We are located in Chicago, so if you're new to Tasty, welcome. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. We've been doing this every morning for 3 hours. We start Tony and I for 3 hours. The show goes for 15 hours a day or whatever it is now. But we've been doing it every morning for 14 years. So welcome to our world. This is probably our, 14 years times 250 days will get you to about 3,500 pieces of research, just option jives alone. So 3,500 option jives later, we're at volatility villains. We do about 3 pieces of research every day. So figure that's over the last 14 years, just a little over 10,000 pieces of research just on our 3-hour show.
Yes. Yeah.
It's insane. It's all archived. It's all free. And Tasty has created more content in the last 14 years than everybody else in the option world combined, and then double it, and then double it again.
Pick a number you're comfortable with.
Pick a number you're comfortable with. This network alone has created more options and derivatives content than everybody else in the world combined.
It's pretty wild when you think about it.
Yep. Anyway, today's piece by our research team, Volatility Villains, 5 metrics every option trader should control. This is a really good evergreen type piece. We have not done it before. It's brand new. And it's long, so let's get going on it.
I'm ready.
So all option strategies have risk. All trading has risk. Not just undefined risk trades, but defined risk strategies can also have significant losses due to factors like volatility, poor timing, overpositioning, or just the market just does. You know what? Sometimes the market wins. That's all there is to it.
Sure.
So tools on the platform can help us estimate likely outcomes. One of the cool things about the technology that we build is we don't tell you what's going to happen next, but we tell you, we provide you tools that afford you mechanics so that you can figure out metrics like probability of profit and expected move. And maybe they all help you because that's what we do it for.
Yep.
So active trade management, such as rolling positions, taking profits early, or adjusting size, can also help to mitigate risk. So let's go to the next slide and let's look at some of the potential villains, which is volatility of P&L for starters. We are always we're always looking to reduce the volatility of our P&L. You know, being able to quantify it first and then being able to reduce it is important to us because the less volatility of P&L you have, just the easier your life is.
I think the more successful you'll be.
Of course.
Right.
One way to quantify the risk of a strangle is by using standard deviation of P&L. Since there is skew to this distribution, this metric is not ideal for estimating tail risk. However, this can estimate the range of most likely cases. Everything we do at Tasty is based on most likely outcomes. We can't tell you what's going to happen in an extreme case, but we can tell you what's going to happen in the most likely case. And that's what we're all about. So for early managed SPY strangles, roughly 88% of the losses fall within 2 standard deviations of the P&L mean. That's why in this business, we live inside of 2 standard deviations. On the Tasty Trade platform, there is a dotted line at 2 standard deviations on the trade page on every single option series. We live inside of that world. Let's go next slide. Another villain is, another volatility villain, but this is something you should know. Conditional value at risk. We call that CVAR. CVAR gives you an estimate of the most likely extreme loss at a certain likelihood level. So for example, for early managed SPY strangles, losses exceed at least 200% of the initial credit, at most 5% of the time. Tasty Trade is the only platform I know of that actually publishes your CVAR for every trade on your order entry ticket. So we give you your pop, your delta, your beta weighted delta, your max loss, and your CVAR, which is your conditional value at risk, what happens in the worst 5% of all cases, right on your trade ticket. Next slide, John. So the next one we look at is buying power reduction. Why do we look at buying power reduction? Because this is the best back of the envelope way of determining what your risk is. When a short premium trade is open, your buying power reduction is set aside to cover the potential loss. That's what the brokerage firm takes. That's a reasonable assessment of risk. That's a cheat sheet way of doing it. For 16 delta strangles, this has historically covered nearly all losses. While losses can occasionally exceed buying power reduction, it remains a useful tool and a practical estimate for the worst case risk. When you look at 16 Delta SPY strangles, 45 days to expiration, if you manage early, the number of times we exceed it is 0. If you wait till expiration, it's about 1.1%. That's the world we live in. Let's go next slide.
The life we chose.
Last one is directional risk. So delta is dynamic throughout a trade. A new directional exposure of a delta neutral trade is the opposite of the stock's movement. So one of the things you have to look for when you're selling premium like we do is when the stock price goes up, you get shorter. And when the stock price goes down, you get longer. So you have to learn how to address your positions by rolling the untested side either up or down. Classic Tasty. Next slide, John. Oh, and the last one. I'm sorry. This is the last one. Durational.
Yeah, we had one more slide. That was 5 or 7. This is 6.
The shorter the duration of the trade, the riskier it is overall. And that's why we live in the 45-day window and manage early rather than the 24-day window held to expiration. So the shorter duration strategy yielded a lower annualized return on capital and experienced higher volatility and larger losses. You can see we put the numbers right in front of you. The largest loss was less than half if you go to 45 days as opposed to 24 days. The return the return on capital, the volatility of that was greater in the 24-day period, and the annualized return on capital was much greater at the 45 days. So there's your metrics. That's all we do. We provide metrics. We don't fight them. Let's go next slide. Here are your takeaways for this really good evergreen piece that you can go back to at any time. 5 metrics that every option trader should control. So loss risk is quantifiable. Most losses in early managed 16 Delta SPY strangles fall within 2 standard deviations, and extreme losses occur in only 5% of the cases, making CVAR and P&L volatility very useful risk monitoring tools. Buying power reduction as a risk anchor. It reliably covers all historical losses and serves as a practical estimate for worst case exposure. Tony and I talk about this all the time. Know your buying power reduction, and that's a way of figuring out your risk. And time and direction matter. So shorter duration increases risk and volatility, while delta exposure changes with stock movement. So just, give yourself enough time to be right, and just know what to do when the stock moves against you.
Very good. Like you said, a good evergreen piece there for a lot of people who might be new to the Tasty Live experience here. So enjoy that. Put that on your fridge, I believe. We'll take a quick 90-second break and come back. We've got the opening bell next. Even the S&P is up 19, NASDAQ up 62, Russell up 9, and the Dow up 174. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
That's right, Tomas. That means the opening bell is here and upon us soon in about 2.5 minutes or so. Even the S&Ps are down. No, they're up $21 as Bat had predicted. NASDAQ up 67, Russell up 10, and the Dow up 188. What do you think, Sadnoff? Going into the number tomorrow, we hang right here at 6,300. We don't go too far. We don't go too fast. Big round number.
Yeah, I'm not. I'm a seller at 6,300. I mean, we're small right here. I don't know. I mean, I'm looking for a spot, I think, to get maybe to add some short deltas, you know.
Volatility down 26 cents. Bonds up 12. You made a nice little scalp in bonds. And you
love the bonds. Love the bonds here. Love the bonds. Like the dollar a little bit. Don't like the. I like the dollar and the bonds. Don't like stocks. Looking for
what's
a stock
the euro
to get
doing?
short.
Euro's down small. Go ahead. What's up?
Yeah, we're making a little money in there today. I want to get short Circle. I don't know how.
You know, I was just looking at that. The stock is hard to borrow. The markets are wide in there. You look at August, you've got $1 to $2 wide markets. Maybe they'll tighten up, obviously, when the market opens. You do have 100% implied volatility, so there are things to do. Volume obviously is going to be zero. When you look at the open interest, there's some volume in there. So I mean, I don't know. How tight the markets will be on the open. It might be something to do. The stock is only paying, I think it's showing under a 2% interest rate. So that's not horrific. It's not like the 150% interest rate you might get with some stocks that are hard to borrow.
Yeah.
Maybe stock is a play.
I put an offer in to sell a few calls just to see if I can get filled on somebody that needs to buy them on the opening.
Wow. Okay.
Yeah, I mean, I'm just taking a shot here, just trying to guesstimate.
It looks up $5 pre-market here. We got about less than a minute before the market opens.
I'm trying to sell some 260s. That's the expected move, up $50 by August. So trying to tell some 260s at $11. I don't know what else to do. I don't think you can get filled on spreads. I mean, I just want to be a little bit short it.
Okay. Beautiful.
But I don't think I'm going to get filled. I think my best chance is on the opening, a public order. They have to match me up.
Understood. So you're trying to play that whole you lean first over the professional game right now.
Yeah, I don't usually play this game, but I feel like, if I got to get a chance, let's see.
You feel like it's time.
Well, I didn't get filled, so.
Well, I don't even know if the options are open yet.
Well, the stock's up.
Oh yeah, they are open. They open. Oh, there you go. The 260 calls. Are you crazy?
I did get filled. Well, the stock's a lot higher.
Yeah, up 7.5. Yes, that is correct.
It would looked up 5. Yeah. So now I'm selling.
Yes.
Now I'm selling the bid.
That's how you get in, Sosnoff.
You sell the bid. Nice job, Tom. Yeah. Well, at the time, I thought it was the offer, but it is what it is. I had to get involved. So now I got.
You got filled. You got filled in piecemeal. So I mean, it can't be that great of a bid.
Well, it is now with the stock up $8. Yeah.
Now it's. I want some now. Are you kidding me?
Yeah. Well, the stock before it looked like it was going to be up 4. It opened up 3 3/4. Now it's up 8.
Yes. Now it's up 860. Let's see what else is going on in the market. Even the S&Ps have caught a bid. They're up 24 side, now flirting with that 6,300 number we were talking about. Let's see what the buckers are. UNH is down around $5. Baba down around 230. Palantir down around 2. Tesla down around 70 some odd cents. Baidu, which was down a lot more before, down around $1 and change. Some of the other stocks to the upside, Lilly up 9, your beloved Circle up 9, Meta and Boeing, Meta up 6, Boeing up 7 and change. MSTR, which is MicroStrategies, I always make the mistake and confuse it with MSFT, which is up 4, MicroStrategies up 5 and change, Coin up 3. Sadnov, what do you think here, my friend? At 6,300, it was the high. We're there now.
Yeah, I'm just looking at some of the positions. Yeah, that UNH move is actually pretty good for us because we have shorts, a lot of premium in there. IB rank is high. That's a good one so far.
Oh, joy.
PLTR, that's down for a change. I wish I had some answers for you, Mr. Batista, but bonds up 14 is about the best thing we got going for us, which is offsetting yesterday, which was the worst thing we had going for us.
It's amazing how things work out like that.
Yeah, I'm just looking to see if there's any kind of like, what do you got for me, dude? What do you want?
I don't have too much for you right now, Thomas. I'm wondering if we're going to sit here all day at 6,300, which would be a tragedy. I don't know if it would be a horrible day.
Are we over 6,300?
Yeah, 6302.75 was the high. We're 6301 and a quarter right now. Volatility in by 35 cents. You've got bonds higher, market higher. Oil lower by 55 cents. Gold down 10.
It's
looking at your own account here, Sadnov.
I'm fine. I got
nothing really. No shakes.
No.
Your Delta Theta number is relatively low. Your EXT relatively low with everything that's going on today.
I'm really under. Yeah, I'm underexposed.
Underinvesting, overperforming. Sosnoff, positive P&L for you today.
Yeah, I'm very much underinvested here. Looking for things to do. My biggest shorts are NASDAQ and S&Ps and RBLX. That's about it. Yeah, I mean, I'm looking forward actually to the next segment because we get an opportunity to potentially find some trades. Let's see. S&Ps, yeah. 6302.
6302.
And bonds up 16, which we desperately need. Are Right, Pat, I'm gonna need some trade ideas here.
I know you're gonna need some help. The high for the week is around 63.15 or so. I said the high was in for the week, Sadno. Please, market, don't make me a loser. Please, please. It looks like they're trying to make me a loser.
Well,
don't even say it, okay? Don't even say it.
all I was going to say is they don't have to work that hard.
I'm doing it myself. Just relax.
I am looking for something here to see what we got to do.
Well, volatility collapsing, no real earnings to look at. Markets catching a bid. I don't think you step in front of this right here, Sadnov. I mean,
well, I certainly have not. I mean, we're already short, but it's not that big a deal. And I feel like if you're going to get short, you probably, this is a good area. 63.
Going into jobless claims, bond Ivy rank of 10.
Yeah, I know, but 6304, kind of like that area to get short. I haven't done anything yet. Taking a quick look at all the stocks on my watch list. Surprises to the downside. Maybe Baba.
That's not a surprise. It's America, baby. Netflix is your surprise. Netflix down 3 and change, or I'm sorry, 5 and change now. Baba's down 3. Palantir, which is something you've been trading back and forth a little bit, down 2. All the Chinese stocks seem to be lower with volatility. No big surprises there, sound enough that I can see.
No, there's no surprise. The question is, do you nibble on a little Baba? It's down, almost, well, not $20, but $15. The problem is you got Ivy rank at 13.
Yeah, Baba's not down $15. You're talking about in totality over the last couple of days. Down $3.45 right now today, yes. But you are correct, Sadnov. Near its April lows that it was making. You are correct, with markets at highs.
Okay. All right, I'm done.
You ready to take a quick 90-second break? Don't worry about a thing. Our viewers have come to your aid, Sadnov. We got What's Your Assumption next. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. Even the S&P is up 36.5, Sadnov, America. But don't worry about a thing, Sadnov. We've got, what's your assumption?
Down. I'm ready.
I'm ready for you.
I need some trades. I need some trades.
Well, you're going to see 10 of them right now, Sadnov.
All right, let's do it. Come on, John, let's do it. What's your assumption? These are trade assumptions that have been sent in to us from viewers all over.
Okie dokie.
All over this universe. Ooh, first one from, I think that's supposed to be Athens, Greece. Dios from Athens, Greece. We have an awful lot of traders from Greece.
Oh, and they're hanging out on a beach. They're just selling putties.
I could live in Santorini and trade for the rest of my life. I could do that.
Maybe you'll make that happen someday.
I could do it.
You think you can, but I'm sure you never know. Yeah, okay.
I could do it. Of any country, I think one of the Greek Isles, I think in the Greek islands somewhere, I could do that. That's about the only place I think that I've ever been that I could be. I'm happy there. Tavern food.
Then you should try to make that happen.
I don't want to. I mean, you
don't like being happy. You're not happy unless you're unhappy.
Yeah, I'm not happy unless I'm unhappy. TMUS. I actually don't know what this is.
Me either. Let's take a look.
Oh, it's T-Mobile.
We knew that. I knew that.
To be fair, I don't even know the last time I traded T-Mobile.
I don't know, but it all of a sudden became a $230 stock. It's down $4, $232 right now. Ivy rank of 45 is pretty good. Earnings July 23rd, Sadnov. What do the August markets look like? They're okay. Not great.
Yeah, it's going to be a challenge. Good IBR before earnings. When did you say earnings were?
Earnings are July 23rd.
Okay.
Today's the 9th.
38 days out. Some put skew. Maybe a jade lizard or an iron condor. I don't have a huge axe to grind in here. Vol. Where's the stock trading? 230.
Yep.
I can iron condor this off. Dios.
Sure.
I think I'll get a better fill actually than Jade Lizard. Expected move in here is $15. Stock's trading, let's say 230, a little over 230. So, and they only have 10-point wide strikes. So the choice here, let's go to the 210. This could be a little bit of a cheapie, but 210, 200, and we've got to go 250, 260.
250, 260. Okay.
Yeah, I don't know. I haven't traded in here enough to know how much I have to give up to get filled. I mean, it looks like around 235, 230, 240-ish. Let's just see. 240.
You did get filled at 240. It was only a couple of pennies below mid price.
Yeah, that's okay. 240 is cool.
All
right. Yep. Thanks. First trade from Athens, Greece. I like it. Something different.
Good job, Athens.
We haven't traded T-Mobile in like probably a year or two. Let's go next slide. Frank B from Toledo, Ohio wants us to go into the lion's den. Wants us to go rattle some cages here a little bit. Copper, which was out of control yesterday. Trump says he plans
I wonder if you're going to take your own advice here. Copper down almost 3% after being up almost 8 or 9%.
Well,
yesterday.
it's trading decent. Let's just say, what does he want to do here? Frank B wants to do neutral strangle. Okay, well, if you're going to do a neutral strangle here, you're going to go pretty far.
You don't have a copper position.
No, I have no copper position. I'd go to the 16 delta, the 1 standard deviation, because I want to be outside. I don't want no hero crap. Man, they got some put. They got some. Oof. Let's see. 4, 5.
Sadnov, breaking news: NVIDIA becomes the first company to reach $4 trillion market cap. NVIDIA up $4.20.
It's pretty wild.
It really is.
6.5.
That comes from my Taiwanese source, Christopher. You might know him as Christopher Vecchio.
6.5, 475. This is a very. I'm not sure. I got to play some games here, Frank, to see. Like mid price is 960, and I don't. I know.
Pardon me.
I don't want to give up very much. We're going to see if we can get filled around mid price because I don't want to be. I watched what happened yesterday in here and it was ugly. 960 is mid price. We're going to leave it in for a second. We're going to see what happens. Okay. We're going to keep going, Frank, but we're going to work this.
Sure. Now 960 is like $2,400 in credit, just to put it out there for everybody.
Yes, it is. So that means
$2,400. That's right.
So 960, 2,400. That means it's what is that? $25, right?
That is correct.
Yeah,
a full point. Yes.
Yeah, $25 a point. Let's go to the next slide. We're working it, Frank. I'm just a tick under mid price, so we'll see what happens. Justin from Woodstock, Georgia. He wants to look at Reddit. We have a bunch of Reddit positions on, Justin. So let's see. Reddit's down 6% the past few days. I'm pretty bullish on it. Okay. We're just a hair long Reddit. We have the 135.
Reddit up 80 cents.
Yeah, we have the 135, 170. I am happy to add to that position. Because Reddit has almost a 50% implied volatility. I think you do add a little bit of upside to here. I'm going to do the 115, 195, and I am going to add to my position. Hang on one second, Mr. Batista.
Oh, okay.
Take a fill. So
you did in Reddit 3. What'd you do here? You rolled an existing position.
I rolled an existing position. I sold some more of the 115, 195.
Got it.
And I'm trying to fill this copper strangle, but I'm moving my strikes, moving my price down. Nothing done. You got to give up. You got to be They're not accommodating, or they're taking juice out today. I started at 960. I'm down to 940. Nothing done yet. Let's go next slide. So I'm trying, Frank. Philip from Pasadena, California is looking at. Philip is looking at a firm. We have not traded this in a while. AFRM. IB rank is 12. Good fundamentals, possible break even. Buy now, pay later. Had a correction Thursday morning. Bull put spread, 45 days out. Well, the stock is also pretty close to its high, Frank. Let's see. What does he want to do? He's bullish in there. Bull put spread. Expected move in here is about 10. That's under $10. Stock's trading for 68. Bull put spread.
Just to give you an idea about your copper for a moment, Sadnov, 26 from my time when he sources, by the way, 2,600 copper options have traded despite the width, which could be hundreds of dollars at times. It's also hundreds. It's also a multiple of the average per hour, so like 100 times the average per hour. So copper's definitely in play here, Sadnov. So I would expect volatility to come in there.
It's coming in a lot. I mean, but that's a firm we're filled. We sold the 62.5, 57.5 put spread for 124. But that's what happens when everybody tries to jump on, when the markets get better, people come in and they're just
it's about half the open interest enough of just traded today. 1,900 puts versus 700 calls.
Yeah. So I've been very aggressive here. Started at 960, worked my way down to 930. And literally nothing done. They're just taking. I could see the premium coming out as I'm trading, and the market's just following they're following my trade. They're not. Every time I take it down at a nickel, they take it down a nickel, which is normal for a very thin futures market. They will adjust prices based on customer orders. It happens. Let's go next slide. So we tried. IBM, Lizzie from Fall River, Massachusetts, before earnings, cautiously bearish. Maybe take the money and run before earnings. Augie Strangle. We have no IBM position on, Lizzie. So stock has been pretty weak as of late. She wants to look at August, right?
Yep.
And she says 325, 260. Pretty neutral. Said 550. It's more like 540-ish. Not even.
Okay.
It's come down a little, Lizzie. With the stock rallying. I don't hate this trade because the IV rank's high. And I do like to have an IBM position on, but unfortunately, I'm not going to get filled where you got filled much better. This trade might even be 535. Nothing done. Oh, filled in IBM.
Oh, good job out of you. Even the S&P's up 41, making highs.
Yeah, thank God we didn't sell them yet.
Praise be.
And in copper, I'm already down to 920 and nothing done. So they really are taking some juice out. Let's go to the next slide. Oh, circle. We have a circle position. We just did it this morning. Stock is up. Oh, it's only up $2 now.
Ooh, look at you. Those calls you sold at $11 or $10.40. So enough mid price.
Yeah. I mean, where should I buy them back? $10?
Sure, why not?
Let's see what DCJ wants to do. DCJ from DC. Falling back from the highs near the 300. This is a new range for cycle. Just a pullback or shoot higher? I don't know. Oh, filled in HG.
at 920.
They finally got to
0.0920, which is about $2,300 in credit.
So, DCJ, I don't know what to do in Circle either, except that except I think
you got shorted.
Except I got shorted this morning by selling some naked calls, and I don't like the stock here, and I'm only just trying to scalp a little bit on them, but I just wanted to see how hard it is to get fills and things like that in there, and it's not easy. So I'm going to leave our existing position. I like being a little bit short in here.
Okie dokie.
I mean, that's all I can say. If I can scalp a buck on them, then I'll feel like, okay.
I mean, in hindsight, it was probably a better stock trade than option trade. I know it's a hard to borrow stock.
I know it's hard to borrow. I should have went to the trade desk and asked to see if I could borrow any.
Yep.
And done a locate, but
yep,
it would have been a better. Well, it's hard.
A better
to say.
opportunity trade.
Yeah.
Because volatility actually seems to be expanding a little bit. I know the IB rank is only 1, but it was under 1 earlier.
That doesn't mean anything.
I know. I'm just
because it's a new stock. It doesn't mean anything. Let's go to the next slide.
Yep.
Daryl from St. Louis, Missouri, bearish on the euro. So speculating on a daily 2-hour play where the London session overlaps the US session, optimum liquidity, looking for a pullback reversal from the highs. So when you say you're bearish, Daryl, that means you want to sell euro and buy US dollar. Right?
That would be what I think, yes.
So I actually have that position on. So I am short the euro right here, but because you want to do it in a different way, I am going to go to my Tasty FX platform. Now I cannot push this through on the follow page, but I can make this trade. Euro USD. I'm going to click.
That's true. And if you do want to make this trade, all you got to do is go right to FX. If you have FX already loaded on your platform, all you have to do is have them do it for you, meaning just fill out the paperwork. You could see the Euro USD right there.
Yeah. So Euro USD, I'm going to place trade filled. Positions just to confirm. Yes, I'm filled. So let's say, where did I
are you buying euro and selling USD?
No, I'm selling euro, buying USD.
So you're hitting the bid on this, correct?
I hit the bid, and I
just want so you would click on bid sell.
Yes.
To place this trade. Hmm?
Yeah, I sold it when they were down. I think 210, down 225 right now. Let's see what happens. We're up a couple pennies. That's it. So I did fill this. I did it in the spot FX market because that's how you wrote it on the screen. But we have lots of positions on in the currencies. So we did fill that trade. Okay.
Got it.
We'll see what happens later on. Let's go to the next slide. I can't push that through on the follow page yet, though, because it's separate. Ross from San Lorenzo, California. He's looking at Netflix. He's bearish, 60 days, at highs, decent IBR, call ratio, or broken wing butterfly, 15 or straight ratio for Saz Grande. Okay, so hold on a second. Call ratio or broken wing butterfly, 1580, 16. That's a regular butterfly, isn't it? What am I missing? Oh, 1960. I'm sorry.
Oh, there you go.
Okay. Hold on a second. I got to look at this for a second.
You got to take a closer look here upon further review.
Netflix. Stocks trading for $1,200.
$100.
I don't even know. Oh.
Wow.
CRCL.
$10 you got filled in Circle. Stocks unchanged. Beautiful. Good job out of you.
Positive scalp for second positive.
That's two today, Saznoff, with the market up 37 handles. Unbelievable.
1580. How wide? These markets aren't too bad. He wants to buy the 1580, sell the 1620 twice. Okay. Why buy the 1960? There's no market there.
Mm-hmm.
So let's see. What can you buy for less than $1.31 in credit? What about the 1720? I know this sounds weird, but I'm just trying to find a these are hard, you know, Tony, when you try to do a broken butterfly.
Sure.
And the markets are like really wide.
Mm-hmm.
Like, I don't know what this credit should be. I'm guessing, like, I don't even want to guess yet. I want to see what happens when I put an order in. Because I'm not sure. Electronically, you know, since there's nobody on their side, there's nobody that can laugh at me. So they can just all the system can do is reject it. So I'm trying for this 1530, 1620, 1720.
Okie dokie.
I don't know where this trades. I think it's going to trade like a 25-cent credit. I'll leave it in. I'll leave it in for a second, see what happens. What's next? And then I'll adjust it, Ross. I don't know. This is a tough one because the markets are so wide in there. From Newark, California, or
Newark.
Newark, Canada. I'm not sure which one it is.
One of them.
Elmir. Corn is close to its lows. So many factors can drive it higher. We do have a bunch of corn positions on ZC. What I love about our customers is they're all over the place in every kind of underlying. Corn, ZC. We are currently short the 405 strangle, which is a long delta position. Corn's only down 25 cents today. What does our buddy here want to do? August corn.
He's bullish.
August corn is on its lows. He's bullish. He wants to sell the 380 puts.
I mean, corn hasn't had an uptick. I got to give him that. IV rate of 72. It certainly is a logical contrarian play here. August corn is the same corn that's trading now on the futures.
The one that fits us the best is the 375 puts because we have a lot of other positions on in there, and this doesn't overlap. Filled 4.25.
Okie dokie.
375 puts. So it's a cheap trade. Max profits, you know, a little over $200, right? It's max profit at 4.25 is like 212 or 212, I think. So Almar filled. We sold the 475 puts. High probability trade. Let's go.
212.50 Sosnoff is the number you were looking for. That's the amount of credit.
All right, we'll take it.
Yep.
Aaron from Waxhaw.
Aaron, what's up?
North Carolina, looking to 6J, wants to buy the yen and sell the British pound. I have this trade. I don't have this specific trade on. I have something very close. / 6J. Yen's up a little bit today. He wants to buy yen / 6B. British pound's down a little bit today. So you want me to do this? You want me to do this? You want me to buy into strength and sell into weakness? But he did not know this when he wrote this. I actually like this trade, Aaron. But I want to do it with I actually like this trade. I just want to do it. I want to do it when it's a little bit more our way. But in September right now, I'm going to do something a little bit weird. I'm going to sell a call spread in the British pound.
Okay.
And I'm going to sell a put spread in the yen. Same thing. But I already have too many other positions on in there. 6J. And I'm going to sell a put spread in the yen. About the same amount. 67, 66. Okay. I'm working both. And not filled yet, working both at mid price. When I get filled on one, I will do the other. And let me try to do Netflix really fast. Filled. Knew those bastards where I was a penny or two away. 22-cent credit Netflix.
You got it.
It'll be fun to watch. So we're still working the British pound, Japanese yen trade. Circle, we didn't do anything in because I had put a position on there this morning and we scalped it. So it was something. So let's start from the top. In T-Mobile, we sold an iron condor. In HG, we worked hard, but we got filled on a strangle. In Reddit, we also sold a strangle. We actually had a position on there already. We doubled the size of our position. In a firm, we sold an out-of-the-money put spread. In IBM, we did a strangle kind of pre-earnings. In Circle, we covered our existing position, so we didn't put a new position on. In the Euro, in spot FX, we bought Euro, sold you. I'm sorry, we sold Euro, bought US dollar. In Netflix, John, we actually filled in Netflix. We did a broken wing call butterfly for a 22
that was the
cent.
last one that we just did.
For a 22-cent credit. In corn, we sold a naked put. And in the Japanese yen, British pound, no, we did not fill that one. So that one gets an X. We're working it, but we are not filled.
Got it.
Okay? So we did 8 out of 10.
Beautiful. You ready to take a quick 90-second break? We can do that, if you want to, because we've got the Skinny on Options Matt. That's right, with my man Jacob next. Want to do that?
Sure.
Awesome. We'll take a quick 90-second break and come back. Even the S&P's up 37.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of choices, you'll get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. It's so totally boring. My card's on the table, hash mark. Facebook is disabled.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with my man Jacob in the house. That's right, the skinny and abscess Matt. How are you, my friend?
Good morning, Tony. I am well. It sounds like you're doing great and chipper. You've got Tom keeping you happy and cozy.
Always. Happy and cozy is the way I like to go through life when I'm with my friend Tom.
Yeah. Tom, how about you? How is Tony making you feel happy and cozy?
Happy and cozy.
When you're with your friend Tony.
Happy and cozy, man. Happy and cozy.
Yeah.
Nothing wrong.
No, so
happy and cozy.
So actually, I haven't gone back and watched your two's presentation, but last week I thought that the market measure on Thursday, the 0DT piece, was a little surprising to some people, or would be surprising to some people, because it was looking at how Theta changes over the course of the day, and it died off at the end. And I think that sort of went against most people's longstanding, rule of thumb, which is that Theta of a trade increases over the life of the trade.
Mm-hmm.
And so today we're going to sort of get into what was going on there, why that's, that is how it plays out in the model, even that's not how we usually think about it. And sort of what's special going on in the 0DT marketplace that's different from sort of every other trade that we do, and why it's different that way. So that's what we'll do for this game. We're gonna really unpack some Theta and try to dial in right near expiration at the end. So let's look at our wrinkles in Theta.
Let's take a look.
Right, that the conventional wisdom is that Theta is going to increase over the life of a trade, and we're going to really try to see why that's not, strictly speaking, always true. Yes, let's look. So Theta is our most important Greek as premium sellers, because it's the options change with respect to time, right? And the whole idea is that we take on risk, and then if time goes by and our risks haven't bit us in the butt, then we've made some money. And so to put up the Black-Scholes formulas, it's this really convoluted thing. I've got this minus plus and this plus minus here because it's different for puts and calls. But one of them is the minus plus. One of them is minus RK and plus QS, and the other one is plus RK and minus QS. And right, I've got all the notation up here. D1 and D2 are in really tiny print because they're hard to think about. But where they should be thought of it really is as sort of the volatility and time to expiration normalized expected moves, or not expected moves, but where the strikes are. Right, it's where K would fall. It's how many expected moves K is out of the money. And then that's D1, and then D2 is that, but with a forward risk-free rate adjustment. Okay. matters. We've done an Unpacking Black-Scholes formula before, where I've sort of delved into D1 to D2. We might do another one in a couple months. But for now, just think of those as sort of measuring how far out strike breaks would be. So given how central the theta decay is to our short premium positions, especially when we're dealing with non-directional trades, let's try to dig into it. And so let's do the next slide, and we'll have a little bit more to say, which is that the first way that we think about theta changing is with respect to the spot price, right? When the underlying moves, your thetas are not going to be constant over time, and that gets measured with charm. Charm is a second order Greek. It's in many ways the only second order Greek that most people use other than gamma. And what it is usually it's not thought of as how theta changes. With the spot price, it's thought of as how delta changes over time. But we've got the Schwartz theorem, which says that the equivalence of mixed partials, so Schwartz symmetry theorem, which says that these two things for well-behaved functions like the ones we have in Black-Scholes are identical. Which is sort of a surprising and unintuitive result of multivariable calculus, that if you look at how theta changes over time is going to be exactly the same as how theta changes with respect to spot prices is going to be exactly the same as how delta changes over time, that these two mixed partials are going to be equivalent. And what that says is that if we're thinking of it as its effect on theta, it says that when the strikes get approached, right, if your deltas if your underlying is moving towards the strike from either side, you expect the theta to become more sensitive, right? Time matters more when you're closer to when you're closer to at the money than when you're further. If you're really far out of the money, it doesn't really matter as time goes by, nothing much happens, you're really far out of the money. But if you get close to the money, then you would expect your thetas to increase. And so that's our general charm approach. So that sort of fits into this idea of, as time winds down, we expect theta to increase. So let's look at why this isn't how it always plays out. On the next one. And the thing here is that because there's this time and volatility intertwining relationship, right? In the formula, as they occur, you never see volatility without a factor of square root of time until expiration, right? Or you'll see volatility squared times time expiration, or volatility times square root of times expiration. They have this square root changing. So if you would cut time in half, that's about the same as cutting the volatility by square root of 2. And similarly, if you double the time, that's the same as multiplying volatility by the square root of 2. This is TP's old rhyming ditty that I won't try to sing for us. And so, right, I've got here's an animation sort of showing I've done a normal distribution instead of a log normal distribution. That we can imagine log of s on the x-axis, but as the time till expiration shrinks, the distribution of future prices contracts. Right, it becomes more and more concentrated at the current price, or at the logs where log is 0. And because of that, if you have a fixed strike, right, you don't change the strike of an option after you've traded it. Right, that vertical bar. It might start off being somewhere, close to the money or in sort of, move to the one expected move, and all of those are going to have pretty substantial theta amounts, right? But after a bit, right, when we get real close to the expiration, your strike is essentially very far to the money. It becomes part of that very flat tail of the distribution, right? The distribution comes in past it, and once you're there, then it's like your option is very far out of the money, even no matter what your strike was, right? It could be $1 out of the money, but if you're only 2 seconds from expiration, $1 out of the money might as well be $100 out of the money. It's not happening. And so what happens is that the contracting distribution pushes the strike out past the horizon of like reasonable things that might happen, right, out and way into the tail of the distribution. And this means that our moneyness, even though we think we're close to the money, it doesn't really stay that way. It becomes a far out of the money trade near expiration. And I think that sort of as a rule of thumb, a good way we often talk about the moneyness of an option, right? You're in the money, at the money, out of the money. But that should always be thought of as a multiple of the expected move, right? That you're not $5 out of the money, you're 1 expected move out of the money, or half expected move out of the money, or 1.5 expected moves out of the money. That gives you a much more accurate representation about about the moneyness of the option, about how far in or out of the money it is. And as a result, when time goes by, right, as our thetas are ticking away and time is increasing, this expected moves shrink, right? Because the expected move is volatility times square root of time until expiration times current price. So as time till expiration shrinks, the expected move shrinks, and so the amount out of the money that things are increases, and things become more out of the money. We can see this in a more a less pictorial and more formulaic version on the next slide, where we've got a nice. I've got a funny joke here at the end for our Calc 1 students.
Oh my God, nothing says fun like Jacob.
Yeah, funny. So all right. I'm gonna take the formula from the first slide, and we're gonna simplify it a lot by setting the risk-free rate and the dividend rate both to 0. That makes a lot of the terms drop out, and that's very fair because near expiration, right? There's not that much time left. They don't really matter. Or equivalently, both the risk-free rate and dividend rate only are affected by linear time, whereas volatility is square root time. And so for very small times, right? If time is a half of a day, then square root time is going to be, or it happens a quarter of a day, like 6 hours, then square root time is going to be half a day or 12 hours, whereas time is only a quarter, right? And that becomes more and more extreme as you get closer and closer to 0. And so these linear effects fall away, and only the square root effects remain. Square root time factors continue to play a role. And so from this, we can see that this is where you see the general idea, right? We've got this square root of tau in the denominator of the formula, and so when tau gets smaller, this makes it the denominator gets smaller. Smaller denominator is a bigger quantity, and it does generally increase, except that there's also the square root tau in the denominator of the exponent of the numerator. That there's this e to the minus 1/2 blah 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 over square root tau all squared, and unless if this log, right, there's this plus 1/2 square sigma squared tau, that's going away because tau is small compared to this log of s over k, unless we're exactly at the money. If we're exactly at the money, then this factor is 0. The log factor is 0 because log of 1 is 0. And then our numerator here is just a positive power of tau to a negative. It goes to 1. This whole thing blows up. That at the money options do have their theta explode near expiration. However, from the previous slide, pretty much nothing is at the money, is really close to the money, super close to expiration. And what happens here, and this is my funny joke, is that the natural thing for a Calculus 1 student who I told to compute this limit as tau goes to 0 would be to go, well, the numerator goes to 0 because it's got this negative, the exponent goes to negative infinity, e to the negative infinity goes to 0. The denominator has the square root of tau, that's also going to 0. If you have 0 over 0 in a limit, L'Hopital's rule comes along. It's everyone's Calc 1 standby, and it says you take derivatives of top and bottom. And this is why I say it's a funny joke, because it's an interesting exercise because it doesn't get solved immediately. You wind up with a loop because of how exponentials are their own derivatives. And so then you have to do a little algebra on the end. And it's, I don't know, I would put it on exam.
That was your joke?
That is my joke. Well, it's a joke in that I would put it on exams when I taught Calc 1, and people would be very unhappy. They get frustrated when they go.
That was your joke?
Yes, it's funny for me and other calculus teachers in the audience.
Okay.
We have a comedy show this weekend at the coffee shop, Jacob. I think you should try that one.
Yeah, I'm gonna do the open mic. I'm bringing that.
I think it'll go over huge.
No. The important thing about humor is to know your audience, and this joke only works for calculus teachers.
Wow.
But though, the key feature is that we've got this negative exponential unless we're exactly at the money, we've got this negative exponential in the numerator and a polynomial or an algebraic equation in the denominator. And therefore, the whole thing goes to 0, which is what we saw in the market measure last week, where right near expiration, thetas died off, right? They grew for a while, but then there's a sudden cliff right before expiration for anything except for an exactly at the money trade. And that's, I think, perhaps surprising or unintuitive, and certainly for people who are used to trading longer dated options and are looking to get into 0 DTEs, it's surprising and should be adjusted for, right? In a longer dated option, we usually try to get out of them early because we don't like the sort of wild swings near expiration. For the 0 DTs, it's sort of a different reason. It's not that they have super sudden swings right near expiration. It's because their theta is already all gone by, noon or 1 p.m. There just isn't much time. What is close to the money has become so narrow that there aren't even any strikes left. And as a result, we maybe want to get out of those trades earlier also, just because there's not any value left in them near the last couple hours. But it's sort of an opposite reasoning for why you would get a longer dated trade near the end, which I thought was interesting and surprising and confusing for some viewers in our inbox who were like, I thought Theta increased as we went along. And so I wanted to show this example about why it doesn't.
Slow down a bit while Tony and I catch our breath from laughing.
From the laughter.
From the laughter, the humor of it all. Yeah. But yeah, John, we can do takeaways whenever you want.
Do the takeaways have a joke in them too?
No, there's no humor here.
I don't want to miss
this. Marketplaces are many new traders, and the old rules of thumb need to be double checked. Right, the Theta are key to profitability, especially if we're not trying to be directionally correct, which is to me it seems like a sucker's game. In general, a higher Theta is find higher Thetas close to the money and close to expiration. However, because time and volatility have this intertwining, what defines close to the money changes near expiration, as we need to view moneyness in terms of expected moves. And therefore, there's no out-of-the-money strikes that are close to the money right next to expiration, right, within a couple hours of expiration. And this means that the 0DT marketplace has this sort of unintuitive or surprising or just wildly different from our longer dated option experience effect, where Theta falls off a cliff in the last couple hours. It rises, and then right near the end of the day, it just drops to zero for everything except for an exactly at the money option. And as a result, you maybe want to, think about how to factor this into your trade management, if you're trading in the zeros. If you're trading in the longer dated options, then you can trust the usual rule of thumb. But I think it's worth pointing out when we have rules of thumb where they don't apply.
What do you think about that, Sadnov?
I mean, it wasn't as good as the comedy show that I'm planning to see this weekend, but it's it's in there. It's in there. Yeah.
Yeah. Are you going to an improv show or?
It's probably a little more interesting than F1.
Maybe.
Oh my gosh! You're trying to get the viewers to start emailing you with their racing opinions?
Maybe this.
I don't know what to say, Sosnoff. I thought I heard all, but Jacob brings it to a new level each time.
Maybe you should use this as your warm up for Saturday night.
I just might. I'm definitely taking under advisement.
It's always good to have an audience that's really confused and thinking about something else when you come on stage.
Oh, that'll hit perfect.
With my wife for my birthday, she will really go for that. We're gonna take a quick 90-second break and come back with more Tasty Live sound off. You don't want to know why? Well, we've got that man, Mr. Scott Sheridan, Tasty Trade World Headquarters, coming up next. We'll be back in 90 seconds. Thanks, Jacob. Don't know what to say.
Thanks, Jacob.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Beat the opening bell. Get trade ideas and market insights before the open.
From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a home birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. And Tasty, we're delivering babies.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, he's muted. This is beautiful.
It is beautiful. Wait, do we get
Hello?
He's so sad.
Hello? Do we get to keep it?
Hello, we're on. Am I there?
Honey, I'm home.
I know.
We hear you.
Can you hear me?
Yes.
Hi, honey. Hey, guess what? Hey, Scott, come on. Screw you. Forget about it. Diddy, 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 diddy. Scott, I got news that not even you know about.
Okay, I want to hear this because I have something for each of you. So you go first and then I'll go.
Mine's going to beat yours, but okay. We got a new place to go to for free in Santorini.
What happened?
Greece.
What?
Wait, what happened?
Sandoff is buying a place in Greece.
I did not say that. I said if I
That's
had
what
to
you
go.
said. You said
I'm a seller.
No, what I said is if I had to go anywhere and just kind of
leave the country.
No, if I had to go somewhere
no,
just to
live and trade away.
I could live in
he would go to
Santorini and
Greece,
trade.
so he's buying us a place.
What is it,
Island.
7 hours?
No, gotta be 9.
Who cares? We're going for
Is
the
it?
month.
Oh, at least 9 from Chicago to Athens. Probably not.
Time difference.
Oh, 7.
7. Yeah, 7 hour time, not flight. No, it's a 9-10 hour flight.
Yeah.
No, 7 hour time difference. See, if I had to leave the country, my two choices, not bad. Santorini's not bad. I would go to either Japan or New Zealand.
It's good that,
Japan or
good that
where?
the place
New
that you
Zealand.
like is not bad.
Japan or New Zealand, but the problem is they're totally upside down.
Oh no, that's upside down.
They're upside down.
I mean, if you want to go somewhere where it's the same time zone, you go
South America.
South America.
Where do you want to live in South America?
I don't know. I've never been to South America.
Okay. I hope we don't have a lot of people listening from South America, because this is my comment. Before I went to Argentina, I'd heard multiple times it's the Paris of South America.
Yeah.
Having been there
Anybody who says that has never been to Paris. Okay. Okay. I'm thinking Artie Lang when he's got his trainer and he's like, listen, going out for like a long run is the same thing as doing heroin. He says, clearly, you've never done heroin. All right. So here the comment, you've never been to Paris if you think Argentina. And there's a lot of nice spots. I've been to a bunch of places in South America, but it's not Paris.
I've never been to Argentina. I want to go. It's on my list.
It's dangerous. So take off all your baubles.
Take off all my what?
Your baubles. You don't have any. Jewelry. Your watch, your rings like this, you know.
Have you ever seen me with a watch or rings?
I said you don't have it.
You used to wear a ring every once in a while.
Yeah.
That was when things were good. Okay. When things were kind of okay.
Back in and he had something to prove.
Tony, that was when he was trying. That was when the therapist said, you got to try.
There's been lots of rings lying around in my house for years.
Yeah, pick one up, put it on. Where is it? I don't know. I'll grab another one. All right. My Taiwanese sources said that you were paying me a compliment today. Not really.
What did I do?
No, you didn't pay me a compliment. So Tony said he has a restaurant, something. Tony, what did you say? You have a restaurant that I suggested, and Tom says that doesn't mean anything because Scott doesn't know anything about food?
I said because you guys poo-pooed my first restaurant for my birthday, I made my wife make a second reservation at Sophia Steak.
See?
And Tom
And
went,
you told me the other day that place sucked.
No, I did not. I said I was supposed to. I've heard it's good. I've heard it's very good. I was supposed to go, but first, I don't remember why. Somebody canceled. I'm not going. But here's the crazy thing, because I looked at it. Sophia Steak is on the first floor, and then literally somehow it's whatever, 950, 948 is that other steakhouse. Yeah. There's two steakhouses, and then there's Pomeroy. Tony, you ever go to Pomeroy?
That's correct. Also very good.
He's a suburbanite.
Yeah, I mean, and
that's a suburban chain.
On this one, I gotta go with Tom on this one. Although
I agree with you, I like Sophia Steak
I did
better.
go to Pomeroy owns Gemini Bistro. I went there last night. Hadn't been there in years. It was very good. Had not been there in years. It was
last time I was there.
Yeah, right. It was mids. It was a solid C plus B minus.
Everything in your life is I mean, that's how you go through life.
Now Tony,
did we ask for a suburban opinion?
Beth just texted me and said it's very good.
What's good?
What is?
Sophia Steak. And I've been there too. It's very good.
Wait, you have been there?
I have been there. I mean, I would go to EJ's, but I want a different experience.
Now that
That's
hurts
all.
me that somebody from the suburbs will be there twice and I haven't been there yet. Well, you had to.
It's in the suburbs.
Oh, Sophia Steak's in the
Oh
suburbs.
my God, Sadler. I'm sorry, it's not in the shitty.
Oh, that makes more
It's
sense.
it's like
mall.
wildfire.
It's like in Northbrook Court.
Yeah, it's like it's in a mall. It's
not.
You go. It's in the food court. Okay, now I understand. It's in the food court at Northbrook Court. And for anybody from New York, it'd be like going to Paramus. Does Paramus Mall still exist?
Which one?
Paramus in New Jersey.
What do you mean? Does Paramus still exist?
The mall.
Oh, the mall.
It was like the first indoor
I
mall.
go to the mall in Paramus.
It was like the first indoor mall in the country.
In Paramus, New Jersey?
Yeah, I went when I was a little kid. It was like a big deal. It was like the first indoor mall.
I don't know. I've never been to the mall in Paramus, New Jersey.
It wasn't that impressive as a little
You've
kid.
got one in the city, a Sophia Steak in the city.
That's what
That's what I'm talking about. You know what? Let's move on to the next subject.
Oh my God.
My steak source told me.
Yeah. Don't listen to Tony.
He just said it's like second tier.
Mids.
Yeah.
It's suburban.
Suburban.
Okay. Suburban schlock.
Yeah. It's a wildfire.
Oh my God, I can't stand both of you right now.
It's suburban schlock.
I remember when Sadnoff
Suburban schlock.
It's suburban schlock.
I don't want to hear about it. Schlock boy.
All right, Tony. My Taiwanese sources told me that you were at F1 last night. Is this true?
This is true, and I met your Taiwanese source, who, by the way, is not Taiwanese nor Thai. He introduced himself, very nice guy. I've met him before. He looked familiar, but when you're out of your element, I had my Tasty Trade shirt on too, so it made it easy for him.
You didn't wear your Tasty shirt with your picture on it, did you?
Wait, are you allowed to
No,
do
I
that?
only make my kids do that.
You told him every time Vinny acts up, he has to wear the shirt.
Yeah, walk around.
Yeah,
that's good.
Yeah. Yeah,
but F1 was good. You know, you'll like it because your wife will like it, because I got to tell you something. I didn't have to do anything when I got home. It was basically, I mean, after Brad Pitt for 2 hours, I mean, it was like I was. Baby, take it easy. Let me have a drink first. You know, like I was like, you know.
Oh my God. As I
he is throwing up right now.
It happens every single.
As I said to Master Control after the break before I came in here, if nothing, you are consistent.
Yes. Yes.
I'm like, baby, wait.
We're good. We got
Let me have
it.
a
Okay.
drink
Oh my
first
God.
or something. Let me relax.
You know what?
It was good though. I saw it as well. I saw it opening night.
Did you?
Yeah.
Is it on? Is it you need to see that on like an IMAX or just a regular?
Well, I did it. I don't know if it's like 4K or not the one where the seats move, but it's just the bigger.
Oh, that's a new thing now. The seats.
Yeah, so they have like an
base.
IMAX. Yeah, where like it like move, shakes and stuff.
I don't think I'd like that.
Yeah, it's better than the glasses. I can't do the glasses.
Me either.
The glasses.
I did that for
make me-
Avatar.
No, glasses suck.
I don't
did
like
that for Avatar.
Yeah, it's just I don't like that.
No,
I don't
it's not good.
Yeah,
I
agree.
But yeah, it was good. It's worth it. It's
What's the ticket today? 22, 25?
Yeah, something like that.
Crazy.
Yeah.
Mm-hmm.
When was the last time you were at the movies? Oh, you went to see. I can tell you. You went to the theater. I've never been there. The one by Wrigley.
Yeah, that was last time.
Yeah, and you.
I saw the Michael Jordan movie.
Oh, the
Nike movie.
Yeah, the Nike one.
Oh.
Yeah.
Oh, wait. The one about the beginning of how they signed him?
Yeah.
Oh, that was a good movie.
That was good.
Yeah, I didn't see it on the big screen. It was a good movie.
Yeah, it's good.
Yeah. I mean, his mom looked good.
Mm-hmm. His mom looked good.
Right? Wonder how Michael's doing.
I think he's okay.
I think he is. It's just a guess.
Play golf somewhere for sure.
He's big into the race car driving now. I mean, I don't think he owns a NASCAR team.
Oh.
He's owned a NASCAR team for years.
Yeah, but I think he's big into it now. I mean, it's one thing to own it and not know like where it is. I mean, I think he goes into the pit and I don't know.
Whatever. How come you guys didn't go to the one in Chicago?
So
thought about it?
No, didn't even think about it. And my feeling is I don't know why we do it. I really don't. Traffic is so.
Clayton said it was great.
Who said it was great?
He lives down there, so he might even be able to see it. I don't know.
He went to the event.
He went. I know.
I don't think tickets were that expensive.
It's supposed to be good for the city, from just a revenue. I get it, tourism standpoint, but shutting down the drive and shutting everything down for a while. I mean, it's a zoo, and it goes. I mean, it's not just right there. Obviously, it backs up, and with construction, whatever. I heard next year it might go to San Diego. It might not be here.
Oh, really?
It looked cool.
Yeah, it's fine, but it's disruptive.
Yeah.
So
fair.
I mean, listen, I get it. It's good for the city. Let's see what we can do, and we definitely need the revenue.
Mm. NASCAR's not the same as F1. F1's I think more fun.
They do.
No, not at all.
They do. Do they do F1 in? They do it through cities, don't they?
Oh, sure.
Yeah.
I think so.
Lots of cities. They do it through Vegas.
Well, they do the one in
Monaco,
Vegas.
Miami.
Yeah, that's the big one.
Miami, Vegas. Last weekend was in Ohio, but it was kind of like a cool track. I watched a little bit.
You got to be really bored if you were watching.
Super bored.
There's no sports right now. We gotta wait till
It's the worst time of the year.
It is the worst.
This is the worst time
We
of the
got
year.
Wimbledon.
Oh, great.
Yeah.
Really?
I did like.
It's been pretty good.
It's been good.
Hey,
Wimbledon's
not a tennis guy,
Oh, speaking of which, wait, you're Ojibwe.
Ojibwa, yeah. Carl Armstrong?
Yeah. I just heard that last
No,
night.
Ojibwa boy, yeah.
I didn't know he's Jewish.
Yeah. I don't think he is.
I don't either. I heard.
Yeah, and he only went for 1 year.
And he went from LA. That's far.
Yeah.
So he went to Ojibwa because
I had it behind the dugout seats, and I was trying to chirp him a little bit about Ojibwa. He didn't respond. It's kind of sad.
1 year you don't have the.
But he's talked about it. He's
Ojibwa?
talked about Ojibwa. Yeah.
Well, he's young. He'll remember it.
Yeah.
I didn't realize it was such a sports-heavy camp.
Who did we trade? Who did we
Best
trade?
Jews in the land.
Who did we
Best
trade
sports
to get him?
Jews.
He was part of the bias, I believe.
He was the hobby bias deal?
I think so. I want to say he was
Mets?
a throw-in.
He was a throw-in, yeah.
I think he was a
But
throw-in.
he was a first-round draft pick.
I think he was but I mean, he's only 23.
Okay, 23. So Baez had to be 5 years ago.
2019. I think.
Okay, so 5-6 years ago. So think about it. He's 17, 18 years old.
It was 18.
Yeah, just out of Ojibwa.
Yeah. Yeah, pretty much.
I mean, the catch that he made Sunday night, where they said he had a 10% chance of catching it, and he's just so fast and so smooth. He's good. It's good. Anyway,
It's good.
Let's get to some business, and then we'll get to the real business.
Johnny trades.
You ready for Johnny trades?
I'm always ready for
He's
Johnny
always
trades.
All right.
I live for Johnny trades.
Live for good Johnny trade. Is it Johnny Cakes? What's the
Johnny cakes?
Yeah.
Love Johnny cakes.
See? Johnny trades, Johnny Cakes.
You ever had Johnny cake?
No,
It's like a
Chicago place.
Somebody, I hope they're not listening right now, but somebody brought in a Dinkles wannabe chocolate donut.
What do you mean Dinkles wannabe?
You remember how good?
Yeah.
I mean, they were the best.
Yeah.
The best.
Yeah.
They brought them in from Tony Carvier's, the suburbs.
Oh God.
And so they put him on March. He was so excited. He's like, go over and have one of these.
Oh, God.
So I looked at him like, oh, it looks pretty good. And I cut it. I'm like, I could tell as soon as I cut it. I'm like, there's no Dinkles.
No.
But disappointing eating a donut because I don't eat a lot of donuts. Like you're really hoping it's good, and then it's like didn't
Johnny
really
cake?
The fire cakes are good.
Fire cakes.
We had those.
Fire cakes are good.
Those were good.
Do you remember the Dinkles?
No.
He's too young.
No, Tony. You had to have brought Nikki a Dinkles chocolate donut at some point in time.
He's had Dinkles 100 times. He just doesn't know. He's had it in our office. I brought him there, and other people have brought him.
He doesn't know. But a Johnny cake?
Best was a yellow cake.
Where is it?
It's out of business.
Oh.
It was on Lincoln by our
100
old
years,
office.
it's over with.
Go ahead. Johnny cake.
Anyway, I recommend if you see Johnny cakes on a menu, it's like you'll find it at like a fancy restaurant for dinner. They'll put like something on top of it. They're good.
Okay.
It's a Southern thing.
There you go.
Southern.
Or in a pinch, you go to Scottish haggis.
No, gross. Disgusting.
I was given from a very nice viewer.
Have you had it?
No, and he
Yes,
told
yes.
me, quote unquote, do whatever you do, don't give this to your dogs because they will never speak to you again.
I'm sure they'd like it. I mean, it's
You
like
don't think your dog will like haggis?
The first ingredient on this, just so we're clear.
Your dog would eat that and
yeah.
love you forever.
Yeah.
Okay, water. We're good there.
Yeah.
Lamb hearts.
They love
Yeah.
lamb
They would.
hearts.
What did,
Oats,
you don't think a dog
pork,
wants that?
Fat, lamb liver, pork.
Lamb and lamb byproducts are the greatest thing in the
Yeah.
world for dogs.
You'd love that. It's disgusting. It is really disgusting.
I think if I open that, I would,
And
I would throw up.
They eat that on every meal. Like breakfast, lunch, dinner. There's haggis on burgers, haggis on eggs, haggis on everything.
Yeah.
When I was in
Disgusting.
Scotland, I had haggis 3 times. I told
Yeah.
him yes.
Oh, this is a bad story. So
No,
right when
saying
no,
3 times.
see now at least he says 3 times. Yesterday he said 3 ways. So
I had it 3 times, 3 ways.
Yeah.
Fried with with eggs, and then once on over mashed potatoes.
And what was your thought?
I mean, it was fine. Nothing special.
Yeah.
Nothing. It didn't bother me. I liked the spotted dick with the custard way better.
spotted what?
Spotted dick with custard.
And what's that?
He had a hard time saying it. Too.
That's
He
right.
wanted to whisper
Let
it.
me do that. The spotted what?
It's
Hey, it came out properly. Go ahead.
dessert. It's good.
Yeah.
Dessert.
Yeah.
It came in
Yeah, you love
properly
some
too.
dick for dessert, don't you?
Anyway, if you
On that note, top 20 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. This is an all-time low today. Number 20 for Tom, AVGO at an 8. For everybody else, NVIDIA at a 6, Tesla at a 19, Meta at a 28, Amazon at a 28, PLTR at a 41, Microsoft at a 22, AMD at a 23, Google with an L at a 39, HIMS at a 50, Hood at a 36, Boeing at a 12, UNH at a 59, Apple at a 25, GLD at an 18, Circle at a 1, MSTR at an 8. TQQQ at an 18, iBit at a -2, SoFi at a 30, and number 20 for Tom AVGO at an 8. On that note,
you should take Circle off your list because it's a new offering, so that number's not real. Just saying.
Not real. Fake.
It's
You
not-
made it up.
It's not
made
fake.
it up.
It's not fake. It's just
Fake news.
Okay,
Fake news.
it is one of our top 20 traded symbols.
Oh, 20 traded symbols. Yeah, the IVR is not right.
Okay.
Hey, Scott, don't worry. We don't have the time to explain it to him for the 15th time about how new stocks and the IVR work because we take a whole year's worth of data. But I will do it on the break, and hopefully in the next 15 years he'll get it right. But right now, I got to go to Johnny Trades. Can I do that? Play some music.
All right, boys. Couple trade ideas. You ready?
Yes.
Let's do it. First trade, we got to go to Nvidia, obviously. 4 trillion. Big deal?
Yeah, sure. Why not?
Yeah, I think so too.
Yeah.
It's not there anymore, though.
No.
I don't think so.
No.
Did we get some tariff headlines?
I don't.
I mean,
have any
market
idea.
sold off 25 handles. It's the biggest sell-off we've seen in 4 months.
not quite 4 months, but you are right.
Yeah,
It
it's
is
the
one of
biggest sell-off.
Don't kick a gift horse. It's a gift horse. It's helping the good kids. So be nice. Bonds up. Market doing nothing. We like that. What do you got here? Video. What are you trying to do?
I did a broken wing butterfly. I mean, you had to play into at least a continuation of the FOMO here.
NVDA. What do you want to do? You want to get long it or short it?
The omnidirectional. Little broken wing butterfly. You bought the at the money call spread, the 165, 170, and then I sold the 175, 190. I did it for a 33-cent credit. Not exactly short, not exactly long, kind of just doing something here.
I don't even have an NVIDIA position on because the
Falls low. Yeah, this is like a low vol trade.
Strikes again. You're buying what?
I bought the 165. I sold the 170.
Yeah.
I sold the 175, and then I bought the 190. So it's kind of like
1 to 1 to 1 to 1?
1 to 1 to 1.
For what credit?
I did a 33-cent credit. Got no risk to the downside. If you chop here and grind higher, maybe
Nice
make
trade.
a couple.
It's
I know.
15 cents now.
Johnny, I tell you, Johnny Trades is on at 9:30. If you get me, 30 minutes earlier, you can take that 15 cents.
Okay, we're gonna. Right now, you're lucky to get filled at 15, so we'll wait and see if it bounces back up.
All right, I like it.
Yeah, it's a little too cheap right now.
All right,
go ahead. What else you got?
Next one, UNH. I mean, this stock has just been chopping around.
Yep, got a lot of positions on in there.
At 300, volatility is still relatively high.
Yep.
I think it's an interesting short put spread. You saw the 280, 270 put spread out in August. It trades at 275, kind of near the lower end of where it traded. I feel like it's something that you should have on if you don't already have.
Well,
I'm sure you're all over this.
I am all over this, and I have a lot of different positions on in there. I don't need to do. No, I'm good.
Okay, cool.
I mean,
I figure you're in already.
I'm already long.
I have been in it.
And I need the stock to sit right here at 300.
It cannot go below 300. Every time it goes below 300, it gets bid up back to 300. When it's at 307, it goes back down to 300. The stock it's waiting for something.
Yeah, I like my position there. I'm losing a little money today because there's a pop and vol today. Yeah. But 300 303 is perfect. 300 305 is perfect for me.
Perfect.
Okay. What else you got?
Last one, Roku. You got a position in Roku?
No.
I figured I'd bring you something new. It does have earnings coming up middle of October. I forget the exact date. Stocks had a nice little rally. I don't know if I'm getting, I want to get long here, so I'm doing like a put ratio spread, buying the 80, selling 2 of the 75s. I did it in August. 57 cents.
Oh, you're buying the 80s put?
Selling 2 of the 75s. Playing, sideways, maybe slight down move.
What credit?
I did a 57-cent credit.
Okay, so this one's it's trading for like a 60-cent credit.
Okay. Uses about $900 in buying power, so
63.
Beautiful.
So
that's 3 for 3 for Johnny today.
Well, it's one.
Must be in a good mood or something.
It's one for 3 technically, but I had the other position on.
I know, but that's because you taught me so well.
We will take a fill, Phil. Yeah, I had no position on Roku, so it just gives us something.
Yeah, a little. It's an
this is a nice little sell-off here from up 40 to up 10. Bond's still up 17. Gold.
What do you think for the rest of the day, Sadnoff? Here we sit under 6,300 now, 62.84. Are you chickened out and selling it? What do you think now?
I did chicken out. I didn't sell them. Gold with
Volatility only up 20 cents. I'm sorry, down 20 cents.
Yeah, I mean, I haven't done much. I haven't done much.
Are you going to buy the dip? Is the only question. Are you going to buy the dip?
No, I'm not buying the dip. I'm short.
I'm just teasing you. Good job out of you,
Definitely
son.
not buying the dip.
As always, you bring the heat, my friend. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. Sound good to you? Sound good to me. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind.
Missed the live show? Here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh,
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old. But our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like work, and you got to drill the hole.
Tony is going to counter that and say it's all.
Sure. No, I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing, just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just me.
Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette. To the left of me is Miss Jenny Andrews. Doesn't it feel weird? We're not at the SIBO floor.
No, we're not. We're not there today. We're usually there. We're usually there Tuesdays and Wednesdays, and we're not this week. I'm remote all week, but we are still bringing another amazing study from Jacob, our University of Chicago PhD, and we have. What's your assumption? If we have time to get to it, we have a very busy show today. We're still bringing all the content. We're just not live from the floor today, and we missed those guys, but we'll be there next week.
We just don't have people heckling us and yelling at us from behind, so that's okay. We can do the show without being yelled at, right?
Hey, don't give away our background. I mean, for all people know that we're there.
No, it's true. I do miss like the roar of the crowd.
Look at this. John just posted streaming live from the SIBO floor. A little ad from us. It's cute. It's one of our first pictures from down there, I think. And I see in the background Keith Simiowski, one of our old buddies from the trading floor.
That is one of Tom Sosnoff's first clerks. Not the one with his hand on his head like this, the other one.
Yeah, the other one. And he was one of the first guys I worked with.
Yeah, he was too. And the funny thing is he pops up at every local event. So I've seen him at the bars around town and every festival in my town in Lamont. And he doesn't even live anywhere near here. He's a party goer. So it's fun to see him out and about too. Him and his brother.
Yeah.
But we have a jam-packed show today, Jenny.
We really do. So do you want to pop into the platform so we can see what the market's doing?
Sure.
I see SPOOs are up 14 and they were up 40 shortly after they opened. I don't know exactly where they opened. I logged in around 8:40 and SPOOs were up 40.
So yeah, they opened 62.72. So a little bit lower than this.
Well, yeah, and look at the high, 63.15.
Yeah, so they opened lower than this. I didn't know they opened lower. But they were much higher, and that was right around 9 o'clock. So this is FOMC minutes are what, 1 o'clock today?
1 o'clock Central Time. I don't know if a number came out at 9 o'clock. I don't know what caused the jump. Let's take a look. We can always look at Frank's calendar. He's got the information.
You know what I was gonna say? Watch this. I'm gonna pop in. Eric, we're coming to you, I promise, but I want to see here. Wholesale inventory, 9 o'clock. Weekly sales, DOE, I have no idea.
All right. Well, 1 p.m. Treasury. Okay. Well, anyway, I do think we've got the FOMC meeting, although I don't see it on Frank's list there.
No, it's not a meeting. It's just minutes.
Minutes. I didn't even see that on Frank's calendar.
It's not, but that's interesting. So, it's interesting. I'll go back to it. Very interesting. It's not on there. Yeah. Oh, maybe it's a treasury. No. At 1 p.m. the Treasury is to sell the 10 years. Maybe that's it. I have no idea.
Yeah, I don't know.
We're waiting for something today. But speaking of us being live on the trading floor, were you listening to Vanetta this morning?
Part of it. I turned it on. I caught the second half of her news today. What did I miss?
Well, I did not know this, and shame on us for not knowing this, and it opened today. There's a museum at the Board of Trade, which is 141 West, whatever. So like the exact building that we're in, they're opening up a Board of Trade museum today. So Vanetta wants to go down there. She's bringing Gus down there, and there's the doors opened this morning, I guess. So Vanetta wants to go check it out. And I wanted to call her and be like, pump the brakes. Just come on Tuesday or Wednesday next week. We'd love to see you.
Right. So, right. What is the address of the Board of Trade? Is it Jackson or Van Buren?
141 West Jackson.
West Jackson. Now, I wonder where it is in there, because we go there every week. I haven't seen any construction going on other than it, like kind of in the SIBO. They're doing some construction.
Well, I don't know. I think it's probably up. I think you're going to go up an elevator ride and not.
I don't know. Security's tight there. Security's tight. I'm not sure.
Yeah, well, maybe they won't let you. Maybe you got to pass security to get in the museum. But nonetheless, there will be more information later on this museum.
Yeah, I can't wait.
But I'd love it if Vanetta came with us.
And is it a permanent museum or is it like a pop-up?
No, it's not a pop-up.
Pop-up?
It's not like the Friends pop-up in New York.
That's exactly. I just saw an ad for that because I've been searching New York because Lily and I are going to New York in a couple weeks. And I guess that's why pop-ups were on my mind.
Did Lily watch all the Friends? Has she seen the whole season?
No, she's never seen. She has never watched them.
Oh, when I brought Annabelle to New York for the Bad Trader tour, when she wore the exact same outfit as me, it was the proudest day of my life because we were on stage and she's like, "Oh, this is cool," and then she started dressing like me for one day. We went to the pop-up in New York, but she's seen every Friends episode, so it's pretty cool. Like we took.
I don't think we can get in all the seasons of Friends before we go. So we are doing.
You can't.
No, but we're gonna do the Gossip Girl tour. Anyone who's a fan of the Gossip Girl, we're gonna do the Gossip Girl tour. Go to Chuck's Hotel, and we're doing a tour. We're actually doing the real college tour of Columbia. We've got a lot to do. We're seeing 3 shows.
Oh, that'll be fun. That'll be a lot of fun. All right, let's pop back into the platform if we can, Jenny. I want to see, is there anything, this is what we were looking at today. As soon as we open the platform, Jenny's like, Boeing's up 7. It was only up 7. Now it's up 834. We put on the 217 calendar.
And I don't know, I know this was yesterday and I don't remember. I don't remember if someone on Twitter said, or bullish Boeing, or look for a bullish trade in Boeing. And this is the problem with the calendar. If you're directional, like, look, Boeing's up and it's losing money. So I hesitate to use calendars as directional plays.
I don't think we were directional. I think we were neutral because.
No, but I think on Twitter, if you go back to Twitter, I think someone say they wanted a bullish trade in Boeing, and we put the calendar slightly up.
I don't know, Jenny. I think this might have been our brainchild.
I don't know.
I think it was our brainchild. So just kind of scrolling through Twitter.
I can't read that fast. Oh, look at those kids. Look at those.
Annabelle.
Annabelle and Judy, they all have their German outfits on.
I probably should have cleaned up the house a bit. Sorry about the mess. There's my towels waiting to go downstairs. There's my returns on the counter. But yeah, this is the German restaurant. That's what I said. SIBO, Munich, here we come.
I can't believe you all had German outfits to wear to the beer stube.
Oh, yeah. We got these when we were in Munich the last time.
How did it go, Liz? How many steins could you carry?
They wouldn't play with me. They would not allow me. Jenny, they would not allow me to carry steins. And I said I can stack them on top and do a bunch of stuff, but they would not allow me to. But I will tell you, this is a traditional, it is a thick material. It was too hot out yesterday for this type of dress. It needs to be a little cooler to wear that.
Well, it looks great. It looks great. I love it. Annabelle and JD look so cute.
Oh my God, it was so fun. Okay, but that being said, Jenny, Bob on Fire comes in. We've got 2 earnings today. Now, I did not get a look at what's your assumption. I don't know if you glanced at it. I'm going to guess maybe one of these are on there, but we've got Delta Airlines and ConAgra. So if we don't get to it and what's your assumption, we're going to come back to that and make sure we put on an earnings trade, okay?
Yeah, Delta, we have many times placed trades in Delta, so I don't mind. ConAgra, not so often, but we'll take a look.
Yeah.
And then who is that? Asif coming in with an AZZ short strangle earnings play. What is AZZ?
I
down with AZZ?
Yeah, you know me. AZZ, and let me type it slower. It's AZZ, of course.
It is. Look at that symbol. Kind of reminds me of Def Leppard or something.
So they were doing a strangle. It's earnings, so I can see they're doing awful markets.
Hey, we're not knocking Asif's trade. I'm not going to knock Asif's trade, but the 37 days, very wide markets. Let's see, what was it in the 9-day? Is it where the market's tighter in the 9-day?
Nope, 120 at 245, 235 at 320. This is untradeable.
Okay. I don't want Asif. I appreciate your tweet. I appreciate your trade. And there is some open interest, but the markets are a little wide. They are a little wide.
And I like it, and I like that he's posting it. But for us to sell options, I think number one, I mean, don't get me wrong, I like liquid products more than I like anything else, especially on earnings. So just once again, this is just opinion based, nothing else. If this is an earnings trade and you're looking at this, sometimes illiquid markets can move. And look at this, you can see it's a mover and a shaker. Its range is from 70 to 100 within this last little month, and it moves.
I would be nervous to sell strangle in this I would, and there's not a lot of liquidity. If something goes wrong and it blows through one of your strikes, it's going to be tough to manage. Because if they're wide, if the markets are wide today, if this thing has a big move, they'll get even wider. And you just like give up too much trying to manage a losing trade when you're battling wide markets. Well, it's not so much about in normal markets and in normal activity, but when the shit hits the fan, the markets get really wide.
You just swore, Jenny Andrews.
Don't be too loud. You're gonna wake up little Clarence.
Never heard you swear on camera before. That's usually.
I couldn't come up with an alternative to when the shit hits the fan.
The last time I tried to get you to stop swearing and I said something, I got in so much trouble.
I can't remember what you said.
Well, I'm not gonna say it again.
Oh, I remember what you said.
Now you remember. I'm not going to say it again.
We got a lot of emails.
A lot of emails. Okay, so we're going to pass on AZZ. Now, that being said, Jenny, it is, what time is it right now?
I do like to say, you done with AZZ?
Yeah, you know me. But I think we should go into Jacob's study because I love that we get these, and I think that we get them today, and we're going to walk through it. And a lot of times what we're going to do is to go back and forth between the platform, and then tomorrow the boys will get the same study and put their take on it.
Yeah, we get it first. We demanded it first because we're live from the floor of the SPX. So if there's a new SPX study, we've been demanding to get it first. And I appreciate that Tom was so kind to say, sure, girls, you can get it first.
It makes sense though, because we're there. We're in the thick of it with these 0DTE SPX. Now, these are done weekly, and he's always using SPX 0DTE. We are well aware there are 0DTEs and a lot of other things right now, but we're in the middle of the SPX pit. This is where this trading takes place, and so that's why we're getting it first. Okay, you ready?
Testing contrarian directionally in 0DTEs.
Directionality.
Oh, directionality and 0DTs. And that's interesting because this morning when I opened it up, I'd like to put on the 0DTs. So this morning I opened up my platform with the intention of putting on a 0DT Iron Condor or something. And I saw SPOO's up 40 and I thought, I'm not going to put it on. I decided not to put it on. But if I was playing the contrarian directionality, maybe I would have just sold a call spread.
There you go. We'll see.
I don't know. But I did nothing. But I did nothing today. I was a chicken. Did you do anything today?
I did.
What did you do?
I did the $10 wide iron fly that I've been doing every day.
Oh, okay.
Yeah. I did. And it is not doing so well because I did it when SPOOs were up 30. But that's okay. That's okay. It's a very low drawdown, and it's been working. Right. And it only takes two trades to make it back. I think I collected $8 for it. Okay, so let's go to the next, hold on, let me get down here. The next one. In the light of efficient market hypothesis, we often like to stick to delta neutral trades.
Okay, but the 0DT option markets give modern retail option traders more opportunities than ever before to try things. It's cool, thinking of like how far that we've come. Did you ever watch The Gilded Age?
No.
I watched the episode I saw last night. They just, Thomas Edison just lit up the first building. They were building the Union Station in New York, and Thomas Edison was creating electricity, and they lit up the first building. And to think how far we've come since then, now our modern retail traders have 0DTE options.
It's so funny that you bring that up because this morning I was listening to something and I said, in the order of importance of things, it goes electricity, the internet, then AI.
Oh, really? AI is right up there?
Yes. That's honestly, it's just a belief system, but it's pretty interesting. Okay. Several viewers, and I talked to TP about this, saying that I think in my trading career, the 0DTE SPX has been the biggest game changer that I've ever seen.
I do. I think so for retail traders for sure. And it's bringing a lot more people in the game. It allows people with any size account to get, place trades, because you can make spreads as wide as you want or as narrow as you want.
Well, and I think the barrier to entry for a long time is, the definitions and the expirations and the strike price and the this. Then what happens if I get assigned? That's gone with the 0DTE SPX, which is kind of nice. There's only one. The only hurdle is this pattern day trading rule.
But if and I know our studies might show not to, but if you have trades that you just leave, they cash settle, and then you don't have that have to deal with that pattern day trading.
Yeah.
But I would just cross my fingers and hope pattern day trading goes away soon. Then that will be the biggest game changer.
I think so too. Okay, so several viewers have written us about their success selling verticals when recent market moves make it seem prudent. Let's open up the data set and put it to the test.
I like this. When searching for directional signals, there are numerous adjustments and settings to consider. We'll begin by exploring a contrarian approach, selling calls following an upward movement and selling puts after a downward movement. So like this morning when I opened it up at 9 and SPOOs were up 40, if I would have sold a call spread, it would be off. It would have come off shortly after.
Yes, and the only thing I was going to say about this is if he's looking at SPX, you have to put the word spread after it because no one's going to sell a call in SPX. It's too expensive.
But what he mentions here is the signals, like what's the signal, what's the level? That's where I think people would wonder, okay, at what level, how much does it need to be up or down to make that directional trade?
Let's take a look because I don't really know. The study using over 2 years of data in the 0 DTE SPX options collected every 10 minutes.
Considered selling 0 DT premium at 9 a.m. So he's just picking a time. 9 a.m. If the move from the previous SPX open to today, SPX open, was less than an expected move, sold a $10 wide butterfly. Okay.
Whoa. Let's unpack this. So if the move from the previous open was less, then he's doing the butterfly, meaning that's neutral.
So you have to look at then do you have to, is this going to be like a 2-day trade? Like yesterday at the end of the day, I had to look what the expected move was going to be for today. And then this morning at 9 a.m. say, okay, today's expected move was 30 and we're only.
No, I think if you look at it, it says, so say the expected move for the day is 20 and you've already moved 40, then don't do this. But if
are you taking
No, I think it's from today's. If the move the previous SPX open.
Yeah, so that's what I'm saying. Like, when do you get the time frame? When do you get the day's move? So let's keep reading.
Okay. If SPX was down by more than the expected move, sold a $10 wide put vertical. So if it's down too much, put vertical with the short strike at the money. Okay. So he's breaking apart the iron fly at the money.
At the money. Yeah. Okay. If SPX was up by more than the expected move, sold a $10 wide call vertical with short strike at the money, because you're not taking a ton of risk in these trades. And I know Jacob, we've talked to Jacob before. He kind of likes that, like lower drawdown. But my question is, when you look at today,
a $10 wide at the money. Now, granted, it's 10 whatever. But so if you're doing a $10 at the money, and you think it's going to go back up, you might almost be wrapping it around the at the monies, right? At the money or wrapped around the at the monies. It's very similar to
the Jajun.
The Jajun trade, but he's just using it from the selling side versus the buying side, which is fine. It's absolutely acceptable, right?
Similar to the Jajun, and we would get a lot of questions on the Jajun of, hey, we don't just have to put on calls. We don't just have to assume the market's going up. We can put on either side. So it's very similar to the Jajun, but picking a direction based on the movement of the day. So
I like this.
I do like it. My question is, when are you deciding that the day's expected move? Or are you just at 8:30 when the market opens at 8:30? What's the day's expected move? I mean, I know now it's 17, but it was higher on the open.
But was it higher on the open? Because we were up 40.
Oh, yeah. No, 100%. It was higher on the open because it's higher at 8:30 than it is at 10:30. Every hour.
I think. But if the expected move, I'm guessing here, Jenny. But if you open it up and say the expected move was 30 and we were up 40, that might mean sell the call spread.
Yeah.
Right. So I think we're looking at this. If it's already moved more than its expected move, maybe do the contrarian play.
Right, we're looking at that. I just didn't know what time we're looking at that. Are we looking at that at 8:30 the day of the trade? Are we looking at that at 3 p.m. the day before?
I don't know how to look at. Go back and look at it 3 p.m. the day before. So I'm assuming we're looking at it that day, but we'll have to clarify.
I'm at Teams Jacob. Okay,
while she's teamsing, I'm gonna read the study. The study repeated the analysis of using iron condors and verticals with a short 30 delta or 20 delta strikes and $20 wide wings. Further initiated the process using other multiples of the expected move as the threshold, ranging from 0 to 1.5. Okay, so these are the triggers. Further initiated the process of using multiples of the expected move as a threshold, ranging from 0, being directional every day, to 1.5, which is triggered only 5% of the time. Okay. At the money positions were closed if they reached 10% of max profit, which is very Jajun-esque, while out of the money trades were held looking for 25%. 25%. Losers were allowed to expire. All times are Chicago, and all trades are assumed to exercise at mid-price. So I know you're Team Zing Jacob.
Okay.
But
No,
what's
I'm
happening
not
here?
going to get an answer. We'll get an answer later. But I think, me personally, I'll just look at it on the open, like 8:30 on the open. What's the expected move for the day? Because I think it's too much work to try to go back and see what was the expected move at.
I think that I kind of agree. Look at it what it was at 8:30, and then at 9 o'clock, place your trade. And so look at this. He's doing it all, where it's the verticals of the 30 delta or the $20 with $20 wide wings, or the at the money iron butterfly, or the Jajun up or Jajun down, $10 wide, not $5 wide. So this is all in here.
Oh, can't wait to see these results.
I know. Okay. So and this is with 10%.
Short at the money, $10 wide wings, 10% profit target. So put verticals, call verticals, iron butterflies. Interesting. So when the call move was beyond the expected move, seemed like the market continued to go up. Like when the upside move was greater than the expected move, it seemed like the market still continued to go up. That's why the call's average P&L is a loser.
This doesn't say where the market was.
Well, you only put this on. So remember, if the move was greater than the expected move, he sold a call vertical. If it was greater than the expected move, the upside, he sold a call vertical. If it was greater than the expected move as a downside, he sold a put vertical. If it was less than the expected move, he did the iron butterfly. So that was in the study. Like, he only puts these on if the move is greater than the expected move.
I'm never doing a call vertical.
This shows that greater than the expected move, the market continued to rally.
And the iron flies make the most money with the CVR is lower. This is the one thing we got to say. If you're doing the $10 call vertical and $10 put vertical, these are the same trades broken up. So you've got the iron fly that has both of them on, or you have the call vertical and the put vertical. So you should see that the drawdown or the conditional value at risk is much, much, much less in the iron butterfly.
But here in the study, the takeaway would be, well, only do the iron fly if the move is less than the daily expected move. If at
otherwise sell the put spread.
If we're down. And but don't sell that call spread.
Never sell that call spread. Okay, let's go to the next one. Now this is okay. Oh, this is where it's in there.
Okay, go back.
Okay, so this was all the time, Jenny.
This is all the time. This is all the time.
So this is all the time. And that's what I was going to say. That those iron flies look pretty freaking good. And so do put verticals, which just leads us back to every time I've been burned, it's on the call side.
The next slide, please. All right. So now we've got the contrarian. Contrarian when move is greater, contrarian when move is expected, contrarian when move is greater than 1.5 times expected.
Okay, the contrarian move means if it's up, you sell the call spread. When it's down, you sell the put spread. And if you do it every day, don't do it every day. You're being out a loss.
I would like to see the breakdown though of like calls versus puts.
I would too. Let's see if he does that. Let's see his takeaways. Let's keep going forward because sometimes we can come back. And then here we go into all the time with your put verticals, all the time with your call verticals, and then iron condors. And these are the ones with the 30 deltas, $20 wings. This is Jack Tucker-esque.
Yes. The 30. Well, no, he's more like 20 deltas. These are like 20 delta with $25 wings.
I mean, close enough in the point where they're out of the money. Yeah. They're out of the money iron condors, not your at the monies.
Right.
And once again, call verticals are losses.
Just the put verticals.
Yeah. Once again,
I mean, for a while, Liz, you were just selling a wide put vertical every day.
I would every day, and it worked. It worked until it didn't.
Okay.
You know why, Jenny? So sometimes I think it's information overload, right? So sometimes I think you get to the point where it's like, okay, well, now it told me to do this. So then you pivot, being like, oh, that they said it wasn't working. Sometimes there can be information overload, and sometimes you just got to take it to its simplest form and just do whatever works, right? So now I'm an iron fly person, and I think I'm doing it that way because my son's doing it as well. So it doesn't matter. The good, the bad days, the whatever days, I put it on, and it's working.
Yeah.
It's working. Have I had losses? 100%. Do I have more gains than I do in losses in this? 100%. Do you know what I mean? So
she doesn't. I mean, I just want to clarify. She doesn't mean 100% of the time.
I mean, 100%. I have. Yeah, it's like the numbers are the numbers, and they're working out right now. So let's keep going. Now here we go.
I like the idea of putting on the iron fly if the expected move is less than the daily expected move. To me, that makes sense.
Yeah. But like, you look at a Jack Tucker, he does it, this style, he does it no matter what is happening.
Yeah.
And to be honest with you, that works, 84% of the time.
What is, and this is with no management. This isn't with like closing early. This is no 25% profit target, but not closing losers.
So this is, if it doesn't hit the 25% profit target, which it does 84% of the time, then you let it go to expiration. And that's why you're having where it looks like such little wins, because you will get that.
Okay. And what's slide 7?
And this is when you're doing it on the contrarian moves.
And the results don't look great. No,
they don't actually.
They don't.
So let's go. And here we go.
What is, this is like more like Jack Tucker, where he's got the 20 deltas, he makes it a little wider, 20 deltas, $25 wings. And these results are better than the 30 delta.
This is very much your Jack Tuckers. 91% of the time, $19, and your conditional value at risk, $16.87. Okay, so and here we have with the expected move, it's still those calls. Whenever I see that call.
So this is the contrarian, 20 delta, $20 wide wings. I think, maybe you don't. My takeaway from this is do the trades when we're moving less than the expected move. When we move more than the expected move, sometimes I shy away. Like today, when we were up 40 SPU points, I decided I'm not going to do it. I opened my platform to put on the SPX Iron Condor. And when I saw we were up 40 SPU points, I decided not to put it on.
But I'm glad you didn't you said I was going to put the call spread on because you would have lost.
No, I would have won because we were down now. I mean, we were up 40 and now we're up. That would have came off, but that's just today.
That's just today's, right? That's just today.
Like that's from this information. I don't think I wouldn't be doing it because from this information, it doesn't seem to work.
I know. Sometimes I think it's information overload. So let's see what Jacob's takeaways are. So his first takeaway for out of the money traders, which is the out of the monies, selling the put was overall the most profitable approach to the zero DTE options market, which is unsurprising as SPX has gone from 3850 to 6200 over the course of the study. Wow. Okay.
The larger credits from delta neutral positions helped reduce downside risk for at-the-money traders. This was enough to give the edge to the iron butterflies, and that's what you've been doing, and that's what your JD has been doing.
And it is the reduction of loss, meaning you're going to lose $200 instead of it being $1,600 if things go awry, or even the $10 wide where you'll lose $700 if you're just selling that put spread or just that call spread. It helps. The mitigation of the loss is the reason. But I'm also looking at it from a young person's perspective. I'm doing it because his account is so small, and I want to have it in mind too. Do you know what I mean?
So I think that's the harder leap, because if you are a larger account and you want to scale up, well, then you're scaling up so much, you're getting that loss closer to the other trades. That's when I think if you would scale that up so much, maybe that's when I would switch to the 20 delta iron condor.
I think you're right, because but the hard part is you'll still be risking, if you were going to scale it up to risk that same amount. Just conceptually think about this with me. I haven't scaled up yet, by the way. I'm still just making sure he's not losing money, and I like to look at it in my account. But if you are going to scale up, so say you're going to scale to, I'm just making this up. Say you're going to do
$2,000. Say the 25 or the $20 wide, you're going to the $20 wide at the 20 delta, you're collecting like $350. So you're collecting $350. So you're risking on that $1,700. So $1,700.
If you're going to risk $1,700 on the iron flying, it's only $200. You're doing like a 7 lot. I'm going to get out of that after like 5% instead of 10%.
Well, no, it's still 10%, or you're going to, and your losses will be too, you won't make enough on your wins.
If you're going to risk let's just go through this. If you're going to risk,
you still have to manage at 10%, or when you have that loss, like you no longer will have the ability to have 2 wins make up for a loss.
Hold on. I agree with what you're saying, but hold on. It's very bizarre because granted, it's $7 instead of $8, but say I wanted to risk $2,000. I'm going to take it down to.
Yeah, it's like a 7 lot. You were right.
Yeah, okay, there we go. A 7 lot. You're taking in $5,000 in premium. So what the interesting thing here is if I'm risking $2,000, if I'm getting out of this after 10%,
you're getting $500.
It's $500. Do you know what I mean?
Yeah, I know, but you still have, if you only take it off at half the percent, then at 5%, then you need 4 wins to make up for 1 loss, or you need so many more wins. If you can lose $5,000 on a max loss, you need 10 wins of $500 to make up for 1 loss.
I agree, Jenny. I'm agreeing with you. It's just very hard to say then if I'm willing to risk $2,000 that I'm only going to make $34 if I take it off at 10%, or 25% would be $60.
Oh yeah, you're only risking 2,000. I was thinking you were risking 5,000. So you're only risking 2,000. So
2,000 to make 500 if you take it off at 10%.
But again, if you lose 2,000 on, if the market gets away from you, you lose 2,000.
It'll only take you.
And then it would take you 4 wins of 500 to make up 1 loss.
No, I know this isn't 1 for 1 because usually it's 8. You're usually collecting 8 at 9 o'clock. You're taking 820, 830, something like that out of it.
Well, and because normally you've got, like, if you put the strikes together, I know you've skipped a strike. Like if you made it a real iron fly, let's see what.
There you go.
Yeah, you're getting.
So and then I could take my quantity down because I want to. Oh no, I want to risk more, right? I want to risk $2,000.
Yeah, you can keep going.
So I've got a 10 lot in. That makes my profit potential 8,000. If I take this off for 10%, I'm getting
$800.
$800. Do you know how hard this would be for me if I had like a $500 profit for me not to close it?
So let's compare. So $800 here would be your 10%. Now close it and do the 20 delta, $20 wide.
So 20 delta, and realize like the numbers are going to be a little bit different, right? Because it's
it's late. It's late. So
here's I'll go 22 delta, $20 wide. You're gonna get you're risking $1,600, and if you get 25%, it's what, $80, $85.
$85. So that's why I want to say do the multiple to get to the point to make 800. So if you took 25%, but so like Jack Tucker and the
I have to get to $4,000 in order to get 20. Let's just say 20%. There you go. So $4,000, and I was taking 20% out of it, right? That would be $800.
$800.
You're risking $16,000.
But you're risking $16,000 instead of $2,000. We talked to Jacob. He likes the iron fly. Liz, you've been doing the iron fly.
I'm not talking anybody into what I love about this, Jenny, is I don't think it's you're right, this is wrong, this is right, this is wrong. I don't believe that to be true. I think all these trades are awesome depending on your account size, your risk parameters, what you want to take, because this has a much higher probability of success than that iron fly.
That's what I was going to say. This has a 91 probability of success. Go back to the probability of success on if you could, on Jacob's. So this one has had like a 91 probability of success.
Wait, hold on. Let's just go at all times, not like when they're doing it.
Yeah. So
this is the Iron Condor with $20 wings. This is at 91% probability of success. Whoops, sorry, I didn't mean to hit that. Right.
And then take a look at the iron fly.
And then the iron fly, hold on. Let's just go to always 70% probability of success. Now let's look at the average P&L. So the iron butterfly has a $59 average P&L, right? And then the other one, and once again, this has
it should be less. Yeah.
Yeah.
So
like I said, I don't think one's greater. This isn't one is greater than the other. Sometimes we'll look at things and be like, there's a clear winner. I don't believe that to be true.
No, take a look at the put spread too. I'm curious. What's the put spread probability?
Okay, so I'm just going to go to always. Put spread probability is 96%. Oh, that's just the $20. This is what I used to do, remember?
20. Yes, $20. Yes, so that one's 96%.
96%. Now you're going to cut when you're doing this, you're going to cut your what's it called? Collection in half.
You're only collecting half of what you would.
You're cutting your collection in half.
Much higher win rate.
But I want to see the put verticals that are just these $10 wide put verticals. Look at this, 90%.
Mm-hmm.
So and that's always.
Right. So I will say that I know there was a lot of information in this, but these slides will be attached to our show in the archives.
And I love it. Like I said, I don't think there's a right or wrong. I think it just says, so his takeaway, the larger credits from the delta neutral positions help to reduce the downside risk. This is true. For at the money traders, this was enough to give the edge, a slight edge to the iron butterflies. Okay.
Okay, where are we? You can keep reading because I lost
Okay,
track.
when it came to trying to pick directionality, looking to be contrarian and bet against the recent market moves was counterproductive, with the best results occurring at very high best results occurring for very high signal thresholds, which approached the success of never being directional. Okay.
All right. If contrarian signaling was unhelpful for finding 0DT success, what about trying to follow momentum? Tune in next week to find out.
Yes.
Alone. But anyway, I think a good takeaway from this is be aware of the move compared to the daily expected move, because you see a high probability of success especially in those iron flies if we are moving below the daily expected move. But also don't think, and I know, and you know, from our years of trading, we can't think that we're smarter than the market. We can't think, oh, SPOOs are up 40. This is so high. I'm going to sell calls right now. Or SPOOs are down 20. I'm going to sell puts right now. Like, you just don't know. And I don't know. And what we saw from these results, you don't know. And it doesn't really work over time.
So do you know what my takeaway is? Don't overthink it.
Don't overthink it.
Yeah, that's literally my takeaway in my simpleton mind. Don't overthink it. Because there was a lot of information, right?
And don't try to think, don't think that you can predict what way the market's going to go.
No, I mean, everybody has opinions because we're traders and everybody's got the opinions.
But for the day, like for the 0DT for the day, I mean, you can't think like, oh, 9 o'clock SPOOs are here. I think they're going here.
And I do agree. One of the chat said it looks like put verticals have the consistent win probability. And it did look like that. It did. I mean, it did. But once again, like I said, with the iron flies, I'm just doing them because the drawdown is so much less. Because you got to figure the drawdown and just the put vertical would be double even with the iron fly.
I think I'm gonna start doing more of the put verticals. We've had someone posting on Twitter who does more verticals, and
Jackie.
Yeah.
Jackie on Twitter is the vertical. Now, what I loved about talking through this is when they said it's the at the monies, this could be this. This is very Jajun-esque. You're just selling instead of buying it.
That's very Jajun.
Yes, this is Jajun.
But Jackie was collecting like 85 cents on and
yeah. No. I know Jacob's study was the Jajun. Jacob's study was the Jajun. Jackie was collecting like this. Right?
Yeah, something like that. And I've been putting on those, and I'll take 50% out of it. So if you collect 80 cents, you're taking $40 out of it. But
yeah, I like it. I like it a lot.
And again, to scale up that to $2,000, you're only going to end up with, you would do 5 of those. And these, I think, well, in Jacob's study, he was only looking for, I see his high win rate. He was only looking for 25%. When I put these on, I've looked for 50%. So looking for
25, if you're scaling it up, 25% isn't bad if you're collecting $400. It's not
great. Yeah. It's only $120. Or not even $100.
The problem is, it's not, if you're taking 50% out of it and you're doing a one lot, it's not 35 cents. You know what I mean? If you're scaling it up.
You're risking $2,000 and you're only making $100.
Yeah. Yeah.
Not great.
Interesting. I don't know. I liked it, Jacob, and I can't wait for next week. I'm on bated breath waiting for next week's study.
She's not going to be able to sleep from now until next Wednesday.
Nope, I won't. It's pretty funny. Okay. SPOOs are getting a little bit of a lift.
Yeah.
A little bit of a lift.
So our HIMS trade, our HIMS was filled, our GTC. We had a 50 order to buy it back, or put back for 50%. That hit this morning, 8:32. What was HIMS doing? It's only up 24 cents. Did it have some big rally on the open?
No, I think we were close to, you know how the GTCs will hit just because?
Yeah.
Hold on, let me put this box. But we shall take a look, Jenny, don't you think? Okay. Yeah, it had a big rally. It traded as high as 52.33. This is what I love about GTCs. So let's talk about this, Jenny. So right now, HIMS is trading for, that's why you were confused, because you open it up and you're like, that HIMS didn't do anything, but it popped up for a brief moment and our GTC got hit.
And I told you this morning I opened my account, it looked really good. And then later, not as much, because this morning HIMS was up, Oklo was up. Well, I had quite a few of my stocks that were up this morning that aren't really up anymore. Like now Oklo's down. Quite a few of these that were up and aren't anymore.
Wah, wah, wah. Yeah, I mean, there was a big trend.
Wah, wah, wah.
Let's take a look. Let's take a look at where VIX is.
1618.
1618. Where was the high today?
Cancel crash. Although, are you surprised it's so low with the 1 o'clock? I mean, is there an announcement at 1 o'clock?
I thought there was Fed minutes at 1 o'clock.
I don't know.
But you know, it's so funny. I'm laughing. Hopefully our train conductor's watching, because every Wednesday we get on the train. He's like, how's the market today? I was like, well, we're waiting until 1 o'clock today.
It seems like it's almost all the time. Funny. He's probably missing us this week since we're remote.
So let's go. I'm going to go back to Twitter. I'm going to go top down to make sure we got to everybody. Oh,
Groove moves.
Groove moves, ETH. I don't know why, but I like it. Is the Rocket Lab reverse big lizard trade not going our way? It was a viewer's trade where he was bearish because Rocket Lab was up so much, but it's been going up ever since. I put the trade on, never bet against. It only goes up. Okay, so let's take a look at our Rocket Lab.
Yeah, let's take a look. So if we put on a bearish trade and the stock keeps going up, it's going to be a loser. I don't know how much of a loser this is right now.
Well, this is a reverse, right? A reverse where we're 33.40. We're in the middle, kind of. We should probably roll this out in time.
What I would say, we've been in it for 2 weeks, and what I would say with this, we could roll that call spread out in time and just take off the put spread. We collected almost $3. That put spread is worth only about 15 cents.
I'm gonna go. Should I go through earnings?
I don't know.
Yeah, let's take a look, because it is directional, right? So I'm gonna see where, okay, 430. I'm just going to put in the same trade, and we're paying $1.
And the 40. You got to move it to the buy to the 40. It was the 33.40.
Okay, so we're paying, we collected $3 on this, Jenny. And if we're paying 78 cents to roll it, now keep in mind, we're paying 78 cents to roll it. And then I could actually add on.
But if we're going to add on both sides, I don't want to go through earnings. Keep it the week before.
I agree. We should keep it the week before. But what we're doing here is rolling for a credit.
Let's see what we get to roll the week before. Because it might look better the week before.
It might.
Because because the one we have to buy is so close to at the money, and then that earnings premium is inflated. So this roll might look better the week before.
I'm going to take the call spread off.
Wait, what do you mean?
I'm going to take...
Can you just see what the roll is to roll the 30-day?
Sure. Hold on. Let me take it.
No, not the whole thing. Just the call spread.
Okay. And then roll to the 30-day to go to the 33. I'm going to sell it and buy the 40. It's 68-cent debit.
So, yeah, I thought it would be a little... Because it's a little cheaper, just like a dime cheaper. But I thought so because we had to buy that 40...
No,
don't take more risk.
And then that's what I was trying to break it apart, because if we closed one and then added something on, we could legitimately create the exact same trade just in 30 days out. Then it's bearish.
Yeah, do that in the 30-day. I don't want to have, maybe not in the over earnings, but do that in the 30-day. If it doesn't come off, then we could readjust for our earnings trade.
So, and we did collect $3. So I'm going to roll this right now for 61 cents. Okay. See if we can get filled on this.
So we're rolling the call spread for 61 cents. And if we can move out that put, if we can add on a put spread,
you're going to get, that's great. You're getting 113 for it. Oh,
well, we have to buy back our other one.
No, you're not getting 113 for it. Look at the market on the one you're buying. No bid at 117.
Rocket Lab. This is when this is when we talk about having to manage a loser if something's not super liquid.
Jenny, I actually brought it in a little bit. So this is what do we pay? We're trying to pay 61 cents for it. We're taking in a 52-cent credit, and I actually narrowed it.
Okay. But yeah, you didn't buy back. You're not factoring in buying back the put spread in the 9-day.
No, let's just leave it.
Yeah, let's just leave that one.
Right? So this is, it's going to be extended for a wee bit of debit out there. Now, the other thing that we can do, and this doesn't require that much, is we could reestablish.
So we'd have to buy the one back for how much? $450.
So yeah, we have to buy the one back. Let's look at it from this perspective. We have to buy it back for $450. Okay, the whole package would be bought back for $450. And then if you wanted to reverse, you could.
You want to try to collect $450. Try to make it, try to collect $450.
I'm gonna have to take that down. Hold on. And then.
Or it's got to be much wider. Yeah, I just think.
No, we're trying to extend our duration. If we can extend our duration for very little, we're going to do it.
Right. Roll out the call spread, add on that put spread. We've extended
and we're
the
not
duration.
getting filled because Rocket Lab has some really wonky markets.
Otherwise, we just leave it for 9 days. What do we have left to lose? $450. Oh, it's $7. It could be worth $7. So we still have quite a bit left to lose. So I think rolling it out. But I would like the idea of rolling it out and getting more credit, not rolling it out for nothing.
I know. What Jenny's saying is she doesn't want to recenter it, because recenter it, no matter what, you're paying a debit for it.
Yeah.
So we'll let this work, and hopefully, look at this. I mean, we're never going to get filled on that.
Or we close the whole trade and buy a put diagonal.
Look at that. We're filled.
We're filled. So that was just the call spread. Now we have to add on the put spread.
70 cents.
Yeah.
Okay, we're going to let this work, because that's, Jenny, just say, or we don't get filled. Again, say it out loud. So the
or we just don't get filled on it. And then push this out. I'll get it out onto the follow page.
And we're going to let that work.
Because so far I only have hymns out on the follow page.
That's all we've got in there so far. Taking a look at these, our ZB position is going in the right direction. We're getting a little bit of a bounce in bonds. Corn, we have a put spread.
We've got time. That's 44 days.
You know what I want to look at too? I want to take a look at our FX positions.
And I want to look at, I do want to look at Delta. I want to look at Delta.
Oh, we're still at a loss on these two, and still a baby profit in the Euro USD. So we've got Glenn on tomorrow for the first 15 minutes.
We'll keep him as long as he wants to stay. So
yeah. Okay, let's take a look at Delta for earnings. Delta Airlines, one of our favorite flight attendants, was on there.
Yes, do you remember his name?
No, can't remember. I'm terrible with names. Do you?
I think it was Ryan. I don't know, but he was a flight attendant that was very nice to us, very nice to us, and very friendly. Liz makes friends with all the flight attendants.
I do actually make friends with all the flight attendants. I can't help it. Well, you should be nice to them. You kind of need them.
I am always nice. I'm nice to them too, but somehow Liz makes friends with everyone sitting around us. By the time the flight's over, there's a whole party going on.
Can't help it.
And hey, I used to have drink tickets to pass out. My husband used to get so many drink tickets on Southwest. I would be passing out drink tickets left and right. But we don't even get drink tickets anymore. Now it's like on your phone app.
Oh.
So I can't pass out drink tickets anymore.
Well, and you mean the great job tickets, right?
Those, or no, I would pass out drink tickets to the people around me. Like, anyone want some drink tickets? But there aren't physical drink tickets anymore.
Oh, you have to be like, here, want me to flash my phone.
I'll flash my phone.
All right, Delta Airlines mid-range, in my opinion. Delta Airlines mid-range. We've got about 6 minutes left. 50, it's been as high as 70, been as low as 35. You've got a 34 rank mid-range. I say we sell premium. Let's get 50 cents and 50 cents.
Or I was going to say Jade Lizard, but
I'm okay with the Jade Lizard, because all we would be doing in the Jade Lizard, in the realm of the Jade Lizard, is pulling it up by one strike, which is fine. Yeah. And we're doubling our collection anyway. So we're getting, then let me see if I can move this. Yeah, that's great. 96 cents. So all that happened is we pulled them in by one strike. We're collecting $1. It's got $8.46 in capital outlay. Worst case scenario, Jenny, we are long Delta Airlines at 47. Let's take a look. 47, which I'm fine with. Then we just sell. Then we would just roll the puts out.
Then we're in Delta. Then we're in Delta. Sure.
Yeah. Okay. I like it. 96-cent credit.
Okay.
Did we want to look at ConAgra? I'm actually going to take it down by a penny. I want to make sure we get filled.
I have not traded ConAgra. I mean, I don't know when, but go ahead and push that out. Push out the Rocket Lab roll.
Oh, I did. It's already been pushed out. Okay, I just want to look at CAG.
So, and then I want to
we didn't get to. Do you want to pop into what's your assumption and do a speed round?
Oh gosh, we never got to it. Why don't we shuffle through and pick what we want to pick? Like pick what looks good to us.
Oh, cherry pick, perfect. Pick the winners. Hold on. Okay, what's your assumption? You know what, Jenny? Do you want to play What's Your Assumption very much like Tom and Tony do, where we don't jump in the platform?
Okay, Dios from Athens. I don't know what TMUS is. I've never traded it. Have you?
No, but I'm gonna look real quick. TMUS. Yeah, it is. It's a $231 stock. So we're gonna pass on that one.
We're gonna pass. Next.
Ooh, HG. Frank B from Toledo, Ohio.
50% tariff on copper. You have to go show the chart in copper.
This was bonkers. The problem is I have to go through what's your assumption every time.
Well, that's all right.
Okay, this is what happened yesterday.
Wait, we need the forward slash.
Oh, no, I need the forward slash. I was like, what? Yeah. Okay. So take a look at this. This was yesterday's move in copper. It was that's the biggest bar out there, and that was from tariffs. Now it's come back quite a bit. It's gotten 50% of that move back.
Imagine if you had, how big is copper? Just hit the future.
It's big.
Yeah, it's big.
It's big. It kind of reminds me a little bit of silver, right? Silver and natural gas. It's big.
It's big. So I don't know.
So what do they want to do in copper? I like it. Trump says he plans to. Oh, this is probably before. Oh, it rallied 10% on yesterday's news, and IV is high. Neutral strangle to take advantage of high IV. Honestly, Frank, I can't do it. I want the dust to settle.
You're gonna get this. He's gonna get the certified badass card.
Yeah, Frank. Really. Okay, next up, RDDT bullish, Reddit. Reddit is down 6%-ish in the past few days, and I'm pretty bullish on it. Okay,
yeah, then I'd tell puts in Reddit. I mean, I'm in and out of puts in Reddit, but Reddit had such a rally. Usually I'm in puts in Reddit. If you go to the chart, Reddit had, to me, quite a rally from 90 to 150. It's down a little bit. In August, I'm okay with like the 120, 115, anywhere around there. I don't know. I don't mind puts in Reddit. I really don't. They use a lot of buying power.
It's got to be put spreads because they do use buying power. So let's go. If we were gonna do the 120, I mean 118 isn't bad. If we were willing to sell the 120, there we go. We're shipping it.
Sure, ship that.
Okay, and then I'm gonna go back. Sorry, I have to go through what's your assumption every time. I feel bad about that. Affirm bullish 45 DTE, good fundamentals. Tariff pressures on consumer buying power for a good. Buy now, pay later. I had a correction Tuesday morning, the 8th. Bull put spread. Let's take a look.
AFRM.
So a bull put spread would be.
Yeah, that's.
Very similar. I mean, it's a dollar on. You're risking $382. Let's pop them in. We'll see if we can get filled on some of these. Okay, we're filled in Affirm. I'll push that out as soon as we get there. And then number 5, IBM bearish. Lizzie B. It's not me. Before earnings.
And they're cautiously bearish. So if I'm cautiously bearish, I would probably, just do a call spread. We just sold a couple put spreads. Let's throw in a call spread. IBM is high. 289 to me seems very high.
Well, and Lizzie said cautiously bearish before earnings. I don't know that I want to do a call spread.
Oh, before earnings.
Didn't they say that? Let me see. Cautiously bearish before earnings.
Maybe take the money and AUG strangle. Well, maybe take the money and run before earnings, AUG strangle. So if you're looking at AUG strangle, you probably won't take your money and run before earnings. But AUG is before earnings, strangle. So she's just got a skewed strangle. So she has a strangle, it's just skewed. But if I were bearish.
But she's doing it in August and earnings are in 2 weeks.
So she must be going just a couple weeks out.
So if you've got the 263.25, she's doing August. Let's go.
How far can I get on a call? I'm curious.
Hold on. Let's just look at hers real quick because I'm sure it's regular August. 260, 365. Yeah. So 365. Yeah.
Huh?
What? Hold on. 263.25. Sorry. 325. 263.25. So yeah, that's bullish.
Well, it's skewed. Yeah. I mean, she says cautiously bearish. If I'm cautiously bearish, I'm just going to sell a call. Honestly, how much buying power is just the like 315 call for 350?
$3,000.
Yeah, 10% return on capital. And if I'm cautiously bearish, I'd probably just sell the call. But then you're right, and that's your earnings trade.
I don't want to ride it through earnings. That's the only reason like I said, good luck, Lizzie. I hope it works for you, but I don't want to go through earnings with an August if I'm cautiously bearish.
Yeah, and I don't want the strangle through earnings now.
No. Okay, so next we've got CRCL. Ooh, I don't know. After falling back from highs of nearly 300, is this the new range for Circle or just a pullback to shoot higher?
From Laos. LOL, not really.
Okay, and we are almost out of time, but CRCL, do we have?
And CRCL is tricky. It's so it's 199 now from its IPO of 62, but
it has pulled back. I will tell you that.
Yes, it really has.
High of almost 300. What is this though?
I know. How far can we get with puts in Circle? Like look for
this is cash secured, remember?
$300 on a put gets us to the 140
for $13,000. We've always had this problem with Circle.
We have this problem with everything. That's why I told Liz I'm going to go rogue.
I mean, this is worse than we were just looking at IBM. It was only $3,000 to put it on. This is $13,000.
I know. It's forcing you to spread it off, and then you're not getting enough.
Yeah, because they're all kind of around the same price.
But honestly, if buying power is not an issue, I don't mind. Although the rank is negative, but it's a newer product, so you got to take that with a grain of salt.
So I'm going to go through these because we are out of time, and I'm just going to say we're going to say yay or nay. Okay, so we're not even going to go to the platform, Jenny. Right. Number 7, Eurodollar USD bearish.
We're in it. We're in it.
Netflix bearish, 60 plus days.
Maybe a call spread.
There you go. So they have a call ratio, which I'm fine with. Call ratio spread. If you're bearish, I actually like a call ratio spread better. Yeah. And then number 9, ZC bullish. We're already in.
We're in it. We have a put spread in corn.
And then number 10,
6J, the Japanese yen, 6B, the British pound, right? 6J, 6B, spreads at a recent low. Yeah, and let's take this. You know what? I'm going to take a snapshot of this, and I'm going to bring it on tomorrow's show for Glenn.
Perfect. And Jenny, you did it. There we go.
All right, everybody, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mike Butler, and of course, Glenn in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, get to spend it with my buddies Mike and Glenn. Glenn, good morning. Welcome back to the show. Thank you for coming on.
You've mastered that intro. Wow.
You know.
Strong work.
Yeah.
A lot of words. I'm doing well. Already eaten my breakfast ribs.
Oh.
Sorry.
You got a little,
I know. Yeah. Watching Wimbledon. You guys big on Wimbledon?
What do you mean watching Wimbledon?
I'm after work. I am watching Wimbledon highlights.
There you go.
That's right.
There you go.
Everybody.
Yeah, Wimbledon. They got some bangers in there. Some guys and girls that are still.
We're on to the quarterfinals.
Yeah.
We've got our American Ben Shelton playing right meow.
Really?
Yeah.
What's he ranked?
He's ranked 10. He's going up against number 1, Yannick Sinner.
Nice, very
battle.
Nice. You got
nice thing about him.
Bets on it?
Tennis is hard.
Well, actually, not when it's Ben Shelton because he's just an absolute bomber. Like he's a pure server.
Yep.
So if you're gonna bet, you bet on his aces, number of aces, over under. And if you can actually parlay that, you can do most aces in the match and win. Because if he's going to win, he will have the most aces in the match. So that's your only bet with Ben Shelton. He's just one of those young guys that can
have this in your repertoire.
Oh yeah.
Of course he does.
Every time there's a new sport, I get shocked and surprised by Mike's random knowledge or bet prowess.
Yeah, it's interesting because tennis has that like pre-made parlay where it's like most aces and a win. Like you can click that button and those are the guys you want to target if you're gonna do it.
What are the odds like on like this one, the American guy versus number 1? Like what would he be?
It was
to win?
Yeah, to win that.
It's like plus 1,100.
Oh, so it's big. So it's long.
Yeah,
it's long odds.
Yeah. But you can also do like if you do like the games played.
Yeah.
And it's like because it could either be 3, 4, or 5 sets. And so it's pricing in like 3 good sets. And then as soon as you get a 4th, then it's like that clears. Over. But tricky.
Okay.
But I watch it for the love of the game.
Yes.
The gentleman sport that it is.
It is. Pinky up.
Exactly.
Especially Wimbledon. Wimbledon's very pinky up. Everyone has to wear white. It's a whole thing.
Pure class. What's up with you guys? Obviously not Wimbledon.
Yes, because we, are working today.
Yeah.
Glenn.
We are patiently waiting for the market to do stuff.
It was this morning a little bit. I mean, it was doing things. Volatility getting smashed again. NVIDIA 4 trillion. Did you see that news?
I did. As a proud shareholder, you celebrated appropriately.
What other stocks do you like that you trade / invest in?
Let's see. Let's pull it up.
Yeah, what are you got anything spicy in there? I love talking to like Gus has like great little like random, momentum stocks that he's messing around with. So the young guys, you're the new frontier.
I've talked to some coworkers here that are into space.
Oh, okay.
A popular space play is ASTS.
I've seen that one. Okay, ASTS.
That one got a big
Space
pop
Mobile.
on Elon's contracts getting Now it's a little dead in the water.
Okay. What else?
That's interesting. Let's see.
Go like Rocket Labs too? Are you a Rocket Labs
I'm not
guy?
that crazy.
No. It's okay.
Yeah, ASTS going from 20 to 50. That's whatever.
I think we traded this one time.
It's whatever.
Somebody was trying to have us.
Yeah, and like randomly yesterday morning, I was like, it's probably a good day to go long copper, right?
Oh yeah, you caught that one on the HG/HG.
No, I did not catch that one, but
Yeah,
that's
That was an incredible move.
I mean, for those that may be watching or listening that have dabbled in the abandoned building copper stealing endeavor
and are still
you
sitting on
now, Yeah, you're now printing.
Man, I could never move those couple pipes from the local church.
Now you can.
Now they've
Now
just
you
doubled.
can.
Yeah.
Let's go.
Yeah.
Demand is high. I actually I would love to see just someone walking in the street with just like copper pipes.
Yeah. Just that
Double
giant-
barreling.
or those giant reels, the wiring.
Yeah.
Yes.
Yeah. Very nice.
Well, if you guys know a guy, I won't tell.
Perfect.
Fair enough.
Did you notice they covered the thing
I
behind me?
did. That's interesting.
Can't see it. Can't see anyone putting anymore. In the
Yeah,
background.
I kind of like that.
That's really funny.
You see Clink over there, just like
Yeah,
Clink and
working
Kyle, like just
the office
going
par
back.
3.
Yeah.
Yeah.
We have 3 different office par 3s.
I appreciate that.
I think there's a par 5 now too.
Oh, geez.
Starts further back.
Well, they've incorporated the Tasty Live side too.
Exactly. Yeah.
A
Which has
dog leg.
been
Yeah.
really
Exactly.
nice. I've been enjoying having visitors come because people don't. They kind of leave us on our own little island over
Right.
here.
And then all of a sudden, 4.
Yeah. It's nice. It is fun. It is fun. Quick little market update.
Sure.
And we could get into it. E-mini S&P 500 futures, they're up 16 right now. We've had about a 55-point intraday range. They were actually down, God forbid, thank God they didn't stay down. But they were down about 6 or 7 points in the overnight session when we kind of opened. They've been very strong since the opening today. I know we're waiting on some tariffs. I think we got 6 or 7 of them. You get a tariff, that kind of thing. It's happening today, I guess. E-minis have sold off from the highs today. 63.15, I think that was near the high we had the other day, middle of last week. 6333 was the high middle of last week, so just a couple points below that. NASDAQ up 60 here, despite NVIDIA, as we just mentioned, reaching the $4 trillion market cap, but it's below that right now. I think 163.80 or something around that is the $4 trillion marks, somewhere around that. Having a strong day from some of the other ones like Meta. Google was up $3 or $4 this morning. I know Microsoft was up like 10 at one point. So we've given up a little bit of the rally here in the NASDAQ. NASDAQ got up as high as 23,112. So it's about 150 points off from there. Dow up 70, you got the Russell up 8, so everything relatively muted despite the rally we had this morning. Oil, 68.51. It's been chopping between 65 and 70 for the better part of the last 2 or 3 weeks here. It's post 12-day war. It has been a chop fest there. Volatility futures at 1940, we had the roll, which is why we're up to 19. If you remember, we were talking about volatility in an 18 handle yesterday. It's down 31 cents, a little over 1.5% move to the downside. The VIX itself at 1615. It got as low as 1595, so we actually got a 15 handle today in volatility. Bonds up 23 ticks. You got gold and silver both basically flat here. Gold's up $1, silver down 7 cents, and Bitcoin hovering at 109. It's been chopping here for the better part of a couple days. Maybe it's ready to blast off with the rest of everything else.
Potentially.
Yes.
Potentially.
Yes.
Yeah, I haven't really done anything in this portfolio just yet. Same stories yesterday. Some positions just churning. Like my biggest P&L day mover is 60 cents. That's in coin.
Surprising with the amount of vol contraction we've had over the last couple sessions that you're not taking anything off.
Actually, sorry, my biggest mover is natural gas, down $120.
Yes.
We
both got long.
The old call spread Yes.
You go at the money long call spread.
Yeah.
I did that out of the money short put spread, but both feeling it a little bit today. I did do 2 new trades for the Johnny portfolio. If you missed that, I sold a put spread in UNH, so playing for maybe a slight move higher, but really just this stock has just chopped around 300 for the better part of like the last 2 months since the 50% drop in the stock. So certainly at lows. I did a put ratio in Roku, which I have a call ratio in this account, so I'm very much playing it neutral if you take both of them into account. And then NVIDIA, I did an upside broker wing butterfly with no risk to the downside, but playing for that above 4 trillion mark, but have no risk to the downside if we stop there.
Because you know what they say, once you hit 4 trillion, you never go
You
back.
got to go to 5 trillion.
Yeah, easy.
Yeah.
The first 4 trillion is always the hardest.
Yeah.
That's what Papa always said.
It's good. It's fair. It's true.
Yeah. I have nothing else to add to that.
You really are.
So we got some slides.
Yeah. You're gonna give us a good freaking trade. I mean, what the hell, man?
First off, I don't give you any trades.
That is true.
You make your own.
NFA, non-financial advice, not financial advice. Okay.
I'd like to
These are
announce
my own.
I've got 9 light items in my Tasty FX positions tab, and only one of them is profitable by $1.44.
Damn.
That's green, baby.
Yeah, it is. It is. But I'm basically long the U.S. dollar. Basically long the U.S. dollar, which has been painful.
Yep.
But I think it'll reverse eventually.
Yes, I think so too. I've gotten everybody in that boat.
Thank you.
Gus, you did a segment with Gus.
I did, yes.
I told Gus, I was like, Glenn is going to tell you not to be long the USD, but this is the contrarian trade, the consensus trade. Short it. Everybody short it.
A lot of people are. But yeah, we've got on the Forex focus part of Tasty Live.
Cool.
I did last week when to get long U.S. dollar study.
That's at 6 a.m., 6:30?
6:30.
6:30, bright and early.
Very early.
Yeah, it's really early.
But I got to sleep in today, so that's good.
Oh, nice. Good.
Yeah, I got some slides for you.
Cool.
I did a little, I've been doing some more research studies.
Sweet.
Digging into more of the historical data for these FX pairs. And today we're looking at symmetric risk and reward in trending US dollar pairs.
Right.
If we go to the background on this, that's why we're looking at trending US dollar pairs, is because dollar beat up so bad this year, but a little light this week. We're getting a slight dollar comeback. Today, bit of a mixed bag for US dollar, but Monday and Tuesday, strong days against most major currencies, not to the magnitude at all that it's slid thus far. But this made me beg the question, how does someone new to FX identify a moving market? And when you do have one of these trending markets, what strategies work best? So the study that we looked at, past 6 years of data, all the major US dollar pairs, euro, pound, yen, Australian dollar, Canadian dollar, Swiss franc, and New Zealand dollar. And I took what we observed early this week in several markets, looking at 3 consecutive up or down days as trade entry criteria. So this is an easier thing to identify just from your charts. You go to daily and you're looking, because you have 20 different dollar pairs you could look at. And if you're trying to identify which one is trending and which is chopping back and forth, each have their own strategies associated. But here we're using that 3 consecutive days of movement as trade entry criteria, and then looked at kind of what profit targets are realistic with a 5-day max holding period. So you guys have been holding on to your positions for now, what?
Dear life.
Like 1 for dear life, for 2, like a month now,
Yeah.
perhaps. And in some of those pairs, I'm sure you're getting some positive carry overnight. So even though that running P&L might be down, you might be earning some cash to your cash balance overnight every night. But here, wanted to give you guys something to look at if you're looking intra-week, just kind of what movement to expect, because these FX markets are. You guys are new to looking at it, and you're not going to see the same 30% pops and pullbacks that you see in the equity market. So we looked at a lot of numbers associated with that, and here's what we found. So first, I looked at, if we go to the next slide, we looked at 1% profit targets because that's a big move in currency pairs. And here, first breaking down what a momentum play would be. So if we saw 3 consecutive up days for the US dollar and you go long US dollar to continue that momentum, here's what we saw. We saw that only dollar yen was really the one with a positive win rate at 56%. And the profit target hit percentage is at 32%. And so here we're not seeing a lot of support for momentum strategies with this profit target. So this would be, you have a profit target at plus 1% and a stop loss at minus 1%. So you get out of the trade in either of those scenarios or with that 5-day max holding period.
Which is synthetically like a call spread.
Sure.
Yeah, it's a spread trade.
Yeah. And so another thing that stuck out to me was that the time stop hit for a lot of these pairs was over 50%. So maybe, to me, that spells out, maybe 1% is a bit aggressive for a momentum play. With
time
this
stop, you mean it just never played out in either direction?
And it closed on that 5-day criteria.
Okay.
Yeah. And so to me, that says, maybe with this entry criteria of 3 consecutive days, it's hard to get any more juice out of it with 5 days. And so if we go to the next slide, worth bringing up just the same 1% profit targets for contrarian strategies. And here we actually did see that the pound dollar does have a pretty robust P&L of 0.1% there, and not as high of the time stop hit and almost 40% profit target hit. So that emerged as a contrarian winner, but I think this is still telling me that 1% might be too wide of a range. And so if we go to the next slide, shorten it up to 0.5% profit targets. And here you see that time becomes much less of a factor. So that 5 days, you're not getting dinged just based on time. You're able to get either a 1% or 0.5% up or down move more often. And so that New Zealand dollar, which is historically one of the more volatile dollar pairs, you're seeing that get, for momentum plays, that post over 50% win rate and an over 50% profit target hit. So you're only getting stopped out due to time 1% of the time in that pair. So with these criteria, that's one you would look at for momentum.
Right.
And then going over to contrarian, because on the next slide, if what this is telling me across 1% and 0.5% is it's telling you contrarian plays tend to have a slight more edge.
Okay.
And we're looking at, symmetric risk reward. So you'd expect maybe 50-50. And so with all of these, with a win rate above 50%, that's a notable edge in my opinion. And you're still seeing that pound dollar emerge as the biggest average P&L.
So this would be selling pound, buying USD after the 3.
So if pound dollar was moving up 3 days in a row, this would be selling it. If it was moving down 3 days in a row, this would be buying it.
Got it.
And so you're still seeing, time isn't as much of a factor. You're getting those profit target hits, hit percentage above 54% in that pound dollar and Australian dollar. So some interesting takeaways for me. I know it's a lot of numbers, but yeah, using this 1 week trading periods, mean reversion strategies tend to have a slightly greater edge over trend following. And if you're looking, dissecting the pairs, that British pound has the most consistent edge for contrarian traders, while US dollar, Japanese yen favors momentum. And even with, the 0.5% profit targets, a lot of these, the average days held was more than a day. So it's kind of a very set criteria just based on the environment we're observing right now. But I hope that gets your gears turning as to what profit targets we can expect, if we're thinking about trading this intra-week and how to delineate some of the pairs, like dollar yen, more of a momentum historically versus some more chop in perhaps a New Zealand dollar, Australian dollar, pound dollar.
It may seem like those profit targets are small, but relative to like the leverage and the size of the position, you can make them. Got a lot of leverage there.
You got a lot of leverage,
especially
on that.
Got to keep them small.
Got to keep them small, but that Australian dollar, especially, has higher leverage than the pound dollar and the Japanese yen. So, that's what I got for you today. If we want to hop into the platform and
I love it.
Take a look at.
Well, while you were talking, I just got into the short British pound.
What?
It's not NFA, but I did just get into it.
Nice. Well, we're seeing a little uptick today on that pair that's been sliding so far this week. But just looking across my board, looking across the major currencies, if we were looking for that 3 consecutive day criteria, you're seeing the biggest continuation in that U.S. dollar Canadian dollar pair. That one is looking at 1, 2, 3, 4, 5 days of positive up moves. So if you were at that one
in positive, you mean up moves in the Canadian dollar?
No, this would be up moves on the chart. So if you're looking at the monthly here, flip over to hit the monthly.
Yeah.
And flip over to daily. Then you can see that we're marching up from these lows. Yep.
Okay. I was looking at the wrong chart.
That's okay.
Did I mess up my...
They're very powerful charts. You have to...
They are very awesome charts. It's pretty cool that you
can... them.
So much time.
Yeah, you can go back, what is it, 40?
Yeah, it depends on the pair, but yeah, some go back to 1990.
Wild.
Yeah.
It's a great year. You know why?
Some say the best.
It is one of the best years.
The second coming... Yeah.
I knew he was going there, but I was wondering if you were going to catch on.
It was a good year.
I was 2.
That's pretty good.
I was in the terrible 2s. I was probably pretty terrible.
He wasn't born. He wasn't saying that I was 2, but he was actually 2 years old.
2 years old, following, tracking.
Yeah.
Yes. Okay, wait. Which one? So we were looking at New Zealand. No, Canadian dollar. Okay. What would a trader look for here?
So here
theoretically,
here you're looking based on the study that we just went through. This would be an example where you have a trending market to the upside. So if you were to take a contrarian play here, as the study would favor, then we could attach those same risk reward metrics.
Yeah. I can't short the U.S. dollar against the 51st state.
It's a principle thing?
Yeah, it's a principle thing. Yeah.
Oh, so you'll go in on the shekel when there's war in the Middle East. That's
true.
That's not on the moral dartboard.
That's not.
You think you get short this, or I think that based on. Okay, I can do this small because.
And if you're thinking about your time horizons, this could be a short-term dollar play while you keep your more core position of a dollar long.
I like that. And one of the cool things about Forex trading is that a lot of my positions I could condense down into, single pairs as opposed to having all these, but I like having each of them just so I have a little bit of exposure to different things and I can just watch them and see what's happening. But, for instance, being, so if I'm like combining some of these, the Aussie dollar, if I'm short the Aussie versus the US dollar, so I'm long the US dollar here, and I'm I'm long US dollar, short Canadian dollar, I'm synthetically long. I'm long the Aussie dollar Canadian pair between those two, right?
You are.
If I wanted to be.
You are short
Short Aussie.
Canadian dollar.
Yes.
That synthetic pair.
Yes, short that synthetic pair in two different line items. So I could, close these and move this into one position, so to speak.
Right. Because that Australian dollar, Canadian dollar pair.
Yes.
You could do with no added math.
So I would, instead of using the two different positions, because do they have some sort of like span margin between these? Each pair uses its own margin.
Correct.
Which is kind of cool. So if I wanted to condense this position down, to one line item, smaller size, I could do that with just that one pair versus the two that I have. But I'm going to keep them like this.
Right.
Because I like having the line items.
So go back to this chart, the trade tab here.
Yeah.
Because if you wanted to really replicate what the study proposed, you could click on the chart on that what do you call that? Where it says minus 0.5 lots.
Okay.
So let's just as an example, you can take it off if you want, but just want to show people if you were to drag that from that stop loss take profit.
Okay.
If you were to click on that and drag.
Ooh.
Yep, so that's how you would add a stop loss.
Okay.
And if we go back to what our numbers.
Yeah. Give me this.
A 0.5% band around this position would be approximately 69 pips away. So if you wanted to do kind of a symmetric risk-reward ratio.
Like 7.5 or 7.4. You said 60?
69.
Nice.
Yeah, because you can continue to drag them on the chart too if that's.
Look at that.
Easier. So yeah, just
a nice little visual.
Yeah, and then you can drag that stop loss.
Oh yeah.
Yep.
All right, so we'll go to 60.
And it'll show you your risk reward ratio right there. And so now what you've done is you've effectively made a more defined risk trade. Yep. Yeah. And so
there's no like gap risk on these because it's all continuous, right?
Right. I mean once dinged, it'll become the stop loss becomes a market order.
Okay.
But
yeah.
So there's not like you shouldn't expect a ton of gap, but there could be like a little bit of slippage.
Baby gap. Okay. All right.
But yeah, so that's how you would make a risk defined trade using stop loss and take profits, and that's what
they populate on the position.
Exactly.
So you can see it. Okay, sweet.
And so this one, you could let it ride like you have the other ones.
Me, I'm letting it all ride, baby. Come on.
But you could expect to get dinged on that one much shorter in the week. We're still working on the ding sound.
Oh, yeah. I didn't know that. Sound. So it doesn't ding.
It doesn't ding. No ding.
Wow.
Because it's so quick, you actually can't hear it.
Yeah.
It's like the speed of light.
Are you going to do the same ding or a different ding? You don't know yet.
I don't know. I can't imagine a cooler ding.
That's fair.
A differentiating ding. Needed.
Very cool. Very cool.
Is there a way to link TastyFX to Tasty IRAs, or is there a plan to do that?
Can't say there's a plan coming soon to link those, but we are looking to add account types. You can also, TastyFX offers its own IRA fund trading. If you want to do that through our partnership with Equity Trust, just go to the TastyFX website, and we have a whole page on IRAs and how those are set up. It's pretty cool, in my opinion, but I'll see what I can do on the Tasty Trade side, because if we have it set up that way.
Talk to some people, will ya?
I know.
You got any new features coming to the...
It's July.
Soon?
It's July, and I think by the end of July we'll have your mobile app.
Ooh.
So that would be big.
Very nice.
Have this integration onto mobile.
That's great.
So you can check your 1 in 9 winning trades, Michael, on the go.
Yeah, I'm 0 for 6 right now.
Ooh.
Yeah.
Sounds like you got to
almost
get to 9.
defying probabilities here.
One day it's going to be all green.
Yeah.
And there's no, you don't have to roll anything.
Yeah, you just sit.
That is a
sit and
great-
wait.
No rolling, no worrying about front month, back month.
Is there a way to see the carry costs as a total per,
Yeah,
for
you-
like all my positions?
Yeah, you can go in the history tab.
Okay.
And I think the desktop window here is pretty small, but on the web platform here, you could scroll through it to see, what all the charges are. But on the web, on the web platform, I think you're able to download all this data and see it in a bigger window. So yeah, any of those positive amounts would be that daily financing adjustment. That's
Deposit withdrawal. So there's some where I'm paying a carry cost, or somewhere I'm getting a carry cost.
Yeah, and so your long dollar franc pair is giving you some extra cash overnight.
Well, that's just part of it. It's still
You're absolutely right.
Not quite profitable, but there's still.
But when it becomes profitable,
then you're double green.
Yes, very nice. Cool, good stuff.
Lovely, lovely, lovely.
I love the diversification it gives me.
Yes.
Global access.
Global access.
Mm-hmm.
Very nice. Good job out of you, sir. Do you want to stick around, or do you want to jump out? We can do that.
I do have another rack of ribs to eat, so.
Glenn, thank you so much for joining us today. It's been
Thank you
fun.
for having me.
If anybody has any questions, where can they reach you or the team?
You can go to helpdesk.us.
You didn't change that stupid email address.
I actually, now saying it, I think I did, but I haven't tested it.
Did you? Okay.
I haven't tested it.
Yeah. Next
So
time you come on next week, you have them change that stinking email.
Okay. It will
They can
be.
just tweet at you. They can tweet at you.
Yeah, you can tweet at me at Glenn Freiberger.
Yeah.
Or at TCFX
Like
as well.
Freaking home phone number.
No, support at TastyFX will soon work.
Soon.
It
not
might
right
work now.
so-
I just haven't tested it.
Okay. Well, you get on that, buddy.
Yes, sir.
Thank you for coming on. It was fun to
Thank
have
you guys.
man.
Enjoy the rack of ribs.
Yes.
That's the plan.
Yes.
All right. That was good.
Yeah.
Got a couple new trades on.
Yeah, I got
Love the
short the
interface.
euro dollar.
There you go. I did that via the Euro futures as well. So I'm with you.
Beautiful.
Yeah. And you can pull up the DXY, which is the dollar index. You can pull that up on the platform. Non-tradable index gives you an idea of the basket of currencies versus the US dollar.
Lovely.
Cool.
Lovely, lovely. All right, popping over to the YouTube chat now. If you want to join us there, we're on Tasty Live's channel. You'll see this video streaming live. Pablo, when you're constructing a diagonal, is your primary goal to select strikes that result in high gamma exposure? And is that the opposite of what I typically seek? Nope, they're very similar. The difference between an at the money option and an option 5 strikes out of the money is basically nothing.
It depends
There's
on the stock price. Yeah.
Yeah. But the ideas are very similar. We usually use at the money or out of the money diagonals.
Yeah. In the money is a poor man's covered call. It doesn't have the gamma.
Yeah, it's more of a high static delta.
Yes.
Where an at the money or out of the money has a lower delta to start that can get to a poor man's covered call delta. And it's cheaper.
Yes.
So if you're looking to like double your money on a directional move, it's going to be much easier to do that if you're correct with an at the money or out of the money diagonal versus an in the money diagonal where you don't need as much of a move, but it's a more expensive, heavier delta position.
Yes.
And can we provide a graphic example? Sure.
Of gamma
Just,
or
just like
a
difference
diagonal?
between diagonals, yeah.
Yeah, so we could show gamma as well. So the gamma on all these options is going to be relatively the same. There's not a not a huge amount of difference here, but the difference is really the starting delta exposure. So if you do like a typical, I like to go to like a 40 delta. So we'll go 40 delta in September, and then we'll sell the 20 delta in August. So we could synthesize this movement right now. So right now we start with 21 long deltas. we can move these strikes, and you'll see we get a little less long in the short term, but as time passes, assuming this option comes off the board, so like when we move this down, so this is now at the money where the short option is at the money. Let's say this option expires or is close to expiration. You go from 20 deltas to 63 deltas, and that's because the option is now in the money. You can even kind of synthesize that time and say we're, 9 days to go till expiration. As time passes, this option comes off the board. You lose that delta there, and you get to a longer delta position. That's your positive gamma. When you have a in the money long call, like if we're doing a poor man's cover call, the delta of this position is going to start out high and is not going to move as much as that one where we started with 10 or 15, 20 long deltas.
Yeah. So your setup was the 215, long the 215 September, short the 225 in August. My setup might be a 210, 220, 5 strikes lower. There's virtually no difference in that setup.
Yes.
But yeah.
A little bit more expensive, obviously.
Yeah. I think the big difference is just if you are trying to get a gamma exposure and rent delta in a cheap way, at the money or slightly out of the money diagonals is an efficient way to do that, especially if you are correct. And especially if it's a low volatility product, like 30% or lower, I would say is a strong candidate for diagonal spreads because the options are cheap and anything can happen from a directional move standpoint. If we're sitting at all-time highs and the VIX is not, and they're inversely correlated, thoughts on more momentum to the upside. So a continued vol crush and more movement to the upside. I mean, that's typically what happens when we get into these lulls of volatility. You see a grind higher over time, and you see volatility cluster at these low levels. It makes total sense when you have this shock event, and then the event goes away and volatility goes away. You usually see up and to the right as passive flows continue into the market and sentiment goes from fear to complacency until something happens again. And then we redo the cycle.
Yeah, it's not a given just because, volatility is not at all-time lows with the market at all-time highs. It doesn't mean that there's free money trade there. It just tends to happen. Like as you grind higher and, the fear goes away, volatility contracts, and that tends to cluster until something happens and you get that spike in volatility. It's why anytime you look at a vol chart on any time frame, we could do this, or we could just look at the VIX itself. All right. Spike, come down, cluster. Spike, come down, cluster. You see this time and time again, year over year, at all times.
Yeah, in those, so those clusters, like from...
You could see it even more if we look at like monthly.
Yeah.
You'd have these one or two, these couple periods of time where you get these huge spikes, and then it tends to chop and cluster in these ranges.
Yeah. And if you look at that clustering range, you still see volatility in SPY and the Qs, but if you draw a line of the average move, it's up and to the right.
Yeah.
Slowly.
Yes.
Let's see. How much of NVIDIA's success would you say is due to the chip shortage 4 years ago? I mean, there's certainly something to NVIDIA being the household name that everyone is utilizing, or a lot of companies are utilizing, but...
Product is the best one, and I think that's probably the reason. I don't think it has anything to do with it. I mean, I'm sure the shortage helped, but ultimately, it's the one you need.
Yeah.
For the bots and the robots, the humanoid robots that are coming.
Can't wait.
Yeah.
Let's see. Scanning.
Got nothing in there?
Nothing.
No trade ideas, no nothing?
No. No trade ideas, no nothing. We did have a poll. What would you like to see more of? Trade management, ideas, research-based. 60% trade ideas management. There you go. Look at that. Luckily, that's what the people join us to chat about.
Yeah.
In the YouTube chat.
Life cycle of a trade. We've got a new one out on Tesla trade. Talked about assignment risk.
Beautiful.
And why it's not something we worry about.
Mm-hmm.
We've beaten that horse to death, I think.
Yeah, assignment risk is...
It's the new traders' most, biggest problem, or the thing they think is their biggest problem.
Right. Like if you're selling a put and you're assigned, literally doesn't change anything. You already signed up for the 100 shares of risk below your put strike.
Or the short call.
Yeah. And if it's a spread trade, you have the long option that protects you from that risk. So it's not something we think about, and it doesn't happen enough for us to even worry about it.
Correct.
You keep using this word cluster. I do not think it means what you think it means. Inconceivable. Yeah, I mean.
What do you mean? In Vol?
Yeah. He's referencing Princess Bride.
Very nice. Very nice.
But yes, we have done research studies.
That's what happens when Vol gets smashed.
Yeah.
Markets at all time.
Start talking about movies. I just watched it. I just watched that like 2 weeks ago. Princess Bride. Have you seen The Princess Bride?
Yeah, of course. Yeah.
Classic.
How did you come about putting that on?
Just talking about classic movies. I also watched Rad.
I know you love that.
I'll wear my Rad T-shirt tomorrow if I remember.
Nice.
Yeah. Rad's an all-time favorite. But yes, we have done research segments on volatility clustering, and it basically shows that when you have periods of heightened IV, it doesn't stay that way all the time for long. COVID was probably my biggest length of heightened volatility in my trading career.
Yeah.
It lasted for like a year. Yeah. But look at this tariff stuff.
Yeah, we got 3 or 4 months of that volatility.
Yeah.
Certainly
same
not
with the Japanese yen was probably the shortest. Japanese yen was like, oh man, what's happening? And then 2 days later, it was like, just kidding.
Yeah. Volmageddon in 2018 or 2017.
Yeah.
That was literally overnight. It was like done with after that.
But yeah, when you get into these low periods of vol, when the VIX is low, it's low for a reason, and it requires a catalyst for the VIX to pop back to the 20s and 30s. So that's why volatility clusters, because it's totally in line with the reality that we're living in.
Yeah, this was Volmageddon was a big old nothing burger compared to COVID.
But yeah, when vol's in the teens, and especially the low teens, it tells you that the markets don't perceive anything to be a dramatic impact on the market's volatility, and we just chop around and grind higher over time. But as we showed up on the VIX chart, there's always going to be some kind of catalyst that pops the VIX back to the 30s and 40s and 50s. But what is that catalyst?
And what is the timing?
Right.
That's the other one. It's like it's hard to play that game. Why being long vol is so hard. You gotta get it in it.
And that's why you look at something like SVXY. Into the April vol pop, SVXY went from 50 to 30. SVXY is an inverse vol product. So if you are looking to play for a vol collapse in a longer term way, maybe you throw some shares on an SVXY and you're up 40% from the lows. So there you have it. Much easier to time a vol contraction after pop than a vol pop during the lows of volatility. Because again, you need a catalyst, and you don't know when that catalyst or what that
contraction
catalyst is going to
happens
be.
much quicker.
Correct.
Yes.
When puts are cheap, buy one. Yeah, I mean right now,
fair.
Downside hedges are very cheap.
Yeah.
And
Yeah.
markets are at highs.
Yeah, I also like doing like SPX. I haven't done one of these big wide butterflies in a while. Of like at the expected move, you can go as wide as possible. 200, 100, 200 points wide, 50 some odd days out, 40 to 50 days out. They trade for like, $1,000. But these are like a way to play long vol with, not too much decay against you in the short term. Could I do this?
You could, certainly could. What about core weave, a downside put butterfly? Remember we did that in circle? We talked about it yesterday.
Is core weave up now?
Core weave is up more today.
Core weave up $3 today.
But yeah, the setup that worked in circle was a longer debit spread than a credit spread. I'm just looking at the August 15th cycle.
Okay.
Which is in the earnings cycle, so.
Do you remember what deltas we went to around it?
I just know it was wider. The debit spread was wider than the credit spread. So I just looked at like the 140, 120, 110.
Okay.
For $8. Or $5. $5. That was pretty much a similar setup.
Mm-hmm.
Or no, it's $8. 140, 120, 110. No downside risk.
Yeah.
Something spicy like that.
It's a long vol play as well.
Mm-hmm. But yeah.
You gonna do it? August? I moved this one to the 140, 115, 100.
For $9.
Yeah, $9.50. But these markets, look at these markets, are $2 wide on the bid-ask spread, $3 wide.
They're certainly wider than circle, from what I remember.
Yeah.
Oh, maybe not. Yeah, they're similar.
I'm gonna do my SPX butterfly.
There you go. Thoughts on 0 days?
Long vol play.
I like it.
$1,000.
Yeah. Won't move that much.
Won't move that much, and I'm looking for like $100 out of this. 200 maybe.
Yeah. That's a symmetrical one?
Yeah, so it's this 6,000, 5,800, 5,600 for $1,000.
Yeah, I've got an iron condor on an SPX. That's still out of the money.
Mm-hmm.
But down a little bit.
I'll probably move.
So I'm leaning short in SPX. Thoughts on 0 day?
It's to like more of a 30 delta. We'll do 60, 50, 58, 50. And then I'll go to the 56.50 for $12. We're gonna try and make $100 on this. $200 maybe. Unless we crash, then I'll make much more.
Do you guys like to put on 0 day trades every day? Should the expiration date be looked at for diversification purposes? Thoughts? Yeah, I mean, I think the biggest thing with 0 day is realizing that it's a 0 day trade, but the idea is that you do it for, let's say, the whole year.
Yeah,
to
you have
generate
to
occurrences and get the actual occurrences to a level where your 0 day trades that are going to be super volatile start to look like more of a smoothed out process.
Yes.
Which means you have to trade small enough to where you can do it every day. And what your mechanics are from there, like maybe you're putting it on right in the morning and taking it off at 11, or if you got your profit taking order in there, GTC at 50%. I like that. So yeah. How did we learn about options trading?
Right here.
Yeah, really.
Really?
My brother worked here first, and then I got involved.
Real OG.
And then
Now
you
you're
got
the-
involved.
Now you're the OG. Katie was
Katie's-
with Chris, right?
Yeah.
Or no? Katie was
Katie was before Chris.
Oh wow.
Katie, Case.
Kitty was born in the darkness.
Yeah. Yes. Yes, she was. But yeah, just watching market measures, best practices, and then really, I think we both learned the most from answering viewer emails.
And doing.
Because we would literally get to work, answer 100 emails, and they were all trade-related questions. Like, I have a put spread. I have an iron condor. What do I do?
Mm-hmm.
That's how you learn.
Yes.
By just analyzing the markets and trading.
Mm-hmm.
How would you trade stocks that have IPO'd recently? CHYM has been around a month and is settled around 30.
Chime. All right. Do we have options here? Could be interested.
Looking for a 25-40 strangle in August.
Yeah, the margin requirement is basically cash secured here.
That's tough.
So
go ahead and buy some wings.
Yeah. I mean, I think this is an interesting short put spread. Stock really, I mean, what did we IPO at? 40 something?
Mm-hmm.
It's near the lows. I am going to do this August. I'm going to buy the 20 instead of the 17 and a half. Tighter markets, and no reason not to pay 10, 15 cents more and only use, $700 in buying power. Do it at $3 at 30, 20 short put spread.
Mm-hmm.
Let's see if I can get filled above the mid. These things trade, let's see. Not great, not horrible. I mean, it's brand new.
Yeah, I think selling the wide put spread makes sense. Yeah, the premium on the upside. So I think the put spread makes a lot more sense than the call spread, because if you look at the put spread's value, you can sell the 30 for $3.30 or 40 cents, and then you buy the 20 for 1/10 of that cost.
Mm-hmm.
If you look at the 40-50 spread, you're selling the 40 for $1.80 and you're buying the 50 for 80 cents. So the value difference between that spread is significant.
A lot of call skew.
Because of the call skew. So I agree with Nick. I think you just get rid of the call spread and just sell the put spread.
Yeah.
How do investors that have invested in Kodak for the last 5 years feel? Kodak.
That's still.
Wow.
Well, you remember when this was all the rage? It was the blockchain.
that was peak exit.
Yeah.
When it was we're investing in, I think it was Radio Shack that said that they're investing in blockchain. But yeah, I mean, some of these stocks just been chopping around. I mean, I have 100 shares of Under Armour.
Are you going to get rid of that yet?
No. That's either going to zero or I'm getting exited by an acquisition. That's it. I've had 100 shares for 4 years, pretty sure.
UA or UAA?
UA.
And you're up.
It's clawing back.
$1 from the lows.
I don't even see it in my portfolio anymore until we have discussions like this. So it doesn't bother me. But I'm not exiting. If that's the question, I'm absolutely not exiting.
I know. I've tried to have you exit it.
Yeah.
I got you in Ford.
You got me out of Ford, yeah.
Which, if you look at Ford now, having a little bit of a rally.
I think you got me out at 15.
I think so.
You got me out July of 2022, or maybe last year, when it popped to 14.
Mm-hmm. It's about time.
Stevie Wonder, new to options after watching your videos. I sold a BA put vertical, $200-195 for $1. Nice. Price action's bullish, and the vertical's trading for 42 cents now. Should I take the profit?
Yeah, take the money and run, man.
Yeah, you're getting a nice big move today, and while you could make more
in less than a week,
yeah, you could make another 40 cents. But the way we think about it is, okay, you sold for $1. You can only make less than half that now, and you have all of the risk that you initially had on the trade. So the more profit you see on the table with a spread, the more your risk reward skews out of your favor. So we take it off and we look to find a different trade.
Yeah.
But yeah, and the opposite is true. Let's say you sold that put spread and Boeing went down. we would leave it on because now you can make back everything that you're losing and you're only risking a little bit more going forward.
Yep. It's a nice trade. Good pair.
Very nice trade.
First one.
Mm-hmm. That's how we like to do it.
Yeah.
Swing and hit a home run.
It's not usually like that. First trades was your first trade a winning trade?
Yeah.
Oh, it was?
My first trade was like a call spread in Twitter or a naked call on Twitter, and then the next day it had the biggest rally that I had seen. It was like 11% rally in one day.
Sweet.
And I was like, okay, sick. This is easy.
I sold a call in Costco, and it just went straight up against me.
Perfect.
Yeah. Usually I feel like
you went straight to the pain train.
Yes, I learned quickly. Yes.
Lovely.
Yeah. Very nice.
Well, I think that's it.
Cool.
Thanks for tuning in. If you've got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B, next to Trader Nikki Bat. Glenn is at Glenn Freibarger with an A. I've got the newsletter pinned, the Tasty FX newsletter pinned to the top of the YouTube chat. You can sign up for that for free. But yeah, we will continue to monitor these Tasty FX positions. Loved learning about the chart ability to do the stop loss and profit take. That's really nice.
It is really cool.
But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm gonna say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We're back. It's Wednesday, July 9th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, we're turning through the middle of the week here, and it's another day of low volume and low volatility.
Yeah, low volume, low volatility. It's the theme lately, so, nothing's really changed.
Nothing has changed, but it's not necessarily a problem for this market. We've seen over the past few weeks as volatility has come in and volumes have dried up, the market's been able to scratch and claw its way higher. Yesterday was a typical summer Tuesday, and that's very much the case for this Wednesday here. We do see that we're still below 1 million contracts traded on ES. Likewise, we have IVRs below 10 in ES and NQ. Maybe we get something with these FOMC minutes released at the top of the hour. We can go right into the charts and slides here, Josh. I do want to bring up something that's been on the back of my mind here, Thomas, because I keep seeing all these comments from Trump administration officials that there's been no inflation, so why isn't the Fed cutting? And we like to look at the inflation trackers here on Futures Power Hour that the Cleveland Fed affords us, and so I figured let's take a look at what those inflation trackers are suggesting for the months of June and July. Of course, we're going to get the inflation data for the month of June out shortly here. But it's not bad, Thomas. Right, a 0.16% month-over-month run rate on headline CPI, or scaling it up to 0.24%. If you were to annualize these rates month-over-month, you're going to get a 1.93% rate of inflation, or something up to 2.9%. So we're not fully with 2% as the midpoint of the range, but when you start to look at 0.18, 0.22, like these numbers are all consistent with the Fed's medium-term target of 2%. So as time presses on, there's becoming more of an argument to be made that indeed the inflation that the Fed feared would come to roost, it hasn't materialized just yet. Perhaps it comes in the fall. That's what more economists are saying after all. But as it were, inflation here is very much in a realm where if, I think as Powell's admitted, if tariffs weren't the noise in the background, the Fed would and should be cutting at this juncture.
Yeah, so I mean, I'm thinking, last week we were at 23% of a rate cut in July. So, not majority view, but we were inching higher, kind of bringing rate cut expectations forward. And then we got that jobs data, which, as you've said yourself, was mixed. I mean, it wasn't really, should it have cut those rate cut odds down to where they are right now, 6.7%. Yesterday we were at 6.2. So the market's largely discounting a rate cut in July, but I'm wondering if these inflation numbers come in, we keep on seeing these low inflation numbers. Is the Fed going to be looking at a September cut? The market seems to think that they're coming no matter what. They just don't care if they come a little sooner or a little later. And the tariff stuff is kind of being washed away after months and months of, these back and forth headlines. But now we are seeing some deals are getting done. There's appetite from countries, negotiations are going on. So the market has kind of put this on the shelf, the tariffs, and now we're back to more hard economic data and kind of, melting up while we wait. Vols come in. it leaves me in a position of keeping capital on the sideline and kind of waiting for volatility to expand. And yet now week after week, we're kind of not getting that happening.
We're not. And if you put this in conjunction with some of the labor market data that we've seen, jobless claims haven't spiked yet, but that jobs report from last week on Thursday wasn't fantastic. Yeah, we beat on the headline, and we do see the unemployment rate fall. And so you may say, then what are you actually nitpicking here? I'm going to take a page out of Ilya's book. You also incorporate the 2-month revisions, which 90,000 jobs lost. So relative to the expectation, right, plus 30K there, minus 90,000 elsewhere. Net, it's not fantastic looking. Why did the unemployment rate fall? Because labor force participation dropped. That's also not a very good reason. So there were some things that could be, given there. It was a hollow report. The GDP trackers, which are being updated, in fact, we got an Atlanta Fed GDP Now tracker update today if we're going to persist with these Fed branches. It's sitting at 2.6% for the second quarter, which granted, we are just about, in that realm of 3 weeks out from the report. So why would we be not taking this seriously at this point in time? The New York Fed, likewise, that's a little bit lower at 1.56. So if you want to split the baby, you're looking at a 2% growth rate for Q2. That's not terrible. It's also not going to inspire the Fed to move forth aggressively with cutting. So today's FOMC meeting minutes, right? I think that's what this all rounds to. Are we expecting the Fed to tell us anything that we don't? No. And I don't think the answer is anything other than no, Thomas. They've been pretty clear about what they want to do, and maybe this snuffs out the final 6% or so of those Fed rate cut odds for July. But it's not like this is a market that's heavily invested in a July cut right now. And seeing language that doesn't bring that forth those ideas, well, I don't think anyone's going to be bothered by it later today.
Yeah, I'm not expecting much out of the minutes. The minutes is like your chance to kind of look under the hood into their thinking. And, I think Powell's been pretty clear. The one thing I'm wondering, they keep on saying inflation or tariffs do result in a one-time bump for prices, but they haven't said much of when exactly they would expect that bump to actually translate into the real economy. So how long do you wait for that bump to happen? And at what point do you say, it hasn't come in a material fashion to where it's really going to push back our rate hikes?
So yesterday, I think that's really important to recognize here. We had the tariffs for copper come into play right when we started the show. And quickly, while Jamal and I were discussing it, I started looking up in the background, is there any research that's out there publicly available regarding the impact of copper tariffs on inflation? And sure enough, there had been a study put together last year in December that spoke to this very issue. And what they found was that the increase in inflation, 0.02% to 0.05%, at its peak 24 months later. The copper tariffs are a scary headline, 50% tariffs. We consume more than we produce. But in terms of actually changing the inflation outlook in a material fashion that could impact the timing of the Fed's cutting cycle, that's a bridge that's too tough for me to sell, Thomas. So, you don't really see anything here today with the market. The market's not too upset about the tariffs. It's a market that's off the highs, 22,990 or so here in the NASDAQ, but it's the volatility collapse that defines this summer market, as it were. We could go to VXN because we are looking at the NASDAQ here. Although, let's just go over to the VIX futures because this is a VIX future show, or rather a future show. This is a new cycle low for volatility post-Liberation Day, Thomas. Does that inform you about how the market is treating this latest round of Trump tariff letters that he's been sending out over the past few sessions? Are we really worried about the August 1st deadline?
I don't think so. I mean, that's what the market's telling us, right? That we're not really worried about this anymore. And it's kind of a function of human psychology as well as it is just, the on the ground reality of it. The more you see this a lot in things like geopolitical risk premium for things like crude oil prices. The longer something goes on, the more ingrained it becomes in the narrative, the less it's going to spook the market. The first few tariff headlines are impactful. You get to the 30th, 40th headline on tariffs, it starts to become more background noise. It starts to get discounted more by the market. So perhaps that's, at least part of what we're seeing. But another thing is, like I said, we're also seeing that there is appetite for deals. There's negotiations now going on. The 90 deals in 90 days or whatever it was, I think everyone knew that was a little too optimistic to be true. You just can't negotiate that fast with that many countries.
No.
So yeah, I think the VIX is telling us that these trade headlines, the VIX isn't reacting to them anymore. So, it's definitely, the market is treating tariffs as just a nuisance, if anything.
A nuisance. Do you take the view that it's complacency? And if so, do you structure a trade around reality biting us in the ass in August?
I mean, if it is complacency, you have to ask, at what point does the market, actually say they were wrong in discounting these fears? Is it when we see inflation actually start to rise, if it ever will, from these tariffs? That might be the point to where the market steps back and, starts accounting for trade more. But right now it seems like, we are focused on when the Fed's going to be able to cut. You have to account for the bond market when you're looking at this and saying, is the bond market allowing the Fed enough room to maneuver policy? And if so, how does the White House and other policymakers account for that? What do they do to get, yields back to where they were?
Well, it's a yield-sensitive kind of day here, and we did have a 10-year auction at the top of the hour, which came out pretty well. It did stop through, which is a nice piece of relief after yesterday's 3-year note auction, which was not great. In any event, when we take a look at what's happening today, the home builders are leading this market higher, and so you do have a Russell 2000 here. That's near the top of the heap. Ultimately, just looking at this on a 4-hour time frame, whatever little pullback we had here, we are pretty much attempting to break that series of lower highs and lower lows during whatever small corrective period of trading that's transpired here at the start of the week, right? For the NASDAQ S&P, we basically closed last week banging up on all-time highs. We gap open lower with the news over the weekend about the tariffs. We then, basically immediately find support. And the structure here, as has been the case going back since late April, uptrend above the 5, above the 21, that structure is very much intact right now with volatility persisting, volume persisting at low levels. And that's the summer melt-up playbook right now. I'm personally thinking that this thing runs for the next few weeks, maybe through the end of next week, perhaps. The second half of July seasonally isn't fantastic. Looking at it over the past decade and really going back to 1950, you start to run into some bumps before things get uglier in August and September. And if we do have this tariff deadline coupled with the China deadline, coupled with no Fed meeting, there's that part of my brain that still scratches the whole, when it's sunny out, that's the best time to get insurance, right? You don't wait for it to start raining or until the volcano explodes to buy the volcano insurance. So, yeah, short term, I think we press up. It looks like the market's tilting in that direction. NVIDIA passed $4 trillion in market cap today, which is obviously a nice bell to ring and a good headline in and of itself. Sector rotation is pretty solid. 17 of the 25 ETFs we track here are in the green. There's not really much to complain about right now, Thomas. Just patience. Got to sit on your hands a bit right now.
Yeah, I think so.
Do you have a preferred, if equity market volatility is this low, do you find yourself looking at the sectors, at individual stocks a little bit more because the indexes aren't offering much by way of that typical tasty methodology?
I think so. Over the past couple of months, I've done a couple long SMH trades that have worked out well. I've been waiting for a bit of a pullback just to like the 9-day EMA for getting long again. I think it's getting a little overextended, but again, I think I agree with you. These are going to drift higher, at least for the next couple weeks, barring that we don't get a scary inflation report next week. But there's good momentum, even though it's on low volume, until we get a reason. Like I'm not going to short equities just because I think they've gone too far, too fast, whatever. I don't think that's a good reason just to get short. So right now I'm going to be waiting for just modest pullbacks to buy these things again on the long side.
When I talk about doing things in like the typical tasty way, it'd be 45 in, 21 out, thinking about selling like a short put spread if I wanted to get bullish exposure right now. How would you size it up? The most robust way to do it would be to treat the swing lows that you have in late June, 21,600 or so, 650. That's where you begin to structure your trade around. But the problem is when you go out there right now around 51 days, this leaves a little bit to be lacking. You want some more here. 82% pop, great, but do you really want to lay out 7 to make 1?
Yeah, that's the problem with low vol, you know. It's just
right, and even going up the chain to like 22,000 or even below the 1 month moving average. So that would be basically 22,000 to 22,250 here. It's actually a little bit more appealing in that 60 to 70% probability of profit range. But then you look to the risk to reward, and it's not fantastic. It's almost 4 to 1, and the buying power twice as much as profit potential. And oh yeah, if we're thinking about scaling around, you know, an account size like 25K for a retail trader, do you really want to wrap up a little bit more than 8% of your entire account's equity in one single position where the max loss is maybe in the neighborhood of 16 or 17% of your total portfolio? Triple Q maybe, but NASDAQ futures here, like just the risk to reward right now. Yeah, they got to be long the market at face value, at the money calls, maybe a little bit out of the money if you're going to chase. But selling puts here is a difficult, I think, lopsided endeavor that makes it, for me, not my forte.
Yeah, I agree. And, you know, the problem with finding good trades on these amid low volatility is like you said, the risk of losing a lot more than you stand to gain. So right now, I mean, my account, I'm using 10% of my buying power. So I'm, you know, there's some traders where the thought is you always want to have trades on. You know, I think it's good to take a step back during these times, and you could get a little lighter and wait to deploy your capital until this volatility comes back. It's not exciting to do, of course, but and then you see things like slowly melt up, and you think, you know, you could have made that money, but you were at much greater risk, you know, if the market did churn. So right now I'm definitely waiting for the modest pullbacks and get that little bit of long exposure. But the difficult thing, like you said, is trying to find, you know, structuring it in a way that really is good on that risk to reward profile.
Thinking about this market running up over the next week or two and 21 DTE, right? Getting in there is not fantastic. But if we wanted to just try to get some bullish exposure, immediate upside, you know, you can pretty much go. Jamal talks about this a little bit, like an in the money call spread. Again, the buying power here is just the big problem right now in some of these futures markets for the average retail account. So structuring a trade, right, and the risk management needs to be taken into consideration. It may be more prudent to do like an MES or an MNQ, or if you want to really do, you know, SPY or triple Qs, for example, right? Maybe futures aren't the best product, which I don't know if we're allowed to say here, but you got to find the most effective way of articulating your point of view, and you have to keep these margins into account, which is why I know a lot of traders yesterday, they couldn't trade copper. There just wasn't a market in there. No one was providing liquidity, so they were moving over to like FDX. Okay, that makes sense. Or it should be FCX. I mean, that makes a lot of sense. You're going to find the corollaries, the you know, not perfect corollaries, but something close enough to it where you can get that related exposure. Do you have anything else to say here about the broader market, though? You mentioned SMH before. You want to touch on that real quick before we step off stocks?
Yeah, I mean, it's just a leader when sentiment, even vols are low, but sentiment is, unchallenged by these headlines. I think you're best to put your chips in, what has been working and keep doing that.
Stay with the winners. Let your winners run. That's the rule. And we know that, psychologically, that's really difficult for people, right? The whole concept in cognitive biases, when you're thinking about behavioral analysis from a trading perspective, we're not immune from loss aversion. And when you look at the field of behavioral analysis as it pertains to trading, people are basically willing to accept losers twice the size of their winners for whatever reason, right? I need to make more than double I lose to get that same level of gratification. So if I make $20, I feel it's canceled out by losing 10 in terms of my emotional state, which is crazy. So, you have this, people have this tendency where they see a little bit of money on the table and they're like, okay, I just got to take profit. Like, no, if the trade's working, the system's there, if you can check the boxes for why you entered the trade and they're still valid, it may be a dull market. Things may not be moving. There may not be a ton of volatility, but you got to stay mechanical and operate within the system that gets you where you're going.
Yeah, go to the casino and you'll see that in action almost everywhere.
Bonds have been able to break their fever here, Thomas. We did have a 10-year auction come down the pipeline at the top of the hour, and it wasn't too shabby. The high yield was 4.362% versus the yield ahead of time, which was 4.365. So we stopped through by 0.3 basis points. That's a little bit different than yesterday. Likewise, the bid to cover ratio up at 2.61, which is above the 6-month auction average, and that comes in 2.52. So demand, you want to call it the longer end of the belly or the shorter end of the long end. I don't really care. Tens, I've seen people describe it as both. That's a nice piece of information that the bond market needed, particularly in the wake of the one big beautiful bill. This all started, the meltdown in bonds and notes started last week once it became clear that that legislation, which is going to pump the deficits and the debts, was going to pass. And then you sprinkle in the tariff headlines, Thomas, where we deprive our trading partners of the US dollars that they would use to buy our treasuries. Doesn't look too hot all of a sudden. But, with these treasury auctions today and some of the information that Scott Bessent has provided, the Treasury Secretary, like Yellen before him and so many other countries around the world right now, they're going to lean a little bit more on bills to finance the debt moving forward. Issuance at the long end of the curve might be a little bit lighter than markets feared otherwise, which for the bond market, less supply, okay, that should push up prices, bond prices and yields. Inversely correlated, so lower yields could be the result. The Treasury Secretary could be trying to flatten the curve, if you will, a little bit. Push up short end rates by adding issuance, dropping long end rates by removing issuance. It's something that breaks the fever today, though, Thomas, right? This downtrend was pretty aggressive for the past few sessions. We now see a little bit of a bounce here at the 50-day moving average here in tens, getting us back to our 1 week and our 1 month. Likewise for ZB. A nice little bounce here, carrying us back through the 50 and above 113 and 29 ticks, which we're basically sitting there right now. That could give you a close back above the 1 month. And that gives you a very interesting Morningstar candlestick cluster type of setup right here at the long end, where maybe the market is reassessing, and so should we, the prospects of a potential turn. And we've been looking for a turn. No, don't catch a falling knife. The chips may be there to now try to take another stab at this on the long delta side, even if volatility is exceedingly low.
Yeah, I mean, I've been long ZN and ZB since last week. So today is kind of almost halved my losses on those trades. I have 44 days on both of those contracts, so I'm going to stay in them given the results of the 10-year, hoping for a good 30-year tomorrow and, can keep this momentum going. we'd have to clear those recent highs from earlier this month to really, cement this prior trend coming back into play.
We need a little bit more. The volatility is exceptionally low, which, that is the case in equities too. If we were looking at a 5.5 IVR in ZB or something around the neighborhood of, negative 1.1 in ZN, these things may not get touched whatsoever. But the opportunity in the low volatility is to take some higher convexity positions, right? It's cheap to maybe get something on that could work if an alternative scenario other than the current path is followed. I think that for the bond market, if we consider the fact that inflation is slowing down and there's a change in bill issuance, there are legitimate signs that the economy is slowing. Both hard and soft data have been falling off. And directionally, the GDP trackers, they're no longer at 4%, 4.5% like they were earlier this quarter. They have been slowing, even if they're still in positive territory. Maybe that's enough for the long end, right? Maybe that's enough to keep us pointed higher, and a recalcitrant Fed that doesn't cut in July, and therefore we're not really thinking about any potential action until September. That's a lot of time for a lot of bad data to accumulate. We also know that the market's still short treasuries, right? So maybe they'll play here is to get a little upside exposure. That's what I'm doing here. So like for you, Thomas, the last week hasn't been exactly comfortable. But all the more reason, potential bottoming at the 50-day moving average and back to the 1 month seems like a decent place to take a stab.
Yeah, and the rate cut odds for September, it's still a majority. It's at 64% for a September cut. That's down from 71%, a week ago. But the July rate cut, of course, it's sooner, so it's more sensitive to what's happening. But July has been taken off. September, yes, the rate odd cuts have come down, but they're still, still 64%. That's pretty high.
It's still pretty high. Thinking about structuring a trade in this market, right? If we wanted to go all bearish on this thing here, right? $273 of buying power to make $93 against a potential loss of 906. That's not exactly an appealing risk to reward, but thinking about just moving up to the 112, 113 long call spread, sure, lower probability of profit. Max loss is much smaller, buying power constrained, and 3-1, basically to the upside. Asking for a move back towards 112 in ZN is asking for a move back to where we started the month last week. It was a brutal few days, but there is a possibility where asking for a point to the upside in notes just brings you to the top side of a range we've traded in within 8 days ago, Mr. Westwater. So we have to take some smart risks right now. The positions I've had on previously about the short iron condors, we're sitting right at the 50% mark of this year-long trading range, basically 111.5, just a hair underneath there. It's working. Not going to take it off. But upside exposure seems like it's something we may want to have in our pocket.
Well, that's where I am, even if a little underwater. So I'm going to stick in there. Like I said, the inflation data next week, it's going to be kind of important to these bond trades along with the 30-year.
Yeah, so we do have a 30-year auction tomorrow, and that's probably the most important event for the rest of the week, including these FOMC minutes that are due at the top of the hour, because the market is very much, as you noted, like 6% chance of a Fed rate cut in July. The market is nowhere in the place where it would feel disappointed if the Fed came out today in these minutes and declared that no cut was coming in July. Wouldn't bother many people. We know it. We know it's happening. So it's the bond auction. How are traders responding to the fact that we're not getting cuts and we have this big, beautiful bill as legislation coming down the pipeline? If the market gives it a clean pass with these auctions, why wouldn't stocks keep climbing?
Yeah, and I mean, you think a week ago the July cuts were at 20%. Now they're at 6%, and yet the market is higher. So obviously the market doesn't need that July rate cut, but We're probably still banking on, them coming as soon as September. So if we saw, the September rate cut odds degrade to a significant degree, and then the market comes down, then that's telling you that, the rate cut odds are then starting to become more impactful as we move towards September. Bless you.
Excuse me. Thank you. When we think about what's happening with the metals market around all this, we've seen the last few days where higher yields and a bit of a firmer US dollar are weighing on gold and silver. I do want to talk about copper first, though, because that was the big attention grabber yesterday. Trump comes out, announces 50% tariffs on copper. As we've been discussing since late March, we produce about 1.1 million tons. We consume about 1.9 million tons, 800,000 ton deficit here in our consumption. So if you were to put tariffs on something that we are in a deficit of, it's going to bottleneck supply even further. Demand's not changing. It's going to push up price. There are maybe arbitrage opportunities for not people here on this platform. If I could explain, the price of copper in London is about equivalent of 460 right now. So if you can get copper abroad and sell it in New York, you're feeling pretty good at this moment in time. So this is a market that's a bit of a mess after all of this. There's a big spread out in the world right now. The issue for traders, and I saw people tweet this at me yesterday, was they were long copper, Thomas. And you know what the issue was? They couldn't get out. They were trying to realize their profits on their position.
Yeah.
And you look at some of the volume and open interest here, there's not a lot of activity going on right now. So trading copper, depending upon, if you wanted to do something like the short 565, 575 call spread here, the margins are improving, but you really have to be careful about what you're executing on, because if you're not finding a lot of open interest in the place where you've had a trade filled, you're kind of Hotel California-ing yourself into a position where, you've gotten in, but no one wants to take it off your hands, so you can't leave. And it's just a paper trade at that point in time. So we frequently discuss how maybe some of these markets, it's better to go over to an SLV instead of an SI. And if you're going to be trading around copper right now, it is a legitimate reason to step back and say, is it best bet HG? Or is the best bet for me to go to something that's something with a little bit of exposure, like an FCX, a Freeport McMoran, right? I don't want to say this isn't the right product, but people should double check before they think about engaging in this right now, because yesterday was a bit of a mess, and that was just a worldwide problem because of the tariffs.
Yeah, and I mean, copper is not always the easiest product to get filled in, even when, before this big move up, I had to tried to get a fill for a trade earlier this week, couldn't get it. And as you mentioned, earlier this year, traders were anticipating these tariffs. So a lot of copper moved out of London, out of Shanghai, and moved into COMEX in the US. So, they were front running it. And now the London's metal exchange price, it's like 3,000 a ton premium for London versus US pricing. So the arbitrage trade you speak of, that could definitely be a thing where maybe traders are shorting London, long US, or vice versa, trying to close as that gap between the US and LME price closes, which it eventually will have to come back into some kind of balance. The spread usually doesn't stay this high of a premium in the US for too long if you look throughout history.
So copper's at a 60.7 IVR, right? Round number strikes seem to be working a little bit better there than, the random ones on the pennies, just worth considering. Gold volatility continues to fall, though, which I suppose from a certain point of view, the fact that we were looking at IVRs in the 90s here on April 16th when we were trading at $3,319 an ounce in gold, the same exact level we're trading at today. We've seen volatility get crushed. Gold hasn't gone anywhere. Now, there's two takeaways here. First off, has the relationship between gold volatility and gold prices persisted? I'm going to chalk this up to a yes. When gold volatility starts to fall, it's been a precursor, even a contemporaneous indicator of gold prices struggling to the upside. Gold isn't like other assets. People panic buy gold, right? You don't panic buy stocks. You panic buy safe havens. And so as gold volatility has come back in, it's sucked the wind out of its sails. But there's clearly something more to than people panic buying, Thomas, because if it was just panic buying, the collapse in gold volatility would have ushered in a much steeper pullback. So I did put on new long deltas earlier this week because volatility is in. I'm not a fan of the fact that we are now struggling once more below our 1 month, below our 50-day, below our 1 week, and not in that order per se. If we lose 3,200, we have an issue ahead of ourselves. But right now, gold has proven a lot steadier, stable than one would have surmised, given how far vol has come in over the past, net 3 months.
Yeah, it's held up better than expected, and this is why you're talking about the relationship with vol and prices for gold. If you're trying to get long, if you're playing spreads, you're a lot better off buying a call spread than you are selling a put spread to play that volatility relationship in gold. So, I was thinking about getting long gold too. I'm probably going to wait a little bit because I'm long silver. I'm just going to stay more biased on that for the metals. But when I do get long gold, I'm going to be buying a call spread versus selling a put spread.
Silver feels like it's in the middle of a major coiling effort. I know we have this potential flagging effort up here, sitting around the $36 an ounce level, where you had the October 24 and then March 25 highs. Ultimately breached that resistance in June, and we've been consolidating 36 to 38 ever since then. But the last few days, Thomas, those have been inside days. Tuesday produced an inside day relative to Monday. And then today, well, here we are. Volatility's coming in, and we haven't cleared out yesterday's highs or lows. That to me is like a spring that is coiling. Something will happen sometime soon. You can see here how it's almost like a little bit of a triangle that's forming, which, while having a bias to the upside, considering the preceding move is from bottom left to top right on your screen, symmetrical triangles are symmetrical for a reason, right? They have a bias towards neutrality until a direction is given. This could go either way, is my point. We could be looking at a break of 36.25 or so to kick us back down to the lower part of the range that we've been in. It's equally feasible that the short-term move pushes us back towards 37.25 or 37.5. You don't really have a breakout condition until you clear 37.75, though. So I think this is, again, patience. Low volume, low volatility. Silver, like gold, has survived, and it actually has thrived a little bit here in recent weeks relative to its counterpart. I like the upside exposure, and at a 14-point IVR, find me a time over the past several months where it was this cheap to get long, and it looked like in hindsight it was a good time to do so. If only spot checking here, for example, we saw volatility in the teens back at the end of May, back in the middle of May. All of these preceded breakouts to the upside.
Yeah, and gold-silver ratio is still trading right around 91, about there. Early June, we made that big move down from 100 to 90, popped up a little bit. Now we're starting to tread into the lows on the gold-silver ratio since April-ish, late March. So, it's, if you're playing the ratio to break down into more historic levels, you still have some time to go, or some way to go to the downside on this gold-silver ratio.
There is still a bit of time here, and you could see on just looking at a 1-to-1, this would probably be changed to 1-to-2 in this outcome. But let's just point out the fact that we have seen a bit of a pullback here and back to a familiar place. Right, gold-silver ratio, no matter how you slice it, it's an area where the market's been in previously, right around these levels. I'm not compelled by a trade in there, although silver, like we saw with platinum, Thomas. What happened with platinum in the second quarter, right? Had a huge boom April onwards. And in part it's because people were just like, gold's really expensive here. What's another hard asset that hasn't rallied? Oh yeah, I could buy this that's relatively cheap.
Yeah, I don't look at platinum too much, but during that big move, I was hard to get exposure to it, but definitely had that. A really
not here on the
move.
platform. Yeah, we don't have platinum futures here, but we'll maybe one day in some world. We go over to our energy sector. The energy sector here, roiled by a report from the EIA yesterday, and we talk about the energy sector. It's natural gas in particular. Who cut their exposure today? This guy. EIA short-term outlook shows that by the end of the injection season in October, natural gas inventories are projected to be 5% higher than they were just a month ago in the June report. So we are oversupplied with gas in this country. We're basically swimming in it, which, again, if you're slowing down trade and you're erecting trade barriers and making it more difficult for people to buy the things that we export, natural gas, then you oversupply the domestic market. And so natural gas inventories are building, Thomas. They're building faster than even the most aggressive forecasts have suggested they would. So we do have a repricing here. This could be a nasty little bit of an extension to the downside. If we were going to take it from the exact high that we have in March, you could see a story where natty gas is gearing up for a much, 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 much more significant fall off. Another 80 cents to go, Mr. Westwater. Granted, technicals and natural gas don't mean much of anything given how it behaves. But you can start to paint the contours of this being a market that's really in a lot of trouble. And if you're operating long delta, this is a good day for soul searching. And I found out that there was nothing inside, so I got rid of the positions.
Yeah, I'm still long natty gas. So this move has gone on definitely longer than I expected, of course. We have no support from the weather models right now. And, you know, nat gas production has dropped a little bit over the past few weeks, but of course, cooler weather, less demand on production. So you need the weather models to churn to at least give this some support. But the market is pretty short here on nat gas. So, you know, I'm trying to see a way of when the shorts are going to get out. When are they going to be satisfied with the losses? And is it going to be when those weather models shift? If they ever do, that probably would, you know, have to be it.
It's been a rough trade. We had a nice little range carved out here for 2+ months. It just breaks in the last few sessions here in July. Given the overall uptrend break that we've seen now, is a call for a move back down to the low that we had in November, sub $3 out of the question. You know, it's 18 cents from here. We're talking 6%. We've done 4.73 today.
Be a one-day move.
Doesn't seem like it's could easily be a one-day move to take out the lows from the end of last year. So that's why I'm just, look, the momentum profile, if we want to treat it as such, we're still below the 5. We were talking about this yesterday. You're still below the 5. You're declining in stochastic, staying oversold. MACD's still trending lower. This is not, natural gas is the falling knife that you never try to catch. And it's in falling knife mode right now. If you want to be bearish and sell call spreads up near the 1 month, that's a completely different endeavor, Thomas. Go out here 48 days. Oh, this needs to get, you need to get off my book too. So let's just hold on a second here. There was 2 positions. Goodbye. See you later. Please fill. Let's go over to the short call spread side. We go to say like 365, 375 right now. 77% probability of profit. You could probably find something to work where you're getting a 2-to-1, 3-to-1 up in that zone, Mr. Westwater. You know, maybe short the 3.4, 3.5 here. It's not a bad trade. If you want to be short, it's really not a bad trade right now. You could see the buying power is basically nothing, plus a few cups of coffee at Starbucks. Pretty decent risk to reward. Bearish is a different picture than being bullish right now, in my view, given what we have going on in the background.
Yeah, that's not a bad trade at all right here.
All right, so let's pop on over to crude oil, which is up by 0.45% today. It's another day of modest gains. Is this the canary in the coal mine that ultimately everything's fine? We got through the Iran-Israel tensions. We have volatility coming off. If growth was really all that terrible, wouldn't oil be back in the tank like it was in early April?
Yeah, I mean, so I had a put spread on this. I bought it this morning. I bought it back. It was at like 60% of max profit, so I took it off here. I don't know if I'd get long right now. I think 70 is going to give us some resistance. We have that aligning from the early April highs. And, the move earlier this week, we had the big move up, and now it's kind of, the strength is moderating a bit. So perhaps some rebalancing here in price. Or a real growth risk would have to come in to scare this market. You have OPEC saying they're going to now supply 548,000 barrels per day more in August. They've done 411 for several months for those production cuts, taking them out. At the same time, the hard data has showed that, and I think part of this was in the STO yesterday from the EIA, they have not produced as much as they've said they are going to bring back online. And most of that is coming from Saudi Arabia, which is also increasing its domestic demand. So they're kind of soaking up, they're mopping up some of that, additional supply that's been coming onto the market. Earlier this week, we had the incident in the Red Sea that kind of helped support crude oil a little bit with the risk premium from a geopolitical standpoint. The EIA numbers, I believe it was a build this morning. So it's below 70. I mean, I think we're going to stay there for a bit, but we would need something. We would need a headline or something to really drive us back to those levels we were trading at in May.
Yeah, I mean, gasoline stocks did fall more than expected, 2.65 million barrels versus 1.7 anticipated. So, okay, there's demand for drivers during peak summer driving season. But you look at the oil imports, it was last week, a week ago, we were talking. Why did oil prices jump up? Because crude oil imports exploded to the upside, 2.94 million barrels. This next week, it's down 1.35 million. And the Cushing crude oil stocks change last week, drawdown of 1.49 million, now higher by 0.46 million. Thomas, I can squint there and say oil imports are down and Cushing stocks are going up. There's a little bit of weaker demand in that narrative there. Whereas the previous week, it was all like, oh, Cushing stocks are down and oil imports are up. Like, there's a lot more demand than we anticipated. So I don't know if the data is fantastic today. Either way, short iron conder's still working. Why get off the ride? There's no reason to get off the ride. We're just letting this thing burn out. That's the whole plan.
Yeah, I think that's a good call. I mean, you've cracked spreads. They're still elevated. The prompt spread is still pretty strong. I think the inventory reports over the next couple of weeks are going to be pretty impactful.
We take one last stop into the world of currency, where the dollar is decidedly mixed in today's session. We'll first head on over to $DXY on the platform. We could see here today's candlestick is so tiny. We're going to zoom in and have to expand this out. We opened up at 97.55. It's currently in at 97.57. So barely anything at all. But aside from the fact that today's an inside day, we didn't clear out yesterday's high or low. What do you notice? The 1 month moving average is 97.75 and the high for today is 97.75. Okay. When was the last time that we ran into our 1 month? It was here on June 23rd, which produced this ugly key reversal. Previous attempts to climb through the 1 month thus far since the middle of May have been significantly rejected. We've basically been riding the rails of the 1 month lower since the middle of February. A few touches outside of it ultimately run into the 50-day, and then the 50-day drops us back into new lows. You could start to be a little bit more constructive here, it feels like. We know the positioning's out of whack. We know that the Z-scores for the euro and the yen, which collectively are 70% of the DXY weighting, they're in elevated territory by historical standards. A 1.34 for the euro over the past 2 decades, neighborhood of 2.66 for the Japanese yen. If the dollar has a reason to rally, these things could break. But today is just chop and slop. And we did see a new low for the yen in the 6J contract before bouncing a bit. Again, why would we get off this train right now, Thomas? We're playing for positioning, and you have to be patient. And 1 day does not make a trend. So duration is our friend right now if we're taking dollar is way oversold type of views. I don't know if today changes the course.
Yeah, I'm getting long the pound again here. So that's how I'm going to express getting short the dollar again. I think staying with the trend on the price action for DXY makes sense here. So I'm going to take a stab there with a long pound trade.
Yeah, I mean, we can see here that pound is still riding the rails higher. It's been this 21 50-day gap that's been catching us in recent weeks and months, and we don't spend a significant amount of time in that zone before catching ourselves and climbing anew. The pound's been one of the leaders this year, surprisingly, right? Some of these other currencies, they're holding up right now. I just find the yen to be the most interesting trade because their long end is still blowing out. Apparently, they're running out of rice stocks in Japan, which seems like it'd be problematic for that economy. 6.9 IVR. It's pretty cheap to trade. The euro has a little bit more juice at a 34.6 IVR. So if I was thinking about playing this in a typical tasty way and wanted to get long dollar exposure, short call spread in the euro is going to give you a better rub than a short call spread in 6J at this juncture. But Thomas, the dollar here, I think we need to take stock and account of the fact that this has been the worst start for the year for the US dollar in history since free-floating exchange rates began. All right, that in and of itself is a significant story. The fact that the dollar is not responding so negatively this week as these tariff letters go out, it does give me the impression that maybe it's all priced in. Because we're not getting that type of, allergic reaction we had at the start of April where tariffs are announced, whoop, dollar gets crushed. In fact, we started this week where tariffs are announced and the euro closed lower on Monday. So that dynamic, when you have bad US dollar news and the dollar's not responding so negatively, what does that inform you about? It's a crowded trade. Too many people are already in that position. There's no one else to bring on board. Not so different than gold. World War III headlines abound, Thomas. What did gold do? Couldn't climb because it's so crowded already. I think the structure of this trade is important and understanding that this is a very crowded market right now for traders. But hey, you know what? You can trade spot FX on the platform through tastyFX. I really like the currency futures in some cases because of the leverage and the defined risk aspect. I have a horror story for what happened to me on September 6, 2011 with the dollar Swiss franc. So scars run deep, Mr. Westwater. Before we hop off a little bit early here, because it is Wednesday, it is time for Truth and Skepticism with Radigan and Sosnoff. Tomorrow's calendar is exceedingly quiet. 3 Fed speeches, initial jobless claims, that's it. Okay, that's it. You and I will be back later, or at least I'll be back later, Thomas, overtime today. Mike Butler joining us, myself and Ilya. But before then, there's lots of tasty live programming coming at you. We're going to take a quick break. After this, though, Sosnoff, Radigan, Truth or Skepticism. See you on the other side, folks.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Hello, everybody. We are back. I'm Tom Sosnoff. This is Truth or Skepticism. I'm here with Dylan Radigan. Mr. Radigan, how art thou?
Very good. Nice to be seeing you. Happy summer. It's a July Wednesday, and a beautiful one at that.
It is a beautiful July Wednesday. A little hot here in Chicago. How is it in New York?
New York's, pretty hot, pretty hot. I mean, it seems like I was in Milan, I was in Paris, I saw you. Pretty much everywhere you go these days, it's pretty darn hot. It's hot outside, Tom. I don't know what to tell you.
Well,
that's why you got to hydrate. You got to drink the water. It's the only way.
Yeah. I'm not a water drinker.
Think about it.
That stuff will kill you. Bad stuff. Anyway, so I'm ready to go down a different path today. I have been.
It's about time.
Okay, good. So this entire year, my best performing underlying for me personally has been the bond market. Usually it's the stock market and things like that, but rarely is it the bond market. In 40 years of trading, I don't think the bond market's ever been my best performer. But in 2025, first half of the year, the bond market's been my best performer. I have only traded it in one direction, meaning the bond market's kind of near its lows, but all I've done all year is buy it. So when bonds are near their lows, that means interest rates are a little high, and I've been betting that they're going to go lower. They have not gone lower, but the bonds really haven't gone anywhere. And as a premium seller, there's been enough movement that every time the bonds rally a little bit, we're able to collect some premium and then move on to the next trade. It's worked all year long. So I'm not complaining about the bonds. I want to preface this.
All right.
No complaints
here. This is not
no
a complaint.
complaints. Okay. I'm just a trader. No complaints. It's worked all year long.
A guy just sitting by his computer, not complaining.
That's exactly right. So there has been a lot of talk out of Washington about the deficit.
This is people are saying. This is talk from people.
I watch a lot of social media, TikTok and Instagram, things like that. And there's a lot of talk about, there was a lot of talk about the big ugly bill, and there's a lot of talk about, different, the whole legislative process of pushing that thing through. And then there was a lot of talk about the, what the impact it would have on the deficit and all this kind of stuff. And the stock market shrugged it off. Didn't care. We're 6,300. We're within a tick of record highs. Stock market couldn't care less. The flip side is the U.S. dollar basically crashed. So
tell me about it. Tell me a story. I gotta tell you.
Yes. Okay.
Okay.
You know that better than anybody else.
I got problems.
An American living overseas has felt the pinch. You've lost 15% of your buying power.
Let's just say steak night has been canceled.
It's pasta for you. It's pasta fagioli for you.
I'm back on macaroni. I'm sorry to say.
That's right.
Thank you, Mr. President.
So the U.S. dollar's crashed, and the bond market, although there's these, probably the most talked about cuts for an entire year now, the talked about cuts that have never come. There's been this incredible, nonstop discussion about 2 rate cuts this year, 4 rate cuts next year, 6 rate cuts, whatever, 3 this year, 5 next year. It doesn't matter. It's all just garbage.
Pick your poison.
Pick your poison. Pick your story. But yet the bond market keeps going down. It's up a full point today. It was down, almost a full point 2 days ago. It's up a full point today. Like we've been all year, we're long it, so it's a good day in that sense. But the bond market's still on its butt. The long bond's 114. The 10-year is 111. They're nowhere fast, as we would say. Okay. And so there's a lot of theories out there, a lot of stories. One story is, and this would be the Jay Powell kind of, I'm just going to summarize it, which is essentially tariffs, tariff uncertainty, inflation still on the table, can't lower rates yet. Okay, that's the Jay Powell version. There is the trader version, which is, they've crushed the dollar so much that all the foreign buyers, you'd have to be crazy to buy U.S. bonds right here, because not only are you taking risk, you're taking dollar risk. You have principal risk on the bonds,
And
but then
you
you
got
have currency risk.
You're getting the double
Right.
jammed. It's a double.
You're getting the
jammer.
double. You're getting the double jammer.
Thanks
And the
for
currency,
nothing.
the currency risk. The currency risk is legit. The currency risk has been 15% when the bonds pay 4%. It's a death trade. Absolute freaking.
That's called losing money where I come from.
Death trade. And we're talking about, whatever size market you want to argue it is. 35 trillion, 45 trillion, 50 trillion. It's a massive market.
Don't they call it the biggest market on earth?
Well, it depends if you
is it the U.S. bond and currency market the biggest capital pool in the world?
It depends who you talk to. If you throw in derivatives, I'd say no. If you exclude derivatives, I would say yes. It doesn't matter. The point is, it's 50 trillion, give or take 10 trillion, one way or the other. Okay, it's a massive market.
It's a big honking piece of market.
So I'm sitting here watching this market, saying, okay, Trump's out there saying, Jay Powell's a moron. He's not a moron. Okay, we know that. He's not a moron. He's saying he's the worst ever because he won't lower rates. And I don't know if Trump understands or not, but you can't lower rates when bond prices suggest that if anything, you got to raise them.
That's right.
So that's the challenge.
That's a math issue.
That's a math issue. And with the dollar doing what it's doing, I mean, the Fed can't just lower rates. The Fed has to respect whatever the market is actually doing. And so we're in this difficult situation. So I'm starting to think, okay, you've got stock prices at record highs. You've got dollar near, multi-year lows. You've got bond prices hovering on the low end of the range, even though they have multiple cuts coming. Mm-hmm. What's going on here? What's the outlier case? What is the all ugly outlier case? Now, you have to relate that to the person in charge. Mm-hmm. The current leader of the free world, and I put air quotes around that, but the current leader of the free world, Donald J. Trump, has a history. His history, and again, I'm going out there today, far-fetched, whatever you want to say, outlier, what is the 1%, 2%, 1/10 of 1%? Why are these bonds so heavy? What is the creepiest story I could tell? And you have to think about who's at the top of the food chain now, and what has been he look, you can say whatever you want about Trump. He's not the sharpest tool in the shed. He's not the brightest bulb. He has one MO. His MO has always been, okay, borrow as much as you can. You can see it in his bill this time as well. Borrow as much as you can. Doesn't matter how much you pay to borrow. Mm-hmm. And if it doesn't work out, just default.
Sure.
Okay. I mean, the number of times.
It's almost always default.
Yeah. Trump's first default, just to give you a little background, his first default was in May of 1984. So we're going back 40 years. Okay. That's when he opened his first casino in Atlantic City, bankrupted. April of 95, bought another casino, bankrupted. January of 88, bought a yacht, bankrupted. March of 88, bought the Plaza Hotel. These are just things. Then he bought the Taj Mahal. Then he bought an airline. These are all the things that went bankrupt. Okay. Then he missed all the interest payments on the Taj, took that bankrupt. Then there was a bunch of different things throughout time. Trump Castle, Trump Plaza, 1992, all filed for bankruptcy. Taj Mahal filed for bankruptcy in 1991. And December of 1992, the Plaza Hotel filed for bankruptcy. There's just a lot of things. And when you start to go through the whole list, and there's just a gazillion lists out there, of all the different bankruptcies. He's got an MO. He's got a story. So the question becomes then, do you think that Trump looks at the U.S. right now and looks at looks around and goes, hey, I got a game plan here. You know what? I'm not going to worry. I'm just not going to worry about the size of the deficit because I'll just, little sovereign wealth default. and we're good.
So
now I've got a lot more to say about this, but I'm throwing it out there for your
So
opinion.
I think it's, first of all, I'll say I unfortunately, what I'd like to say is this is a stupid topic. This is idiotic. I don't want to talk about this because it's so far out.
Okay.
Unfortunately, the track record of the president and the level of compliance that the president has with the legislative body. So for sure, we have to separate two things here. One, does Trump have a history of recklessly borrowing money and bankrupting things? He's maybe one of the most successful people in history at taking massive amounts of debt and running it straight into a tree. What both of those previous bankruptcies, as well as with this, we'll get to the current situation, you do have to ask yourself what the lenders are thinking every time he comes under the room to pick up another line of credit, and they re-up him. It's remarkable. But that's which brings me to the current situation, which is knowing the president's relationship with risk and leverage, which is he is indifferent to risk, will take risk at any scale, and indifferent to leverage because he looks at default as a business resolution in any situation. It's not considered a negative outcome. It's just considered one of the many outcomes that are available, and in his case, a frequent outcome. And maybe we're going to get rich together. Maybe we're going to go broke together. No matter what, we're going to do it big. We're going to do it hard. We're going to get a private airplane. We're going to eat some caviar along the way. Maybe go shopping let's get some Italian cashmere going, something nice, get some nice clothing and see what happens. And that's one thing when you're dealing with your own money or the bank's money. It is obviously an entirely different thing when you're dealing with the most powerful currency on earth and the most powerful country in the world. Which brings me really not to Donald Trump, because obviously Donald Trump will take whatever amount of risk. Here's one of, I'm just going to back up a little bit because I was on CNN last night talking about some of these things. I'm going to be on MSNBC later today. I'm going to be back on CNN again tonight. So I'm doing this sort of little New York media tour. And one of my sort of big message as a preview going into tonight's appearances, I think we are doing ourselves a disservice talking about, I think the Trump talk hurts us because the conversation I really think needs to shift to America and the Republican Party. Trump is what Trump is. I mean, you've said this a 1,000 times. Trump obviously is going to do leverage. He's obviously going to take risk. And unless some regulatory apparatus, whether it's a bank lender or the legislative body of the United States, intervenes, it's going to be a catastrophe. There's not even a question in my mind about that. And so I really think that the biggest issue right now, I think that talking about Trump all the time actually gives the Republican Party a pass that they don't deserve, because I think let's assume that there's a 0.01% chance of a sovereign wealth default in the United States as expressed by the 50% currency decline and all these other things. The fact that there is even a credible conversation to be had in a credible podcast such as Truth or Skepticism about a U.S. sovereign wealth default, as if we were Chile or Greece or whatever, the Mexican peso years ago. The fact that that's even a point of discussion is so alarming in and of itself. The fact that that's even that isn't dismissed out of hand as a stupid topic to talk about is so alarming as to, I think, really direct a huge amount of attention at the Republican legislative body's obligation to America to prevent this from happening. And I think that we need to shift our attention away from the president and to the United States of America.
I don't disagree with you.
The Republican Party. So is there a risk of a default? Yes. And so I think that the real question becomes, what has to happen to wake up the Republican Party to intervene?
I don't know the answer, but there's
how bad does this have to get? Anyway, sorry, go ahead. I'm interrupting you.
All I was going to say, Dylan, is that there's a reason in the U.S. dollar, and just, it's a negative arb. But, and I agree, this should not be about Trump, but nobody else in the Republican Party could even suggest this or pull this off. It's not on the table anywhere else. The only person that could, Trump has a legion of cult-like followers that will, if he says jump, they jump. And couldn't you see a situation where he says to China, listen, we're just not going to repay you. We're not going to make these bonds any good.
I mean, obviously I can see that. I can see him saying that, Sure. But upon saying that, I can see a repricing of the U.S. dollar in the U.S. bond market that is so catastrophic and so violent to make what look like what happened in April with the tariffs look like an unchanged day. And I can't imagine that it would ever be consummated. Like I believe it would, that I think there's probably a 50% chance it gets threatened or mentioned or bandied about. But if it's done so in a way that it has any credibility, I believe both the dollar markets and the bond markets reaction will be so violent so as to force a total intervention from the top of the corporatist wing of the Republican Party, meaning
Yeah, I'm listening. Keep going.
Meaning Jamie Dimon, meaning Lloyd Blankfein, meaning David Solomon, meaning Jeff Bezos, meaning, all of the sort of sycophantic super billionaire CEOs will jump in with whatever portion of enough of the Republican Party and all of the Democratic Party for political reasons. The Democratic Party, I don't think is, very bright, but I do think that you could probably break off a chunk of the Republican Party. The Democrats would fall in line just because for political reasons, and that would be that. I mean, it's a long way of my saying for sure I believe it could be threatened. I can't imagine it would ever be consummated.
No, but for people, the only way it's consummated is people that don't believe in globalization and they believe in an isolationist policy that everything, it's an America first thing. You don't care what happens to the dollar if it doesn't have any context with the rest of the world. And that's kind of one of the reasons that it's been talked about. And, you're also talking about, you're making very fair points. But if I had said to you, 10 years ago, is it possible for somebody to run for president and not to be able to accept the fact that they lost?
Not even a point of you wouldn't. No,
of course not.
Right.
Of course not. So what we're talking about here, it's unimaginable, unthinkable that somebody can run for president of the United States and could never admit defeat, so doesn't believe in free and fair elections, and you're worried and you're saying, well, that same person isn't capable of defaulting on bonds held by Chinese government or held by, Russia or held by the Japan or held by some other country where he doesn't care. I'm just saying it's, there are things that have happened in the last couple of years, certain denials of things like due process all the way through to election results that in the back of your head, you have to say, you know what? I might not put this past them.
I'm not going to disagree with that. Obviously, that's sort of the evidence says you're correct, but he also did leave the White House.
Yes.
So just because he didn't believe, and so I guess what I'm getting at is the distinction between the attempt not to relieve power as the president, or the attempt to default on the debt, I think is a reasonable, a reasonable chance. But I believe the actual, I think the actual default is an unreasonable chance. I think but I think the fact that this is even a point of conversation brings us back to, from a trading standpoint, should you be short the dollar from here? By the way, not to be pragmatic on this.
No, actually, I'm long the dollar here and I'm long bonds. But again, you're talking about a president that has said, A, I hate the other party. B, the chairman of the Fed is a moron and I can do a better job. Okay. And then you're wondering to yourself, is he really think he can do a better job? And is that the game plan? It's one thing to take over the Kennedy Center. It's another thing to take over the role as chairman of the Fed. I'm just saying, we got to stop ruling out things as, because we think logically and we think with a little history historically and there's certain things that have happened that we're like, hey, this can't happen in America, and it has.
But I guess do you disagree with me that there's a distinction between the rhetorical effort to threaten the default as opposed to the actual ability to consummate the default?
Well, you see, the first level of threats Like the first time he threatened to fire Jay Powell, the market did not like that and took a dive. The first time he threatened tariffs, the market took a giant dive. You know, obviously, I agree with you. Long term, it would be virtually impossible. Would ruin. It could defaulting on our bonds would be, you know,
the end of America.
Would basically be the end of America. So I'm just bringing this up as a fun discussion topic, but not as something that, you know, I don't sit there like I said, I bought bonds all morning today. I'm not sitting here trading like I think they're going to default. I'm just saying to you, I have a creepy feeling that there is a marketplace right now in, you know, both the US dollar and the bond market and different things that are happening that, you know, that are kind of being masked by the rally in the stock market. And I think it's important to have this discussion because you have a very simple-minded president who knows one way out of a debt situation where his way out is bankruptcy.
That's
it.
That is a fact.
That's it.
Yeah, leverage and bankruptcy is the operating system.
That's right.
You know, I come back to my confusion as to how and why the Republican Party is as permissive as they are with someone that they know what he is. And one of my biggest concern, not just with the Republican Party, is also the Democratic Party. And this comes from a decent amount of personal experience because I worked as a political television host for 3 years at a big cable news channel where the primary job was to be in constant dialogue in public interviews and in private meetings with members of the United States Congress, not exclusively, but a huge percentage of my time was spent in dialogue with U.S. senators or meetings with U.S. senators or meetings and dialogue with U.S. members of the House of Representatives. And one of the most, even among the more, there's some of them are actually very intelligent, very well-meaning people, doctors and businessmen and teachers and professors and whatever they are, brilliant. Some of them are very smart. I can't think of a single one who actually had any true comprehension of how the relationship between tax policy, interest rate policy, and the currency as the basic foundation of how money flows through not only the United States but the entire global economy. Like if you don't understand tax policy, currency, and interest rates, it's like not understanding the substructure of a riverbed. Like if all the money in the world flows wherever it flows, the reason it flows where it flows, whether it goes to these people or these industries or those industries or this country or that country, is entirely dictated by a combination of tax policy, interest rates, and currency. And my biggest concern about the U.S. Congress and their sort of inability to intervene relative to the president is that they actually do not understand exactly how consequential those things are and how dangerous it is to play with the default risk component of the bond market. I mean, it's one thing to talk about inflation risk or growth risk or even or any other sort of demand dynamic in the economy, and it's an entirely different. It's like if you and I, it's like the reason people don't want to do business with like Russians or some of the Southern Italians is like if you and I do business and I'm like, hey Tom, I want you to invest, $50 in my water company, and then the deal goes sideways. There may be the worst thing that could possibly happen is some form of litigation and maybe social alienation. Maybe you're like, I'm never talking to that Radigan again. He took my $50 for the water company and he went to Bora Bora. Or maybe you're like, I got to call a lawyer and sue him. But there's basically a 0% chance that you're going to kill me. Like I'm not considering murder as a business risk in the relationship. And whereas when you do business in Russia, you have to be like, well, is there a chance that someone's going to get killed here if this doesn't go well? Or if you do business in Southern Italy, you're going to be like, well, I don't know if I want to sign this piece of paper exactly because this thing gets a little squirrely. Could have and I just think that now you're basically introducing murder as because not in the literal sense, but metaphorically, sovereign default is the death of the United States as the credible house of all things risk and the fact that that is being introduced as a component of risk.
Okay, then let me ask you this. So on the one hand, you've got, you're basically pushing through your showpiece legislation, your big ugly bill, and in the process of doing that, you've got a crashing bond market and you've got a crashing U.S. dollar. And so what is the bottom line of the cornerstone, your foundational legislation going forward for the next 4 years? It's to increase the deficit significantly. Okay. Now, knowing all this stuff, the argument is, well, it'll be good for the economy. So in the long run, it'll trickle back in some form of, taxes or a better economy, and it'll pay down our debt, when we all know that that's,
which, by the way, is an argument everybody, including the Democrats, always uses, which is we can afford this leverage because we're going to grow. This is universal political bullshit.
Sure. Okay. But knowing what we know right now, then let's call it rhetoric, whatever. That was still, this is the massive piece of legislation. Now, knowing all that, okay, how does everybody get behind this universally? How is every single person in one political party get behind this, knowing, maybe they don't understand what a lower dollar means.
I believe.
I understand that's what you're saying, but
I believe I just answered your question previously, which is they don't understand. I'm not even joking. They don't understand.
So along the way, somebody has had to think of, well, how do we get rid of this debt? Do we change our mark-to-market policy on some of the assets that we hold in this country? That's one way. Do we default on certain paper to certain?
Half the things Scott Bessent and Howard Lutnick understand. Only because they spent their lives on Wall Street. There's no way that those two gentlemen could not comprehend.
I don't think you could go to Wall Street and you could find two dumber individuals than Howard Lutnick and Scott Bessent. I just believe, after listening to those two guys talk, and I'd never really heard them much before, but after listening to those two talk and testify, I don't think you can find two less qualified, dumber individuals. And also, they kowtow and suck up to Trump on everything. They don't have any backbone. So I don't think that they actually matter. The only person in this administration that has backbone and the economic sense is Jay Powell. So if you're Trump, of course you get rid of Jay Powell. He's he's the one person that A, is not afraid, and B, is too smart. And so he will speak up. When you have people like Scott Bessent and Howard Lutnick, Trump doesn't worry at all. That's easy. They're in his pocket. What he does worry about are the smart people, and the Jay Powells, the other Fed governors, things like that. That's where his challenges come from. He has no challenges internally. This is North Korea. When you think about that. So that's where we are now. The chances of it happening, zero, basically 1 gazillion % over zero, because it would cause everything from civil war to economic collapse and everything else. But when you start to think about where we are and why we're here, it gets to be just a fun discussion to think about outlier stuff, because there are certain things that have happened in the last, 4 or 5 years that should never happen in America. Period.
There's absolutely no question about it, and which is why I'll return to sort of my message to the cable news circuit this week in New York, which is enough about Trump. All attention must turn to the country, America, and its stability and security, and the pressure that needs to be applied to the Republican Party to engage on behalf of America, irrespective of who the president is or what the president does. And until the attention of those who have voice, whether it's in the podcasting and social media world or whether it's in the traditional media world, is applied to the Republican Party, not because and I said this last night on CNN, Trump is not wrong, in my opinion, to want to try to do something for the American worker, to criticize American trade policy, to incrementally want to add a 5 or 10% tariff on lots of things. I don't think that's a bad idea. But when the mechanism of implementation is a chaotic, hyperbolic, and insane structure, and then it's laid over with the history of leverage, this absurd bill, the deficit, the growth story, and all the rest of it, it would be beautiful if you could see the Republican Party come in and say, Mr. President, I like what you're doing, but here's a better way to do it, as opposed to saying, whatever you want, sir, whatever you want.
Who is going to do that? Your secretary.
Well, so let me tell you, you know who? Here, you want to roll over in your beret?
Sure.
Elon Musk is your only hope.
He's done. He's gone. Your secretary.
He's got.
I know.
He has the platform.
But he doesn't.
He agrees with us. He agrees with you and me. Right. I guarantee if Elon was on this podcast, he'd say, absolutely, I agree. Couldn't agree more.
He also only cares about Elon. So there's a difference. But
it's in Elon's interest not to have a defaulted currency and a lunatic.
Listen, Trump only embraced Elon because Elon wrote him $250 million in checks. Okay, that's it.
You're asking me. I believe that Elon has a bigger platform. Who is it going to be? Gavin Newsom? He's not going to do it. Is it going to be the Speaker of the House? Come on. Is it going to be the Vice President? There's no one in their There's no one in the Republican Party that has emerged to basically tap the brakes.
But one of the things that we glossed over, we say, hey, this can't happen. But the Secretary of Defense was a Fox News host. Just think about that. The largest military in the world, and the Secretary of Defense was a Fox News host. You've got people. The health secretary doesn't believe in vaccines. I mean,
that's not the health secretary believes vaccines require research. I like the health secretary at the end of the day. I'm sorry, but
you're out of your mind. You're out of your mind.
Okay,
but it doesn't matter. My point is, I can go down the list, and from one to the ninth. One for the edge. How about this? The Secretary of Education can't read. I mean,
that is bullshit. The Secretary
does that matter to you?
Can read. The Secretary of Education can read.
I don't think so. But it doesn't matter because my point is, you kind of get the gist of this, and the point is, I just wouldn't assume things. We used to be able to assume things. I don't know that we can assume things anymore.
And I totally agree with that. And I think that the markets, although I'm going to contradict myself.
I mean, we used to be able to assume logic would win, and it doesn't necessarily mean that.
Although it did win with tariffs.
What do you mean?
The tariffs did never happen beyond the 5 to 10% threshold.
Yeah, well, with Trump, it's the tariffs.
But my point is, maybe logic does win. The president Trump did leave the White House, and Joe Biden did come in. The tariffs haven't been implemented. I think that Donald Trump spends most of his time producing a television show that's extremely thrilling and exciting and horrifying. As it's the President of the United States reality edition. But the actual execution and implementation is consistently much more moderate or non-existent than anything that happens on the TV show.
Do you know what I worry about? I worry about when his golf game falls apart, which will probably be next year when he turns 80 or whatever. Sure. When his golf game completely falls apart because he can't see the ball anymore and he just misses and he gives up golf, then he's going to have way too much time.
And he's not going to know more ideas of things to do.
Right, exactly. More crazy ideas,
more.
He's not going out without a bang. Let's put it that way.
Yeah, unfortunately, that's true. So, but from a trading perspective, you like the bond and the dollar because you think that actually that the risk that we're discussing is actually priced in.
I think that the risk is priced in. I also think that as a contrarian, there are no other plays on the board. I mean, as a contrarian right now, I don't know how anybody can be short bonds here. It's just, as a contrarian, it makes no sense. And that's why I'm long them. And as a contrarian, I've been bearish on the dollar for 2 years. But right here, I don't know how you could play the dollar to the downside anymore. It's gone too far, too fast, and it doesn't make any sense. There's no risk reward with it. So I think what you're going to see potentially here is a softer stock market and a stronger dollar and a stronger bond.
I agree. I mean, would you go so far as to do a full-on pairs trade and sell some call spreads and that, or you?
No, because there's so much money. It seems to be so much money that there just seems to be an endless supply of money, and I just don't know how much the stock market. I don't know what it's going to take to attract sellers into the stock market, but I don't see it yet.
Mm-hmm.
Like, I don't see anybody with their finger on the trigger. Let's put it that way.
Mm-hmm. But long bond, long dollar, more comfortable than short stocks in any particular
I think
fashion.
so. Yeah, I think so. Dylan, that was great. Thanks so much for the active participation.
You're an alarmist. You are an alarmist.
You know, I'm not really. I just felt like doing that today. Just something different. I never go that way. I'm usually inside the curve, inside the distribution curve. Today I decided to go outside of it.
Can I just one last question before we go?
Sure.
Could I get a currency adjusted increase in my compensation?
Absolutely not.
Fine. I'm going to stick to the spaghetti, and I'm just going to wait for the dollar to turn around and get myself. I'll give my steak eating days are they'll come back. They'll come back. I don't need your money.
Your request has been noted.
All right. We'll see you next Wednesday.
All right, Dylan. Thanks. Bye.
All right. Bye.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
to see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage. When I got,
we didn't, wait a minute, so.
When I got in this business,
We used to open it at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is going on, everybody, and welcome back to today's assignment. We had another Fed Minutes today at 2 o'clock Eastern, and then we got a little bit more. We have some new positions to get into for today. But before we get into all of that, Dr. Jim, how are we doing today? We're surviving middle of the week. How are we doing with the Fed so far, 45 minutes ago?
Did we? I honestly, I genuinely didn't even know. Like, I didn't know. It apparently didn't do very much. I mean, did the market react to it? Because it hasn't been too much either way.
The market's been really quiet the last 45 minutes. I think we've been trading in a really small range right now. So it's been a little quiet. Other than that, anything else on your radar? What's new? What's been going on your end, Dr. Jim?
No, man, not too much. I mean, I've been out the last couple of days because Monday I had a doctor's appointment from theater practice, and then yesterday we had a planned day off. So it was daddy daycare yesterday because Autumn left.
Okay.
She left the city, so I've been with my kids for 36 straight hours. So it's good to see you, man. It's very good to see another adult. I just want you to know that.
Great to see
you. Yeah.
Yeah, let's talk some markets. Yeah. No, I'm looking forward to it. No, it's been a little quiet lately, the last hour, I guess you could say. I put on some new positions. I know I want to get into some of that GLP-1 today. I was trading some Eli Lilly. We got into some Eli Lilly. I just got to build my case a little bit. So I got some bullet points for us to get into and talk a little bit about some of those weight loss drugs. I don't know why Dr. Jim is so against the weight loss drugs. I know you were talking about some creatine before we got into this.
Cue up the title slide to the.
What's wrong with the title?
So you understand? No, cue it up. I want the people to see what I saw. Right.
All right, there we go.
So I mean,
this is what Dr. Jim
out there, right? So everybody out there, right? Like, you understand this is a trading network. Like, you understand, like, we're talking about probabilities. Like, we're talking about, like, standard deviation. It's like, all right, quantitative stuff. It's like blah, 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 blah. And he comes at me with the next big shift in weight loss drugs. It's like, bro, what have we become? Like, are we going to queue up the fear and greed meter next? Like, what is it, dude?
We just might, depending on how this Eli Lilly position.
That's probably like slide number 3 of this presentation.
it might be, but we got some GLP-1 drugs today, Dr. Jim. We get some decent volatility with some of these speculation around some of these drug deals going through with some of these with some of the.
That's a great way to put it. That's a great way to put it.
Wait,
now you just changed the sentiment. Now you just turned this into something that I made. So
there we go.
Good. This is exciting.
I got a new trade for you today, Dr. Jim. We got a little bit.
I'm ready.
Lilly. We got a little bit of Eli Lilly today. I'll get into the exact details of what that position was. But we did put on some delta there. And the GLP-1 drugs like Ozempic, Monjaro are effective, but cause up to 40% muscle loss. Just a little bit of details around all the speculation around these type of names right now. It's like a new
40% muscle loss, bro.
44, right, right.
Dude, I mean,
see, we got
gloss over that.
Thank you. We got your attention, Dr.
Well, I'm just saying, like, that, I didn't know. That's crazy.
Thank you.
Crazy.
Now, what if
like, get me as far away from that as you possibly can, dude? That's not
right.
Like, is that now? Wait. Hold on. Where is your source on this? Is it Trust Me, Bro? Like, what is your source on this? 40? Like, is it a subreddit? Like, where did you get this information?
Yeah. We have some of these sources listed in some of these next slides. I got you, Dr. Jim.
Okay.
We got some Bloomberg. We got some pretty credible sources here, Dr. Jim. I got you.
You got Johnny Poole's 47 on Twitter. Okay, all right.
Johnny Poole 48.
There you go. Right, you had to one up to 47. That's right. 47 is old news, dude. He's got some
exactly.
But you go to 48, he's got the good.
It's a clean slate. Yeah. It's a clean slate. SRRK surged 300% after releasing trial data showing 85% fat loss, 50% muscle loss. A lot of these headlines get a lot of speculation, get a lot of volume. They just attract a lot of volume. So we get a lot of headlines like this left and right. And I mean, with a lot of these weight loss drugs in this sector, I mean, it's really not surprising. I feel like we're always coming out with some type of new trial. There's always some type of new trial release numbers, whatever the case might be. Will the stock go up or down? I don't know, but I do know it brings volatility sometimes to the underlying. So pharma giants, including Eli Lilly, are now chasing this next move. So we're going to see if we can get involved there. And Eli Lilly is best positioned to lead the muscle-preserving weight loss recovery. So we're taking Eli Lilly for the win on these weight loss drugs, Dr. Jim, just mainly because they had a significant IVR that I preferred over the other companies. So that's why Eli Lilly has my vote, because of the IVR. So we like Eli Lilly so far, and we're gonna get involved in some weight loss drugs, Dr. Jim. You ever like to take some volatility in this industry or these type of trades?
I haven't really, so my hat's off to you. Because you did a really nice job there of tying this into. So you're right. I mean, so with the weight loss stuff, with the GLP-1s, with the whatevers, that's going to bring a ton of volatility into this sector. So you're right. As the trials come and go, whatever, it's like, man, these things are going to move around a ton. So they are going to bring a lot of opportunity. So my hat's off to you. I take back 50% of what I said a couple of minutes ago.
40%.
And so 40%, much like the muscle that you're going to lose. And so yeah, I mean, I will say one thing. I mean, as far as people have asked my comments and my thoughts on these, I mean, I have two thoughts. Number one, it is amazing to me. It is amazing to me how many lengths people will go to just avoid doing the actual work, to just avoid like actually going through the tried and true down the pathway of eating better, dieting, counting macros, training, whatever. And secondly, for every gimme, there's a gotcha, man. For every gimme, there's a gotcha. And the long-term risks of these things, we just don't know. You can't know yet because they're so new. And so I think it could be really, really problematic. So, hey, I'm just a random on the internet. Take it for what it's worth. But I would not do these things.
I mean, you're right, Dr. Jim, but produces some volatility for us. I mean, you're right. I mean, without that, I guess you want to have these type of volatile moves in the market. But I got to ask,
probably not.
Down to caloric surplus, deficit. I mean, that's baseline at the end of the day. It's almost like the P&L, but for calories almost.
That's exactly what it is. That's exactly what it is. That's a good way to put it. I like that.
Yeah. But just a little bit more of the science behind the trade, right? With the GLP-1 drug, we got some big numbers with the 40% weight loss. Weight loss from the muscle, and then SRRKs, the underlying that had ran up about 300%. Breakthrough flips that ratio, preserving muscle while losing fat. We got some sources here from Bloomberg. Eli Lilly's actively exploring ways to fix this flaw in its obesity pipeline. One thing with a lot of these details, again, and with the news that comes out on these companies, a lot of it can be a lot of noise for the most part. So a lot of it just random updates, whatever the case might be. But just wanted to bring some attention to some of the details going on, because Eli Lilly's premiums are jacked up right now. And also some of these companies are having earnings within the next month or two. So some might want to stay away from these underlyings, but also we could get some decent volatility, especially into earnings, because I know there won't be as much uncertainty whenever those shareholders can get updated on some more news. But that's what we got over here, Dr. Jim. We'll slide over to the platform. We'll check out this Eli Lilly position and get your thoughts on some of these positions. I know it's been a little quiet lately in the market, but first we have coin down a little bit on coin. This was the position to get some exposure in crypto. So Bitcoin is going kind of rampant. It's been a little quiet lately. 9 days left till expiration. Got a little time left. Not much has happened in there, but we're going to keep it on. CRCL, this was another one, 37 days left till expiration, sold an out of the money put spread. Decent liquidity. IVR is absolutely tanked on this one. We're up a little bit on the position. And I mean, I have a decent amount of time left on this one. Really not too much to say about this. It's been a little bit more quiet, but I mean, it really hasn't been trading too long. Either. And then Disney was another one that's just been running away. Disney, this one's going to expire soon. 9 days left till expiration. Bought this put on Disney. I mean, Disney's just been going ham. Even whenever Disney has some type of bad news, it's just been drifting to the upside. So kind of taking suit with the rest of the market over there. And then Eli Lilly put this one on today. This one is $10 wide, so it's a little bit wider, but I was able to collect 341. So not too much risk on the trade there. And then I sold an out of the money put spread. So down a little bit on the day, kind of break even on that Eli Lilly trade. But that was the weight loss drug exposure.
So was Eli Lilly, was it up even more this morning? Because you're down on the trade, but Eli Lilly's up. And so I'm trying to figure out, is there been volatility expansion today?
We can look. Yeah, there's been a little bit. I mean, if we look down here, we can get a little bit of a visual of it. Let's go into a daily so we can kind of see. So, I mean, IVR has kind of been rising slowly. If we look down here. And I did put this one on around when IVR dipped. I mean, technically.
Okay. Yeah, because you would expect, I would expect you sell a put spread and the stock is up. You would expect to be up money on the day, but you're actually down a little bit. And so I'm trying to kind of piece together why that is the case. So when did you put the trade on? Like, what's the actual time?
Let's see. So the timestamp on this one was 11:19.
Okay.
So that's 11:19. That was around right about right here.
Yeah, so I mean, it's about the same. I mean, it's down a little bit, I guess, but yeah, interesting. So it must be.
Yeah. I mean, IVR did rise a little bit though.
Yeah, so that's exactly it. So that's it, right? And this is actually a quick little shout out to Boston on Sunday night. I'm gonna be in Boston Sunday night, Options Crash Course Live. If you haven't signed up yet, sign up. There's still plenty of time. There's still plenty of seats. Like tastylive.com/events. I'm gonna talk about this. I'm gonna talk about like how do you actually decipher and break down your option P&L. And one thing that's really helpful is it's really only three things. It's direction, it's time, and it's volatility. And so the direction is usually the easiest one to see. The time is usually the second easiest one to see. And then the third one, which is volatility, sometimes is not so obvious. But here, when you look at it with like the IVR kind of on the screen there, it's really helpful to see that the reason why you're down on this trade is actually because of the volatility expansion.
Yeah, no, 100%. This was one of the first components that I was confused with when putting on the trades with Tom. It was getting that directional move a little bit and still being down on the position, whatever the case might be. So, Netflix, Dr. Jim, not too much going on in Netflix. We sold an out of the money call spread. We did this one just to get more short delta on in the portfolio too. But up $16 on that one, kind of break even, 37 days left till expiration. And then QQQ, we have some shorter dated positions in here, some longer dated positions. For the longer dated, I sold an out of the money call spread to try and just show the longer dated directional bias. So we did that. That one's kind of near break even. We're down a little bit on that one, but we have a little bit of time in there. And then we have that iron condor we unintentionally legged into. I think we talked about this one last week. We might have had it on for a couple weeks now, but the call side's now getting tested a little bit. I mean, we can see if I can roll the puts up just slightly, but at the same time, I'm not working with the large window. And then also I have 9 days left till expiration. And I mean, overall for all the QQQ positions, I mean, we're down about $8 for technically 3 different positions. You can group those together if we want to, but we're pretty much break even on the QQQ. But it is that iron condor that's catching my eyes. That has 9 days left to expiration. Call side barely getting tested, but not much going on in there. It's going to start moving very quickly now that we're coming down to the last week on this position, though. So that's what we're looking at. QQQ is really the one that has my eye the most. So, Dr. Jim, you got any thoughts on these last few positions?
Yeah, I mean, what's the plan there with the iron condor getting tested on the call side? You're going to sit tight? I mean, that's typically, like, I mean, there's a couple different schools of thought. Like when one side of the iron condor is tested, should you adjust or should you sit tight? What do you typically do?
Yeah, I guess it's dependent on the circumstances. I know we have 9 days left till expiration. It is a smaller window that I have to work with, so the call side's getting tested, but even if I could collect a small credit, it might not be worth it because it's not going to be a large credit. And then on top of that, I put myself working with such a narrow range in the first place. So I'm thinking I'm going to let this one just play out a little bit. If it falls within the breadbasket within the next 9 days, I can make the decision to get out of it at break even, or maybe I'm up a little bit within the next 7 days. I can just get out of it just because I could hold it till expiration, but things can flip on a dime right during the last couple of days before expiration. So if it can land in the bread basket in these next 9 days, I'll probably take it off.
You better just make sure that's gluten-free bread, bro. Like,
some gluten-free bread.
That bread's gluten-free, at least organic. Like,
hey, honestly,
organic.
Honestly, I could go any type of bread. Gluten never bothered me too much. I know when one side of my family got married and there were more no gluten, and that was kind of my first experience. But I don't mind a little gluten, extra. Actually, I don't know. I was gonna say some extra protein, but maybe not. Maybe not some extra protein.
Well, gluten is like it's the protein that's in wheat. So you're actually correct.
Okay.
A little bit of it.
Okay.
So there you go. No, I'm right there with you, man. And so we got to stick together. No, gluten's where it's at. You know, Autumn's got me
gluten where it's at.
Brainwashed. Oh, 100%. And so I mean, I think you hit the nail on the head though. I think when it comes to iron condors, I don't like adjusting them either for all the reasons you said. It's almost like we're on the show together now for a few years.
Right.
It's almost like we've come together and kind of learned some things together. Right. And so it's like, yeah, you're really giving up a lot for not necessarily a huge return. Like you pick up another however many cents, 20 cents, 40 cents, 8 cents, whatever it is. And now you just have such a more narrow range to work with. It can be really hard to make money on that strategy. And iron condors are already kind of sticky when it comes to hitting P&L targets in a timely manner. Like a lot of times you have to hold it longer than you thought you would have to hold it. And that can be really surprising to a lot of traders. And so I like the do nothing approach. I like to sit tight. I mean, you're tested on the call side now, but man, you're one tweet away from there in the breadbasket, dude. Don't even worry about it.
Yeah, 9 days left to expiration. I appreciate that reassurance, Dr. Jim. There we go. Talking about. He said, "Don't even worry about it."
Nah, dude. So Eli Lilly, you want to do some more in there? I mean, you've already got the position.
No, I already did something in there. That was earlier today. I really got into Eli Lilly. That was a blog that I had written on this week. That's why I was really interested in the weight loss drug. So we got into some details on that one. So next week for the blog, we'll wrap around, see how we're going to manage Eli Lilly. I know we have earnings for Eli Lilly coming, and again, this one's why. You got to take this one with a grain of salt. We do have earnings before the bell, August 7th. I don't intend to be on this one as earnings hits. I am aware of the potential rise in volatility as we get closer to earnings as well, but I think this will be interesting to see how it plays out. So we'll get an update on that, but I chose the 37 days left till expiration, put this one on a little bit earlier today. So I already did something in here, but I have been looking at PLTR, Dr. Jim. I don't know if that's caught your eye at all either.
Yeah. No, let's take a look. I haven't traded Palantir. It's been a long time. I mean, what are they doing these days? Are they way down? I know news.
Yeah, no. So they just acquired a smaller company, and we went over it yesterday, and it should be a good deal with them. They're acquiring this company so that they can produce this new technology for their company. PLTR is a company that's so low key because they work with a lot of military grade software that can be very classified software sometimes. So I've noticed PLTR can be vague, especially in 2020 when they were popping off. Everyone was like, what even is PLTR? Why is it popping off? And it was some very vague military grade software. They do a lot of those kind of things. So it's running off of vibes. We came to the conclusion, Dr. Jim. It's running off of vibes.
So it's perfect then. That's exactly what we want.
Yeah, exactly. Exactly.
Like
exactly
vibes, dude. It's just all about vibes. Like, yeah, let's do it.
I mean, for the most part, that's the sentiment. It seems like, but it's been rallying a little bit. I'm blanking on. I'm drawing a blank on the company. They've been running over the past few days. Let me look real quick in this watch list. They were up hundreds of percents yesterday, so they might be in one of the biggest gainers or biggest losers. But they acquired smaller.
Is it Nvidia? Because Nvidia.
No, it wasn't in. No, it wasn't. We'll have to check out NVIDIA here again in a second. This company they acquired had about a 20 million float. So 20 million shares for the public.
Wow, that's
trade.
tiny.
Traded like 40 million volume yesterday. So yeah, PLTR was catching a little bit of buzz from that too. Let me go to change. Let me quickly see. We'll circle back around to that. But let's quickly check out what was NVIDIA. There we go.
Wow.
I mean,
NVIDIA's
still running to the upside.
Man.
IVR really low.
That's obviously all-time high. It's got to be. I mean, obviously. And so, wow, look at that, man. This thing was down. Look at that. It was down to 100 in April when, the Liberation Day. Man.
Yeah.
Wow. What a run. That's a run. That's a run for NVIDIA. Wow.
No, it definitely is. IVR is pretty low right now. I mean, it's still trading a lot of volume, 141 million shares on just a regular Wednesday. So it is liquid. It is liquid.
Yeah. Now, is NVIDIA one of those ones where, like, normally when you have a run like this, you would expect the volatility to expand? Like, I know a lot of times Tesla will do that, where you'll actually have price and volatility run together. And some of the tech names do that. I'm a little bit surprised to see NVIDIA not do that. Like, I would have expected the IVR, not necessarily like maxed out, but 6 or 5.9 right here is pretty low.
Yeah,
that's surprising.
I'm just looking earlier when NVIDIA was trading. I know whenever we rallied during these times last summer, as we rallied to the highs, IVR was picking up alongside it. So yeah, sometimes NVIDIA, when it rallies to the upside, IVR is increasing with it. It doesn't look like it's doing it this time around. That's an interesting. I didn't realize NVIDIA was doing that, Dr. Jim. That's an interesting.
Yeah, I mean, it's something to always have your eye on when it comes to all the tech names, because it's something that plays out with a lot of them. Right. It's not something you're going to see with like McDonald's or Pepsi or IBM. You're almost always going to see that reliable inverse relationship. But when you have a tech name, and when I say a tech name, I mean like a tech name like NVIDIA, like Tesla. I don't mean Apple. Apple's not a tech company anymore. Apple is like a blue chip. Apple's like a boomer stock now. Apple's not a tech company anymore.
Yeah.
And so I'm talking about like obviously like even like a Palantir probably. And so yeah, pretty interesting stuff. So what is this Surf Air Mobility?
Right. So
what are we doing now?
Air Mobility, SRFM was the company that did a deal with PLTR. So that's what's going on over here, and they've been catching a lot of volatility because of that. They are cheaper underlying, so they are cheaper. But I mean, just a few days ago they were trading at 332, and I mean right now they're trading at 656. So I mean, percentage wise, that's a pretty big move. And then also they're affiliated with a little bit more of a quote unquote credible company, somebody like PLTR that's been trading on the exchange a little bit longer. So this might not be one of those little pump and dumps that we kind of see. I think it's going to really depend on how SRFM pans out and how their kind of business partnership pans out. I don't really care too much for penny stocks as a whole. I mean, I think the data point shows most penny stocks eventually go bankrupt anyways, but interesting to see it's affiliated with PLTR. But
are there any options in there? Like, do they even have an options market? Yeah.
Nah, no options. I know yesterday.
Yeah, so
I got some shares.
Yeah, of course. Yeah.
But.
And I mean, sometimes it can be fun, right? Like you've got a $5 stock, $6 stock, whatever. You snag 100 shares, 200 shares, whatever, and just have a little fun with it. Like there's nothing wrong with that, of course.
Yeah.
But as far as like that being like the go-to foundational driver, I mean that it's going to be tough because there's just nothing you can really do strategically like you can with a kind of a regular options chain.
100%. I know. Lastly, something that's been moving a lot is copper. Have you been keeping any eyes on copper? That's kind of been looking like
I've just heard about it with all the.
lately.
I mean, copper's been in the tariff news quite a bit the last 2 days, I guess, and so it's been on quite a run to the upside, I think, right?
Yeah, for the most part, it's really been rallying. I don't know exactly how I would trade something like this, but I mean, a move like that, it's kind of has me watching the sidelines. Yeah, so very aggressive moves on.
So when that's a 1 hour candle. So when was that exactly? Was that
it was. So this was yesterday, 2 p.m. yesterday. So a little bit after 2 Eastern, right before the close yesterday.
Wow. Okay. Yeah. So copper rallied. I mean, I don't trade copper. I haven't traded. I can't say with certainty I've ever traded copper, but a 90-cent move on a $5 product in 1 hour.
Right.
I mean, that's obviously, that's a crazy move.
Yeah. Other than that, Dr. Jim, I'm going to go ahead and just check out this high options volume watches. I don't know if there's anything that on your top of mind that you're.
I don't normally use this watch list. I don't normally use this guy. So interesting. So I mean, we've got earnings coming up in next couple of weeks. That's obviously going to be tricky. I mean, there's Pepsi. You know, I know you love some Pepsi on 7/17. We talked about that last week.
What is the ticker symbol for Pepsi? I know it's in front of me.
It's PEP. I think it's PEP, or maybe that's Pep Boys.
My teeth just streak when I hear Pepsi. I just get that weird feeling with Pepsi. PEP.
That weird feeling that you're feeling, it's called deliciousness. Like that's the weird feeling that you're experiencing? Yeah.
I don't know about all that. I mean, that's why Pepsi's taking a hit today. But I mean, the IV rank's pretty attractive on Pepsi. Earnings is going to be before the bell, July 17th.
About a week. Okay.
About a week. Yeah. About a week. Affirm 11 IV rank. Not a big fan. CrowdStrike 6 IV rank. Not a big fan. Salesforce CRM 9 IV rank. Kind of low. I do like Salesforce though. Nvidia low IV rank. 143 million shares traded. PDD. Very low IV rank. Baba 13. Have you been trading any Chinese stocks lately?
Wow, they're still in business. That's unbelievable.
Yeah, they're still in business.
That's crazy.
And business is booming.
No, it's just I can't believe that. Yeah. No, I haven't traded Baba in a while. I figured that they were in the trash heap with Wolf. Yeah, look at Wolf. $2, man. I got out of Wolf. Wow, look at Wolf.
Hey, somebody's trading it. 97 million shares traded today.
So somebody on the YouTube chat, like maybe a month ago, took me down and had me sell a put in Wolf at 3.
No way.
And yeah. And then I had to get out of it at like 70 cents or whatever. And so I just took a bath in Wolf like maybe 2 weeks ago. And now look at it. It's back to $2. This thing's on a tear.
You had bought a put or you sold a put?
No, I sold a put.
Oh,
I sold. Yeah. When
shout out to
So Wolf was at like 350, right? I go in and I sold the 3 put for it was like $1. It wasn't even that cheap. I was like, wow, that's not too bad. And then Wolf just crashed down to 85 cents or whatever. And so I took assignment on the put because I kind of forgot about it. And then that next Monday I had to liquidate the position because I just assumed it was going to zero with bankruptcy and whatever. And now look at this thing, man, like a phoenix.
Yeah,
look at this thing at $2.
It does. Yeah. Don't sleep on Wolf, apparently. No.
Look at Wolf.
Other than that, Dr. Jim, I'm really going to be looking out for these positions. I'll give you an update on Eli Lilly. I'm telling you, don't sleep on these weight loss drugs. I know every year we have a new weight loss drug, but this one might be the one. You never know. So
what's the name of the one from Eli Lilly?
Say it again.
What's the name of the one from Eli Lilly that you were so excited about?
The GLP-1?
Yeah. It's not Ozempic. It's one of those other ones, right? Monjaro?
Monjaro.
Like something that's going to jack.
That just
that just sounds like something. It's taking a lot more than 40% of your muscle, bro. It's taking some bone or something. Like that is going to mess you up.
Oh yeah. No, we'll see how this pans out. We'll wrap back around to these positions, give an update on them. We will be back next Wednesday. Anything to add before we head out of here today, Dr. Jim? It was a little bit more quiet on the Fed.
Yeah, super quiet. It was a super quiet week. I mean, obviously there's not very much happening news-wise. I mean, the market's been. It's been pretty quiet for the most part. Nothing super crazy. I mean, the VIX is back to 15 something now, I think, today.
Yeah.
That's pretty crazy. But next week, I think we've got some inflation numbers. I think there might be some more things picking up. And then the tech earnings look really quick. Like when is Netflix earnings?
Let me see. I am in.
We have an extra second.
Dude, no, you're good. We're after the bell, July 7th.
Yeah, there you go. Okay, so that's going to be next week. Okay, so next week, Netflix is kind of like the unofficial start to like tech earnings. I feel like they're always first, and then after Netflix comes everybody else like Microsoft and Meta and all that kind of stuff. So, maybe we'll get a little pop in movement from that, but time will tell.
Yeah, my position expires in the August 15th cycle, so I might be holding through there. We'll see what we get. Dr. Jim, we always appreciate you having you here, getting your insights and thoughts on some of these positions and the overall market. Thanks for taking the time to hang out with us today. If you're around, be sure to stay tuned for more segments coming on next with Tim Knight. And we'll catch you guys next time. Peace.
Peace.
Global markets never sleep. Explore them with Forex. Now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when you're in a pit.
That's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
Hello, everybody. Well, happy Wednesday. I've got something I did, I think, a couple of days ago for you again. Let me explain. When I don't have anything particular to say about the market in general, and this is a very tough market to make sweeping observations about right now, my fallback is to talk about my own positions. Now, this isn't meant to be about me. It's meant to be about the charts that I have found on my own that I specifically think are interesting opportunities. I don't do it that often because there's usually all kinds of other stuff to talk about. Like next week when earnings starts ramping up, there'll be a lot to talk about there with respect to earnings. But there's nothing going on with earnings. There's nothing going on with any economic news. There's nothing meaningful going on with trade news. And, what we wake up to each morning is usually the same thing, which is everything's up about 1/5%, yawn. So, I'm gonna do, and the list is different. It changes all the time. But what we're gonna do here is look at a couple of general things, but on the whole, we're gonna thumb through those individual positions in alphabetical order, and I'll just share a few words about each one. For the market in general, it's pretty green across the screen, up about 2/3% across the board. I'm pleased to see of my 18 positions, 14 of them are down, which is good because they're shorts, and 4 of them are up. And the worst up is they're not even up 1%, so pretty good. So let's dive in and do this. As usual, here's the spider. And as usual, it's right near lifetime highs. We're just hanging out. The past 4 days has just been a whole lot of nothing. Sometimes I say lots of smoke, no fire. There's not even smoke right now. It's just sort of lazily lilting its way higher. As far as that channel goes, we're a little above the midline, and there just ain't too much to say. So hopefully, with a few weeks of earnings news, that'll make things a little more clear. But as it is now, it's just like the summer doldrums, I guess. One tidbit of news, I suppose, out there is I heard NVIDIA reached the $4 trillion market cap. I'm not stone cold certain of that, but I think that's the case, which is pretty interesting. It was only about, 6 years ago that NVIDIA had a market cap of a couple of $100 million, and was basically, for those who knew it even existed, was basically a niche maker of graphic cards for serious gamers and Bitcoin miners. And now, of course, it's AI. And I don't know if this makes it the world's largest company, but if it's not, it's really close. So, another achievement for NVIDIA. But having said that, and I don't touch NVIDIA myself as a chart. I mean, God bless if you own it. It's just doing great. I don't touch it in either direction. But I do touch other stuff, and we're going to look at those right now. And I think this is an accurate list. Like I said, it changes a little bit from time to time, but just eyeballing it, it looks representative of what I'm doing. So let's go through these one by one. And like I said, nothing magical about the order except the alphabet. Interestingly, we begin with a semiconductor, which is AMD. And you can see from the get-go how different a chart this looks from NVIDIA. It's nowhere near lifetime highs. And instead, it's just been for years now, or at least about a year and a half, executing a series of lower highs. There's the lifetime peak, lower high, lower high, lower high. And more recently, and this is common amongst a lot of these, I'm playing with a gap here. And so we've got this gap here. That's my stop loss. We got very close to it today, but we did not exceed it. And it's just, put it this way, if semiconductors do fall even a little, I suspect things like AMD will be a lot more prone to weakness than NVIDIA will. So that's the first chart right there. And, these things are very richly valued, triple digit PE, and this is a very mature company. So semiconductors are very strong, but there's definitely those that I like on the short side. Here's BP, British Petroleum, and pretty obvious on this one. Just a whole series of rounded tops here. None of them super clean, but they're more or less similar. And this is a particularly good one. It's a particularly large one. Avis Budget Group, I think, is maybe the last rental car company that's still publicly traded, I think. Close to it at least. But these folks, as you can see even from this multi-decade distance, have this tremendous rally. And it's not a very clean pattern, but it seems to me that we've just hit against this confluence of overhead supply. And I've got a nice tight stop on this one, just above 185. And this was down about 1.5% or so. Costco. This one is a very well-managed company, exceptionally successful in the long term. Shorter term, as we zoom in, it seems to be pooping out a little bit because, first of all, the lifetime high was back here in mid-February. We had a very powerful rally, but that did not even match the prior highs. We've got a lower high as of June 3, and it seems to be kind of softening up a bit, as you can see. And just eyeballing this, there is a minor level of support. We should keep an eye on something like, we'll just anchor it to today's low, something like that. So that may be kind of turning the proverbial corner. Delta, which is down just a little bit. I believe they report tomorrow. Let's find out. Let's zoom in on this. It looks like they report before tomorrow's open. And in this instance, and this looks a lot like the Dow Transport Index in general, which, as a reminder, had a very good looking bullish pattern, blasted higher, started to sink, and then, fell into the pattern again. And so they wrecked it. So failed bullish breakout there. We've managed to rally back to that zone where the failure took place. Like I said, this is one of the very few stocks at all that's having earnings tomorrow of any note. So that'll be worth watching. But yeah, I've got a short position on that as well. Dollar General, also down a bit more than 0.5%. And we've got a top here, and we had a huge gap right here. And we've rallied all the way back. And I've got this a little tighter than the gap itself. Strictly speaking, the gap's up here. So 119.28. I've got my stop set tighter down at 116.30, which is a recent high. But you can see how that's been breaking down long term. Diamond, very general. This is up because it's very general, like the market as a whole. We'll see on that one. DLTR, kind of a companion piece to the DG trade. Same business. Competitors, obviously. And in this case, what day in a row? Okay, in this case, 107 is the stop loss on this. Kind of a different shape to the breakdown, but I feel we've talked about this at length some many weeks ago. Not to put too fine a point on it, but I think that being poor will be worse than it used to be. Being kind of working class will be worse than it used to be because the resumption of student loan payments and diminished employment opportunities. I don't think it's going to be good for your Dollar Generals and your Dollar Trees. And that's not why I went into these, but it's definitely kind of in the background haze of the decision. Most of it's about, of course, the chart itself. EL, Estee Lauder, I've shown you this one before, it's lost the vast majority of its value already. But things like this can just keep going down. And over years and years, it's been executing a series of lower lows and lower highs. So that's a hold right there. FMC, now this one's up. This is a new one today. FMC is up a little more than 1%. Tight stop on this one, down at 44.68. China, I mentioned this one, I think, yesterday. So far, so good. It was weirdly up yesterday, but I held on, actually added some, and it's down about 1.5%. So that's good. Stop on this one, 37. Very gappy, of course, being an overseas based instrument, but 37 is the stop on that, and got a good price on that one, FXI. IBM. This one, even with the market in general so strong, this one has been weakening. It peaked right here quite recently on June 25th. It's been just kind of ambling around for weeks now. But that the lofty level it's at now, which is quite clear from this scale, as well as the fact it has stalled out while the market keeps kind of trumping higher, that's of note. Micron, I mentioned semiconductors. This is another one. It's down almost 2%. That's pretty impressive on a day this strong. Pretty liberal stop on this one, 129.75, just above that level. And like I say, NVIDIA lifetime highs, $4 trillion, SMH lifetime highs. Any semiconductor with weakness has my attention. Nike, down a little bit. Had a nice down day yesterday. Right triangle pattern, as I mentioned yesterday as well. Another semiconductor one. This one basically unchanged. It's unchanged. This is ON Semiconductor, symbol ON. We got on this one, let's see how close we got. I've loosened the stop on this a little bit, but let's just see in the strictest terms. Yeah, it looks like today we sneaked a little bit above that gap and we're below it again. So we have sealed that gap on. But just to give it a chance here, I early today loosened this up just a bit to this anchor point. So the stop on this one is 59.35. Just, 35 extra cents between friends. Occidental, down about 2/3%, like so. You can see the big distribution up there. Pepsi, mentioned this one a couple of days back. PEP, huge top on this, going back about 4 years. And this is just, I'm not saying it'll do the same thing as CNC, which crashed about a week ago, but it's a very similar pattern to Centene. couple of more. These are ETFs. One is XHB. In this instance, this error on this one, I actually do not have a position in this, but I wanted to just mention it again. This is the Home Builders ETF. It's having a strong day today, and long term, relative to that big price channel, you can kind of see how expensive it is right now. And then the last one, which I am in position on, is XOP, which is down a little more than 0.75%. I've shown this one pretty frequently. The cleanness of this was ruined back really in early May. But I've still left that rough top drawn in there as a guide. And in this case, got to stop just above yesterday's high. So that's XOP. So in the 80 seconds remaining, the last chart I wanted to show, so we talk about from time to time, is Bitcoin, BTC. On the one hand, I was reading just yesterday about the tens of billions of dollars of Bitcoin that have been gobbled up by ETFs, particularly, I think, BlackRock's IBIT, I believe. There's been consumption of these things, just gobbling up like crazy. In spite of that, it's the same price that it was back in even December. So 8 months with gobble, 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 and the same price. So that's not that impressive. On the other hand, the chart looks awfully good. And it looks like it could easily rally from here. And the linchpin for that would be a clear new high, particularly. It's tough to say close because this really doesn't have trading hours. It's continuous. But if we got cleanly above, say, 112,000, it would be very justified for people to get excited about this on the long side. So it's very, very close. So interesting psychological factor out there that flows right over to equity land, even though it's crypto. So something to keep in mind. Okay. Bottom of the hour. We got through them all. Thanks, as always, for coming by, and I'll see you here tomorrow. See you later. Bye-bye.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh, yeah. She was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right? Yeah, you're a
camper guy.
You're a camper.
Hold on, you're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Oh no.
Can you put that leg up again?
No. Do not.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with the last call, my friend. Even the S&P's up 31 and change, trading about 12 ticks or 12 handles, off of their highs. You can see that they're 40 handles or more off of their lows from last night. NASDAQ up 138, Russell up 20. That's actually a leader on a percentage basis in the clubhouse. And then Dow up 192, about half a percentage point. Volatility in by 35 cents, 1936. That'll be a new low for today if we close down here. About 16 cents off of its 1920 print of the low. Bonds up a full point, Thomas. Woo-woo, throw a party hats. 114 party hats are on, Sadnoff. 114.03, just 2 ticks off of their highs for the day. Bitcoin over 110,000, 110,900 on the futures. Oil doing really nothing today, down 5 cents. Gold up $7 and change after going under 3,300. It's back to 3,324. Still the lower end of its most recent range of the last 2-3 weeks or so, but still hanging up there, as you can see from the chart. Doing well. I mean, if you have a gold position, you're probably and bullish. It's probably worked out well for you. The Buckers today, there you go. Adobe, CRCL, UNH all down over 4, BABA down 4, DDOG down around 3 and change, CRM down 2 and change, PDD and Baidu, some of the other Chinese stocks also lower. The big boys today, Coin up $17, MSTR up 14, as well as Meta up 14, AppLovin up $10, and Lilly up $8 and change. Boeing and Netflix up almost $8 a piece for each one. Sadnoff, that's all I've got. Earnings is Delta Airlines, if you're interested in that. I know you have an existing position, unchanged, down 9 cents right now. IV rank of 34.
And premium came in a lot in Delta already today. My strangle, which is the 46.55, I have not touched it. 46.55 came in, let's call it 30 cents ish, which is a pretty big move on a cheapy strangle. Yeah. The best call of the day. Well, the best call of the day was the bonds, obviously, because they're up, they're up to 114.05. And they traded down to 112.31, where we got lucky and got them this morning.
Yeah, that's right. You had your little order in there.
For the record,
Scoopy.
For the record, you can put this print. We bought them at 112.31, the low of the tick of the day, and we sold them at 114.05, the high tick of the day. So
that never happens, Sadnum.
Never
I'm gonna put it right up there on the board,
years.
right there. Highs and lows. How does Daddy do it? Taking 1%. Yeah.
Never ever happens. And we made a pretty good call this morning in Circle. Sold it when it was up $8 and made $1. But it's
Circle down 5 now. Yeah,
it was up like 8 or 9 this morning. And that's had a big reversal. Other than that, there was a few reversals today, like PLTR reversed from down to up. Apple was down a little bit, went up. Let's see. Nvidia was up more and then went down a little bit. Some of the Chinese stocks, like you already mentioned, were down. And then the other one that turned around was Intel. It was up early and then gave it up, and now I think it's unchanged. I don't know how much it was up. I thought it was over 25, but maybe not. Maybe it was yesterday. And other than that, oh boy. I mean, there was a decent move in the S&Ps. They were up 40. They went to only up 10. Now they're back up 30. You know, like there was at least a 30 handle range today. But for the most part, you know, the rest of the day was like, this morning was kind of a nice move down, and then the rest of the day was a grind back up very slowly. Not even, you know, I mean, you have to be the stone cold killer trader to have hung out for that rally all day. I mean,
no doubt about it.
That was not easy. Gold turned around and went to the upside a little bit today. And you know what? Of every other market, I'm going to leave it there. You know, I don't think there was anything else that kind of jumped off, crazy jumped off the screen at me. I'm not sure about you, but
no, nothing really crazy. The way we stair-stepped higher going into the close today, I thought we'd have a little bit more two-sided action for the day. We just kind of sat and climbed. For me, with volatility really just hanging out at down 30 cents, I thought we would have a little bit more two-sided action there after making that high today.
Yeah, I mean, it was a good day for, premium sellers because even
volatility came in again, Sadna, for the umpteenth day. I mean, you look at this. I mean, volatility's been contracting since the middle of June.
We love a little umpteenth day in a row with volatility contracting. I mean, again, our positions are very small, very small.
Because of that, Tom. Think about it. I mean, any positions you put on, they've worked nicely from a mechanical standpoint of view and from volatility. So you're kind of peeling them back, peeling them off, and you're finding it harder to find new trades too, which is, kind of that double whammy that we always deal with.
There is no question about that. I did not trade a lot today. It was my quietest day of the last couple of months. Only about 25 trades. I usually average close to 75. Last couple of days have been around 50, but this one, 25 trades. Now, again, I have very small positions on, and they were all working.
Yes.
So, biggest loser for me today was S&Ps, just because I'm short, and Qs, and those are just short deltas, and the biggest winners was pretty much everything else. I mean, I don't think we had, bonds, obviously the biggest winner by far, bonds and notes, but the yen, the euro, commodities were good to us today. Stocks were okay. Kind of a mixed, not much either way. And again, we'll go home with a small short position on tonight, but very manageable deltas, very manageable Greeks across the board. Low theta, low extrinsic, like you mentioned. You talked about it this morning. Really, the lowest numbers we've had in months. I hope vol doesn't go too much lower. It'll be like watching paint dry in August. I don't like that. I like when August is a little weird. Keep August weird. Don't let August.
Let's keep something weird. There's always that stock. I don't know. In months past and times past, it's been something like a Tesla that doesn't it's not cooperating with the market today. It really is not anywhere near highs. It has a lower implied volatility than we would like. But there's always that stock, the UNH comes in. There's always that stock that kind of sector. That does us well.
I thought that was going to be like copper today, but I finally got filled in there, and you know what? It was a losing trade.
Was it?
No, it didn't. It didn't work. It didn't get killed. It just, we sold it in the hole, and it was just not a good. It basically proved what we've said all along is when we don't, when you're trying to sell something in illiquid markets, you're just, you're setting yourself up to lose.
Sure. You're giving away the first day or two of theta decay. By the fill that you get.
You're just doing something dumb, and that's it. And that's, I mean,
now you got a position though. That's what's even better.
Now you got a position. Now you got to work it. Now you got to work it. And there's nothing to really work either, because it's pretty hard to trade. So not really workable. But again, our stuff's small. I'm I'm glad that we're starting earnings season because it may give us a couple things to do. I don't think much, but a couple things to do. I definitely did not add to my Delta position. I know Delta traded 9 million shares today, and it's basically unchanged. But
yeah,
you know, I of all the stocks out there, I've never had much luck trading Delta earnings. I mean, one way or another, it's like you make 25 cents, you lose $1 type thing.
Yeah, I mean, the monthly implied volatility looks juicy, you know, around the 50-ish level in the AUGs and July options. But the reality of the whole thing is it's a $50 stock with a $5 expected move for all of August and a $3 expected move for the rest of the week. So you're really looking at what, $2.50 or so?
Yeah. I mean, if you've got a hunch, you know, you want to, if you're bullish in there, the 2 days are only a penny wide. So if you wanted to trade, you know, July options and you wanted to sell some, where's the stock? 50? Yeah. Expected moves $3. So you want to sell it 47 puts or 41? Forget it.
It's like I was trying to say, you know, 50 cents is a home run in a stock like this.
Yeah.
You got to set your expectations, you know, reasonable here.
Yeah, you got it. I got it. I'm not touching this sucker. I'm not touching this sucker. Anyway, so that's that. Let's see what else we got going. Tomorrow's Thursday. We got a little trades from the research team, so maybe they can come up with some little tidbits that we missed, and a bunch of other stuff. But you know what? I don't see much. I don't see much changing this week. This week is kind of like, you know, based on Monday, Tuesday, Wednesday. If Thursday's very different, I'd be surprised. And there was some, you know, the NASDAQ was strong today.
Yeah, NASDAQ was strong for sure. Yeah,
NASDAQ was strong, you know, and most of the big guys were, you know, other than Apple, were pretty damn strong. Apple and I think Tesla was down a little bit, but other than that, the big kids were strong today. And yeah, I'm just looking around to see if anything else came in, and I'm going to say, not really, nothing, honey, nothing,
honey.
Yeah, nothing, honey, for sure. So I think, and this is, you know, this is just good business management. I don't think you force it here.
I agree. I
don't think you force anything. I don't think you force anything. I still love being long bonds, and I'm going to take my chances, you know, on that. There's a little more follow through today that we didn't blow our brains out with one up day in there. I'm going to take my chances in there. And I'm going to take my chances and stay long the U.S. dollar because I think it's so grossly oversold. Let me just make sure. Yeah, I'm going to stay just a little bit long U.S. dollar. I'm going to actually roll up some puts right here just to stay a little bit long. And premium, by the way, has come in there a lot. Yeah, just flatten that out. So yeah, I'm getting short.
You're just rolling up puts here. You rolled up one.
No, I was a little too long US dollars. I'm getting you know, just neutralizing the position a little bit, just flattening out. Let's see.
But
what
you're
else
rolling up puts, you're getting longer.
No, euro. I was.
Sorry,
euro.
I wasn't paying attention to what it was.
Just trade euro. Yeah. Other than that, I'm looking at most of my positions here to see if there's something else that jumps off screen. So there's something to talk about here. I mean, we're at a really good level. If you are a
numbers coming out tomorrow, I said we're going to sit around 6,300. Does that sound like a good deal to you? That's where we basically are with 6,304. I didn't think we were going to get up here again, to be honest with you, after we sold off.
When they sold off this morning, I thought they were at some point going to go down in the day, but they didn't.
I did too.
They just held and it got boring. Maybe tomorrow. We'll see.
Maybe tomorrow's right. Even the S&Ps aren't going to trade 1 million cars, or maybe they will in the next 12 or 13 minutes or so. 964 right now.
Yeah, they probably will. Yeah, I'm definitely not. I'm not getting like bullish here at all, but I just
bullish
don't
at new highs. Tom Sosnoff. I mean,
I said I'm not getting bullish.
Shut the front door.
I said I'm not getting bullish here. But
you
what I
sounded
will
like
say
you were talking about like I'm not getting bullish here, but I'm starting to feel bullish. Is what you were going to say? I wanted to
that's not what
stop
I'm
you
saying at
before
all.
you said that.
What
Bring
I'm
back
saying-
the old freaking Tom Sosnoff.
What I'm saying is I'm not getting bullish here, but there is an absence of sellers right now. So let me give you a little statistic.
There certainly is. In volatility, there's an absence of volatility, which shows you there's an absence of sellers.
Yeah, there's an absence of vol. There's an absence of sellers. There is historically, I mean, I know Vecchio's talked about this a lot. You know, July is bullish, blah, blah, blah. But the last 11 expirations in July, you want to take a guess? Last
How
11
they've done.
years.
Now you're just talking about expiration Thursday into Friday's print.
Yep.
Three down, seven down, 3 up.
9 up, 2 down.
That's completely wrong. Oh, I thought you said the next 10. I'm sorry. You said last 11. Sorry.
11, yeah. Last 11 years, 9 up, 2 down. And most of
I stink.
Yeah, you do. And most of the up moves were pretty strong. The down moves, like basically nothing. So anyway, I think that's part of it, is that this is just month just has, you know, whatever Vecchio said, 9 or 10 straight up years. And then, you know, the expiration is bullish too. And that's a week. That's a week from tomorrow, right? Yeah, a week from tomorrow afternoon.
Yeah. Yeah.
So anyway.
And half the year is over already, Sodnoff. I don't know how you feel about that.
I don't like when half years are over anymore, because I feel like time's going too fast.
It is going fast.
I wish things went slower. I want the world to slow down. You know, I just want everything to go slower, because I don't want to, like, I'm not ready to expire.
I get it.
Yeah. I don't like. I'm not as excited about birthdays. You got the big birthday coming up this weekend. You know,
I got a call from Tucci, who wants to take me out for something to eat for my birthday. You believe that? Isn't he a nice guy? You never said that to me.
Yeah, you should go out with him. I mean, the two of you, you know, you can tear it up one night for old times' sake.
Back in the day, we had a couple of tag teams. You know, I mean, he wasn't the best wingman, don't get me wrong, but he was game for anything.
Well, all I'll say is right now, I don't know. I don't even know what trouble the two of you guys could get into, other than, you know, I don't even know.
Well, back in the day, Tucci could hold his own. He was pretty good. I'm not gonna lie.
I kind of feel like I'm trying to figure out where you guys should go, and I'm thinking to myself like it's got to be Italian. You know, I've never been to Gigi's Capri, so I mean, I kind of want to go there because I watch all the TikTok videos.
But I've never been either. That's correct. We are closer to 2050 than we are 2000, Sadnov. How's that make you feel? Old yet?
We're closer to 20. Yeah, right. Yeah, we just crossed over.
Yeah.
We're closer to 2050 than we are to this. That does not bother me.
Oh, that doesn't bother you as much? Because 2000 seems like it was yesterday. 2050 sounds like, forget about it, where that's going to be.
2000 does not seem like it was yesterday. 2000 seems like it was a long time ago to me. 2000 does.
Really?
Yeah.
Come on, Y2K. I mean, that's not.
I know.
That
feels like it was a long time ago.
Okay.
But there are certain things that feel like they were recent. But 2000 feels like it's a long time ago.
Mm-hmm. Okay. You're entitled to be wrong.
Well, it's not wrong. It's how I feel.
Well, you're entitled to be wrong. I mean, you're wrong a lot. You're entitled.
Well, you going home with anything special tonight?
No. I'm surprised. I'm surprised at bond volatility really contracting, not going anywhere. I don't think there's a play.
Oh, they killed premium in the notes and the bonds today. Murderized.
Right,
it.
which is signaling to me that this number tomorrow is going to be a non-event.
Oh yeah. No, total non-event. It's over. I mean, what else can they throw at the bond market that's going to move? The only thing the bond market can do is go up on a number that's unexpected. The downside, they've already got everything out there.
Yeah, I agree.
Yeah,
I agree.
And that's why I'm long bonds. I don't know. I think that's
we are climbing the wall. I'll tell you that right now. We are climbing the wall of worry for sure.
Yes, I agree. But other than that, there's no commodity out there. Like to me, crude oil is dead. Natural gas is, just playing the same games it always plays. And
That gas is on its lows. I mean, I'm happy about net gas. Yeah.
But crude oil, nat gas, gold. I mean, for the first time in like 6 months, gold's actually coming in every single day. They're finally, taking a little money out of this thing. But
yes.
All right, what else? Let's bring in the boys. They're waiting.
All right, let's do it. We've got the overtime crew. Where are you? Get in my belly.
Hi, gentlemen.
Hello. How are you?
Well, I like that the bonds are bouncing today. That's good.
Yeah, it's a nice bounce in the bonds today. Everything else is kind of crappy. I mean, they killed premium.
We've had a 5-day slide in the bonds. I mean, I don't think you don't get too many more than that typically. I mean, so now let's see what tomorrow holds.
But they also killed premium today, so premium sellers can rejoice a little bit. It was a good day to be short some premium. So nothing really went bad today. It's all good. All right, boys, what do you think here, Vecchio?
Well, you said everything was good today. I mean, I was long some natural gas, which did not work out well. But that is a trade where
what'd you have to do? Pick the one commodity that was down?
I mean, yeah, apparently. But natural gas has such high volatility relative to everything else still. IVR's in the 40s and 50s. How could you resist? But
you were right about that.
Outside of that, right now, it feels like you have to look more at individual stocks than the indexes because IVRs are below 10 again. Mm-hmm. And it's a typical summer Wednesday, right? Low volume, low volatility, light news flow, the market drifts.
Mr. Spivak, what do you got there?
Yeah, I mean, I think we started this week with some kind of a pause in stock markets, if you want to look at kind of overall equity sentiment, and we've kind of wiggled down, then wiggled up, and we're kind of there. And to Chris's point, not a lot of news flow, not much going on in terms of in terms of inspiration, but I like that the stock market didn't really care one way or another about these tariff headlines this week. We're sending letters, we're doing stuff with copper. Copper itself jumped, but equity sentiment seems to be over this whole thing, and that's good.
I would 100% agree. Their equity sentiment is nobody cares anymore. It's over,
and that's good. That's really good because from my perspective, that takes us to a focus on growth, and that makes my bearish inclinations more attractive in my mind. So I'm sort of tactically short a little here, just basically saying if I'm wrong fast, and if I'm going to get paid, then it's asymmetric. So that's about it.
I agree with that. I think that's the right play. I actually think that's where the best risk reward is, and I think.
Well, you guys got it wrong, okay? Because like I told you yesterday, we were going to rally today because volatility was pointing to that. You got down another 40 cents today. Volatility is pointing to this whole number being a non-event. So I'll tell you what we need. What we need is tomorrow we have a little bit of an up day with volatility upticking also, and we probably sit like that. And from our research, usually 24 to 48 hours after that, all you got to do is follow the science, Sadnov, and the research. 24 to 48 hours after that, we typically have a reversal. So you're a little bit early. Monday, Tuesday next week, maybe you get yourself a little bit of a down move. Tomorrow, it'll be a non-event. We'll fluctuate around a little bit, settle right in there. I'd like to see us a little bit higher so that 48 hours later we could be a little bit lower. That's what I'm looking for. Sosnov,
I'm on board with that.
Oh, well, I appreciate your support, my friend. Sosnov, tell me how wrong I am.
Well, I don't know what's going to happen, but I do know that.
Well, nobody does, but I mean, it would be a very boring
but
show.
you didn't let me finish. I don't know what's going to happen.
Oh, I'm sorry. Did the middle of your sentence get in the beginning of my sentence for a change?
I will try for a third time. I don't know what's going to happen, but I do know that I can bank on everything you just said will be exactly wrong. So I know for a fact, okay, this is a fact, that the opposite of what you just said will be the play.
We need volatility higher and the market higher to get ourselves a little bit of movement to the downside. That's going to be the ding, 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 ding bell that they ring.
You know, I got to get you a bell. You need a bell. More cowbell, please.
I need a lot of things, sounds enough. A bell is not one of them. I appreciate it.
You would be really obnoxious with a bell. I think I'm going to get you a bell.
I would be obnoxious with a bell.
Like Hector Salamanca in Breaking Bad. Just a little.
There you go.
Just a little
ding, 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 ding.
You just need a bell. The bat with a bell would be really good. We could ring the bell. Every time we're at the market top or bottom, we just ring the bell.
Ring the bell for everybody. I'm surprised we haven't thought about this sooner.
No, we did one point, not the bell, but we wanted to have like the sound effect of ducks quacking.
I do have it on my desk. I just don't use it fast enough.
What, ducks quacking?
Not ducks quacking, but I do have it.
I wanted to use the sound effect of ducks quacking at the bottom and ducks quacking at the top, but we would have overused it so many times that, you know.
People, no, not the ducks. Not the ducks. Yes, no. There you go. There you go, the clapping.
I like the ducks are not the ducks are clapping, the ducks are quacking.
Word on the street is the production team's working on an Omaha button for the studio, which is fun.
we could probably use one of those. No doubt about it.
I mean, what's there to say about this market right now, though? If you're going to be bearish, you have an opportunity to get some longer duration exposure that's cheaper. Otherwise, it's difficult to call a top right now in a market that's just listlessly floating to the upside.
But I agree with Ilya. There's good pot odds. That's all it is.
Sure.
There's decent pot odds. Yeah. Asymmetric opportunity here, Mr. Vecchio. Asymmetric opportunity.
Does NVIDIA hitting $4 trillion market cap do anything for either of you guys?
Does a $4 trillion?
I actually gave you credit for that when you gave it to me earlier today in a direct message, and I appreciate it.
And then
it was like water on a duck's ass. He didn't give a crap. He didn't care. It was just rolled right off. Okay, Sadlov, thank you so much for your time. We're going to take a quick 90-second break. Come back with some more overtime. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Another quiet day, another move higher for stocks. It's Wednesday, July 9th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in San Francisco. Dylan Radigan's still out. He'll be back tomorrow. Mike Butler sitting in, live in studio in Chicago. Here to take you through the rest of this hour as we wrap up your trading day. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome. Thanks for coming. If you're on YouTube, join the conversation. Tell us what you think of a day where the market shrugs off the tariff headlines. S&P 500 now up by another just over 0.5%, 6307 here. NASDAQ is among the leaders, up by 0.63%, buttressed by NVIDIA's push to a $4 trillion market cap. The Russell, of course, is the top performer today. That's up by 1.03%. We have bond yields coming in at the long end of the curve. Scott Besson talking about changing issuance. And, of course, we had those Federal Reserve June meeting minutes out. After yesterday's tariff announcement for copper, prices did calm down a little bit. Metals are mixed, if relatively quiet, all things considered. You do have energy that is relatively staid, except for natural gas, which collapses on the back of another forecast for even greater inventory levels than what we had previously. And finally, in the FX world, the dollar's rally. It loses a little bit of steam here. We are looking at mostly an unchanged day. There were a bunch of interesting corporate headlines out. Linda Yaccarino stepping down from X or Twitter. I don't know if anyone followed what Grok was doing yesterday afternoon. I can't help but think that maybe it has something.
I was paying attention to that one.
Might have something to do with it. Mike, before we really dive into that story and Tesla, let's talk about what's going on here in the S&P 500, where we have IVR below 10 now. Same thing for the NASDAQ, 8.6 on this chart. We're just pushing higher and floating higher. Dare I say, as a fellow bull, I was a little peeved when I heard you say this market's a joke. So tell me, why is this market a joke?
I mean, technically it's not. It's a real market. It's just
oh, good.
Yeah, in case you didn't know, it is real. It is tradable, but I mean, it's crazy. Like the rally from the lows, it's like a meme stock. Like SPX looks like a meme stock. But yeah, it's surprising to see the tariff headlines shrugged. Although, is it one of those cases where we already got the fear with them and now it's more of just okay, what are they? But it doesn't surprise me considering the level of the VIX we're at. I mean, when we get to the mid-teen, low-teen levels, if you isolate that in an SPY chart, it's up and to the right. There's still chop, of course, but yeah, yeah, I mean, if we stay in this level, if volatility clusters at these low levels, which is what we've shown with research, that tends to happen. When you see volatility in low periods, it tends to stay low for longer periods of time. You know, I don't know. I wish there was more volatility in the markets, but luckily earnings are just around the corner in a lot of these big name tech stocks, so maybe we can create some there.
Oh yeah, volatility is at a cycle low. We have these tariff news, headlines, data points, tweets coming out seemingly every few hours at this point. And yet all priced in. It was always all priced in, right, Ilya?
I mean, I don't think it was always all priced in, but I think now that we've sort of done the seesaw in the first half of the year, now the baseline seems to have been absorbed by markets. I think the markets came into this year, and we've talked about this at length, with the idea that the tariffs themselves were not going to be a scary thing conceptually because they'd been seen in the first Trump administration and wouldn't go anywhere different. Markets started to freak out when they did appear to be different, and business and consumer confidence appeared to not like it. Then we kind of had a crescendo in April, and ultimately the administration stepped back from those things that the markets were afraid of, and now we see that there's been a sentiment shift. So from April until right around now, right around the start of the second half of the year, we basically reset equity sentiment to say, no, hold on. It sounds different, but it actually is just about the same thing. There is more bark here than there was last time, but maybe and perhaps there is not more bite. And the thing is, we still don't know because there aren't really any deals on the table, but we do appear to be constantly getting a kind of what I've been describing as the guy at the bar that screams he wants to fight and yells at his friends to hold him back, and they're not doing anything. It's the kind of thing where even Peter Navarro came out today and was saying, well, obviously these letters to all these countries are a negotiating tactic. Peter Navarro of he's never met a tariff he doesn't like fame.
Ron Vara fame, yeah.
And was arguing strenuously for years that tariffs are a good unto themselves, not as a negotiating tactic. So this is, I think, from a sentiment perspective now, being written off, where the markets are basically saying, yeah, okay, fire, fury, bark, bark, bark. But what does it all mean? Well, we had a deadline today, ostensibly, but now it's August 1st. And then China in 2 weeks. And I don't think the market is any which way confused that if you got to a deadline and there wasn't a deal, there'd be a new deadline.
Well, the NASDAQ technically closes at a new all-time high today with this. Mike, before we move away from the volatility conversation here, could I get your opinion on what's going on with the term structure right now? It feels like the floor has absolutely fallen out in the spread between the front month and the back month, where a few weeks ago it was hovering like 5, 6, maybe coming back into 3 or 4. Now that's blown out to like 9 points. Is this the story right now, that front month volatility, until the big boogeyman comes home, we're just going to continue to fade this? It's going to continue to get sucked out of the market. And as such, a 16.49 vol for August, who's to say it can't fall lower?
Yeah, I mean, from what I remember, when we moved out of backwardation in COVID, and we went back into contango, I think the steepest I saw was like a 2-point or 3-point contango. And we are at 1.25 right now ish between Q and U. And then it does flatten out from UV to X and Z. But yeah, I mean, the lower the VIX gets, the steeper this is going to get. And, it feels like there has to be some kind of catalyst going forward that would bring us back into the 30, 40, 50 VIX range. Otherwise, I think we stay sub 20 maybe we hover between 15 and 20 and see some chop, but it feels like we're back in the what's the catalyst narrative.
I'm having
For
such
the
a hard
record,
time.
I would
Yeah, go ahead.
absolutely love it if markets crashed with no catalyst.
Of course you would.
But as opposed to with a catalyst.
Yeah.
Because with no catalyst usually means that something really wrong is afoot. And
Yeah.
you might really get a sell-off.
Yeah, if there's a catalyst, then there's an ointment, and once the ointment's applied, you go back to where you were.
Yeah.
But I find this volatility situation really interesting because it's, markets obviously seeing through Trump's tariffs, but where does Trump always chicken out come from? We don't say those words around here. They come from the fact that Trump backed off once the markets freaked out. You don't have the taco trade without the markets freaking out first. You don't have me giving our ode to the bond vigilantes in early April, Ilya, saying how they saved the economy, which they did, unless the market freaks out first. So there's no taco trade right now. It can't happen because the market isn't freaking out. Trump sees no reason to not push ahead with these things because the market's not freaking out. It's only once the market freaks out does he rein back his actions. And so what did the market tell us today? It's the bonds that get spooky, right? Those are the things that he cares about most. That's what he was tweeting about back in April. We had a 10-year note auction today, guys. Great demand. Stop through by 0.3 basis points, bid to cover ratio above the 6-month average. So we just put out this one big, beautiful bill, which looks like a steaming pile of crap, quite frankly. Okay. Bottom 80% of income earners are going to
So you're being
money.
generous.
Being very just the math. Bottom 80% of income earners in this country are going to lose money. Okay. So now we're going trade wars. We're financing deficits and debts. Oh gosh, bonds, notes are selling off from 112.5 down to 110.5. You're seeing the same thing in ZB. And then here come the auctions this week. 10s today, 30s tomorrow. 10s could not have gone better given the context.
You and I were talking about this at the beginning of the week, right? And we were saying how interesting it would be if instead of the sell America dynamic in these auctions, what we saw was lots and lots of demand, and whether that might suggest that people want to be locking in these yields because they think that rate cuts are going to be much more expansive than the Fed has owned because, of course, Fed funds futures are pointing to exactly that. And at least for the 10s so far, people want to lock in based on the auction results today. People wanted these yields today, and they wanted to lock them in.
So I think that's a good thing, right? We see lower yields. Stocks are able to climb on the back of the fact that there's a little bit less pressure in the market here. Mike, do you have any feelings on TLT, ZN, ZB right now? I can't help but notice the volatilities are really starting to fall out, both the belly and the long end of the curve. TLT has a 6.7 IVR. If you're going over to ZN, it's actually in negative territory at this point in time. When vol's this low, is it just a dead trade to you, or do you get a little bit more creative with perhaps some exposure you'd like to take, if you take any at all?
I think it's interesting to note. I'm looking at the probabilities for rate cuts, and last I checked in December, we just fast forward to where we might arrive in December, it was at between a 2 and 3 25 basis point cut. There was like a 90% chance that we get there. Now it's a 70% chance with a 20% chance that we only get one by December. But our first new shiny, exciting rate cut is projected to be in September. So yeah, I mean, I think you could play it directionally. Like it seems like these have moved a little bit, but if you think that we revert to what they used to look like, I think there's a trade there. And the nice thing about TLT specifically is that, first of all, it's trading at near multi-year lows, and volatility itself in there is so low that you can throw on a zebra back ratio spread and basically get into almost 100 deltas for a very low cost. Like in the 37-day cycle, whether you think TLT is going up or down, it's going to cost you less than $500 to get close to 100 deltas in there. I actually have that position on to the upside. I've got the 85-80 call zebra, for better or worse. But yeah, I think when we're in these periods of low volatility and the market's grinding higher, when nobody's talking about downside risk, to Ilya's point, if it does happen, there's no better time than to throw on some hedges now. When volatility is low, we're at market highs. You can throw on butterflies, downside diagonals in SPY or the Qs if you think we might see a reversal here. And it's not going to cost you as much as if you were to do it after it happens, of course.
Yeah, you mentioned TLT being at a multi-year low. I don't want to say that you were underselling it, but this is a monthly chart.
Mm-hmm.
If you bought TLT at the end of July 2006, there was a point today where you were underwater in that position.
I know. I got back long. I don't even pretend to Mike's option structures expertise. I did it in the very simple way of just a garden variety call vertical. I mean, this is a single digit IV in here. This is great. 86 to 95. Let's go.
Yeah. And even if you're going out further, like let's say you're throwing on some more leverage, like a leap option in Jan 2027 to Jan 2027 to get back to 95, it's only $300 in risk. And if you get there, that option more than doubles.
That's a really good point. We had the FOMC meeting minutes today. I don't think they told us anything new or exciting, Ilya. They said that a couple of officials thought the next
things there.
Well, they said a couple of officials might be interested in considering a rate cut at the next meeting, but considering in the immediate wake of the June Fed meeting, we heard that Bowman was out there saying,
"This is
we know who they are,
and this is Bowman."
Yeah, and like
this is the couple. There's the one, and there's the other.
And the Fed uses very specific language when it describes things. So like a member versus a couple of members versus a few members, right? Versus some members and many. Like there are literal numbers attached to each of these, and they scale up. Like 1, 2, couple is 2, a few is 3. Some is 4, many is 5, half is 6. Right? Looks like you can just work your way up. We know who they were. They made themselves publicly available immediately after the June Fed meeting, saying that they thought that July could have a cut, which we've all joked is an open audition to be the next Fed chair. Okay, so we have that in the minutes. We also see that structural inflation is going to be a little bit stickier, although I can't help but wonder if the Fed is leaning on a little bit more theory than reality right now, Ilya. And I want to just point to their own Cleveland Fed Now inflation dashboard. The current run rate for July CPI, and granted, it's only July 9th, but we're tracking prices in real time here with thousands of data points. July CPI at the headline is tracking at 0.16% month over month, which if you annualize that for everyone sitting at home, 1.0016 to the 12th, you're going to get an inflation rate roughly 1.93% year over year. If you go out to one of the juicier readings, like 0.24%, you're going to get an inflation rate that's closer to 2.94% year over year annualized. But in this range, if you're getting month over month readings in the 0.16 to 0.24, that's going to be wrapped around 2, maybe a little bit above it in some cases, but it's pretty darn close to 2. So where's this inflation scare that the Fed is worried about, that we're all worried about, their one-time price adjustment before things go back to normal and we get more concerned with the growth fallout? Where is it? And if it's not here now, why?
It shouldn't be here now. It shouldn't be here now. This is absolutely normal. And this sort of speaks to the Fed's conundrum here, and arguably why they went down from 2 cuts to 1 cut in the SEP for 2026 when they issued the June update. The idea that you're going to see a tariff pass through to consumers before you know what the tariffs are. Remember, we're in the midst of a 90-day now, 100-day pause after the update, give or take. 110?
112 days.
So what tariffs? at this point, we haven't had the tariffs actually take effect to their sort of fullest extent. And this sort of speaks to why when the Fed is writing their statement in June, they say uncertainty has diminished but remains elevated. Well, that's a relative statement. Relative to May, relative to March, when the Fed is saying, is he serious about this foam board stuff? Is he not serious? When is it going to happen? If it does happen, that'd be a shock, but it hasn't happened. He's put it all on hiatus, and in any case, it takes time, because what did we see in first quarter GDP numbers? Historic jumps in imports as people were front-running these tariffs. There is a ton of inventory near term to shield consumers. That was what the first quarter GDP report was all about. Massive surge in capex through inventory building, and massive surge, 40% and change on imports. So the costs are not supposed to be showing up right now. We see in the PPI data that the companies where you do see these tariffs are eating it and taking the hit in margins and not passing it on to consumers. So it's not supposed to show up yet, which from the Fed's perspective is every reason to think that what they're saying and what they're worried about just keeps getting pushed back by all of these delays, which means that they are not going to have certainty about what to do in size in an extrapolated way on rates for a longer and longer time, which is funny because the administration is obviously wanting them to cut and creating every condition for them not to do it.
Mike, if this is a crazy market where nothing makes sense, can I invite you into a rabbit hole of crypto?
I would love it.
Hey now.
Please.
We've been entertaining, a view here, and we put one of the positions in the follow account vis-a-vis IBIT in the long 75, short 85 call spread, 72 days to expiration a few weeks back, because this looks like a fairly textbook, and I don't have it near me, but I would literally pull out the page for what a parallel channel or a pennant flag looks like following a breakout. It's bottom left to top right. You have a very clean retest in April of basically the swing levels that you have from March of 2024. And now this triangle, this parallel channel, however you want to have it drawn, today we clock a new all-time closing high here in IBIT, in the futures market. This looks like this thing is getting ready to go. And the measured move of the consolidation gives us a $135,000, $302,000 price target in the short term, which in IBIT terminology would see us go probably towards $76. But look, if we're gonna run up deficits and debts, right? Where do the wealthiest put money? They don't buy more stuff. Can only have so many pairs of blue jeans, so many cars, so many homes, literally. They just start to put it into the market, and you have to get your return somewhere, don't you? So you take a little bit more risk. You don't buy corporate bonds. You buy equity. You don't buy, mega cap tech. You buy small cap tech. You buy value, even if you're feeling really crazy. But eventually you get to crypto because you got to find a return somewhere. This chart looks insane to me. I can't. So, I guess pop my enthusiastic bubble here. Why shouldn't we be using this opportunity to buy even more?
That's a great question. I mean, I am dangerously long crypto, but I mean, it's. I think it's. Well, you do know what next week is. Next week is crypto week. That's not even a lie. If you search crypto week, it is a designated week by the U.S. House of Representatives. But yeah, I think
that was like Shark Week. Like the Discovery Channel comes out and looks at a bunch of incels in their mother's basement, and like David Attenborough narrates it.
Yeah, I mean, I think there's a lot of positive. I think there's a lot of positive things happening in the crypto space, and it's still really early. Like, I mean, a couple months ago, we were talking about how there's a lot of people saying it'll never get to 100K. And now 100K feels like the floor in Bitcoin. And the more capital that goes into it, the more asymmetric the price is going to get, because, you know, once all the coins are mined and we are stuck with the finite cap in Bitcoin, like if more capital keeps going into it, of course the price is going to go higher. So, and I do see it as a digital gold type asset. And I think we talk about this every week on Monday on Option Trading Concepts Live with Ryan. Bitcoin dominance in terms of all of the flow of capital going into the crypto space, it hovers around 60%. And I think it'll stay above 50% for the long term. If other capital flows into other places, it's because something has happened that's big. Maybe something was created on Ethereum and it's used everywhere, something like that. But I mean, at the end of the day, if you compare Bitcoin's price history, even over the last couple of years, it outpaces a number of other benchmarks. So I think it's here to stay. I think we'll eventually get to 200K, eventually get to 300K, because it's also another way to put it is like, okay, if inflation is here and if we're going to be at a higher rate of inflation than maybe we want to be at, what does that do to asset prices? It's just going to continue to inflate asset prices, and Bitcoin is one of them. But Bitcoin has a finite supply, so I think you have that upside pressure. And right now, speaking of low volatility, Bitcoin is at levels of volatility we haven't even seen. Like the actual Bitcoin volatility itself is sub 50% if we're looking at the futures. So I think if we get a big move to the upside, we will see an increase in Bitcoin volatility. And that's where you could really see the gates fly open here.
Gates could fly open here soon. Ilya, I know this must disgust you. All of this crypto.
Oh no, I just
talk. Can you go ticker agnostic for us here, though? Like,
sure.
Pretend this.
Sure.
How does this look?
Not great. Not great. And I'll explain why. It's for the same reason that it's looked not great this time last week, the week before, the week before, the week before, because for weeks we haven't gone anywhere. We're still sitting at the highs from late May. We've not broken the
And where are all the goons? Where are all the goons on their boats in Miami and their rented Lamborghinis driving around bragging about how they've nailed the crypto market? This has been quiet. That's great. It's great. No one's celebrating.
I don't know if it's been great when you consider that, and we'll take a step back from ticker agnostic for just one.
Yeah, childhood trauma. What's your problem with all-time highs?
It's very simple. You don't have any movement out of the range that's established a double top for you going back to the beginning of the year, late last year. You're still stuck at the same levels. Maybe you break higher, maybe you don't, but you haven't. That's just on pure technical grounds. But for a second, let's take a step back and say this is a non-yielding, high beta risk appetite type of an asset. Stocks have been surging. Not this thing. The dollar has been selling off through the period of this congestion. This thing is denominated in dollars. It hasn't rallied. It's still in the same range. Bitcoin's
outperforming SPY this year.
If this is I'm just looking at the price action dynamics. Since this thing topped, and it's back now to testing the top of the range that we've been looking at, that top, let's call it late May. So for the better part of a month and a half, let's say, we've gone nowhere. We've oscillated in a band. Okay, what has happened over that period of time? Stocks have ripped. The dollar has sold off. These are ingredients for Bitcoin, you would think, to be soaring, and yet it isn't. When an asset doesn't rally in a very positive, under any circumstances for it, type of an environment, that asset is inherently weak.
It did rally, though. It's up 18.77% year to date. It did the rally in April when it outpaced the rest of the market to the highs. I feel like the rest of the market's catching up now. Like, this was a period of time from mid-May onwards.
Maybe.
Where, like, instead of allocating incremental dollars to crypto, people started allocating incremental dollars back into stocks, because this is really all post-Geneva, right? The pause in Bitcoin's rally is all post-Geneva, U.S.-China meeting in Switzerland. And then that's when the stock market takes off.
I mean, you can have any number of theories as to why it's not continuing to participate, but you can see that the bounce from April lows is the same bounce that stocks have from April lows. It's the post-Liberation Day bounce. You can see that the seesaw here from mid-February to April, then from April back up, mirrors the seesaw in the S&P 500. Only the S&P 500 has now surpassed its highs from the beginning of the year, and Bitcoin is struggling. So, to me, disregard my general skepticism of the space. If you look at an asset that is essentially S&P 500 on steroids type of asset and has generally behaved that way since late last year, same top in late December, same digestion through mid-February, same sell-off into April, same bounce. It's the S&P. Dynamics-wise, only the S&P is at a record high. And this thing hasn't managed to take out its high now for, in a few weeks, it'll be 2 months' time. So far, let's say about 6 weeks. So, by any measure, this is an asset underperforming the dynamics of risk sentiment. Why? Who knows? There could be 1,001 reasons. But it is, and that much is clear. So, if an asset is going to reveal itself to be inherently weak to its benchmark, well, I don't see anything particularly enthusiastic or positive to think, my long-term skepticism entirely notwithstanding.
We'll leave it to the chat. Do you think Ilya has a point here, or should he go get his corpus callosum checked? Well, there are gradients in between, but that's where I should scale this. That's where, as someone who's long and
it's pointless. We already know what we're going to see there.
Let's revisit after ccrypto week. How about that? It's coiling for its 20% moonshot. That's what's happening.
Unless, of course, it's coiling for its 20% sell-off.
But really, actually, one thing I wanted to say that I forgot to mention is, the future of money was always faster and faster and faster, instant. But, right now we have like ACH. Like if I withdraw or deposit, it'll be there the next day. That's too slow. So like the solution for instant settlement is a crypto solution on a crypto ledger. So I think that will be the first use case that is broad-based in the world that we know today, where you can have settled cash through a crypto solution to ensure or to get to the instant money transfer that everybody yearns for. Because like right now,
I agree. I just think it'll be a CBDC.
Sure.
Such a shell. Such a
But crypto week next week, everybody.
Has ever given up the power of issuing legal tender?
If you have dollar pegged, I don't think it's going to be the U.S. economy that gives up the taxation.
No, willingly, and not under pain of utter economic ruin.
We're getting some chats. I thought Tim Knight was the resident bear. Ilya's painting a picture of doom and gloom. Ilya needs a puppy or something to bring him joy in life.
I have kids. My hands are full.
Fair.
Today with yields coming in today, though, today was a good day for things that tend to be rate sensitive. So, tech leads the way up. Semiconductors have a relatively strong performance, although only edging out the NASDAQ by 5 basis points there. I can't help but think, again, kind of like Bitcoin being quiet, Mike. You don't see the parades happening this time around. Where are the fireworks for NVIDIA hitting a $4 trillion market cap? And I know they were like the CNBC stories and the headlines were out there today. But it felt like when we were approaching $2 trillion, it was a big deal. When we were approaching $3 trillion, it was like the lead story in financial news. NVIDIA is growing so fast. $4 trillion is here, and everyone's like, oh, yeah, kind of expected it.
Yeah.
What does this tell you about sentiment in the stock right now?
I mean, it's a historic moment for sure. But Glenn today out from the Tasty FX team had an all-time quote. He said, they say getting to 4 trillion is the hardest. Getting your first 4 trillion is the hardest. Yeah, I mean, I think there's a couple of interesting ones, like NVIDIA's going to the moon, Coinbase going to the moon, likely front running potential legislation for crypto. But yeah, I mean, were you like, what? It doesn't surprise me. I don't know what to say. Like when NVIDIA dropped below 100, the multiple times that it did, it just like rockets back to 150. So I don't know, man. I think it's just a product of where we're at right now. And I don't know. Is this could this be tied to the bill and the AI legislation in there?
It could. That's such a good line by Glenn, by the way. This may be dating some of the audience, but in 2012, Drake, of all people, tweeted out, the first million is the hardest. Yeah. And then naturally, oil financier, who has since passed back in 2019, but oil financier T. Boone Pickens responded to him, the first billion is a hell of a lot harder. which goes pretty hard. Like, good on you, 90-year-old man dunking on Drake. That's awesome. That's fantastic. Okay, so
that sets off an auspicious sequence of events, only to meet its crescendo at the hands of Kendrick Lamar.
Yeah, I was about to say one of those sliding door moments of life where Drake just
through Pusha T to Kendrick Lamar, and it's not looking good thereafter.
All right, we haven't had a chance to talk about Twitter today, so let's talk about the 800-pound Mecha Hitler in the room. What the hell happened on Twitter yesterday, Mike? Why did Linda Yaccarino step down? Like, I want to believe in these companies. XAI has a very impressive. Can I retract that? I don't think it has an impressive model anymore.
No, it doesn't.
Elon Musk's portfolio of companies between SpaceX, Neuralink, Tesla. I mean, Tesla merging with XAI. We've heard a number of analysts talk about the upside potential. He just can't seem to stop stepping in it, though. What do you do with Tesla here, Mike? It's not like there's a ton of vol on the board.
I mean, the good thing about Tesla is it continues to provide volatility and implied volatility. So selling premium there, if you have an account that you can do so in, has been nice. It's been in this range. I mean, it's super volatile, but you can capture that range and still get paid because we're sitting in a 60% IV, and that reflects a low IV for Tesla with an IV rank of 17. Yeah, I mean, but Tesla's one of those weird stocks where it's like, it doesn't really matter what they say or report for earnings. It's like all sentiment driven and all tweet driven. I actually saw some tweet. It was pretty funny. They were like, I just can't stop myself from shorting Tesla because I just don't see a world where Elon doesn't tweet something ridiculous about this bill over the weekend. And he sure did. And it was down this week, pretty much all week. But
what's your edge in the market? I know that Elon Musk can't help himself.
Literally. But yeah, I mean, they have earnings coming up.
How'd you pay for college, Dad? I shorted Tesla anytime Elon Musk tweeted.
That's a meme for the ages. I'm pretty sure Tesla's the first company that is going to report, like one of the first big ones in the Mag 7 that's going to report, July 23rd. I'm trying to see if the other ones are close, but yeah, I mean, 29 point expected move, almost 30 points, almost a 10% move, even given all this. 10% move for earnings is big. So we'll see. We'll see. I got to stay defined risk in there though. It's too big of a product for me.
It's very big. That's actually we were having this conversation earlier in the week, and I was saying, you know what? Even I'm looking at maybe buying Tesla here if you want to be fully ticker agnostic and just look at the chart and go, we're in the middle of a range, we're on support. The risk reward is great here, but ultimately it's too big. It's too big. I can't structure even a vertical that I like here that would keep my loss to within, let's say, 2% of equity max. And it's just not friendly that way. Now, if you have a larger account, Godspeed.
Can I put this little chart up here for fun when we think about these conversations about Tesla and whether or not it's going to stay a car company? China's EV sales have actually surpassed total U.S. vehicle sales. Those are ICE engines and EVs. So this idea that like China is just going to get into the European market or it's going to be allowed into the U.S. market, that would probably kill the U.S. auto industry. Maybe Trump's onto something there. But this is Tesla's worst. This is the worst thing for Tesla. And that's why merging with XAI is so important for the company, because its margins would absolutely get eaten worldwide. You can't compete with BYD and Xiaomi, right? Given how cheap they produce those vehicles. Mexico is flooded with them right now.
Well, and we know why this is happening.
Excess,
right?
believe
This
excess
is why
capacity.
we have anti-dumping legislation in the U.S., in Europe, in Australia, increasingly this conversation, because China hasn't had consumer demand for 2.5 years. They're on 8 consecutive quarters of economy-wide deflation. Nobody is buying these things in China, and so they're dumping everywhere because the overbuild is huge.
The overbuild is huge right now. I don't know if there's a Tesla trade in there, Mike. You talk about it being a big product and, thinking about retail traders' account sizes. If you're trading with something 10,000, 25, 50, 100K, taking a position, even doing a simple risk-defined short call spread, short put spread, it's going to still, if you're on a 25K account, it's going to take up 6% of potential account equity on a single position. For a guy who can't stop tweeting, lots on the line there. XLY, of which Tesla is a major component, is continuing to grind to the upside. You see XRT today, a similar type of performance. It's hovering here after a little bit of a breakout. The names that you'd want to see hold up in a risk-on, growth-favored type of market, they're mostly there, right? The only sectors that I think you could perhaps be a little bit disappointed in today, the banks. The banks have been coming off here after touching fresh all-time highs just 3 sessions ago. But that could just be sector rotation, taking apart some winter because banks were literally finished the first half of the year effectively on their yearly highs, and you're shifting into other assets that have underperformed. That's typical for the start of a new quarter for the new half of a year in any event. Mike, talk to me a little bit about the metals here. Do you have anything going on copper? Did you get caught in copper yesterday? I was with Jamal on Futures Power Hour, and he had the unfortunate situation of being in a position while the tariffs were announced.
That is unfortunate, to be sure. I have not traded that HG really at all. I had a micro copper position on. Trying to see what I did here. Actually, no, I had an HG position on back in May, but it was a short put spread. Sorry. Yeah, short put spread, 4645, and I closed it like a week later for a small profit. I think it's interesting, this move and the subsequent reversal, but yeah, I think right now, especially with this move and how big it was, I think it's a hands off for me until it kind of normalizes. I still have that gold position on, but it's probably going to be a butterfly that expires worthless. We'll see. But I've got a downside broke wing butterfly in gold. But yeah, we were joking, like if you've been breaking into abandoned buildings and stealing copper pipes, like now's your time, right?
That's exactly the time. And you know, I'm looking through my own house. I'm like, should I take out the copper pipes? And my wife's like, don't start ripping out the walls, please. You know what's great about what's really fantastic about these copper tariffs? You know, forget whatever they do to inflation. They're clearly going to spur a new wave of mining here in the U.S. I'm sure most people know that copper mines, they're basically like planting grass. They just grow out of the ground. Oh no, wait, that's not how they are. According to S&P, according to S&P Global, and this is research as of April 2024, the average lead time for mines in the United States of America is 17.9 years. So we just did an executive order for tariffs to incentivize copper production in the United States. We will let you know the results of this tariff and its efficacy in 2043. Oh crap, this isn't going to solve anything at all.
That is wild.
This really speaks to kind of the political, shall we say, lack of understanding, to say generously, on both sides of sort of the American political conversation, where one side says we need more affordable housing, but then doesn't want to reform the permitting rules to actually get the housing built, and then the other side goes, we need more copper mines, and also doesn't want to reform the rules to get those things built, and so nothing gets built. And so the inventory for everything is low, and the lead times on anything, any kind of construction, unless apparently you're Josh Shapiro of Pennsylvania and you figure out a loophole, takes a gazillion years and a half.
Yeah, people should just do things, and then like ask for forgiveness later on.
We don't do things a lot.
Yeah, I have so many thoughts on this. Google today, OpenAI announced that they're going to be pursuing their own browser, which I guess, you know, everyone and their mother uses Chrome. No one who uses Edge, but it's a 40.4 IVR. We got to be moths drawn to the flame right now. There's just not a lot of volatility in a lot of places. So looking through the Mag 7 names, Meta has a 27.9. NVIDIA is on the floor at 5.9. Apple, okay, 25.5. But then Google, I mean, it's 40. So I suppose if you're looking for an opportunity, Google presents you with one. Mike, do you have any feelings on Google here? Surely it's doing something for you at these IVRs.
Yeah, I'm gonna be bullish on Google and Apple when it comes time for earnings. I'm gonna wait for earnings though, just to see where we're at with the market. But I will likely do call diagonal spreads in both of them, where I'm selling the weekly cycle where earnings are, and then buying September. That'll give me like a nice 60 days in the long option and a big cost basis reduction in the short. I just think when you look at these huge companies that have not participated in this move, I think eventually there will be a time where there's a sector rotation, and maybe you see some cash come out of NVIDIA, go into Google, Apple, something like that. We've seen it before. We'll see it again. It's just, you have to be able to withstand the variance of that and that not happening for some time. But I think given the low levels of volatility in the general market and the fact that a lot of these companies typically post good numbers, it's just a matter of how the market digests it. I think there will be more of an appetite for markets to move higher after these companies release good earnings, if they do, given the VIX at 16. I'm more worried about a situation where, investing in a bullish position in Apple or Microsoft or Google in a 30 VIX is a harder sell. But when the VIX is low and they haven't participated, it feels like maybe market participants are looking for a little less of a sales point to get long.
We some of these stocks, Ilya, that we've just called out here in recent months, we joke it's our all-American profile portfolio. Johnson & Johnson, McDonald's, Philip Morris, Netflix, DraftKings, and Eli Lilly covers you from birth to death and the entertainment that you need in between as an American. A little bit of sports gambling, a little bit of streaming, fatten yourself up on McDonald's, trim down with Ozempic, everyone's happy.
A little bit from column A, a little bit from column B, as it were.
Yeah, right? Like, have a problem, take a pill, as Job from Arrested Development might say, quickly becoming the reality. You're seeing all these kind of companies, they're continuing just to pump and pump and pump. Netflix was up 1.02% today. Eli Lilly had another good day. It's been doing nothing for a while here, but it's up 1.14%. You're seeing some of these huge names. Microsoft. What's going on with Microsoft here? Another all-time closing high. Quietly putting in the work.
Crazy.
Why is Microsoft not worth $503.51 a share? Seems perfectly reasonable to me.
It's a great question.
I don't see a reason. Let's go into ticker agnostic land. There is no reason in my mind to think that this is a short because the price action is just not showing it. But when you look at a daily chart and you see the sentiment divergence, or at least the momentum divergence, name an oscillator. It's flattening. So just in pure arithmetic terms, the capacity, because what does it tell you, right? Let's take a step back. What does it tell you that an oscillator, doesn't matter which one, MACD, histogram, if that's what you like, slow stochastics, if that's what you like. I like RSI because it's a single line that you could put on the chart with a dull crayon. That's my style of technical analysis. But that doesn't matter. What does it tell you that the price is setting higher highs and an oscillator is flatlining? It's telling you momentum is being lost, not hypothetically as a function of arithmetic, because all of these things are just measuring the propensity to close up relative to close down in various different ways. They arrive at the math in a variety of curious ways, but that's all they're saying. Tell me how likely it is that something closes up relative to down, and stick a moving average on it, and tell me what the relative propensity is. So if the price is setting higher highs, but it's losing its ability to close up relative to down, momentum is fading. Now, is that necessarily the indication of a top? Who knows? But it's certainly the indication that the thrust in the move higher is losing steam. And by the way, you're seeing it in the indexes as well. Most ominously in the S&P, you're seeing it on the monthly chart, which has been the precursor of declines in 2022, 2020, 2007. When you see that kind of thing on a monthly chart, it's not great. So any of these names, Microsoft, whatever, is there a reason to short them now? No. But are they telling you should be jumping in with both legs and buying everything that's not nailed down? I wouldn't do that with your money.
Oh, well, you're not that good of a friend, I suppose. We wind down the show here. Trump is slapping a 50% tariff on Brazil, which is interesting because we ran a $7.4 billion goods trade surplus with them in 2024.
This, by the way, is my only big equity long, is I am increasingly long Brazil.
I got bad news for you, buddy.
It held support today. I actually added on this.
Well, look, the whole, if we talk about the incoherence of tariff policy, because we're entering a potential window where China has lower tariff rates than a number of other countries, which then would incentivize producing more, not less, in China. Slapping a 50% tariff on a country for whom we already have a trade surplus with does not incentivize more production of our stuff here. Doesn't do anything. Does nothing. Doesn't do anything. So
doesn't really hurt Brazil either, by the way, because they're not really a very big trading partner for us, and they run a deficit anyway.
Yeah, and all any of these trade tiffs that we've had with Brazil, China have done what? We've had to bail out our farmers. Okay, sure, we've raised. Yeah,
they've encouraged China to buy soy from Brazil. That's really it.
Yeah, like we've lost significant trade flow with our soybeans with China. Brazil is now literally clearing the rainforest to plant more soybeans to sell to China. And for all the soybeans that we no longer sell to China, what happens to the farmers? The farmers are bailed out. There's an easier thing here. Don't slap on the tariffs that raise $50 billion of revenue, which then you need to pay directly into the pockets of the farmers so that they don't go under. If I could just one more thing about this, how bad some of this policy is. You know what was in this beautiful bill that was just passed, guys? There's an excess food program that we've been running in the country for a number of decades where Kansas farmers, if they overproduce their wheat, they can sell it to the U.S. government at a guaranteed price that the U.S. government then sells abroad, right? Everyone makes a little bit of money, guaranteed production, guaranteed demand for your good, right? If you're going to be a farmer, you got to know someone's going to buy the crops you're going to plant. Otherwise, you don't plant them.
And a boost in U.S. exports.
Boost in U.S. exports, boost in U.S. jobs in middle America. And we just killed that legislation. So
sustaining farming capacity, by the way, should we ever get into a tiff with someone whereby we had to be self-sufficient and didn't have access to export. So a national security thing on top of just generally economic common sense.
Well, not much of that going around these days, particularly here. There's none going on around here, that's for sure. Overtime is out of time for today. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco and Mike Butler in Chicago, I've been Chris Vecchio in New York. Do stick around, though. Ilya's going to be back with Macro Money after a break. I'm around later with Vic Jones for The Price of Truth. Good luck trading. More Tasty Live coming up next.
See you there, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Do you believe the efficient market hypothesis holds up completely, or do you think that there's some merit to technical analysis?
Technical analysis has some engagement merit, meaning that it might get you excited about doing something, but you can't validate anything in technical analysis. So I'm purely an efficient market theorist.
Markets are efficient. I don't care what anybody says.
I think there's definitely merits to technical analysis just from a psychological standpoint, where you see certain levels, you see prices bouncing off of lows or kind of being resisted from higher points. But at the end of the day, you need to prepare for being wrong. It doesn't matter what you're looking at. It doesn't matter what your assumption is or how you arrived at it. You should account for being wrong in that scenario. Basically, it comes to trading small and playing the probability game versus seeing one thing or having one thing and then going all in on that one thing. I think technical analysis or fundamental analysis, if it helps you be comfortable with your decision-making process, then I'm all for it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Well, the FOMC minutes came and went, and we did not learn a whole lot more than we thought. And so far, so good, supposedly. But stocks do need a new catalyst, and perhaps one place where there could be a place to look is outside of the US, because we do, of course, have a very quiet week this week. So that's what we're going to do here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is consider if we have a little bit of help on the way after some interesting economic data that we saw coming out of China over the past 24 hours, and consider what comes at us downwind, because there is quite a bit more from the world's second largest economy that we're going to hear through the weekend here and into next week. And on that, give perhaps a little bit of context and a little bit of background for the way in which the overall global landscape might be shaping up here. And with that, of course, back our way into a conversation about stocks and the sort of larger impetus for U.S. markets and what all of this might ultimately mean. So let's begin here with a look at what exactly is on the menu here. First, of course, the view of inflation that we just saw over the past 24 hours. And we can see here that we get a little bit of a wiggle higher after 4 months in negative territory on the consumer price index. In fact, it's a little bit stronger than expected, 0.1% month or year on year rather. And it's not, of course, a potent rise in inflation, but you do have to start somewhere. And you could make the argument that there's perhaps a little bit of a semblance of demand returning. China has been a story of anemic inflation for quite a while, as we can see here. But maybe this is a green shoot. And then we look at the data that came alongside, and those types of hopes seem to evaporate. The month-on-month number, 0.1% on the downside. In fact, we've only seen 2 increases in inflation out of the past 6 months. 4 of them have been on the negative, so the dynamics here are not especially encouraging. And then if we look at the level for China's CPI, this is not year-on-year rates, this is the actual index. We can see it's been locked in, give or take, a 1% up and down range here, oscillating for over 2 years. And so this 0.1% increase that we see here looks more like statistical mirage than it does anything that's extrapolating. It appears to be more about a sort of return to average, a kind of retrenchment back toward the mean, rather than in the year-on-year numbers, that is, rather than a something that might suggest there is a build higher in the works. And so when we look at the overall story, it seems like we haven't gone much of anywhere, just saw some statistical rebasing in the numbers rather than marked any kind of a meaningful improvement. Moreover, if we look at wholesale inflation, we actually get the steepest deflation here at 3.6% year over year that we've seen since July of 2023. So again, almost 2 years. Moreover, the pace of disinflation has been or deflation rather, has been very steady here for a 4th consecutive month. PPI is down 0.4% month on month.
Now, first of all, that's a step deeper into negative territory as compared to the preceding 4 or 5 months. But more importantly, perhaps, what this is a very steady pace that's taking us further and further into negative territory since the beginning of the year. And of course, what all of this suggests is ebbing demand. When prices rise, that is because there is more demand for a given supply of goods at a given point in time, and that bids up costs. That speaks to demand. Economic growth and inflation go hand in hand typically for this reason. But when you have the opposite, especially here, very tellingly in wholesale inflation, so pipeline inflation before it gets to consumers, what you see is waning since the beginning of the year. That speaks to eroding price pressure and, in fact, backsliding in the opposite direction when it comes to demand. This is prices being cut. This is discounting. And discounting speaks to an absence of demand and is aimed at attempting to spur that demand with lower prices. So when we see this slight wiggle in CPI on the upside, it's tempting to say that this is demand. But when you see this occurring at the wholesale level, and this, the story for essentially 2 years' time here, more, it really doesn't strike as the plausible explanation that we're finally seeing signs of life in China's economy. And indeed, last week, the PMI numbers that we saw echoed the same story. This is the official set of numbers from CFLP and NBS. We can see here we're hugging the 50 line on these PMIs. Of course, as ever, 50 is neutral in the logic of PMIs. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what you find here is we're basically hugging 50 now for about a year and a half, and increasingly closing in on just oscillating around that level. We're a touch higher than that on the composite, as we can see here, but only just a bit, suggesting the economy is near standstill. It's growing, but very slowly. It's a similar story when we look at the Caixin and S&P Global version of this data. It's a little bit headier in the sense that we're a little bit above 51 on the composite index, whereas we're not quite there on the government version of the data. And in general, we can see this is a little bit more volatile. We saw this decline sub 50 in the prior month. Now we've overshot a little bit into the low 51s, but the trend here is unmistakable. And again, we're hugging that 50 level right down the middle here. And so, and the trend has certainly been lower into it. So economic activity here not looking great and not really going very far. That sets us up for a very interesting set of numbers incoming. We now are looking at these import-export numbers due over the weekend. That'll be a very interesting part of trying to discern where the front running of the tariffs with the U.S. has hit a wall, and the weakness of domestic demand once again starts to overshadow much of anything else. We're going to have a funding data over the weekend into Monday, and then this is, of course, Sunday in U.S. terms, Monday in China terms. And then midweek, we're looking at a first look at second quarter GDP, where it looks like we might see a meaningful slowdown if all of these numbers hold up and all of this type of front running really has run its course and was mostly a story about the end of last year and the first quarter of this year, as of course we saw with such great effect in U.S. GDP statistics and their massive surge in imports and in inventories in the first quarter. Now, the trend would bear that out. Exports for China have been slowing for 3 consecutive months, or 2 consecutive months from the peak 3 months ago, to be exactly accurate. So it does look like you got this surge around the front running of the tariffs at the start of the year, and since you've kind of fallen back to where average was, going back to, let's say, late 2023, start of 2024. And of course, moreover, for imports, we've yet to see an increase in imports for China this year. All of the numbers so far this year have been versions of negative, which really tells you just how anemic domestic demand looks. And so with that in mind, we're looking at a situation here where it seems to be that the overall sort of picture hasn't really improved in any kind of a material way from where China has been over recent quarters. And that doesn't paint a very encouraging story as we get into the second quarter GDP numbers next week. This is a view of China's GDP numbers, nominal relative to real. This is a chart we come back to over and over again as we assess what's going on here. And the main takeaway here is that real GDP is running above nominal. Now, nominal GDP is the value of all the goods and services produced in the economy without taking out the influence of prices. So that includes inflation. To get a sense of what the value is outside of inflation, you subtract that inflation and get real GDP. So when you take the difference between real and nominal GDP, you get a sense of what that inflation coefficient is, economy-wide. And what we see here then is when real GDP runs north of nominal, that means that to get from nominal to real, you have to subtract inflation. That is to say, nominal only gets you higher real if you add to real negative inflation to bring it down to nominal. Or alternatively, take nominal and subtract from it negative inflation, which you can see there's the spread right here. And what this is telling us is that for 8 consecutive quarters at an economy-wide level, prices have been falling in China to the tune of close to 1% of GDP, which is staggering and speaks to a near total absence of demand. Consider how this stacks up with the COVID recession and how shallow of a baby negative reading you get right here. And then consider that for 2 years now, China has been mired in a deflationary spiral that basically speaks to the entire economy having been relegated to the discount bin. There's overwhelming overcapacity relative to demand. Now, we have, of course, seen a tremendous amount of stimulus efforts come out of China, and perhaps they're starting to bear fruit to some extent. We are seeing a rise, finally, over the past 2 months, in the share of new loans in GDP. That's what this credit impulse index is. It is a ratio that measures new loans as a share of overall output. And of course, we've seen that only in the past 2 months has this finally started to perk up. But is it in fact as positive as it looks? Are we actually seeing this money getting deployed to drive demand? And again, looking as we like to do at household bank deposits, the story appears to be no, because the spread between demand deposits, essentially checking account equivalents that are there to be spent, that are callable instantly, essentially the same as cash, and time or demand deposits, essentially savings accounts that are sort of in the realm of CDs, where you put money away and lock it up and set it aside, so money that isn't earmarked for immediate consumption. We see there that the spread in favor of savings accounts versus essentially checking or demand deposits is absolutely surging. Here are these time deposits, here's demand deposits. This is the biggest disparity of this kind as far back as the data goes. And so perhaps, yes, people are lapping up all of the cheap money that Beijing has made available, reasonably enough, of course, but it doesn't look like anybody actually has confidence to consume anything. And they're stashing the money because they expect some sort of adverse outcome downwind, or at least want to be insured against one with as much dry powder as they can be. And this, of course, is where we circle back to the overall global story that then is implied in looking at all of this. And this comes, once again, from the PMI world, and it's a chart that should be familiar by and large, but of course now we have it fully updated for the month of June. And this is comparing the composite PMI numbers for the US, the Eurozone, and the two versions out of China. Now, here we can see, here's those composite PMI numbers. For China, as we said, the official number is 50.7, Caixin 51.3. So they're just north of standstill, but we can see they've been hugging that standstill really for at least a year, but going back easily to where the economy basically landed after the reopening from COVID restrictions in late 2022 going into the beginning of 2023. Soon as that COVID rush ran its course and everybody essentially came out of lockdown and all that pent-up demand had its splash, we've essentially slumped back to anchored at essentially barely any growth at all. The Eurozone is in an even dicier spot here, though the latest PMI at 50.2 puts them effectively at standstill. And so the only real growth in town still looks to be the US, where we still have a relatively healthy, if lower, setting on growth than we did at the end of last year. We can see in the second half of last year, US growth was very strong, going back to levels unseen since 2022, and really marking a very stark departure from everything else that we see in the other two major economies. And of course, we know why these three, this is another chart that we keep going back to all the time. This is showing us that 58% of global GDP is just these three economies. China, the second largest, the Eurozone, the third, and the rest of world, largely vendors to the former three. That is to say, they don't have very much independent demand generation that they do. They depend on there being growth and demand in the US, in the Eurozone, and in China to generate the bulk of what they contribute to the global pie. So, with this in mind, here's where those three pillars of growth stand. Two of them are close to offline, or at the very least not going very far, and haven't been basically since the middle of last year, when they both sort of slumped to neutral and where they still hold. Whereas the US, again, although there's been a level shift in growth downward, still seems to be attempting to pull this whole apple cart all by itself. Now, that's well and good unless something untoward happens with US growth. And of course, what U.S. bond markets have been telling us, as we've been saying at length here, is that that's exactly what we're seeing. U.S. economic growth apparently in a situation where the markets anticipate some variety of slowdown, because we've seen that break-even inflation rates, taking us back to that conversation where growth and inflation go hand in hand because it is demand that pulls inflation, we find since the beginning of the year, break-even rates implied in 5 and 10-year U.S. Treasuries have fallen. And that was around the growth scare with the rollout of the Trump administration's tariff architecture. And while sentiment around that story has clearly improved, we can see the S&P 500 was falling with those break-even rates and now has clearly unwound those losses. The break-even rates remain near the lows. They continue to oscillate here at lower levels than they did at the start of the year. Now, that, of course, comports with this step down in U.S. growth and suggests that whatever is happening with U.S. economic activity, it's more so trending toward convergence with standstill in China and the Eurozone than the other two are trending toward convergence with U.S. growth. And this makes for a vulnerable environment because, of course, that means that the global economy as a whole is operating with no safety net, and China is in no position to be an offset if the U.S. economy missteps. Now, it's managing to hold it up for now, but as we look at what the bond market is signaling, as we look at the Fed funds futures contracts telling us that the Fed is going to do at least one, maybe two more rate cuts than they themselves, the central bank that is, have acknowledged, it's difficult not to perceive the risk that the markets are sniffing out some sort of economic slowdown in the U.S. And what the global backdrop shows us is, were that to happen, China isn't coming to help, and neither is Europe. And how you avoid a global recession in that scenario becomes difficult to imagine. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Victor Jones for The Price of Truth on Tuesdays, back with Chris for Futures Power Hour Fridays and Mondays, on with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. Thanks very much for joining. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's one thing that traders obsess over that you think doesn't really matter?
Oh man, technical indicators. You can get pretty far in the weeds with those. They're important historical context, but most are backwards looking, and so you got a new picture every day. Every day's a new day, so can't put too much reliance on those.
Maybe it's because I was born and raised by trading the tasty way, but I just can't always wrap my head around like levels and indicators and breakouts and charts and patterns. I'm not saying there's anything wrong with that, but I just don't think for my style of trading it really speaks to me. So that's what I'm going to go with.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Oh, yeah. Tasty Nation, good morning.
Look who's backtesting. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people wanna buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
I got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend. I really appreciate it. You made my weekend, man.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Shelly Van and Dan Cecilia, of course. How are you both?
Doing well, thank you.
Good. Dan?
Bitcoin all-time highs.
Yes. Ripping higher here. Nice moves in alts as well. We've got a little bit of upside volatility. We've been asleep for some time, banging our heads on the ceiling, I suppose, when you look at Bitcoin at 110. Above it for a moment. We'll see if we can get back there or not. But yeah, new all-time high intraday. Love to see it.
We do love to see that.
Mm-hmm.
So we're feeling good. A little bit of excitement. It's in the air here at Tasty Live. But we're not going to talk about Bitcoin, at least not right away. We're going to jump right into this, and we have a special show planned, I suppose. There's a theme today, stablecoins.
Mm-hmm.
So if we can jump into our slides here, throw up our stablecoins, and let's talk a little bit about what they are, given we've hinted at this on the show, but very soon we're going to offer stablecoin support via Zero Hash at the Tasty Trade brokerage. So that's very exciting. A lot more detail coming soon. So look for that over the next couple of weeks. But ahead of it, wanted to dedicate a show to really just talking about stablecoins. I think, given our experiences on chain, I think it's fair to say that we're all users of stablecoins, but maybe not everybody is. And this will be a good primer to kind of get some familiarity with this technology, really.
I want to hear from the chat. Has anybody in chat used stablecoins?
Oh, it's a good question. Yeah. If you're not in the chat, what are you doing? Get over to YouTube, Tasty Live, streaming live. Mm-hmm. Type some crazy shit in the chat, or maybe answer Shelly's question.
Stable coins. So Ryan, what are stable coins?
Yeah, let's jump into it. I think you've got to look at this really simply. Without getting into all the technical details, what we're talking about here is just simply a dollar represented on a blockchain network. So this is a token that maintains a fixed value of $1 by being backed 1-to-1 with reserves like US dollars or short-term treasuries, right? Very short-dated maturities there, treasury bills, fungible in that sense. And so you have these stablecoin issuers. We've talked about Circle, just went public. We've talked about Tether. PayPal has a stablecoin. Paxos provides stablecoin infrastructure. There's many others. I believe Trump, US Dollar One, World Liberty Financial has a stablecoin. There's a consortium of financial services companies. There's the US Dollar Global Network, I think it is. There's a lot of stablecoins out there, actually. And so you have these stablecoin issuers. When someone deposits money with them, maybe it's a platform that provides access to stablecoins. An equal amount of stablecoins is going to be created by that issuer or minted on chain. And then whenever these are redeemed for fiat currency back into a traditional bank account in that sense, the stablecoin tokens are burned. Maybe that's all you need to know for now about the technical side of this. What's your favorite stablecoin?
I
Chad?
used...
Cave.
Oh, yeah. In chat.
Studio.
I use USDC.
Yeah.
USDC or Athena, which is yield bearing.
Ooh.
Did we even get into that today?
I don't think we can get into that today, but I do believe there is a video on Athena on the Tasty Crypto YouTube. So if you get over there, also subscribe to that channel, you can see that video in the
Good
archives.
foreshadowing, though, Dan.
It's good foreshadowing.
Yeah, that was nice. But we'll have to talk about that at some point. There are a lot of different stablecoins, algorithmic stablecoins as well. You have these kind of yield-bearing stablecoins. And, when you look at the legislation, not to get into the details too quickly, but the stablecoin legislation that's pending, making its way through Congress here, does not permit those stablecoin issuers to pass on that yield to the end user. But I think there could be a world in which that happens at some point. So there's a lot on the horizon, I would imagine. But today, there really aren't any yields to be generated by just holding the stablecoin on chain yourself. There are certain platforms that might give you rewards, such as Coinbase for holding something like USDC, but the yield from those treasury investments is not passed on to the end user in most cases. So to recap, very simple. It's just $1 on a blockchain network, and these are on many different networks. We'll show you the biggest in just a second. But I want to talk a little bit more first about why does this even matter? We have digital dollars. It's really easy to send money to each other, and in some cases almost instantaneously if we use Venmo or we use PayPal. Why does this matter? Do you guys have an opinion as to what the most important aspect of this is?
I think it's international, globally connected, international, 24/7 instant dollar rails. That was word jumbo, but it matters internationally.
Yeah, I think it matters internally as well, but I think in the U.S. we take for granted that, we're sitting here with USD is the top currency in the world, and in other countries, their currencies aren't stable. And so you could wake up and it's like, oh my gosh, my native currency is worth so much less. Having something that's stable and having access to it. Or I know stable coins are huge in Africa. Like if you live in Nigeria but you need to send currency to Kenya, there's not always a rail to do so, and it can be really cumbersome. So having something that's just instant, cheap, and stable, it's a huge game changer.
Yeah, I think we're going to see the continued growth of stablecoin market caps because there is that demand for dollars that exists globally, as you mentioned, Shelley. And to your point, Dan, I mean, it's really just that it's instant 24/7 settlement. This is technology at work in the financial system and an evolution of how things kind of move around here today. Again, it's not to say that the existing system doesn't work. It just can become more efficient through this technology. And so businesses can send cross-border payments instantly 24/7, as we talked about. Doesn't necessarily need to rely on legacy banking rails. It doesn't replace SWIFT or anything like that entirely, but doesn't need it at the same time. You think about, settlement. In some cases, you might have a company that's going to float you a balance. You have instant BP at Tasty Trade. Sure. But to a certain point, there's a limit on that. The fund transfer, the settlement process, that's not instant. It can take days at times. And so again, that's the key here, that this allows for instantaneous settlement. near instant settlement. Maybe it's a second or two, right? Depending on the blockchain that you're using. It's low cost and it's 24/7. The internet's turned on. This works. You look at companies that need to move money around, need to pay their employees, need to pay their suppliers. This cash flow, quite often, sometimes you don't get paid as a supplier for 30, 90 days. This eliminates intermediary banks. It's going to lower costs. It speeds up that cash flow. Operationally, it's more efficient for companies compared to the SWIFT system or traditional bank wires. And so I think that's the key here, is just how much more efficient everything can possibly become initially, right? When we think about the next 6 months, you get this legislation that passes, you get more adoption, participation in this system. I think it becomes commonplace. But initially, the huge benefit is really around instantaneous 24/7 settlement. We're going to talk about how this evolves into a broader kind of benefit to the financial system. But when you think about cross-border payments and companies and how they currently move money around here today, that's probably the key takeaway. You talked about this in some ways, and we'll talk about global dollar access in a second, but this makes remittance payments for people a lot cheaper, a lot faster. It's as simple as that. You use Western Union or MoneyGram or another service, you're going to pay a fee. It's pretty hefty, 5, 10%. Might take a few days. Not as relevant to us unless you guys are sending money to people around the world. I don't know. I'm not, but for a lot of people that are, this is a much better solution, assuming you have access to those stable coins.
Yeah, I mean, for me personally, when I'm in crypto and, I want to do something with someone online and, I might not know where they are, they have a wallet address, they accept USDT or USDC, maybe they're a talented designer or a talented developer. Mm-hmm. They want to get paid in USDT or USDC. And it's easy to come to that agreement. Like, I don't need to do a MoneyGram or a Western Union. Like, it's just instantaneously there. They trust it. It's liquid. There's a demand for dollars in these countries. And sometimes they're really talented. Most of them are really talented, and they need a chance. So I think in an online, instantly connected world, people want US dollars. You want them to do something for you. This is how you compensate them. And most people accept it if you're a crypto native. So I've experienced that personally, whether it's internationally or domestically. If you're doing something in crypto, work, development, code, design, they want US dollars, and I send them stable coins. So there is an economy. It happens in chats. I think maybe you've experienced this too, Shelly.
Oh, yeah.
So I've seen it firsthand, for sure.
I've been on the receiving end of it as well. I was doing business with a company in Switzerland and getting the intermediaries of, the wire transfers, the currency exchange. By the time I would receive the funds, I had paid hundreds of dollars in fees to get my payment. And then we were like, forget this, pay me in USDC.
Yeah, right. It
Instant.
just makes sense.
And it would take weeks sometimes if things got hung up. And I was like, why is this difficult? Like, where did the money end up? And then you're on the phone like, oh, okay, there was a hiccup in whatever process here. But no more chasing money or paying extreme fees.
Yeah, initially, part of the allure of blockchain, of Bitcoin, ETH, you could send payments or send value across these networks using those cryptocurrencies. But now that you have tokenized dollars, you talk about real-world assets. This is the biggest real-world asset on chain today is the US dollar. It just makes everything much more efficient, much easier, just kind of makes sense, in my opinion. So you get legislation in the US and elsewhere. This is only going to continue. We'll talk about the market cap and the potential growth of it in a second. We've hit on remittance payments, cross-border transactions, improves kind of operational efficiencies around cash flow. A couple other things I want to hit on really quickly, and one is very relevant to us as traders at tastytrade. But first, it's increased banking access. We talk about the unbanked, the democratization of finance and banking services. This improves that. This leads to more access for more people. All you need is a smartphone, internet connection. You can access the digital dollar economy. It doesn't require a traditional bank account. Now, that doesn't mean, I think when people hear that, they think, oh, it's money laundering or, it's black market, it's bad actors. Not at all. It's just that you don't have to go through that existing process today which is not accessible by everybody and certainly not accessible depending on where you live globally.
I think a great example is women in Afghanistan. A lot of them don't have access to banks. So if they're doing something where they can work online and receive payment in USDC, that's theirs.
Yeah, I think there'll still be some element of KYC. There's still oversight, surveillance. You still want to protect against money laundering, and you want to make sure that those providers of these services, are adhering to some regulatory framework. But it opens up access significantly to everybody that wants to participate in this digital dollar economy. And I think the key word there is digital, that's globally connected and almost ever expanding. So it's huge for the unbanked, and is also obviously going to play a much bigger role as you see a larger and larger part of the global population even go online. I think people miss that too. You have 8+ billion people globally. Well, not all of them have access to the internet. There aren't those services, but that's growing as well. So increased banking access is key. And I think as it relates to us, you think about the adoption by financial institutions. This is going to provide banks, brokerages, payment platforms with programmable real-time settlement infrastructure. That's a mouthful as well. That ultimately just lets people fund their accounts faster, cheaper versus legacy systems. If you think about markets that are moving towards 24/5, 24/7 maybe, but 24 hours a day, the majority of the time, you need payment rails that are also running 24/7. Even today, let's say you get a big move in a commodity like oil, or the S&P is down a lot overnight on Sunday, or we know that it's going to open when the futures market's open on the weekend. It's going to open down a lot. You want to take advantage of that. You want to trade. Well, you don't really have a way to deposit funds into your account so that you're ready to go and you can trade. Maybe you had a balance that was available from the previous week or on Friday that you took into the weekend, but there's no easy way at all here today, for the most part, to instantly make those funds available. There's instant BP, but maybe you need a little bit more, or maybe you just want to use this system. So I think it's a huge benefit to anybody that is trying to trade 24/7 markets like crypto, or 24/5 like futures. Very excited to see that at Tasty Trade. That said, just want to talk through it. If maybe you guys want to speak to some of the bigger stable coins that are out there. We've talked about USDC as something that we've all used here. It's not the biggest. USDT, which is US dollar tether from the company Tether, makes up 60% of the market. But you can see just how dominant here USDC and USDT are as those kind of first movers in the stablecoin space.
It's kind of interesting of all the other competitors that are making up that 5% or 10% of the rest of it. I see DAI in there. I see USDE, PYUSD, which is PayPal. Biddle, is that BlackRock?
It's like build, but buildle, like hodl.
Yeah, I mean, I think Tether. So what's interesting about Tether, I think, too, is Tron, the chain Tron, accounts for most of the Tether flows. The entire chain is just a Tether chain. And I think, yeah, I mean, Tether is probably the most trusted globally. I think USDC is getting up there, but most people use Tether. So,
yeah, and I would expect that to continue, but I think that you will see USDC market share increase, and percentage of the market might grow as well. They might grab some more market share, but I should say the market cap increase of all of these tokens. Let's just take a look at market cap here so everyone can see just how quickly things are now starting to move. You go back to early Ethereum days, kind of really get DeFi summer in 2020. Stablecoins start to play a role there. You get up to, we have a dip with the FTX collapse, but you see a lot of growth in terms of the overall adoption and total market cap here. And then you get to where we are today, which is a market of 255 billion. We talked about Tether's dominance around 2/3 of that market. I would suspect or expect that this is going to only continue to grow. For further context, I guess let me just jump ahead here. Here's the market cap of stablecoins. So we'll look at it $250 billion total crypto market cap. And this is what I always love to see because people are familiar with crypto. We talk about it every day here on Tasty Live. It's in the financial media now, right? It's reached in some ways mass adoption, but it's tiny. And that's what people miss. Yes, Bitcoin has been around for a while, ETH as well. People are maybe familiar with Solana, XRP, a handful of other tokens, and maybe have gone on chain and done something in DeFi. Maybe are using stablecoins. Maybe. 3.5 trillion. The global equity market. This is not that big either when we really start to look at everything. If you include derivatives, currencies, global wealth, I couldn't put it on the chart because when you have another bar that's 800 trillion representing global wealth, the stablecoin isn't even going to register here. It barely does when we look at it this way. But global equities, about 124 trillion. It's going to fluctuate, obviously, as prices move around. But if you look at the last year or so, around 120, call it trillion. Crypto's only 3 trillion. So can crypto get to 10 trillion? I think so. Can it get to 100 trillion? Maybe. But again, you go and look at global wealth, financial institution assets globally, et cetera, derivatives, currencies. It's much, much bigger than just the global stock market. And crypto is still very, very, very small. So I think stablecoins could easily get to 1 trillion sooner than later. I used to say, okay, at the end of this decade. I think it's probably within the next couple of years.
Couple of years, yeah. Mm-hmm. I mean, I think that Circle going public and the integration with Coinbase or whatever that deal is, I think that accelerates some of it, at least in the States. But Tether, just some of the stuff, if you pay attention to Tether that they're releasing, like it's not even just like US dollar Tether, it's other currencies, it's gold, it's tokenized commodities. I mean, they're investing in everything. They're doing baskets of agricultural commodities. They're like investing a lot in South America. So
yeah, I think that's a good segue into this. I mean, what you're alluding to is the tokenization of all financial assets. We can call it tokenizing everything. Everyone wants to point to assets like real estate on chain or fine art or whatever. But I think let's just start with dollars, equities, and U.S. treasuries. Those markets are relatively large. This is what happens next. That's my statement. This isn't like maybe this is what's going to happen. This is what happens next. You're going to see tokenized equities become commonplace. We had the Robinhood announcement. There's other platforms that are doing this. It's early. You need the entire system to adopt this technology. It will. It's superior. Things will settle on blockchain networks. There will be private chains. There will be KYC. There will be other elements, certainly, that exist within the current system, but it will leverage this technology. You'll have 24/7 trading and instant settlement. It's going to be globally accessible. We talk about global demand and accessibility for dollars. Well, these are just dollar-based assets, right? Token is a wrapper in some ways. So it's going to be globally accessible. Presumably, again, there will be rules. You will have to know who your customer is, but through this technology, it just opens up these markets in ways that there's a lot of friction today. It doesn't mean that you can't trade U.S. equities if you live in Singapore. Clearly you can. This just makes it a lot easier, a lot faster, a lot cheaper. These tokens then become programmable or are programmable, right? Dividends are automated, voting rights, KYC. There's a lot you could do. That's not even getting into how this can be used as collateral in DeFi, or you could have USDC on one side of your liquidity pool and an Apple stock token on the other, making markets, facilitating the trading, providing liquidity, and as the end user generating fees or yield as a result. So stocks are already here. US treasuries are already here. Imagine real-time yields. Instead of once a month, you get that coupon payment every day in some cases, depending on what the investment is. Fractional ownership, you could attach, the yield to much, much smaller capital investment. It's globally accessible. There's always the story about, right, the Chinese are dumping US treasuries and all of these other countries hold all of our debt. What if they all sell it at one time? The reality is there's increasing demand for dollar-based assets in this system, and there are a lot of buyers that this opens that treasury market up to as well. And I think the other thing to consider, I heard this the other day, is just kind of coming at it from the perspective of like democratizing the risk-free rate. We're all about access and kind of removing barriers and borders in some ways. But when you think about just the ability to access the U.S. Treasury risk-free rate as an investor and how many people are unbanked, they're not even able to participate in that fairly privileged system, that we're able to easily access. And so the U.S. is going to be able to issue a lot of debt, and there's going to find that there's a lot of demand for it when you have these rails and this technology that's underpinning the system. So just wanted to speak to that really quickly here at the end and hit on this is what happens next. Stablecoins are first. Legislation is coming. We do have Crypto Week.
Yes, Shelly, can you talk about this real quick?
Let's hit on this real quick and we'll wrap up.
Yes, really quickly. So if you're not following Tasty Crypto on X, get over there and do it. We're dropping everything you need to know leading up to Crypto Week this Friday morning in a nice, comprehensive Twitter thread that is very easy to understand. Crypto Week is next week. 3 bills, 5 days, big impact. Let's go.
I love it. It's being billed as if it's like a music festival.
I know.
Or something.
Clarity Act, the Genius Act, and then
anti-CBDC. We don't want the government in our stable coins. So anti-CBDC, that's central bank digital currency surveillance state act.
Mouthful.
Yes.
I do wish we should have done something like some type of like Crypto Week reward, or like if you tune into our show during Crypto Week.
It's not too late. Catch us on Beans Friday morning.
Hint.
There you go.
Yeah.
All right. Well, stay tuned for Beans on Friday. Stay tuned for Crypto Week next week. That's going to do it for our show here on Stablecoins, special edition. Stablecoin support funding coming soon to Tasty Trade as well. So stay tuned for that. But that's going to do it for the Tasty Crypto Show for this week. We'll be back on Monday. Until then, I'm Ryan.
I'm Shelly.
I'm Dan.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. It was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Oh, yeah, it's Wednesday, July 9th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast, your little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. More on that in just a bit. For now, let's introduce our very special Wacky Wednesday guest. I'm talking about none other than Chris Vecchio. Chris, how you doing, my friend?
I'm doing all right, Vic. How are you today?
I'm all right. You're developing any new skills you've been developing lately you want to share with me or the audience?
I'm working on my snaps and my whistles and my mouth pops.
Yeah, you know that can you do that big loud whistle? I've always wanted to do that.
Oh God. So, my dad can, and like now that I'm going to have a son, it feels like I need to know that till I call him back in the house. So
call
like
him
a
back
dog
in the house. Yeah, I do this thing with my son. I just go.
You set your kids outside. Come back for dinner.
I do.
I do that with my cat.
No, it does feel very much like a cat or a dog thing. But so that's if we're out in public and it's hey, don't do that. That's what I'll do. But it's like a whisper shout, So other people don't know what I'm doing, but my son, he'll know, and my daughter knows. You can use that if you want.
It works with the cat, so I'll keep it there.
Do you have cats?
Just one.
One cat, no dogs?
No dog. No dog.
You would be a cat lady.
Yeah, well, the real story, actually, I'm going to turn this on you. The real story is that I wanted a dog, wife wanted a cat. Sister-in-law got cancer, got my wife the cat to make everyone feel better in the house. So you're a jerk.
Yeah, you did turn that on me. There's nothing.
You jerk. Boo. Boo.
Well, best wishes to both your wife and your sister. I love you as well, Christopher. Somehow
what
that's
about
the
my
cold
cat?
open. I don't like cats. It's not like I'm so neutral on animals. It's not even funny. Like I'm unable to form some sort of connection with an animal. It's just like a bottle to me.
Well, you have that advent calendar of all the zoo animals. You're like, I've eaten this one. I haven't eaten this one yet. Got to try that one.
I have had a kangaroo. I have had a kangaroo burger.
What's the most exotic animal you've eaten?
The kangaroo burger. No, I had horse sashimi in Japan. That was wild. Served over like chives and onions or something like that. It was delicious. And I don't know, my ex-girlfriend's father, she worked at a golf course. He would go to that golf course, catch bullfrogs, and then grill them up. So I had, home-caught bullfrog legs as well off the grill. What's the most exotic thing you've eaten?
Probably peacock.
Whoa. I feel like you're a monster. Aren't those things like endangered? How'd you eat a peacock?
In Italy. I'm trying to progress to ortolan, but my birthday's next week. If anyone wants to get me an ortolan for my birthday, I'd love to eat it.
That's the cold open, everybody. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. Make your life just a little bit better. Hit the like button if you haven't already. And if you want to be part of the chat box, that's somewhere on your screen probably already. And if not, it's in the middle of your screen now. Do us a favor, head on over to Tasty Live's YouTube channel, the evil Google YouTube, and subscribe to the channel. And you can basically live stream your thoughts directly on this stream. Chris, off and away we go. S&P 500, a little bit lighter than the last time we talked, under 6,300, but still at 6,260, only 40 points lighter, but up 0.2% on the day. NASDAQ up 0.75%, the Dow Jones up 0.5%, and the Russell outperformed again, up a little bit more than 1%. What say you, my friend, on risk today?
It's a typical summer day, right? Low volume, low volatility. The market has no reason to overreact to Laotian or Kazakhstani tariff rates, or even Brazilian tariff rates at 50%.
Brazil was kind of wild.
Yeah, well, I particularly for the rationale about it all. I distinctly recall a speech that President Trump made in the Middle East a few weeks ago about how the United States was done meddling in other countries' internal politics. So color me shocked when he used a very legitimate court case against former Brazilian President Bolsonaro as a rationale for jacking up tariffs to 50%, which on Liberation Day, they were 10%. And do we have a trade surplus with Brazil? Yes, we do. So, okay. But the tariff talk, right, like at this point in time, if we're going down this path, the market has probably priced this in because we've been hearing about it for several months. And like all other events that come and go, we price them into a certain degree. If it's a regional bank failure or even the October 7th attack of Hamas against Israel, the market eventually benchmarks something and says, okay, we'll figure out a way to deal with this. So stocks right now, is it a chicken out situation? I take issue with people calling this, well, Trump's just going to chicken out. Trump chickened out because of the bond market. Bond market's not freaking out right now. So he probably thinks that he can get away with whatever he wants to do. And it's only once the market freaks out does Trump back off. So this game that we're playing right now of literal chicken, right? Like the tariffs are coming, okay, but he's going to back off. Otherwise, we're going to go down. Well, he's only going to back off if you go down. So who's going to make the first move? And we're kind of in a holding pattern right now. So we're going to float up here for a little bit. July expiry, as Tom recently pointed out, which some might say is a seasonality reference, but others may not. I would say that we would see that the market still stands on pretty good feet until about next Friday. And then you can get a little rocky there. And then August and September have their usual can of worms if you are a seasonality person like I am. So maybe we have a little bit of a last puff higher here. 6,400 and SPX for between friends, and then we call it a summer for a few weeks.
Where are you pulling those numbers out? You just random? 6,400 just sounds good to you. It's a nice round number.
Yeah, when I go onto the Tasty Trade platform and put SPX in, the chart's auto scaling from 4,800 to 6,400. So,
so you just bonds at 114. Kind of an ugly last, I don't know, 4 sessions or something like this. Backed off of 115. We're now at 114, which has been the point of control. No surprise there. Nice little 1-point rally here today to get us back to 114. What are your thoughts on the long end here? It's been much more subdued trading. I'm obviously across everything, man. It's 0.5% moves every single day. Vol just got crushed today in the equity market, and bonds were at 114, which have been a snooze fest in bonds, honestly. But I want to talk about bonds because I want to get somewhere off of the movement in the long end of the curve. Your thoughts here? Are you doing anything? You long, short, anything here?
In notes, I'm still directionally neutral, which, despite all the excitement over the past few days, it really just erased the rally that we saw in the 5 days preceding it. Mm-hmm. And so we're back to basically the midpoint of the year-long trading range thus far in notes. And so being directionally neutral right around 111.5, it's just playing for the market to basically stick around 111.5, give or take half a point, go to 112, go to 111. As long as we're bouncing around between there, it's been very effective. And if you wrote it out through early April and then the pullback thereafter, it's again been a very effective trade. So I'm still leaning short iron condors in notes. I don't see a reason to do anything else there. It's not the sexiest trade because there's not a lot of volatility in the market right now. But with bonds, it's a little bit of a different story because you can see there, and I should pull up the screen. You have ZB open, okay. Before the decline, right, you get what's that 3 candlestick pattern, big green up bar, doji, and then the red down bar is an evening candlestick cluster. That is a topping pattern, and it's obviously followed on with continuation to the downside. So that occurs all right around the passing of the one big beautiful bill. Debts are going up, deficits are going up. Is it for something that's long-term beneficial for the economy? Like, will this boost growth longer down the line? The fiscal multipliers, are they positive? And the answer is no, not really. The bottom 80% of income earners in the country are going to effectively see a tax hike, and the top 20% of income earners are going to see a tax cut. So we're going to be running up deficits and debts for something that may not help the consumption, a fair amount of consumption in the economy. okay, so the market takes issue with it for a few days, but the real litmus test is not the narrative that I'm saying here. It's whether or not people actually want to buy bonds and notes at these levels. And yesterday it looked a little iffy because 3-year note auction wasn't great, but the 10-year note auction today was fine. Stops through, the bid to cover ratio is above the 6-month average. Foreign demand is up, highest level since November 2023 in terms of indirect bidders. And so, sure, if you have a good 10-year auction today and a good 30-year bond auction tomorrow, on the heels of the one big beautiful bill that's going to blow up the deficits and debts, clearly people don't give two hoots. This would be the first litmus test to say that it's not that problematic, and more of the same continues.
Big beautiful bill was priced months ago, bro. Nobody cares. Bonds go higher, yields go lower.
And the Fed, you can talk about the copper tariffs yesterday. Does that prevent the Fed from cutting? I would. There's a policy institute, VoxEU, their CPER group, put out a note in December of 2024 about how copper tariffs and price shifts in copper, generally speaking, impact inflation. And in the developed Western world, like the United States, Canada, Western Europe, et cetera, a 10% increase in copper prices leads to a maximal 0.05% increase in headline inflation 24 months later. So at the margin, do the copper tariffs hurt or help the Fed's case to cut? They probably hurt it a little bit, but does it derail a potential cut in September? Absolutely not. And ultimately, I think that's what the market's going to care about. You're going to have no cut in July, despite a few Fed officials like Waller and Bowman calling for it.
I think that makes sense, though. Don't you think that makes sense? If they're going to cut in September, you have to have some dissent in July to signal to the market that they're getting ready to move.
It feels like a redux of last year.
Yeah.
Where, the Fed's not going to cut in July. You're going to get a bump of bad data in late July or early August, and the market's going to go, oh, geez, the Fed's late. And then they come out in September and, we have a conversation after Jackson Hole. Did they just prep the ground for a 50 basis point rate cut?
No. No, they won't do that again this year.
I would agree, but I wouldn't write it off.
I wouldn't either. It's a live probability. I don't think they will, though. Because I don't think they want the long end to lift. On it. I don't think they want the long end to lift.
That's the story for the long end here. They're not going to cut in July. And then you take what Scott Besson said, meet the new boss, same as the old boss. He's just going to apparently pull a Yellen, which is to say that they're going to cut Treasury issuance at the long end of the curve and boost issuance in bills to take advantage of the relatively shorter lower end rates in order to kind of wait out for the next Fed chair to come in play. So no July cut, maybe the lack of issuance at the long end of the curve when we get the next QRA. Maybe that lack of supply around the corner helps keep a lid on bond yields because, demand outstrips supply at these rates. But it's stability. And I think that's the point here. The point here is that yields are probably going to stay range bound and choppy and meander around for the next several weeks and months. I know ZB is the future story, but if you look at TLT, Victor, and you pull up a monthly chart going back to 2003, you'll see that we're sitting at basically the same levels we were at going all the way back to 2006. These are multi-decade lows right now in the ETF product. So if you're trading around this, right, there's reasonable, sizable support nearby to work around. The question is whether or not the volatility with a sub 10 IVR makes it worth it to take shots with long deltas right now. And, maybe put something in your pocket that's a little higher convexity, a little bit out of the money, a little bit longer duration. That way, if this thing goes sideways one way or the other, you got something doing.
I kind of like that. The reason I wanted to set up the discussion on the long end was the move in home builders. And I'm kind of obligated to talk about these because I unfortunately made this audience listen to me drone on about home builders for like a month. And so now it's starting to perform. So I have to bring it up. DHI, so DR Horton was one of the top performing, but a ton of these performed today. Lennar, KB Homes, Pulte Homes, all this stuff was up another 3 to 5%. So we're getting these moves, man. And when they're coming, they're not we're not just like sort of drifting higher. We're getting 3 to 5% blasts in these home builders. And I think people are starting to figure out, either the technicians are figuring out that these things are based a little bit. I think there's a little bit less fear in the long end. I think people are starting to price out the probability of a long end lift on a cut. So I think all of these things are positive. Do you have any thoughts on either the home builders here and how you see it as a theme post, September cut?
I have a very difficult time thinking that home builders are going to see a sustainable bounce. I'm very pro. I think the home builders, and the REITs should do well, but I prefer REITs over the home builders longer term, if only because of the legislation that's in place right now that makes it all the more difficult to acquire materials at low cost for labor. These are all factors that go into the equation. Likewise, you're seeing more signs of consumer distress in the market and people lowering their financial expectations moving forward. So that doesn't exactly speak to a strong environment for home builders, particularly one in which, when we have the largest gap ever recorded between people who are in the market looking to buy versus those homes listed for sale, according to Redfin. Right? There is a massive oversupply at these levels. People have been waiting for rates to come down to clear the market. We've talked for a long time about the golden handcuffs that low mortgage rates have done for a number of people in the post-COVID years. And so, we've seen refinancing. Every time mortgage rates drop, just like 5 basis points, refinancing shoots up. People are desperate to get out of high interest rate obligations. So I don't know, Victor. Home builders look really nice here. They've had a really strong rally. I question whether or not there's enough here to continue to chase us to the upside. I prefer REITs still, even if they haven't done well in the preceding 1 or 2 weeks compared to home builders.
Mortgage application purchase index was up 9% this morning, year over year. Refinancing, it was up too. Maybe you're right. But I really think at these levels you're getting a really, really interesting valuation. These are super low single-digit valuations, most of them. D.R. Horton's a notable exception. That's a double-digit one. But I think it's a really, really interesting setup here. I think the narrative is going to be horrible on the housing market for the next 3 months, maybe 6 months. And it's going to confuse a lot of people. Why are home builders going up when the housing market's so horrible? And that's why I like this super sick trade. But I will move on here. I will let this go. Do you think there's complacency in the equity market at starting to get into a 15 handle? What would you say? You think this is just, like you said earlier, the summer trade, or do you think there's complacency here? Do you think we're past the big beautiful bill? We're past some of the tariff uncertainty, and you think the market's looking ahead here? Do you think there's complacency in the marketplace, or do you just think we've gotten past a lot of the big issues here, the 12 days war, everything like that? How would you characterize the market right now?
There's a period of transition where it's this is a relief rally. And then there's that moment in time where it's okay, we're no longer rallying because we're putting this bad thing in the past behind us. And we're rallying to the degree that we're now underweighting risks in the future. Okay. And I think that we may be arriving at that threshold. The market, to me, is, if it follows the path that I think it will, and hopefully, given how I've been trading around it, we peak in the next few weeks. We step back for a little while. We get a 5 to 7% correction in stocks, maybe a little bit more in some of the higher beta names. And then we get our typical year-end rip. And if that's October basing or November basing and then rally into the holidays, there are a few things that just kind of stand out to me that don't read well right now.
Like what?
The National Association of Active Investment Managers, NAAIM, their most recent survey produced a reading of 90% or greater in terms of being invested long. Over the past 10 years, you look at instances when the NAIM survey has been north of 90%, and it's usually in the neighborhood of a top, where you're getting a pullback of 3 or 4% over the next month. So we have one thing going there. We also have bad breadth in this market, right? The way that I would define breadth in this situation is how far the S&P 500 is away from its all-time high compared to how far the median S&P 500 stock is away from its all-time high. And that's near 15% right now, that differential, right? The S&P 500 is sitting at all-time highs, but the median S&P 500 stock is still sitting about 15% below its own all-time highs. And so when you see these kind of divergences form, it speaks to a market that's losing steam. And while we haven't seen it the case this week so far, there were little inklings of it in the last week or two. When the market starts pushing those all-time highs and volatility stops falling and it starts to tick up, tail wagging the dog scenario where it's actually the out-of-the-money call option buying as people chase the market higher that pulls up volatility, right? You throw that into the mix a little bit more, and you could say that we're pretty close to exhaustion right now. So I'm still a bull. I think the market will close higher at the end of this year, given what I know right now and the information I have today. I think the market's going to close higher this year than where it currently sits. But I don't think that's before we see another pullback of, again, 5 to 7%, maybe 10 in something like the NASDAQ.
So what do you do with that?
I think that the August 12th deadline for the tariffs are very dangerous. It makes absolutely no sense. And then again, people have tweeted at me. They've emailed me. The emails are a lot less. You have TDS and more supportive these days. So I appreciate that. It's good for my own psyche. But they're more like, Chris, you keep complaining about this tariff policy being...
I just caught what you said.
You don't need to try to make sense of this policy. It's not coherent. You keep saying it's incoherent, but it's never going to be coherent. It never has been, right? And like to a large degree, I agree with that in my perhaps in my soul. But I'm in trying to stay objective here. Does it make sense that we're going to have higher tariff rates on other countries above China? If the whole plan is to ring fence Fortress America and to protect the Western world from Chinese overbuilding, excess supply, dumping on global markets, right? Well, then why would you employ higher tariff rates on those other countries? You're going to incentivize Americans to buy more from China, which encourages companies to build more in China. So August 1st to me is not the deal. The deal is August 12th. When we think about the purchasing schedule for people who are stocking for various companies like a Walmart, you usually have your purchasing window for the holiday season is April through June. We delay the tariffs on China in the middle of May. So the window with which these companies can stock the shelves for the biggest consumer season in America, Christmas, Hanukkah, Kwanzaa, New Year's, whatever you want to call the end of the year, okay? I don't know the audience. We will say that you have to place those orders by the end of May. And Trump took the tariffs off and did the delay during the ordering season peak. But if he puts them back on in August or September, little Timmy or Tina's not going to have to worry about having 20 or 30 fewer Barbies come this Christmas. It's just not an issue. So he can actually squeeze and turn. And the reason why that makes it so interesting, if you're looking for trying to time out being bearish for the second half of the month, the Fed does not meet in August. They never announced policy at Jackson Hole in significant when have they cut rates at Jackson Hole? They'll maybe do something like average inflation targeting framework adjustments, but they don't actually cut rates. So then you get into a window where the market's like, wait, the tariffs are real and they're happening and they're effective immediately. And the Fed's not meeting? Okay. So I can paint the picture where August 12th onwards, there's a window where the tariffs are real and it's not a taco trade. The market has to wake up and go, oh, geez, Trump can't chicken out unless we panic. We have to panic on this so he chickens out. So volatility's low, maybe like in August 30, look to late August, 3 to 5% out of the money, long put spread, cheap, 10 to 1 risk to reward, like a 20% pop. Have it in your pocket. Trade tactically long over the next week or two, but keep that little bit longer duration. Put spread in your pocket.
The only problem is, and it's not a big problem. But as you would expect, vols bid up in late August to September. Why do you think it's not coherent? To me, it makes total sense what they're doing right now. To the extent they got some people to the negotiating table, you know, they and negotiating in good faith by their standards, they get the universal 10% tariff rate. To the extent that they don't feel some countries offering them what they want, they put on max leverage right now. And to me, I'm like, yeah, I understand that play. I don't have to like it. I don't think it's going to be, you know, growth inducing to the U.S. economy. But I get what they're doing. Why do you think it's completely incoherent?
No, what I mean incoherent is it's incoherent. What's the primary goal? If the goal is simply to, again, fix trade, why are we doing a 50% tariff on Brazil, with whom we have a trade surplus? That's incoherent. But let's just benefit of the doubt here.
Okay.
If the goal is to get China,
let's do it like this. You're being like single-minded though. That's their single-minded objective, and they're playing a bunch of games all at the same time. So yes, do they have an overarching objective? Sure. But if I know you're a weak player, or if I get the sense that you have weak cards and that I'm strong and that I'm chip leader, and I throw on this big bet and I know you're just going to fold even though I've got shit, I can make that play, and I'm willing to bet the reason you lean into Brazil is because you know they're going to back down. You know you can be effective with this threat, and you might not think it doesn't serve this bigger overarching China play, which is probably true, but also sometimes you play the card, sometimes you play the player, and I think.
No, I understand.
The most likely outcome is that they're going to get what they want from Brazil, and they're going to move down the tariff rates. I don't think the most likely outcome is they get nothing from Brazil, and then they move the 50% tariff rate down to 10%. I think it's low likelihood.
Let me rephrase that. I think the incoherence would be if one of the goals is to re-domicile American manufacturing, which country has absorbed the most of it over the past 20 years? Mm-hmm. It's been China. So then implementing tariff policy that makes China more appealing as a destination to manufacture doesn't solve any of the litany of issues that they have stated for tariffs. If it's manufacturing jobs or fairness in trade or ring fencing China or decoupling for national security. So like there's a whole things that it doesn't check by allowing Japanese tariff rates to rise above Chinese tariff rates. And right now they're not because it's 25%, but that's before all the other kickers go into play. So that's why I'm not taking August 1st seriously. I'm taking August 12th seriously as the deadline. And if the August 1st deadline goes into effect where Japan and South Korea have 25% tariffs and China only has 30, I actually think that increases the odds of Trump doing something negative with China, because you want ultimately, even if tariffs are going to be high in Japan and Korea, you want to have a gap between China and everyone else to disincentivize the building of new factories over there by American companies. So if August 1st comes and I'm wrong that it is something, August 12th is going to be big fireworks, in my view. So, I mean, I understand why volatility is bid for the second half of August. It makes complete sense. I would not fade that.
But there has to be, and I don't know what this number is, but there has to be some ceiling where above this number of tariff, then you actually have no comparative advantage with labor outside the U.S. And so I don't know what that number is. It's probably fairly high, and I don't know if adding a 30% tariff onto Chinese goods is going to, like, if that's enough to take away their comparative advantage on labor. I would imagine it's not, but I don't know. You get what I'm saying? Like, at some point, the gamesmanship between China and Japan doesn't matter anymore because you've taken away the comparative advantage. It just makes more sense to build it in America. I don't know what that number is, but that has to be some ceiling to be considered or gamed out.
Yeah, but the way that you would work that out, you got to factor productivity. You have to factor wage differences.
Yep.
Obviously, the exchange rate for dollar yuan. I mean, there's a whole.
What do you think it is? If you had to just pick a number out of the thin air.
The prevailing wage rate in China right now is under $4 an hour. Okay.
Yep.
And I think what the average wage in America right now is closer to 25. So
Okay.
so 25 divided by 4 is a little bit over 6.
Mm-hmm.
So 600% tariffs. Just like as a starting point, as an estimate.
That's fair. All right,
but,
let's talk.
but this is the whole thing with tariffs. After a certain point, right? It's not 600% isn't the number where people go, oh, I'm not going to buy from China, because there are substitutions. There are other countries that also make widgets, and so the reality is, once you push tariff rates on China past, I think it's like 85%. I'll have to double check the research that we did here. But once you push past 85%, you've killed 95% of trade between the two countries. And so then you're just 85% tariff and 100% or 200% tariff rate. Trade's dead either way.
Would you be buying Chinese companies here? They're getting pretty cheap.
Depends what kind of company.
Okay, so let's do two different types. There's Chinese tech and there's Chinese consumption. So like JD.com, Pinduoduo would be the consumption side, and then Alibaba or Baidu would be the tech side, as a quick example.
If you're a really big believer in the efficacy of Trump's policies and trade, you probably are going to lean more in the direction of Chinese consumption stocks. If only because one of the problems that we, the United States, as our official communications have stipulated from the Trump administration, we feel that there is an imbalance in the Chinese economy where they overproduce, save too much, and they don't consume. And so rebalancing the trade relationship would mean that China consumes more domestically. They don't just sell us stuff, they buy more of our products. They also just don't sell their own stuff on the global markets. They consume more of it domestically here. So if you think that Trump's going to get his way with all of this, right? And if you're a betting man and say like, oh, I think this is all really going to work out, your bet would be on Chinese consumption stocks. But if you think that this isn't going to work out in some form or fashion, and as my Uber driver said last week, because he was from Guangzhou and I was just talking with him about, because he was self-driving the entire drive over to the car dealership. Okay. He was telling me how, the Chinese economy is fine. People just don't want to spend money because they're worried about, America. And so like people have lots and lots and lots of savings there. So if the Chinese government opens the spigot for consumption, that's really going to be the cue. And that's dependent upon the trade war. But if not, how can you not bet? Didn't the Trump administration last week quietly, I think it was Thursday afternoon as everyone was driving off to their July 4th weekend, relax some of the restrictions on Chinese chips?
Mm-hmm.
One of the pieces of news that came out today is that China right now is trying to build one of these mega clusters, big data center for AI. And they're going to try to use NVIDIA's new top-of-the-line chips because they think that they can get around all the various export restrictions thanks to their interpretation of last Thursday's Trump administration announcement. So you know what? Like right now, if the Trump administration is going to give NVIDIA Blackwell chips to the Chinese government to build their own AI, and the trade war presses on, why wouldn't you want to bet on Chinese tech as opposed to Chinese consumption?
I think you would too. I really like it, and I think they're getting cheap on a relative basis to U.S. stocks and just in general. I think they're starting to get really attractive, and nobody's talking about them, which means I like them even more. What do you think about, it seems like I'm going to switch topics a little bit. It seems like the administration's going to switch gears here from the big, beautiful bill to the Genius Act and to focusing on stable coins. I think this already passed one chamber. I'm not sure if it was the House or the Senate. I think it was the Senate. Now it has to go back to the House. Your thoughts on just Bitcoin in general up here, flirting with new all-time highs at 111. Your thoughts on Coinbase, which had a pretty decent move today, Circle, and just the stable coin space in general.
I don't think about Coinbase. I really like Bitcoin up here still.
You like it here?
Well, yeah, that's why I was buying a bunch of iBit calls several weeks ago, Victor. I'm thrilled to see it doing what it's doing right now.
Same.
Because it makes sense. I mean, that chart set up find me a chart setup that looks bullish like that. And like, I'll show you a chart that goes up. If it was the pullback in April back down to the former swing highs that we had in 2023, okay, right near 74,000, and then this consolidation up towards 110K, where it gives you a flag or a pennant or a symmetrical triangle, pick your poison. This thing has a measure move up to 135,000 if you're looking at the continuous BTC futures contract. And for IBIT, that puts it in the neighborhood of the mid 70s. So I think this is great. I've been sitting on some IBIT call spreads, long 75, short 85. They were really cheap. And I hope that they become less cheap in the next few sessions, because it looks like this thing is popping, ready to pop. But you know what the best part about this is, Vic?
What?
I keep bringing this up. I've been bringing this up for 2 months now. Where are the people in Miami sending us videos of them at 11, okay, spraying people with champagne? Where are them on the boats? Where's the Lamborghinis? This is so quiet. And I know that your whole view on this was, well, back in January, they were doing that to pump exit liquidity, basically. You know, I want to get out. Let me show everyone my bag. They can have this bag too. I'll sell it to you. Here, come take the bag. This time around, people have delivered. So, I mean, if you look at Glassnode right now in the analytics and their liquidity chart, the liquidation levels chart, you can see that the highly levered people are basically wiped out if this thing goes below 107. But when you get below 107, the leverage drops off a cliff. It's a lot more long-term holders, and that rate where the whales are sitting is slowly rising over time. So I think this looks fantastic. It's ticker agnostic. Find me a better looking bullish chart than this right now in the market. And volatility is relatively cheap. So I'm playing for the upside here. Deficits, debts, Jeffrey Epstein. Why are we still talking about Jeffrey Epstein after all this time?
I couldn't believe he said that. Are you still talking about that guy? It's like, oh my God, I couldn't believe he said that.
Nothing made me have less faith in the U.S. dollar than that yesterday. So,
are you still talking about that guy? How wild! I don't even if let's just imagine. Okay, let's just imagine it's 20 years from now. It's one of. I mean, if you allow yourself to think through what that was, even if you assume there's no intelligence links, that will live on in infamy. You know, we'll never stop talking about that. It's disgusting. It's insane that it was allowed to get to that level. And now you add on this other layer where it could have links to intelligence. It likely had links to intelligence, and like the president feigning like. Were you still talking about that guy? It's like, what a bold attempt, you know? What a bold attempt to hand wave the thing away.
So there's like two angles to this, right? There's the side of me that's like, okay, yeah. And like, yeah, it was an intelligence agency. Mossad killed Jeffrey Epstein. There's that angle. You can run with that. And that's fun.
Okay.
That's fun. And then it also reminds me of, there's that old JFK joke. A man dies and he goes to heaven, and he gets to the pearly gates, and he asks God, did the CIA kill JFK? And God says, no, I actually had Lee Harvey Oswald do it. And the man says, this thing runs deeper than I thought. So for some people, there's no amount of evidence, but the way in which this was delivered, like Pam Bondi saying things and like shifting and looking over at Trump to like make sure that he was reacting positively to every other word that came out of her mouth.
So
come on. If why was he in jail if there were no clients?
Yeah.
Who are the clients? Yeah. Who is? This is awful. It's awful.
It's a bit sad, you know. It's a bit demoralizing, you know. And I said this would happen.
You were moralized before this?
No, I feel like we're moving down this path where I said this administration is going to lead to one of two things. It's going to lead to a very angry constituency that no longer believes that they have the ability to vote change, the necessary change, and that's dangerous. Or it's going to lead to just unbelievable apathy, where people just give up, where they same thing. They recognize they can't vote their way out of change, but for whatever reason, they don't have the initiative to do anything about it, or the anger, or whatever it takes. And so they just become completely apathetic. And I'm not really sure which direction we're moving, but it's like this is another drop in that bucket moving towards either apathy or anger. I think I'm super apathetic on this one, that like that we just hand wave it away. Clearly there was something here to investigate, and we just move on. Say nothing to see here, folks.
Yeah, look, when the one big beautiful bill was struggling in Congress, what happened? We bombed Iran.
Mm-hmm.
And then all the attention went to Iran. And then I thought it was really very cool that the Democratic Party spent more time attacking Mamdani than the bill in the run-up to the bill being voted on.
Yep.
Like really important party priorities there. And then so now that this Epstein thing is happening, there's also that part of me, like, is the stock market complacent? Like everyone, as a future president said in 2012 or 2013, talking about then President Obama, one might start a war to distract from things.
Mm-hmm.
So wait, that was Trump who said that about bombing Iran. So
where was I going? Oh, I was just going to ask you something about related to this, and I think I'm going to forget the question. All right, I'll keep cruising. I'll probably remember it here in just a second. I'll go metals for just a bit. It's to me, it's fascinating that the interesting trade here is no longer gold. And I thought when that happened, the transition it would be like, okay, this is time for silver to shine, pun intended, but it wasn't. Platinum sort of had a lot of the attention, and now it's copper, and nobody gives a shit about gold or silver. And copper's at all-time highs, which was good for, I think, Freeport McMoran. How do you pronounce the last one? Freeport McMoran position. Your thoughts on metals, both precious and base here?
Well, the copper news, obviously, again, one of the illustrative examples of how tariffs, depending upon the product or good, will have a different impact, because we are. We're not a big producer of copper. We have about an 800,000 ton deficit in terms of how much we consume relative to how much we produce. And so if you're going to bottleneck supply a bit more, then you're just going to raise domestic prices. And copper prices feed into everything, right? So that's maybe problematic. But I say maybe because, as we discussed earlier, only about a 0.05% increase over 2 years in CPI. So how problematic is that really? I digress. With copper, I think the problem that traders will have first and foremost, and I think the reason why you brought up FCX, is because copper was a freaking mess yesterday to trade. Good luck getting out. And that was something that I saw people, they were telling me about, saying like, oh yeah, I'm long. I want to get out of this position and realize my gains. Can't do it.
Good luck.
Right. And so that's why you're talking about FCX, because FCX is a little bit more liquid than copper futures. And the margin on copper futures absolutely blew out yesterday, where if you wanted to do like a short call spread, like a simple 10-cent wide short call spread, like the 565, 575, I think it was like 49 something days to expiration in that neighborhood, like $10,000. So no, thank you. Does it change anything? For gold and silver, look, we just had this big vol crush period over the past few weeks, and gold and silver did not pull back meaningfully. When gold IVRs were sitting north of 90 a few weeks ago in April, and we were at these current prices, if you told me gold vol was going to go back into the 10s or the 20s, like the teens, I would say, okay, well, how far is gold going to fall? And you told me that gold's not going to go anywhere, I would say, wow, that thing is still so bullish. Right? Like complete collapse in gold vol and prices don't move. So they're weathering a storm. They're weathering a storm of a dollar bounce and the higher yields over the past few days. I think you have to view that as positive long term. And have any of the influences, Victor Jones, have they changed whatsoever? Are central banks no longer buying? Are the concerns about the dollar's role in the world having changed meaningfully? No, not at all. Gold and silver look good. Hard assets look good still. We and I have been on this beat for the past year plus, talking about them on the show.
Agreed. Do you think, though, that over this last week, the slight reversal in the dollar fortune, do you think that can turn into something more meaningful? Like, are you still on the short? Are you still on the short dollar train, or are you fading this? And if so, which currencies are you playing a stronger dollar in relative?
Right. So my two areas of focus are going to be on the euro and the yen. Euro, I don't have anything in right now. It's watch listed. The yen, I do. A few days ago, weeks ago, within the last 2 weeks, when 6J rallied up into our James Bond level 007, I started laying out a position for the long 0068 puts and then 0068, 0067 put spreads, long them in the tastylive follow account. And so the idea there being that this is just a stretched trade. The yen doing well, so to speak, in April is really about the collapse in oil. But the reality is that Japanese long end yields are absolutely blowing out right now. And the yen long position in this market is still so saturated. I like to use a Z-score, basically measuring how far something is away from the mean, standard deviation. So a Z-score of 1 would be one standard deviation away from the mean. I like to look back over the past 2 decades in the CFTC COT report. It's weekly data, 52 weeks a year, times 20 years, over 1,000 data points. Okay, it's a robust data series. The Z-score right now for yen positioning is 2.66. The only other times that we saw it higher in history were actually a few weeks ago when we top ticked 3 on the Z-score, and that was in April. And then what happened in April thereafter? The yen stopped rallying, and it was just too crowded of a position. So forget Japanese domestic issues with inflation and rates. If there is going to be a dollar reversion, this seems like really fertile ground for it. And to that end, the other currency that has a Z-score north of 1 right now is the euro with a 1.34. And between the euro, 57.6% of the dollar index, and the yen, which is 13.1, you're talking about 70% of DXY north of there. And so if those two things are the most crowded long dollar or short dollar positions right now, and they bounce back because people simply take profit, right? I've been long the euro all year long, for example. I want to take some profit, realize this trade, I'm going to have to close my long. Even if it's just a profit-taking move. A rubber band snapping back tactically, to me, makes some sense. So I'm long the dollar via the yen. I will say one thing about this, though, to add on to this. Positioning is not a typical tasty trade. Somewhat perhaps instructively, last year, all year long, first half of the year, the yen is going to rally. Look at the short position in this market. It's never been this short before. It's going to rally. And January and February and March and April and May and June, what did I do? I got long the yen. And every single month I took a small loss. And then come July 1st, I said, you know what? I'm not going to put this trade back on. And then what happened to 6J in the month of July and August? And so here's why that matters. Was the rationale, the reason why I was putting on that position at the start of every month, was it still valid come July 1st? And the answer is yes. I just tapped out and decided to leave my mechanics. It was right, but it took a long time. The market stayed irrational longer than I was able to stay solvent with that position. And so this is another one of those snares. I'm not making that same mistake again. So with these large positions, I'm keeping these in my back pocket. It's not a typical tasty trade. It's the dollar positioning is cooked. We have a tactical bounce opportunity. I'm going to push on that string in a high convexity way, so that if I'm wrong, I can be wrong 12 months in a row and not feel the need to tap out. And when I get my one winner, it's going to make up for all of it.
So you're long dollars.
Started scaling a week ago through the yen, yeah.
And you're long bonds, basically you're long notes, right?
Long bonds, neutral notes.
What is iron condors and notes? I forgot.
Short iron condor and notes. Okay. Long 115, 117 call spreads and ZB.
So what does a world look like where the dollar's rallying and the long end's rallying as well? What kind of president would you get in that world?
President Camacho from Idiocracy.
He'd be pretty emboldened, don't you think?
Oh yeah.
That's the hard part about taking these bets, is that I think you would have to fight against a crazy person who would be emboldened to get more and more sort of
Victor, he threatened to bomb Moscow today. You don't think he's emboldened already?
Did he you're talking about the leaked tape where he's talking about Moscow and China? Did he explicitly do it?
No, he was asked this in the news gaggle
What did he say? I didn't see it.
He was like, yeah, I'm not happy with how Putin's treating Ukraine.
And then what?
He was asked if he threatened to bomb Moscow in a phone call with Putin, and he acknowledged it. and he's like, yeah, Putin was like, no way you wouldn't. He was like, way.
No, he wouldn't.
No, of course not. I mean, who am I to say what's going on in Donald Trump's head? To say that he wouldn't bomb Moscow? I hope.
Zero chance.
I don't know. There could be Victor. There's rumors of P tapes. Maybe they find.
If there was a poly market on that, I'd sell it until my hands bleed.
Yeah, because that's the World War III scenario. There's no country that's dropping a bomb on Moscow and not receiving a nuke from Putin on the other end, if it's Germany or the U.S. or Canada or whoever.
Plus, it's just not how. It's not. I don't think. Yeah, you would have to do a targeted strike, and you have to make sure you get Putin, and you'd have to have this succession plan already made up, and those people somehow couldn't have leaked. It can't have been leaked inside of Russia, which is nearly impossible. It's just not. It's never going to happen. Never.
You'd have to leak plans that it's Dmitry Medvedev. That's the one who's getting ready to succeed Putin. So you start discord within the regime. Not that I've gave this out.
Who do you think is going to be the next Fed chair? Hassett's sort of taken the lead lately.
Okay, so
I don't think it's going to be traditional. I think he's going to pick Bessent or Hassett. I think he wants somebody who he can quote unquote trust, and I think all of his advisors are going to try to lean him into like a Warsh or something like that. I don't think he's going to go that direction. I think he's going to pick Bessent or Hassett. I've always felt that way. I think it's likely Hassett because
Hassett's the best case scenario for the market.
Do you think so?
Yes.
What do you mean?
Not that I think that Kevin Hassett's a particularly sharp tool in the shed, but he checks the boxes where he's been consistent in his economic orthodoxy or unorthodoxy, depending upon where you sit, for a number of years now. He also was in Trump term 1.0. He's now back for Trump 2.0. He's a guy that has had very little controversy around him as a public policy official, unlike Stephen Miller, for example, right? MSNBC is not going after Kevin Hassett the way they go after Stephen Miller. Okay?
Not yet. They will.
No, but
they're using this guy. What's his name? Justin Wolf or Wolfers or something like that. He's University of Michigan
the economist,
guy.
Justin Wolfers, the Australian economist.
Yes, he's very clever what he's doing because he sees an opening. Most economists play things down the middle. And he saw an opening to be like an MSNBC style economist, and so now MSNBC and CNN have him on a lot. And
he's been on Bloomberg since I was coming out of college. Like this guy's been on the media forever. He's been around forever.
He's not anymore. He's not on any of those channels anymore. Now he's on all the cable news channels.
Yeah. Well, I think Hassett's the best pick because he checks the loyalty boxes for Trump, but in his own discussions of economics, he doesn't come across like a toady. He doesn't come across
But he is. That's why Trump can pick him. Because it's like basically Trump's going to be Fed chairman, effectively.
Because Bessent is someone who I think, as market observers, given his reputation versus how he's carried himself as Treasury Secretary, I think, and like Lutnick too, I think a few of us are like, these guys didn't seem like these people when they were in the private sector. They weren't this colorful. They weren't this opinionated about things. And so, like, is this really who they are? Is this just a show they're putting on to please the boss?
Lutnick is a show, 100%. Do you think Bessent's been a good Treasury Secretary?
I don't think we have enough. I don't think 5 or 6 months is enough time for a Treasury Secretary to make a really big impact. I'm not super impressed by his communication style, but he has also made any really big mistakes. And like, one of the things that I want out of my Treasury Secretary is to not really think about them. Like when you think about like who are our best Treasury secretaries been, it's all people who have been forged in crises, right? You want a boring Treasury secretary is what I'm saying. So he had a steady hand on the wheel in April, right? So I suppose he survived his first test. The bond market didn't go off the wheels. We haven't seen any failed auctions. What more can you ask for?
I think he's been pretty good.
Yeah, I mean,
had no opinion on him coming in. And
isn't it asymmetric though? Like you can either be like you're either going to be a very bad Treasury secretary, or it's like, oh, they did it, they did a good job.
I don't know. I think. How do you feel about Yellen?
Mixed.
Exactly. So it's not binary,
Yeah, but like I take the same issue of fiscal dominance. Yellen, people criticize, oh, you're issuing all this short-term debt. You're allowing the federal government to crowd out the long end of the curve. You got to just issue the debt the way that you're supposed to issue the debt and not tinker with the issuance schedule so as to please Biden. And like Bessent's doing that now again, too. So like the same critique that one might have of Yellen, one may have towards Bessent at this point.
No, my biggest thing with her is she just didn't term out the debt. Like she had an opportunity to term out debt when almost every other corporation did it. And it wasn't like it wouldn't have, you don't have to have an IQ over 90 to think about that and to do it. And she just didn't do it and would never get that opportunity again.
Yeah, and I think that's the plan here. Hopefully we can term it out again. We didn't do it in the 2010s. We didn't do it post-COVID. But anyway, the point is Lutnick and Bessent look like they've changed something about themselves. And they come across as a little like suck-uppy. Whereas Hassett doesn't. Hassett looks like he's just been a run-of-the-mill Republican economist for decades. Trump latched onto him. He toes the party line. He's been consistent enough in how he portrays himself and his views on the world that were he to join the FOMC, and I think this is the dynamic, the Fed chair doesn't set policy even if Powell has been able to unify the board very clearly here. They're one of a number of people on it. And I have just this feeling, given everything I've read about how the Fed operates, the memoirs from different Fed chairs, the interviews, if you get a Trump toady in there, the rest of the FOMC is going to get defensive, and they're not going to take that person seriously, and they're not going to go in line with them. But if you get someone like Hassett, who there is mutual professional respect because they've been doing this for a number of years, and they don't just flip-flop. They don't do that. They're not the John Kerrys of monetary policy, as Neil Dutta at Renaissance Macro pointed out today. Right? Like that's important for the market. And so Trump can have his way. He can get the guy that he wants in there and have someone who has enough of a track record without looking like a suck up. And that's Kevin Hassett.
Do you think the board will respect Hassett to that extent?
They'll respect him more than they would respect a Lutnick or a Bessent or a Warsh, who all of a sudden it looks like he's trying out for a job.
Yeah, he really does. It's
sad.
Almost like watching Gavin Newsom of the monetary policy world.
That's a really good comparison. We just need him to start a podcast.
All right, man. If people want more from you, and they should, tell them where they can go.
You're on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Let me explain. Tuesday mornings, 9:40 a.m. Eastern. The Price of Truth, Wednesday, 6 p.m. Eastern, and then overtime with Radigan and Spivak, Monday through Thursday, 4 p.m. Eastern.
How long until these guys in the chat are saying this? I'm curious. How long until we have an AI bot as the Fed chair?
Well, do we think that Grok is going to be the next CEO of Twitter? I think that's the first step in the direction. But an AI, isn't that just the Taylor rule? Isn't AI just going to execute monetary policy in an algorithmic fashion then?
Maybe, but I don't know. I suppose there is room, if you imagine that the AI has reasoning capabilities, that there is some subjectivity there.
Mecha Volker.
I'm not touching it. All right, everybody. Hit the like button on your way out. Subscribe to the channel if you haven't already. Make sure you follow this man on Twitter. You can follow me on Twitter as well, at Victor Jones. Owen Jones is 0 because I like to be difficult. Special thank you to you, Christopher, for coming and hanging out for 60 minutes. For all of you, I will see you back here tomorrow. Same time, same place, same great network, only on Tasty Live. Till then, peace. Build.
Welcome to Trade Live with IG with myself, Ricardo McDonald, and Ronnie of the Eggnog.
Oh, yes. Thank you very much for keeping the eggnog joke alive.